It's Wednesday morning.
How are you?
Pretty good. I'm Glenn Freiberger
You're
with
the
me.
champion.
Thank you.
We have a monthly competition. It's kind of a fun thing we do at the office. We call the Goat Award Greatest of All Time. And
For the
my
month.
friend Glenn here was elected by his peers.
Thank you.
Greatest of all time.
It's an honor. Also, James out there on the production team.
Yes, that's right.
Won as well. And I don't know about him, but I'm trying to go back to back. There's never been a back-to-back GOAT.
You know what? It's great because everybody can vote and everything, and I just keep putting my not Frank votes in,
And it's working.
and it seems like it's working.
Yeah,
so,
that's good.
Or anyone but Frank.
Yeah. So yeah, I think I took a fair amount of those.
And I mean, everybody gets. We've all come up. Each division's come up with clever kind of trophies or things. We actually, to Mr. Cabrera's credit, because he's running this, and we kid. We have and I think next time we do the show, you'll
Yeah, I guess I got to wear it. It's a boxing robe that is
with the Tasty FX logo on it.
semi-silk. It's nice. I actually wear it in the office now. It's a nice throw on when it gets cold.
And we need
and
to
it's
start
intimidating.
thinking about what we put into the Tasty FX store as we go into launching Tasty FX on Tasty Trade.
This
So
is true.
This is going to be exciting.
And one of the other teams has one of those wrestling belts. I like that one a lot. So maybe, can you win different ones? Maybe I'll try and go for full sweep.
Yeah, I'm sure Kevin would be open to that answer. So
I know, great competition. It worked. I'm gonna work harder. So that's the real point, right?
there you go. Poor guy's in here at 6 a.m. doing knocking out everything in here till 6 at 9. It really is. We got the whole Bob Cratchit thing with the
It's
candle
good.
and everything. It's tough.
It's nice, yeah. You have a lot of fans, me being one of them. You wake up much earlier than this, and by this time you're flying. You say you have coffee. I've never seen you drink it. Your morning coffee ritual is what, 4 o'clock? You have it intravenous now?
I have a 3:15 cup and then a
That is
a
insane.
5 o'clock cup when I leave the house. It's not. Again, I know it's not my choice. I wake up without alarm, without anything between 3:01 and 3:08.
That's really good. You know what's really annoying?
It's really bizarre.
The past 2 times I've been on the show, I've woken up naturally 10 minutes before my alarm, and I am so mad.
Oh, well, and our friend Frank is getting. He says you are now pulling me into your dark side, and I don't want to live this life of getting up at 4 a.m. and then falling asleep at 8 at night.
I think he likes it. Don't let him talk.
Yeah, I like it. Works for me, but although I did sleep through most of the State of the Union address, which was a little problematic because I had positions on it. I was like, oh my God, what did he say? Did he say something? And I looked at it, it's like most things didn't move. I was like, okay.
Yeah,
it was relatively constrained.
Yeah, was it short? Because I also...
No, it was the second longest in history. It was 100 minutes. You knew it was going to be long.
Well, I didn't know. Well, I knew it would be long with the amount of clapping every 30 seconds.
Right.
I watched the beginning. Who got kicked out?
Somebody got kicked out. A congressman got kicked out for something about don't cut Medicaid.
Or was it
And I
pointing the
didn't-
cane?
I didn't.
Are you not allowed to point the cane?
Maybe that was it.
the king?
I know they had paddles or something, and it's funny because I was listening to somebody who said, because some Democrats chose not to even go, and that's one route. I don't quite know, and it's like you don't win trying to heckle someone from the cheap sheets. Whatever you think of Donald Trump, that is one of his sports and skills is. He's great at that, and he's got the microphone, the bully pulpit. You're never going to win that battle of trying to rattle the.
Al Green.
Oh, is that who it was?
Yeah.
There you go.
Ejected.
Yeah.
That's pretty good.
No, I guess a lot was said, but not a lot that.
Not a lot controversial that we didn't expect.
I guess selfishly for me, we all have our feelings and beliefs, but I don't know. It's just what I've done for the 42 years. I'm looking at it. Okay, what does it say, and how does it affect the things I trade? And not there wasn't a ton.
Wait, so you're telling me that half the room chanting USA, USA, USA didn't correlate to any dollar strength.
Did not. If you were short euro, you weren't feeling the joy of the strong dollars chant at that point.
There was no USA.
No, and we talked about that. Supposedly, the Commerce Secretary is supposed to come on air at 7:00 this morning to talk about they were only kidding or we're going to split the tariffs. I don't know how this becomes. You know,
it's falling. It's unraveling.
yeah,
And
what is it going to take for me to put you in this Honda today? Kind of conversation.
Exactly.
Yeah, I'm very used car salesman. I don't know what's going to happen. I think the market feels it's very interesting because you watch U.S. equities and they were actually higher most of last night a little bit. They bounced pretty good off of the sell-off into the end of the day.
Which was quite a sell-off.
It was, and they've softened up this morning, but just watching them, equities, obviously, the cash equities markets aren't open. So this is one of the great things with FX. Although you'll see FX more liquid at certain times during the day than other times. At 5:00 in the afternoon, when they only really place quoting is New Zealand. I'm not picking on the Kiwi guys. I love Kiwi, but the markets are a little bit thinner.
Right.
Where you get into London and the U.S., the markets are much richer. When I say richer, they're deeper. There's more participants, and you see that liquidity play through. But watching U.S. equities this morning, they are very, very thin in terms of nobody quite knows they're living.
Right.
Okay, what happens if they do cut the tariffs? If they don't cut the tariffs, yada yada yada. The whole tariff thing, and it's interesting. I was talking with somebody yesterday, and like, I don't know who trading equities yesterday, if they were active all day long, how they couldn't have gotten tagged on one of those moves.
Right.
And he made a great point because you got these massive rips, 60 handles up in this move, 60 handles down, in the matter of the closing range and then right after the close.
Yeah.
And several times during the day. It's hard to always be right, but where we're seeing some really momentum build is where we're going to be talking about today, which is let's go over to the FX world and take a look at the euro, which by far is, we actually saw.
Yeah, if we could open the platform, pull that up. We've got the real-time euro-dollar chart for you. Uh-oh.
That's the euro balancing right on its support level. I like that.
A beautiful picture, though.
But we saw a day yesterday where we plumbed we looked at 104 very briefly. The market kind of got a bid out of the woods while nothing else did. And it was interesting because this was a rally that was kind of independent of equities up, equities down. Canada up, Canada down, Aussie up, Aussie down. It had nothing to do with it. Just the bid was there. We had a couple of small pullbacks during the day. And guys, we're working to bring that up right now. Just give us 1 sec. But it was interesting to see the unrelenting. And we talk about when does market structure change. We closed at well above 106, which we know has been an inflection point for us. And we closed within 5 pips of the high of the range. That shows you when you talk about, okay, is this the rally to sell? Now, if you want to be a contrarian selling a 140 pip rally, we know that's 2+ standard deviations right now.
It should work sometimes.
Should work. And this is where the 5% bid
bad.
Because we continued to, and guys, we're working on it, they're working on it. We can
go to the slides too if that's easier, guys.
Yeah, if the slides are easier, that's great too. But we continued to march all the way. We posted a high today of 107.20.
Yeah.
Which again we're getting back to, and I know I probably over-reference this, but the 200-day moving average, which is kind of an old school FX tool, is 107.40. So usually kind of an inflection point where the markets will, longer-term players tend to use that as a level of momentum. So,
and thinking about, you brought up the timing with liquidity, interesting overnight because you saw that high print right near the London Open.
Right.
And that's always when you have London, more liquidity coming in, but it's also, in
It's
Europe.
not like, let's bring this in line. It's like we got business to do.
Exactly. And so then we saw a high, saw a pullback, and now we're right back to near those highs above 107.
And you make a great point. So we traded up to 107, right around 107.20, all the way back down to 106.80. 40-point range is probably going back looking 90 days is our normal day. So it gave you a scalp. Contra-trending moves like this, you've got to be realistic. You've got to, even if you took a little bit of a beating being short here under 106 and you got stubborn and say you covered at 106.70 or 80, yeah, that was a painful loss. But if you're going to still lean on the short side here, is there opportunity? There is, but you've got to be mindful as to what you're going to look in this market. And moves like this tend to, I'm going to sell this, and they're going to give back 100, 150 pips. Now, can they? Sure. I mean, what's changed? I mean, Germany has been very bold, and they're like, if we're going to go this alone, we're basically changing the way.
Yeah.
The government was very constrained as to how they can spend and what they can spend on. And the idea of a rearmed, fortified Germany was thought to be
Not the best.
not a desirable solution.
Right.
But if the structure of relationships changed across the globe, they're taking a proactive stance. And I think the market looks at this and they say, well, that's an awful lot of stimulant going
Right.
into an economy that has had challenges around its work getting its unemployment levels at better spots. This is just a huge kind of injection of, as steroids is so pejorative, but if they follow through on these spending plans and it's an aggressive thing to do, you got to think that that's going to have a real knock-on effect to, what is driving this euro? Lots of different things. Short covering at this point, absolutely. Longer-term strategic shorts have been put to the test
Right.
and have been challenged. And the fact that the get-out spaces have been 30 pip pullbacks haven't given you a lot of choices. So, but from a macro standpoint, that's what's changing. And now we're in a new price level. So the first thing I do is you've got to take whatever that one standard deviation is, you've got to give yourself more elasticity.
Right.
I mean, we're already up almost 77 pips right now, and we're kind of getting back towards the highs, but not quite there yet. So we're twice the standard move already. So you would think, well, what do I do with that? Now the question is, and this is where the mechanics become a little hard. Well, Pete, you and Frank and Glenn have talked to me that 2 standard deviations, 95% confidence, we're there. I should be short. If you're going day to day, yeah.
I was going to say, when does that reset?
And this
when
is
we have
what makes
this
that
kind
statement. And I think some people are like, well, it's your curve fitting in it. And we're not. What I'm being is practical about when does that reset? When you choose to reset it. So am I mindful that we've already gone a lot today? Yes, but we're coming into the session with no material pullbacks. My inclination as a trader is that I'm giving myself more elasticity if I want to be a contrarian. I'm also, we've got a new range. It's 106.10 up to wherever they stop today, and we don't know where that is yet. I'm willing to play both sides of this market.
And
so
what I'm curious, because you talk a lot about price levels and how important it is to be kind of set your expectations with price levels irrespective of time and how fast things are moving. When you wake up to a move like this, and you say you have an opinion, you want to get engaged in this market, how does timing affect when you see this price was better than the one yesterday, I'm in, or are you waiting for some sort of momentum or some sort of maybe waiting for the U.S. Open? Is there any sort of timing there?
Great question. Again, when I woke up, they were a little bit lower, 106.70, 80. which still, if you looked at it in a vacuum, that was
Right.
a nice, a rich level at up 50, 60 points on the day. I think what you do is go through your usual game plan setup. Okay, if this is where I want to get in, where am I getting out when I'm wrong, and what am I looking for in the trade? Now, if you're selling the 106.70s, where you're getting out is a little bit tougher because if we back out the chart a little bit, it gets a little bit cluttered here. So you really have to go back a little bit to find where the level is. And right now, you're looking at 108 as the next
I was going to say
old school resistance level.
And we've really spent no time in this 106 to 107.
So the resistance level is soft at this point. Shorts are challenged at this point. Have we moved a lot? Yes, almost 300 pips in a matter of days. That's a huge move. Is there a good sale here somewhere? There will be several good sales during the day, but you've got to define what good is. If you're willing to take 30, 35 points on the pips on the scalp, it's a good sale. If you're looking for 100, that's going to be a tougher tactical trade to sit through.
I was going to say because you're looking at we're looking at the hourly chart. You're looking at week to date. Here's the the Friday close, Sunday open. We're sitting up 3%.
Yeah.
And just looking at the color of these candles, you haven't really gotten any reprieve. But yeah, to your point, you kind of got to look maybe just this week alone at what pullbacks look like.
Yeah.
Kind of the velocity of it. Of course, this could all deflate in minutes, hours. But looking at what has happened, you're right. You are only getting 20 to 30 pips on these pullbacks each time, and very hard. It's been very hard so far to pick where that level is because.
And if you go through the exercise, well, that's not right. That's not fair. That's what the market's giving you. So you've got to accept that. Okay, well, am I at a point where I'm willing to risk one to make one? So I'm going to. If I sold the 106.80s and the 107 hadn't printed yet, I'm going to be buying a new high, a new weekly high, a 3% high.
Yep.
That's going to feel like, why in the world am I buying this? But that is why we stay disciplined, so we can come back in and continue to trade and don't get stuck on one side of the market. Or we widen out our expectations, shorten our size. We're running really tight on time. Are we going to be able to get to the slides?
No,
Okay.
Just wanted to call out, zooming out on what's in store for this euro-dollar market. We do have...
Yeah, let's run through that.
We have today, we got, at 7, here in a couple minutes, we have Commerce Secretary Lutnick speaking that might redact or change some of these tariffs that have just come in place. In 2 hours, we have services PMI out of the U.S., but the big event for Euro area will be this ECB rate decision tomorrow.
Right.
But as we've seen so far this week, a lot of U.S. Unexpected news. We just want to call out before we wrap up here, if you are looking for Euro exposure, this Euro-Yen market takes out that U.S. dollar risk.
Yep.
That's been moving here, looking at the hourly chart. You called it out on Monday, and we haven't stopped since. So that one is an interesting one as well.
You know, if you want the tariff trade, you've got it in Canada. You've got it in every dollar pair. If you want it, this is what I love about FX. You don't have to go out and build this. Mm-hmm. It's there for you. You can, and what's great is, if you bring up the deal ticket, Glenn, now you're trading in a non-dollar pair. The good news is the platform does all the math for you. So it computes exactly what the margin you need is, you setting your stops, setting your limits, all that calculation is done for you. Even though you're trading a non-dollar pair, all the math is done. So you shouldn't feel this is another jump in complexity because I don't have a dollar. The dollar isn't the base currency or the quote currency. The market is a pip and a quarter wide, 1.2, which is pretty tight. And you can very easily construct this trade. And we talk about, being non-denominational around product. this is great. We're not going to take you down the rabbit hole of Turkish lira or Israeli shekel, which are products you can
We're still
trade,
there.
and they're fine currencies. Markets are wide. Markets are volatile. Guys trade them for very specific reasons. A lot of carry trade and stuff like that. For the retail trader looking for trading opportunity throughout these dollar majors and the corresponding non-dollar major pairs, there's lots of opportunity, and we'll continue to explore that on Forex Focus.
Yep, great week so far, great week ahead. Thanks for joining us on this Wednesday. Up next, we've got Tom, Tony, and Vanetta. Stay tuned.
Thanks, guys.
All traders are free market freaks. It's the lifeblood of risk takers. Nowadays, though, I still wonder how a productive free market economy will evolve to face the challenges of a more complex and divided world. So sure, I'm a bit concerned. In fact, as I think about the growth of digitization and AI, I know things are about to change at a pace we probably can't fathom. Regardless, one area we can all agree on is the power of decentralization to bring free markets into the future. The bullish case is that free markets will thrive when more people are empowered to participate through technological advances. Most of us also recognize the importance of sensible regulation to make sure that markets are equitable for everyone and will provide consumer confidence necessary to attract new capital. It sounds so reasonable on paper, but now come some of the challenges. Can we have a true free market when some of the megatech monopolies have a larger market cap than the GDP of most democracies? Can a free market thrive under the weight of income inequality and billionaires dominating the political machines? Can AI and quantum computing disrupt the tech backbone in a positive way to support consumer empowerment? And lastly, will the confusion around regulatory integrity be a meaningful hurdle or a showstopper? If corporate or individual fraudsters are allowed to run wild, then the importance of boundaries is meaningless. The bottom line is that free markets do not have default risk. They'll likely be around forever. But let's be careful not to mess too much with Mother Nature's ecosystem. Everybody has some level of fragility.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a tastytrade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at tastytrade. Make your move, genius. tastytrade. Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. tastytrade. Make your move.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Woo! Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Wednesday to you both.
Poor Bat. Oh my God.
Poor Bat. Oh man, you look pale and sound scratchy. You have a heating.
No, I look great. I sound scratchy for sure.
No, you look a little
But
pale.
I look great.
Your tan's gone. You know, you got to get in that tanning booth. Yeah.
You can't
Tan.
recommend
We haven't
tanning
had
booths.
sun here in a year.
What?
You can't recommend tanning booths in this year of our Lord 2025.
I can recommend anything I want. He doesn't have to do it. I'm not telling you.
Oh, you don't want him to get skin cancer?
So we'll spray a tan on him.
Ooh, I love a spray tan. Oh, dear.
Have you ever had? You haven't had a spray tan.
Why would I have had a spray tan?
I didn't realize. I didn't realize.
So
You didn't
for
realize
real.
you didn't realize who you were talking to.
I didn't realize who I was talking.
You did not realize you were
Read-
talking to a literal chocolate goddess.
Read the room, Sazov. Read the room.
You literally cannot handle all of this melanin. Your pasty ass could never. No, I've never had a spray tan.
Yeah.
Read
But
the
I wear
room.
sunscreen religiously. I do. Every day, reapply it, wear sunscreen.
Why?
Look at me.
We haven't had sun in Chicago in 6 months.
That's not even true. Do you
Yeah.
not know how UV rays work? You should wear sunscreen. You
Oh
should
my
just wear-
God.
It's easy.
I don't like sunscreen.
But you might not have found the right kind.
I like to tan.
Okay, well, all right. Well, and it shows.
You know, there was very little cancer before suntan lotion. Just saying.
Yeah, and that's why you look your 85 years that you will be tomorrow. Are you excited for your birthday?
No,
What are you going to do for your birthday?
I don't know.
Yeah, what do you want, Sadov? My wife and I were talking about it. You know, the bagel store doesn't open until 6 o'clock in the
Oh
morning.
no, you're
now,
not
so
coming in tomorrow. You're sick as a dog. We're not.
I think we're getting Dave's Hot Chicken tomorrow.
We are.
Yeah, that's for you.
Oof.
I'm not a fan of that place.
How could you not be a fan of Dave's?
It's dry. It's so dry.
You're dry.
In a room with you two guys, yeah. The Sahara.
She has to be.
Like the Sahara. Good Lord. No, Dave's is dry. It's not
You're crazy.
palatable to me.
What I like about Dave's is the potato buns. What I like about Dave's is the coleslaw and the pickles and the Dave sauce. It's all good.
I'm a fry the coop roost kind
Fry
of
the
girl.
coop is good too. Roost is good too. They're all good.
Support local business.
They're all good.
But are you excited for your birthday?
I mean, no. As you get older, you don't really get that birthday excited.
I mean, I jumped off of a cliff for my birthday.
Yeah, I'm not doing that.
It was so invigorating, though. Like, I have, like, a new
Okay,
lease
all right.
on life and, like, goals and stuff I want to do for this year.
All right,
Like,
all right. I'm
new
going to
year-
jump out of bed.
You're going to jump out of bed. You're going to put a GoPro on and you're going to jump out of bed.
Jump out of bed.
No, but you should do. I try to do something like every year on or around my birthday. It's a new experience.
I like that.
Yeah, that's a new yeah.
I like that idea.
Yeah, because I don't believe in like New Year's, but like your birthday.
Yeah, I know,
like,
I know. I don't really have it.
It's a reset for you.
Last year I went skiing on my birthday. This year I'm not. I don't have any plans because
So you gotta make plans. That's called self-care.
no, we just have a lot of stuff going on. Baby, and my son's getting married. There's just a lot of stuff going on.
People don't want you involved with that.
That's
Your son doesn't want you involved in the wedding planning. Your daughter doesn't want you involved in the child rearing.
I'm not involved in the wedding planning, and I'm not involved in the child rearing. But I got to be around.
Oh, so you're doing your job. That's good.
Yeah.
Yeah, you're just writing checks.
Yeah. Writing checks. Yeah. My only job for his wedding was to write a check.
Well, that is exciting. You've planned a couple weddings now, and now you're going to be done. It's your last wedding.
Yeah. Well, this is only their first wedding.
Okay, don't say that.
I mean, statistically, you know.
Yeah. You still got a couple more weddings to plan.
Yeah. Well, I mean, have you met the Batistas? I think they'll be single for some time. It's fine.
That's okay.
Oh, yeah. No, I'm fine with it too.
That's okay, but
No, Nikki told me he met the perfect girl the other day.
really?
Half Italian, half Jewish, right up his alley.
Aw.
Went on a second date. I don't know if I'm allowed to say that, but he went on a second date.
Oh, I
Yeah.
gotta get the deets later. Oh, I'm so excited for that. Nikki hates it when I am all up in his business.
He hates it.
But Mike and Nikki are like brothers to me, and I love to just be all up in their business. But I want Nikki to find a nice girl. Why'd you make that face? You don't want Nikki to find a nice girl?
Nikki can do whatever Nikki wants to do. Okay, I'm
I
not
know.
I'm not getting it.
but Mikey found a nice girl. Mikey's a cat daddy now.
A what?
He's a cat daddy.
What does that mean? He's got a cat?
2 cats.
Oh, God.
He's like this.
Man do a lot of strange things for some cat. Ain't no difference. Mm-hmm.
No, I think it's adorable.
The apartment between those guys is for sale, so they want me to buy it so I can live right between them, and then they'll take care of me.
I heard you guys talking about that yesterday. You should do it.
Tony should do it.
Tony has a family that loves him.
That's right.
Like Tony's wife came in before the shows, like bringing him tea, and Tony's wife and family will claim him.
You're right.
Now, as for you,
I need Nikki and Mikey to take care of me.
Sadnoff, you better hope you go first, Sadnoff, so I can claim you. I've had to claim my other friends. I might as well claim you too. I'm not gonna make you go in a potter's grave or anything like that. I'm gonna take good care of you.
Perfect. Thank you.
all you gain by moving in between Mike and Nikki is a crippling addiction to Zen and a DraftKings account.
Yes, you do get a DraftKings account. That comes gratuitous.
Yeah. Gratis. Yes.
Yes.
Yep.
Perfect.
Yep.
I'll take it.
And you get to do your first Zen. I kind of want to film you doing some Zen.
What's Zen?
The nicotine pouches. You literally ask this every time we talk about this.
Oh, I've never tried those.
I know, but now if you're going to live with them, you're going to have to.
Oh, I don't really.
It clears your mind. You get like laser focus. It helps you, what the kids say, lock in.
Yep.
Have you tried one?
No, but Vinny has.
I don't think that's good for.
I don't think that's good for, like, he's still like growing. Like, I don't think that that's good.
What is this?
I'm just kidding.
Oh.
I'm just kidding.
All right,
But
because his mom is on the
I have-
phone right now. Like Vinny's mom is like,
Yeah, you're gonna throw the kid under the bus. He's not gonna be happy with you.
your wife
I've
just
tried
got
them.
the
They're not
dogs
my
and is
thing.
searching his room right now.
Not my thing. Look at my pearly whites.
It won't stain your. It's
I know, but I can't put anything in between the cheek and the gum over there. You know what I mean?
You don't like stuff
Grandma
between your
Beanie worked
cheeks.
too hard.
I hate myself. Okay, but no, seriously, you don't have any other big plans for your birthday? You should do something for the weekend. I'm serious.
We're going out tomorrow night.
Oh, that's nice.
Yeah.
That'll be nice.
Yeah.
Where?
Care to elaborate?
No, I don't know the plans yet.
Where Bastian? What is that place called? Matzo Bastian. I don't know. I forget.
It's a steakhouse. She doesn't eat steak.
Tango Sir. Is that where you're going? You're going to Tango Sir, aren't you?
No, she doesn't eat steak.
Oh,
That's a steakhouse.
damn it. Okay.
Yeah. No.
You going to Ema for some dip?
Yeah. We're going to restaurants that specialize in dip.
Oh yeah, that's right. Bastian, whatever.
Bastian.
Yes.
Asador Bastian.
Oh, Asador. That's it.
It's really good.
Let your ass hit the door because it's too expensive.
Asador Bastian.
So what'd you do last night? Nothing?
Last night, I took it easy
Okay, good.
because I was out the night before.
Sure.
I'm going to be out tomorrow, so I took it out easy.
Sure.
Yeah.
See, that's nice.
Yeah. Yeah.
You couldn't really watch the Bulls game because it's not.
I didn't want to watch the Bulls game. I can't watch the Bulls game.
Yeah, I know. I said you couldn't really.
Plus, I don't have a TV, so it really
Yeah,
doesn't.
but they played the Cavs, and the Cavs are hot. 11-game winning streak.
For the Cavs?
Yeah.
Cavs are good. They could beat Boston. I mean, the Cavs and Boston are the two best teams in the East. They could beat them.
Huh?
I mean,
Well, the two game winning streak for a little big number 82 Vinny out there came to a crashing halt last night when we lost in overtime the championship game 1-2 Sadnoff, and the season ends.
oh no.
He doesn't get to lift the cup.
He doesn't get to lift the cup and skate around the ice.
No. Second place trophy.
Oh,
It's
nothing.
It's not the first loser. It's not the first loser. It's just a stepping stone to the next achievement.
I mean, you're still out $12,000.
Plus tournaments.
Yikes. I just gotta say, just like the proliferation, man, of kids travel sports, like it's getting out of hand. Like someone needs to rein this in. Like my friend, she posts on her Instagram, she was in Louisville. She lives in South Bend, Indiana. And I'm like, why were you in Louisville if it weren't for bourbon and fried chicken. And she's like, oh, my daughter had a soccer tournament. And I'm like,
I know, these parents are crazy.
but I'm just like, but the schedule is just like, that's far to go to Louisville
Louisville's far.
from South Bend. Well, like, why?
Probably 4 or 5 hours.
I don't know. I think it's like 6.
No, Louisville from like Indiana.
No, because Indy's 3. South Bend to Indianapolis, it's 4 to Bloomington. Because again, I live there. But go ahead and correct me.
I was going to say, why would you know, Vanetta? You only live there.
I live there and I went to IU, so it's 4.
Oh,
It's 4,
I
and
believe
then
Tom.
another like 2 to Louisville. Like that's
happens
6
to be
hours.
a little bit of a geographical expert. I didn't see.
Even
I didn't hear. I
spell
think you said-
Louisville.
Louisville from where? From South
South
Bend?
Bend, yeah.
South Bend to Louisville is
Yeah, 6 hours.
5.5 hours. 5.5 hours.
I mean,
it's
it
3
depends.
hours. It's 3 hours from. It's 3 hours from Bloomington. So it's about.
Okay, so it's 4 to Bloomington. It's 4 to Bloomington from South Bend.
It is.
Yeah. I did that drive multiple times in 4 years.
Oh, all right. Then it's 6.
This is fun. I love this. I love this for us. Hey, this is funny. I was getting home last night, like after I worked here, and my phone was ringing and I couldn't find it. It was like in my purse because my phone never rings. Like I talk to my parents like once a week. But my friends and I just text each other. And so every spam call just goes to voicemail.
Yeah.
It's a feature on the iPhone. So my phone's ringing. I was like, who is calling me? So I had to fumble around and I pick up the phone. It's Jenny Andrews. Yes, that Jenny Andrews. And I'm like, Jenny, I just saw you. I'm like, hey, girl, hey. I'm like, why are you calling me? She's like, you possess a certain set of skills and I need your help. And I'm like,
Oh God.
I'm interested. This is not really that great of a story. I'm really building it up to be more than it is. And she says her son Logan adopted a kitten
Oh no.
and the kitten was getting spayed. And I'm like, okay, great. Thank you for doing that, being a responsible pet owner. But she was about to go full Karen on this vet clinic. And I had to talk her down. She's like, they didn't give him antibiotics. They didn't give him pain medication. And I said, traditionally.
You're talking about her son or the kid?
The kitten. I said traditionally, and I'm like, the cats don't receive pain medication or antibiotics. I'm like, keep an eye on the incision. If it gets like red or infected or pus or feels hot to the touch, I'm like, keep the cat calm. You can give it a small portion of its food. And she's like, that's what they said. I'm like, it's not a scam.
They just got to wear the cone of shame.
Yeah, but for me,
Yeah.
like treating street cat, like I've neutered and spayed probably over 100 cats in my life. And so for male cats, 12 hours, treat them and street them. So I would have them in my house, bring them home after surgery, and then the next morning, release
That's what
them.
we did with Tony.
Release them back into the alley. Treat them and street them back into the
Exactly
alley.
what we did with Tony. Treat him and street him.
Living their best tomcat life. For female cats, I would wait till like that evening, but then release them as well. Cats are resilient. So, but congratulations, Logan, on being a good cat dad.
I got another one. Sad enough. I go to my local bank over here last night after the close, and I'm talking to somebody, and I had to do a wire transfer. Blah blah blah. Margin call from yesterday. I blame Vecchio. But anyway, I'm talking to the guy, and they're having a problem with the wire transfer and all this other stuff. So they go, "Let me get my specialist guy, whatever, blah blah blah." And who walks in? The Vanilla Gorilla. Remember Liz and Jenny always talk about the Vanilla Gorilla, the best nickname on the floor because he had all this hair coming out of his chest. He had a big beard.
That's a pretty iconic nickname.
The Vanilla Gorilla. I
Yeah.
love it. But I don't know who it is, but they always talk about him.
It's him. It's him. He goes, bat! And I look at him, and he was all clean shaven. He had his shirt and tie on, so I couldn't, I didn't recognize his chest hair or anything like that. I go, Vanilla? He goes, yeah. And anyway, he's the big manager there at the bank. So I got an in now. If you need it, you can have an in too. We got the Vanilla Gorilla on our side.
I don't need an in at like the Skokie Savings and Loan Bank.
It's the Glencoe Credit Union. How dare you?
I don't need a loan at the Glencoe Credit Union.
That's funny. funny.
He did a same day transfer for me. Pulled a lot of strings. Thank you.
Why don't you get the Vanilla Gorilla on your podcast, Bat?
Might need him. Might need him. He had a picture. He had a picture. Oh, stop. He had a picture over his desk of the AOL pit from above, and he's standing right next to me in the pit. It was kind of cool. I'll tweet it out.
Tweet it out. That's cool.
I will.
That's funny.
Yep.
But
I never saw it before.
What would be like your area of knowledge or expertise that you would like be getting a phone call? Like someone's like, man, I really need your help. Like what?
The only thing I ever get is restaurant recommendations.
Oh, that is a good one though. That's a good one. People are always asking you for restaurant recommendations.
Yeah, restaurant recommendations. That's probably my number one.
Okay. And then Bat for you, bail bondsman?
Something like that.
Loan shark interest rates.
Yes. Oh, okay.
Who's your favorite bail bondsman? Is it really good?
Good times all around. Hey, we got a great show for you today. It is a wonderful Wednesday, hump day, here on Tasty Live, and a lot of really good content is headed your way. At the top of the 8 o'clock hour, we're going to do an options jive, leveraging liquidity for lasting growth. Ooh, that's going to be interesting. Are you getting any help with that?
I don't need any stinking help.
Like a little bit. But no, I just didn't know if someone was going to come in. Like, I didn't know if one of the research guys was going to come in and help with that. Okay. Then at 8:40, because it is Wednesday, it's Assume the Position Wednesday, we're going to do What's Your Assumption? At 8:40, this is where viewers write in with an underlying, and they have a directional bias. Massive swings in the market. So who knows when, the time from when people wrote these trade ideas to when you're going to execute these trade ideas, like what has happened, but it's going to be interesting. So definitely want to tune in for that. That's at 8:40. Then 9 o'clock, Skinny on Options Math. You are getting help with this, and that's from Jacob. He's talking about Greeks, black shoals versus heavy tails.
Yeah, it's a good one. Jacob, you're talking about Jacob's piece?
Yes, I am talking about Jacob's piece. Yes. What does that mean, black shoals versus heavy tails?
Just the statistical chance of, what the theoretical black shoals model pushes out, and then what the actual tail risk really looks like.
Oh, okay. Jacob that is the specialist. That's his area of expertise when you need to get a geek on the phone.
Jacob in the house.
Yeah, Jacob in the house. That is at 9 a.m. And then we got live from the trade desk. Scott was busy yesterday doing business things because he handles business like a businessman. He's not a business. He's a businessman. Scott Sheridan is back today with his countdown of the top trending tickers. You kind of threw a hissy fit. You're like, we don't need Scott. I could tell you what the top 10 trending tickers are. You're like, no one wants to see Scott. Literally, everyone wants to see Scott. It's just a fun segment. That's all.
Oh, we had really good call-ins yesterday. It was good.
It was really good call-ins, and our viewers are nice. But I like when there's like a nice balance. So, but also another personal favorite. Gonna get the deets on the second date. Nikki Bat coming in with his Johnny Trades ideas. This is for trades for smaller sized accounts. He's gonna posit those ideas to Tom. And then again, 10 a.m. live from the floor of the SIBO this morning. Vanilla Gorilla TBD. Liz and Jenny are gonna be streaming live from the floor of the SIBO. It was great to see the ladies yesterday. And because it is Wednesday, are you doing Truth or Skepticism today?
Sure.
What are you talking about with Dylan?
Well, it's a good question. We don't know.
Okay, I'm sure.
We have a couple topics, but we're going back and forth on them.
Okay. Well, that's going to be live here at tastylive.com, but also you can watch Truth or Skepticism on the Tasty Live YouTube site. If you're not already a follower, hit that like button and that bell notification and the follow button so you never miss any Tasty Live YouTube content. We've had a ton of just really awesome rising stars lately, and we've got some good segments that are on our YouTube, of course, Pat's podcast. So definitely check out our YouTube channel. But hey, in the meantime and in between time, you guys want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading story. Breaking news.
Across
the wire. Leading story. Top story. Just in.
Today's headlines. This just in.
Breaking news.
All right, everybody. Today is a wonderful Wednesday. It's March the 5th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Sure.
Mr. Bat, any earnings on deck for this evening?
Nothing today. We had CrowdStrike for yesterday.
I got
it's
that.
down about $30. Beautiful. Nothing for today.
We didn't trade it.
Okay. Also, your private payrolls came out. I don't know if you super duper care, but
No.
okay.
I don't know what's a big move in the market though. Yesterday, tomorrow, today, the following week, market volatility is not gone.
Well, that's because new headlines. I had to rewrite my news like 6 times last night because things kept changing. And I'm just going to go with this. This is my final version. So President Donald Trump will probably announce a compromise with Canada and Mexico as early as today. Well, this is fun. Which could scale back his new 25% tariffs that sent the market into a tailspin. The comments came after the U.S. stock market limped to a close for a second day of sharp declines. This message came from Howard Lutnick. He's our Commerce Secretary. But let's just talk about the volatility and the moves yesterday. Obviously, we don't know what's going to happen today, but I had to report this because I would be remiss if I didn't. So let's just get it over with.
Huge volatility.
Huge volatility.
Huge.
But what does that mean for you and your adjustments and your rolling and your credits?
Well, the
and
interesting
your debits?
thing is,
like what's going on?
Well, the interesting thing is the expected move this morning was about $70, and it's right now it's 10 or 9 or 5 or something. It's very small.
Sure.
So there's going to be a little suckage this morning of they're going to be taking a little premium out of everything, but that's it. I mean, we've had some insane volatility for the last 3 or 4 days.
Yeah.
I think today you're going to see something very different. I don't think you're going to see insane volatility today.
Well, Bat, yesterday you sort of stepped in and you bought, and then you kind of promptly got steamrolled. Like, how are you doing today? What are your positions at? Bat? Oh, I don't know if
Yes, sir. Say it one more time. Sorry, I didn't hear you.
Oh no, I said you kind of stepped in there and you kind of bought what you thought was at the bottom.
It wasn't my best. It wasn't my best buy. Chris just kept poking me, and I'm talking about Mr. Chris Vecchio. I bought them. They went down about 35 handles lower than that. I had a scramble. Finally got back. Made a couple of dollars, but it wasn't worth it. I wanted to say on the show yesterday. I'm sorry to make the afternoon show. Futures trading is so hard. It doesn't matter if you've been doing this for 20 minutes or 20 years. It's so hard when you get behind the 8 ball from the opening trade.
Yeah.
I mean, here's the key to this market, Tony. Just wait.
You're right. You're right, because they're going to extremes.
Yeah, they go. I mean, we had 300-point moves yesterday.
Yeah.
Everybody could have been right if you just waited.
Yeah. It's depending on the
100%.
time of day. Just
100%.
Conversely, want to talk about bonds real fast. What you're doing or seeing, and
I mean, they haven't moved all night. They literally haven't moved. They sold off yesterday afternoon.
Okay.
They traded up to 119. They're 117.27 right now. They traded down to 117.21 or something. They're down 11. I don't expect bonds to do much today either.
here's an interesting headline, and it's an interesting sort of take on things. It says earnings have actually been very good for stocks, but tariffs are undoing the gains. Are you seeing this in your own sort of trading, like companies that are reporting, you know, like NVIDIA is like, hey, we have, you know, crazy margins and we're making all this money, and then sort of the tariff issue takes the stock down, you know, 8%. Would you agree that earnings on
No, that's a BS pull from the left drawer, not the right drawer, or whatever drawer they pulled that from. That's
I would say that earnings have been good for us this cycle because we haven't moved outside the range very much, and most of the big stocks, like Tony, I can't think of a big name stock that was outside the range. So I would say
no.
I would say for traders, earnings have been very good.
Okay.
I would say the tariffs, you know, the tariffs are really just like a political. It's just like
no, but in my example of NVIDIA, like that's a legitimate because
NVIDIA
of like export controls, like and other issues.
NVIDIA went down after earnings. That's it.
All right.
I mean, our tariffs undoing the gains. On an emotional short-term basis, yes, but they're just playing games. I mean, they're just throwing it out there and then taking it back. They don't have the guts to keep anything in place for more than 2 minutes anyway. So I wouldn't trade based on what you think tariffs are going to do or not do or any of that kind of stuff. Don't do that. You're just going to don't think that way. Like if you want to trade earnings, trade earnings. If you want to trade the market, trade the market. Like there are certain stocks that are cheap right now, for sure. There's certain stocks that are probably expensive still. Mm-hmm. Just trade based on that. Don't start trying to overthink tariffs.
Okay.
Because you're just going to get, nobody has any, not only do you not have any edge, you're just going to chop yourself to pieces.
Well, some nation that is in one of the spotlight of the tariffs is China. And China on Wednesday set its GDP growth target for 2025 at around 5% as they start their annual parliamentary meeting amid escalating trade tensions with the U.S. Beijing raised its budget deficit target to around 4%. The 4% deficit would mark the highest on record going back to 2010. Let's just talk China in general.
I mean, the stocks, we've been staying a little bit long China. Stocks are up a little bit this morning as well. Chinese stocks. I think you have to lean a little bit long China, but I wouldn't, they've already had such a big rally. I wouldn't do anything crazy here. I'm not getting long Bob at these levels, but
yeah, it's not the load the flotola type thing.
No, it's not. Yeah, it's not the load the flotola. This is just I think you got to be I'm staying short some puts in Chinese stocks. That's
okay.
But I'm short calls, but further out of the money.
Okay.
So I think you just got to lean a little bit long, and it's but it's a small position right now. We had a big position on in there. Now it's a very small position.
Okay, Bat, what are Baba and Baidu, PDE
they're up.
doing this?
They're up.
I'm asking
Yeah,
Bat.
they're up. Baba's up around $2.50 or so. Baidu is also up. It's up around $1.50 or so, $2.
Okay, thank you, Bat.
You're very welcome. Thank you for including me in the games.
Can I tell you, so this next headline, it's going in my drawer already. It's March. I already have a candidate for best headline of the year. This is so funny. It doesn't directly affect us, but you have voiced this opinion before, but I'd never heard it stated from a company like this. Chocolate maker Hershey says the ICE, so the Intercontinental Exchange, the New York Cocoa Futures Market, is disconnected from reality of the global physical market and that they are untethered from reality and that basically the exchange needs to get their ish together. It was just a funny headline because I'd never heard of someone being called out like that. But the ICE is bad.
First of all, I never comment on. We actually don't trade the cocoa market at all.
Right, because we can't. Right.
I would argue that, if you just talk, I don't know how much cocoa trades.
Sure.
But I would argue that Hershey's crazy in this headline because.
Interesting.
Because even though I don't like.
But they're saying because there's not enough liquidity. Hershey's there's not enough.
I understand what they're saying.
Okay.
But
they're not providing an orderly market for buyers and sellers, and that.
That's
prices
a problem.
Fluctuate wildly. That's what Hershey's saying.
Yeah, that's a problem. If there's I don't have no idea because I don't trade it. But if there is a liquid market in cocoa, whatever exchange it's on, that is the real market. Even though I don't like the ICE, I don't care. That's the real market. And so Hershey's probably. But if they're not providing any liquidity,
they are saying they are not,
and they're just marking cocoa up or down huge amounts. Then that's a problem.
Yeah, and they're increasing margin calls and a whole bunch of it, and there's a lag between the futures and the physical. And so Hershey's look, it is a big.
You know what the ICE
mess.
response to Hershey would be? Then get in there and make markets. And get in there and trade. Because if Hershey came into the cocoa marketplace would actually be liquid.
Yeah.
Valid. It'd be right.
It'd be valid.
Hey, by the way, don't sleep on Hershey's with whole almonds, but you got to do the whole almonds. Remember that.
Oh, I like those.
I don't like when almonds touch I don't like when nuts touch my chocolate.
Touch your cocoa.
But can I tell you, because I have the little, because I'm tracking all my macros and stuff now. It's super,
you got to get one of those things. One of those.
An Oura ring?
Yeah.
Yeah. I literally speak South enough. I hate that for me. But anyway, I'm tracking my macros and the little nugget bat, the little Hershey nugget, the dark chocolate with almond, one piece, 70 calories.
Ooh, that's a lot.
I know. That's what I was son of a biscuit.
Yeah.
Like
yeah, you might as well.
Yeah, I know. I was like, and it's only one gram of protein. But I was like, that's a gram of protein. So.
Oh my God, I hate when you use science to try to win an argument.
Hey, just to back at it again, the U.S. Consumer Financial Protection Bureau told federal court yesterday that it's dropping a lawsuit that was filed as recently as December against 3 of the nation's largest banks. No, over their handling of the payment service Zelle, the agency, which has been virtually shuttered by the Trump administration, had accused JP Morgan, Bank of America, and Wells Fargo of failing to protect consumers from fraud costing hundreds of millions of dollars, and now they just get to skate free. So they dropped the case. The case is gone. So the case was filed in December. It's a valid case because people are getting scammed all over the place on Zelle, and people, want.
I wrote about this weekend. When you allow corporations to when you allow fraudsters to run wild and corporations to take advantage of customers without any protection for the customers, that's what happened. That's how free markets fall apart.
Sure.
That's the really dangerous part. You cannot, if there was a case against JP Morgan, Bank of America, and Wells Fargo, the likelihood is that they were doing something wrong.
Yeah, they're guilty.
I'm not saying that they were for sure, but the likelihood is they were. And the other side to it is they probably, would have settled to get rid of this case, but to drop the case doesn't make any sense.
Right, yeah. No, and again, hundreds of millions of dollars, like you would think.
So why would you drop, just think about this for a second. Why would you drop the case against JP Morgan, Bank of America, and Wells Fargo, when knowing that if you decide just to settle, the government gets like what's the whole point of dropping the case?
Right. No, I don't understand.
What, you don't have any lawyers left to fight it? I mean, what is it?
That's not the long con.
I don't know what, but there's no reason to drop it. You always settle.
Yeah. I mean, why get rid of half of our IRS agents?
But settle this stuff. Don't drop it. Just settle it.
Sure. Right. Like it seems like they'd pay up very quickly, that they would want to, just like
get rid of it.
Write a check.
Sure.
Yeah, and we'll do, consumer outreach. We have to pay.
The other side to that is if you settle it, then it makes the consumer at least realize, okay, it cost them something,
Sure.
Like, okay, they paid something to, for the indiscretions that they took.
Yeah. Well, any movement in the big banks, or we could just talk about the Russell. You want to do that?
Well, you could talk about the Russell. It's up $9 right now, but the Russell's been kind of, I guess it's been going in the same direction as the rest of the market too. I mean, the Russell itself is a little bit weaker. The Dow's been the strongest of the group.
Okay. Hey, in other news, CrowdStrike shares fell 9% on disappointing earnings forecast. The company says they expect earnings per share, excluding some items, between $3.33 and $3.45, falling well short of the $4.42 projected. CrowdStrike reported $4.24 billion in annual recurring revenues. CRWD stock down around 30. Woof.
Yeah, I don't think you played it right, Sadnov. It's right about the expected move, maybe a little bit lower.
I did not play it.
Mm-hmm.
I looked at the markets. They were crappy. I was worried about the downside. I wasn't worried about the upside. But in CrowdStrike, they've had moves in there in the past that were 2 and 3 times expected move to the downside. I was really worried about that. I'm kind of, and the markets were not very good.
And to be fair, we often forget, they caused a massive global outage. Like nobody remember. They're like, you don't want to talk about that. It's like you.
Oh, I understand.
You don't want to talk about that. And they're like, oh, that's so last year, honey. Hey, weird bright spot in the market yesterday. Supermicro was up 8% and was the S&P 500's top performer. One of the top performers? What is going on?
Well, it's been killed lately.
I know, but of all the stocks yesterday,
Again, I don't know how many times we have to say this on air. We don't trade based on, whatever the news was around Supermicro. We trade based on, this is a stock that was absolutely annihilated. And
yeah, but then they did they didn't get delisted. They met the deadline, and then the stock dropped even more.
I know, but
but now it's back.
That's why news means nothing.
But that's why That's why the other stock that we've been crazy buying lately because it got killed has been Moderna.
Yeah.
Moderna's up big this morning.
Yeah.
But that's only based on price. There's no story behind it. I'm not buying Moderna because they fixed bird flu or something. We're just buying Moderna.
That would be awesome.
Buying Moderna because the stock has been killed lately.
Okay, well, any opportunity in SMCI then?
Yeah, we were long SMCI too because the stock had been killed recently.
Okay. What's it doing this morning, Bat?
SMCI looks like it's maybe up 50, 60 cents, 39 and change.
Okay. Well, here's another dog. See if you want to get involved in this. TP wrote about it in the Cherry Bomb. If you don't get the Cherry Bomb, make sure you sign up for our newsletter. It's great. Written by TP most days of the week. And then written by Tom Sunday evening. But Microsoft, their stock is at its lowest level in over a year. And this headline says, why the sell-off may be overdone. Microsoft shares have fallen recently along with other once hot Magnificent Seven stock. But what are you doing in Microsoft?
We're a couple of deltas long.
Okay.
We feel the same thing. Microsoft. I wanted to buy Microsoft around 400, but we didn't, and we waited. We bought it around 390ish. It yesterday morning. We
got down to 381 or so.
Yeah, we bought Microsoft at 382, 383. It was a really nice trade. We took $2 out of it in like 2 seconds.
Okay.
It closed at 388. We're a little tiny bit long in here. I think the down move's overdone. If it gets back to 382, 383, 384, we got you to yesterday, 385 even.
Yeah.
We'll buy more.
Bat, what's the IV rank in Microsoft?
You know what? All these IV ranks are going to be elevated. Microsoft is 54. Everything is climbing. The world is your oyster out there if you look at sell premium.
That's pretty good.
Very good.
You stole that from TP there. So, Hey, the U.S. Commerce Department is examining changes to a $42 billion Biden-era program aimed at expanding internet access across the country. Actually, great. We should support this. Everyone should have access to internet information. Well, with the new rules, that means the contract now belongs to Elon Musk. That's right. Elon Musk's satellite internet service Starlink is now on deck to provide rural broadband funding. Again, it's a $40 billion contract. What are these no bid contracts? Like, shouldn't you at least just bid the job out? If he's the best choice, then that's what
America's for sale now. Just get used to it.
Maybe you just bid it out. But I will say this. Did you know that Starlink satellites, 120 of them fell from the sky in January alone? So they're trying to replace older satellites with newer ones, but the older ones are just falling out of their orbit. So it's actually creating kind of like an ecological question because they're burning up in the atmosphere. No one's talking about it. So the satellites, 120 of them fell out of the sky in January.
I don't know what that means.
So 120 satellites that were in the sky. They ain't in the sky no more.
I don't know how big a satellite is.
Bigger than a bread box.
I don't know if that's the case. I really don't know.
Yeah, no, they didn't hurt anybody, but they the lifespan is a rolling thing. So they're trying to put more satellites up there.
Don't worry. It hits water because of the climate change that we have on Earth. We have more water now, so it'll be fine when they come on.
All right. Thank you for chiming in, Bat. We appreciate that. You can't trade Starlink, but you can trade Tesla. Bat, what is Tesla doing this morning?
Punched.
Tesla was up a little bit more this morning. It's 273. I saw it at 279 a moment ago, but that was when even the S&Ps were up like 20, 25. They're only up $1 now.
They were up when I woke up this morning, Bat. They were up 50.
Were they really?
Yeah.
Wow.
They were up 35 most of the night. They were up 40
so I'm up 25 this morning.
Yeah, right after the close yesterday.
Can I hear 35? Can I hear 35? 35.
Yeah, they were 40. Then they were 35 most of the night. Then they were up 50 this morning when I woke up, and now they're unchanged.
This is crazy. U.S. airline stocks tumbled to their lowest levels since late 2024. Consumer spending fell in January for the first time in almost 2 years, and airline stocks took it on the chin. United Airlines, which has the most exposure to China of all the U.S. airlines, fell around 6%. Delta and American dropped close to 4%. JetBlue lost nearly 6%. And then the Allegiant Air shed more than 9%. Ultra low-cost carrier Frontier down 4%. Airlines. And people aren't booking trips for spring break. There's like.
Oh,
delay.
you know why? Oh, you know why? Because it's like $1,000 a ticket to go from here to Florida. It used to be $300. It's ridiculous. They're trying to.
Aren't you sad that you sold your RV?
I should have kept my RV. That's right. But don't worry, we're gonna load up the Tundra.
What are you doing in airline stocks, Tom?
Nothing.
Nothing. Nothing in UAL.
AAL is up about 15 cents, 13.5. But you are right; it's fallen from its highs of around 18 and change. More importantly, I believe my sister's long love around 30, and it's 29.5 right now. So if you people can help her out a little bit, get that a little bit higher, that would be good.
One other thing to check on real fast in the aviation space. You know, America's largest exporter is Boeing.
Yeah, Boeing's been killed too.
Well, they're America's largest exporter, so.
I did not know that was the case.
Yep.
Yeah, they're the tariff play.
Yes.
So if you want to bet on like the tariffs coming off, Boeing is an interesting play.
Okay, what are you doing there?
To the buy side, right?
To the buy
Thomas,
side.
if you think
How do you
tariffs are
structure
coming.
that?
Right.
What are you doing?
Boeing's. I sold some 140 puts yesterday.
Just naked puts?
Yeah.
All right.
Well, the lowest the stock got to over the in the summer and fall, I think, when especially when we were on the road, because we were doing Boeing
in the 130 handle, high 130
I want to say
handle.
138, 139.
Mm-hmm.
Yep.
So
you are correct.
I sold the 140 puts yesterday for 2 something. I don't remember exactly offhand. 217, 220.
Okay.
And my thought process was, I mean, if the stock,
I want the stock to go higher or volatility to
I want the stock to go
contract.
higher, but I got 20 points of cush to take it down to its old low, 138. I kind of like that trade.
Okay.
So I don't know. I mean, I'm not going to go all in on Boeing, but I got a little bit long Boeing yesterday.
Beth, I'm skipping a story here. Waymo. A boom, boom, boom. Let me hear you say Waymo.
Waymo.
Thank you, Bat. Waymo on Tuesday began offering robo-taxi rides in Austin, Texas through Uber's app ahead of South by Southwest. The launch sets Waymo up to showcase the driverless technology to the 300,000 expected attendees that are descending on the land of Thomas Preston.
Why would I don't understand this, but is it a rev share deal they have with Uber?
I don't know the intricacies of the deal because everyone has Uber on their phone already. Because when you went to Arizona, I wouldn't know how to call a Waymo.
I thought you downloaded Waymo, didn't you?
I have Waymo, yeah, for sure.
See, but there's an extra step. There's an extra step of friction in the process. And to remove it ahead of this tech festival, they're like, hey, you can just use Uber. Everybody already has Uber.
Well, he downloaded Waymo in Phoenix.
If I downloaded Waymo, anybody can download Waymo.
Austin is the first market where Uber will manage and dispatch the fleet of Waymo vehicles. Riders in Phoenix can book Waymo rides through the Uber app, but the ride-sharing company does not manage the fleet in that market. Not sure what Uber, the stock, is doing.
I don't know.
I can do that for you. Uber's trading at 75 and change. Looks like it's unchanged. Even the S&P just turned red for the first time that I saw them down today.
It's a big sell-off again.
Amazon is
not your daddy's market.
Amazon is reportedly developing its own AI reasoning model. Amazon wants to, of course, get in on the AI reasoning model game. So they're developing an AI model that incorporates advanced reasoning capabilities and also a genetic AI division that they're forming. What are you doing in Amazon?
Nothing.
Okay.
Well, you should start to do something in Amazon, Sadnov. Amazon's got a good IV rank of 57 and change. Markets are good in there. It looks like it's up small, about 50 cents. Volatility has expanded over the last 5 days, even to the downside on these stocks, which is a little unusual. Get yourself some Amazon, Sadnov.
Get some.
What
are you
waiting
buying
for?
Amazon? I'm pissed at Jeff Bezos. I think he's a creep.
Okay. He doesn't even run Amazon anymore.
He's a creep.
Okay, well. Okay.
You doing that again? Got it.
I'm just gonna do that.
I'm just saying I don't really want to buy Amazon.
How about this? I'm going to give you a pacifier. TikTok's parent company ByteDance is offering to buy back shares at a higher valuation than 6 months ago. What do you think the share? What do you think ByteDance is now valued at with with this new share price.
Is it just TikTok or is it?
ByteDance owns TikTok. They own Lemonade. They own CapCut. They own Douyin.
So what are they asking here? Just is it to buy back the parent?
Yeah. Their parent company shares. Yeah. So
160 billion.
Bat, what do you say?
I don't know. 300 billion. I don't know.
Yeah. $700 billion.
$1 trillion, a jiggity billion. No, the new share price values ByteDance at around $315 billion.
Yeah, I had no idea, but I'm just, that doesn't surprise me.
Right. But I think it's just weird that people are like, oh no, we're all going to put our money together and we're going to buy TikTok. And I'm like, you can't afford TikTok.
You mean Mr. Beast?
Yeah, Mr. Beast, Mr. Wonderful. Now,
Mr. Wonderful.
Yeah, I don't know. Anyway.
How do you get to be a Mr. something?
Mr. Worldwide. That's Pitbull.
You are Mr. Tom Sosnoff.
Mr.
You already
Wonderful.
are
Mr. Beef, Mr. Beast, Mr. Wonderful, Mr. Worldwide.
Mr. Worldwide. Yeah, that's Pitbull.
Who else you got?
I don't know. Mr. T.
Mr. T.
Mr. Clean.
Who?
Mr. Clean.
Mr. Clean. Yeah.
Mr. Clean.
Yeah.
There you go.
Yeah, we could do this all day.
And then there's Monsieur Bat.
Mr. Bat. Hey, just real fast, Starbucks has poached Nordstrom's CFO as the executive shakeup continues. They poached Chipotle's CEO, but now Starbucks CEO Brian Niccol has shaken up the leadership team again and saying that Nordstrom's CFO, Kathy Smith, is going to join Starbucks. What is Starbucks doing? Unveiled their new spring menu, lavender latte. So.
I like the way they say Starbucks poaches Nordstrom's CFO. You know what Nordstrom would say?
We got rid of her.
We finally got rid of her.
We got rid of that load.
Yeah, right. Exactly.
What are you doing in Starbucks, just as a stock? And what is Bad Coffee's spring menu?
We have a St. Patty's Day menu.
Ooh.
Oh, it's unbelievable.
Okay.
With green foam for Tony.
Ooh. Ooh. That's
you can have all the green foam you want.
You know what, Sadnuf? That's so pedestrian. Everybody does green something for St. Patty's Day. You should have done red or blue or purple. Be different, Sadnuf. Think outside the box, for crying out loud.
Actually, I don't have anything to do with it. What we do is we let the baristas choose their own.
That's awesome.
So they name their own drinks.
Yeah, that's great. You have a wonderful staff there.
So you can order
I'm going there Monday because we're filming Mike, his friends, and his whiteboard.
You can order an Amelia.
I know. Last time, so we get free drinks as Tasty employees. So 15 years of service, I get a free small coffee. That's what I get. But I didn't.
That's on me, by the way.
Yeah, I didn't take advantage of it last time because I was working too hard.
Get the fancy thing.
I know. I'm gonna get toast because I never had toast there because you weren't legally allowed to sell toast. So I'm gonna get toast and I'm gonna get so many drinks.
Oh, you know what you can get? We do a flight.
A flight? A toast flight or a drink flight?
Drink flight.
Ooh, okay.
4 different coffees.
Okay, I'm gonna be bouncing off the walls.
Yeah. It's really nice, and it's expensive too. You can.
I want to stick it to you.
You can stick it to me.
Yeah.
And it's expensive too.
It's expensive too.
Hey, University of Connecticut star Paige Buckers, aka Paige Buckets, has teamed up with Intuit to offer free financial literacy programs to athletes and students nationwide. The company says it will offer its NIL Tax Empowerment Workshop to help athletes understand the tax implications for name, image, and likeness revenue streams. What are your thoughts?
I have no issue with that whatsoever.
I think it's good. Yeah, you're giving these kids literally buckets of money.
Is she still in school?
I have no idea. Yeah.
I thought
she might have graduated. She's still a star.
She has a year left. She's been around forever.
Okay, sweetie, take a look in the mirror.
Maybe she's having a hard time passing the classes. You know, it happens.
No, she's on the cusp, it says, of becoming the WNBA's #1 pick.
Oh, right. She's got to be out this year.
Yeah.
Yeah, I was going to say, she's been in college for 10 years.
Okay. All right. You calm down over there. And finally, go Birds. Fly, Eagles, fly. The Eagles made sure to never look silly again, never let Saquon walk away, sign him to a massive 2-year extension.
Unbelievable contract.
The Eagles are rewarding Saquon Barkley with a 2-year, $41.2 million contract extension makes him the highest paid running back in NFL history. He hurdled backwards over a defender. Pay this man his money.
Hey, you know
he's
what?
the first 20 million plus per year running back. So
Pay a crappy ass quarterback $60 million a year. You should pay him $20. And that guy,
he
has the ability to earn an additional $15 million in incentives and escalators, $36 million fully guaranteed.
free cheesesteak. And you know what? That kid played his freaking heart out for that last year.
Fully guaranteed.
Here's some motivation. Here's some motivation for all you traders out there that maybe aren't hitting on all cylinders these days. Just think about this guy. He was a year ago. He's on the Giants, going nowhere, doing nothing, miserable as can be. And 1 year later, he's on top of the world. This is unbelievable. This is a great story.
I think it's great. And like 9 months from now, so many just wonderful white children in Philly are going to be named Saquon, and I'm here for it.
100%. We're going to be able to fill.
He's got a couple of kids. He's young, but he's got a couple.
No, I'm saying the fans after the parade, the whole nation in Philly, everyone's celebrating. Like, they're going to just name their kid Saquon.
He is a fan favorite.
Yeah.
He'd be a fan favorite in Chicago, too.
Yeah.
He would have looked really good in Chicago.
We were close.
2,500 yards in Chicago, and you own this city.
Hey, finally today for my viral video of the day. This is great. Everyone knows sometimes when you play a golf course that is in the middle of a residential development, that sometimes your errant ball can land in the yard of someone else. But this guy makes the best of his situation. Can I pet that dog? Watch this. Truly man's best friend. So there's his ball. Couple of golden retrievers. Oh, there should be sound, but he's like, hey, buddy, go get my ball. And he's like, oh, my God. So the dog does it. The dog brings him his golf ball.
Oh, sweet.
Well, I guarantee if the people in that house saw this, they'd come out there and hit that guy.
He didn't hurt the dog. His ball just landed in their yard.
I know. You got to be out of your mind to live on a golf course where people can hit the ball into your yard.
I mean, I would worry about my dog. Like, I wouldn't leave them out there unattended, but...
Sad enough, they're just hoping people like you and I are playing don't have a long enough ball to get into their yard. That's all.
Whatever, but I'm just saying. I mean, it's crazy.
I mean, it's happened. I've hit I've hit balls in people's yards. Like,
That's bad.
Not on purpose.
I know. I'm just saying it's hard to live where somebody can hit your house with a ball.
Right, yeah. I've never, busted anyone's window, but, I've landed in their yard. Anyway, hey, that's my time. Bat, what's coming up next?
Yeah, you never bust anybody's window that you're going to admit to. Yeah, that's right. We're going to take a quick 90-second break and come back. We got more Tasty Live right after this with Confirm and Send.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
I got my Ted Lasso. You actually have pants on.
Yeah, of course. I'm in school.
Huh, got it.
You're flexible.
It's cool.
Yeah. Oh, nice. You are pretty flexible. Let's see, get that leg up again.
Oh yeah, he's really. Right now, my other leg is cramping.
I believe that to be true.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but two trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live with Confirm and Send. Before we do, let's talk about the market because we've had quite a market. I know we're running a little bit late, but even the S&Ps are up $4, sad enough. They've had about a $65 range from top to bottom last night, and they're at the lower end of that range. NASDAQ up 46, Russell up about $2, and the Dow down around 4. The market's basically unchanged, and it's had, I don't know, a 75 handle move top to bottom, all that. Volatility staying bid, Sadnov. Look where it is, 21 on the nose right now, up 28 cents. Volatility really has not come in. It did make that big spike up yesterday. Key on volatility to see what this market's going to do for the rest of the day. Bonds are back over 118. 118.06, Sosnoff. Bitcoin's had a big rally too. Got up to around 91,500. It's back to 90,000. It was just yesterday when it looked like it was flirting with breaking 80,000. Oil down $1.52. Trading 66.73, and gold had its first downtick in recent history. Sosnoff down $11. Crowd down around $28. That's all I got. Go.
Huge move.
Unchanged market.
I don't know if you're watching the euro. Absolutely massive move in the euro.
Yeah, for currencies that usually don't have these kind of moves, look at how they've upticked the last couple of days. This 3-day move here is basically 3 months worth of volatility.
Yeah, crazy. Anyway,
and that's kind of the unwind. That's the opposite of the way this trade has been going, for the last umpteenth years, right? I mean, last few years.
Oh yeah.
The euro.
Yeah. Okay. No, we're listen. It's fine for me. We're staying long, but it's still very strange. All right, let's do this. So, emails that came into us overnight. We're a little behind, so let's move it. So I'm following your methods precisely by writing options with a delta of around 25 and rolling them down with more time if the asset reaches the strike. This approach has been working well for put options, but I'd like to apply it to call options as well. However, I'm a bit hesitant. Can you share your insights on writing call options? Specifically, which assets do you prefer for call writing, and what days to expiration do you typically choose?
I mean, everything that you're doing for the put side is exactly what we would do for the call side. I mean, if you're staying mechanical at Tasty Mechanics, 45-ish days to open a trade, looking at roll or close around 21 days, or when you have a profit, 25 to 50%. It's the same process going on the call side. Nothing changes. And what do we look for? We look for liquid products like Tom just mentioned crowd. So even though earnings have been doing well for us, he mentioned crowd this morning. Markets just weren't good in there, so we decided, meaning they were too wide. That's what we mean by not good enough, too wide between the bid and the ask. Then you abstain. You go somewhere else. The world is your oyster as long as there's good volatility and obviously tight markets.
Yeah, I mean, if you like the 25 delta, you could do 25 delta calls just like you do puts.
Yep.
If you like the 45 days, because we do, based on our research, 45 days to expiration is perfect. Manage at 21 days, nothing changes. Puts and calls the same thing. We trade them the same way. Sometimes, people like to go a little further, further out as far as the calls go, because they might be a little more bullish or something. But it's really up to you. You tweak your deltas however you want. There is no difference. The mechanics of selling a naked put versus selling a naked call are exactly the same. Let's go next slide. When the market is falling, like what you're seeing, would you go inverted with your strangles, or does it make more sense to be aggressive about buying the guts and selling the wings?
I mean, it's essentially the same exact trade, but I have defaulted to buying the guts and selling the wings. I mean, it's really is 6 of one, half dozen of another. You use less buying power when you buy the guts and sell the wings again than if you were to go inverted. It looks a little bit cleaner in your portfolio. It's easy to see as both options are out of the money now instead of having, 1 or 2 options in the money. It just seems better for me. So that's the way I do it.
I think that since everything's a little more liquid now than it ever was before, everything's kind of flowing like water.
Did you see the volume yesterday, Sadnov? That had to be record volumes in the option side.
It wasn't. We did.
It wasn't. Are you kidding me?
We did 70 million option contracts yesterday. We did like 80 last Friday.
Okay. Well, I mean, before last Friday, it would have been a record.
Yeah. I mean, it was high.
Unbelievable. So liquid.
But all I want to say here is that because everything's so liquid and because everything is kind of so efficient right now, I feel like it's a little easier to buy the guts and sell the wings and just recenter because the way things are moving around. I mean, you might prefer to go inverted. It doesn't really matter. You're going to be making more than one adjustment. So my preference is buy the guts, sell the wings. But 10 years ago I would have said something different. But that's the way I am right now. Let's go to the next slide.
Yep.
At what point do you decide to stop rolling and simply accept a loss?
Usually too late. I'll put it to you that way. I mean, in hindsight trading, which I absolutely hate, would probably say I stay in things a little bit too long. I don't know. I'll give you an example of gold this year. I didn't have a good year in gold last year. I started out poor this year. Was down a couple of points in gold, and when I got back to even, I closed it. Too long is my answer. I don't know. I don't know how else to put it.
So this is really something like you have to just in your head. There's a certain point at which you just say, you know what, this stock owns me, or this stock has got the better of me, and it's making me mad. It's kind of pissing me off because I'm just wasting too much time fighting it, and I want to move on. I mean, the easy answer is if the IB rank stays high, we keep rolling, and if the IB rank drops, we accept the loss. But there's also a side to me that says there's occasionally the stock beats me. And I just decide, you know what, I'm just moving on. So both of those things come into play.
I mean, if markets become less liquid, that would be a good way of doing it. I mean, the bid ask gets a lot wider in there. That would be another reason to get out of there.
Yeah, lots of things. But usually when it's usually based on IB rank. But sometimes I just get frustrated. I'm like, okay, it's time to go. Let's go to the next slide. I have several strangles on. I'm wondering if spreading them off into iron condors to free up the buying power is a good idea. I want to take advantage of selling premium into this pop in volatility, but I'm worried that I'm overpaying for longs in these positions.
I mean, I don't know how to answer this. It's not something that I've ever done. I would probably look to close the strangle. I'm assuming when you say, to free up buying power that you've gotten too big in your account. If you've gotten too big in your account, meaning you have too many positions on for your account size, then I think closing is better than trying to buy the wings and salvage something on this trade, whether it's profitable or negative. If it's using too much buying power, you got to get out. I think you got to get out of the trade. I think that's what I would probably default to doing as opposed to buying the wings.
This is a tough one for us because we rarely. I can't even think of a time when we've had a position on an open position and we've turned around from a strangle to buy the wings so that we could free up capital. I mean, usually if we want to do an iron condor, we would do it out of the chute. And if we're doing a strangle, we would either cover the strangle to move on to something else or continue to stay in it. So it's not the way we trade. You are going to overpay for longs in those positions, but it doesn't matter because you're going to turn around and use the capital to sell premium somewhere else, which is also rich. So I don't think that that's really the negative side to it. I just think it's a tough way to trade, to put on a strangle and then iron condor it off, and then to use the premium for something else, to use the cash for something else. If you can pull it off, sure, go ahead. I mean, we're not opposed to it. We just don't do that.
Yeah, a lot of times people say are sticking into one product that they feel like they have to get back to even or have to do something in. Sometimes it's just better to close and move on.
Let's go next slide. I have a question about a short put spread I sold that is underwater. That means you're losing money on it. I was looking to close, but then you said something to a caller about selling the other side. I'm relatively new to trading, and I'm not sure what that means. Can you elaborate?
Sure. So you're short a put spread here, $5 wide put spread. You sold for $1.50, $2. You stayed real mechanical, 45 days out, and the stock starts beating you, meaning the stock starts going lower. And that spread is now losing money, and you're not quite as bullish as you were on the overall market or that stock. And you want to be a little bit more neutral than bullish. If you sell the call spread now, equal width of the strikes, meaning if you had a $5 wide put spread on, you sell a $5 wide call spread, you collect more premium. Let's say you collect the same $1.50, $2 that you did on the put spread. Now you're using less buying power, and you have an iron condor on. You do have risk to both sides of the market, but you reduced your buying power, you reduced your risk. You did reduce your probability of profit, or narrowed the probability of profit field a little bit, but that's not what you were worried about. You weren't worried about the upside, you were worried about the downside. So that's what we talk about by selling the other side.
Let's go to the next slide. Yeah, I mean, that's exactly it. We had a big discussion yesterday morning on the call-in segment on that. And, when we're short a spread and the market's going against us, we sell the other side, another spread. It
naked option two. You sold puts, market went a little bit lower. Your put went from 20-30 delta to 40-50 delta. You sell a 20 delta call, reduce the delta by 50%. You want the stock to rally. You still have long delta.
Anything that doesn't require additional capital is the right move. So what do you consider a high and low implied volatility? For instance, on a monthly option chain, is 40 considered a high implied volatility?
So they're talking about the on the trade page, the right hand side.
Yes.
The monthly. Yeah. This is exactly why we built IVR. I don't know if 40 is a high IV for that stock, because you haven't told me what the stock is. I'm not familiar with what it is. But if you said the IVR, the IV rank up on the top left of the platform right next to the stock symbol was 40, I don't care what the stock is, whether I've traded it or not, I would say, yeah, it's high relative. Anything over around 30-ish would be considered high relative. It's not as high as it could be, because 100 would be the highest it could be overnight. So yeah, that's the way you would do it. The monthly implied volatility, good to know, but in its own, standing on its own, it's not enough context for me to tell you if it's high or low.
This is you just defined. This is the actual definition of why we built IVR and why we put it so prominently on the platform right next to the symbol. IV rank, this is the definition. IV rank gauges the current level of implied volatility relative to the range of implied volatility over the past 52 weeks. So I'll give you this. For example, if XYZ has had an implied volatility between 30 and 60, which this 40 is, over the past year, and the current IV is 45, then XYZ would have a rank of 50. And this is how we give context around implied volatility. Just like Tony said, neither of us, if you gave us the name of a stock, like you just said, just for example, IBM. I'm not even looking at IBM now, but you said IBM. And you said the implied volatility at IBM is 35. Is that high? We would have no idea. Unless we traded in an IBM pit or traded IBM every single day, we'd have no idea if the implied volatility in IBM was high. In fact, when we first built Thinkorswim, we used to be on the road and we would talk, people would say, is that high? And we're like, well, we watch it all the time, so it's high. And we're like, this isn't good. That's not a good answer for customers. So we built IV Rank. And that's why it's in the platform, exactly for that reason. So IV Rank will tell you if 40 is high.
Beautiful. You know, it's time for me to tell you. It's time for me to tell you. We got to take a break and come back. We got more Tasty Live with a market measure next. With a option jive next. Even the S&P down 4, NASDAQ up 15. Market basically unchanged. Place your bets. We'll be back in 90 seconds with Tasty Live.
Started trading around 2018, soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or Skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets, is the biggest takeaway. And that's kind of just the overarching principle I follow.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
It's option
jive. It is an option jive, Sosnoff. Go. Even the S&Ps just turned green, up 4.
Yeah, they are up 4. But I got to tell you, Bat, they are one sick puppy, man.
Yeah, they're definitely oscillating back and forth. This is a time to be nimble.
This is the time to be nimble. They are a sick, sick puppy. They might rally today, but they did not look good from that 40 handle rally yesterday afternoon. I was looking at my position thinking, man, I can't believe I didn't buy more stuff. And this morning I'm thinking, can't believe I went home long.
Yeah, no kidding. I mean, volatility stayed up there too. It's just under 21. We got ourselves a market, Sadnoff.
No, the VIX futures are up this morning. Yeah, it's crazy. Anyway, I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. Thank you for spending the morning with us. We are approaching.
You're welcome, Tom. There's no better place I'd rather be than with you right now.
Of course,
so thank you. I appreciate it.
In about another month, will be 14 years of doing this every single day, nonstop.
Isn't it fun?
I deserve
nights and weekends, days, nights and weekends.
Beth, shouldn't I get like a Nobel Prize for dealing with Tony for 14 years? That's almost as long as any woman's ever dealt with him. Almost as long.
No, Sadnoff. My 20th year with my current administration is at the end of the month, which surpasses 17 years with the first administration. Sadnoff, 37 years under incarceration. You're not even in second place, Sadnoff. You're in third.
I've been with the same woman for 40 years, almost, with a few bumps along the way.
With a Roger Maris little asterisk next to it, sure.
With a what is it? Not a Roger Maris, with a steroids asterisk. Yes.
Yes, steroids.
Which is going to be the next. That's the new Hall of Fame thing going to be. Everybody's going to. Roger Clemens, Barry Bonds, Pete Rose. They're all going to get it. They're just going to put an asterisk, which is what they should have done at first. You can't have the hit 100%. King, the home run king, and the pitching king not in the Hall of Fame. You just got to put a little asterisk there and say, hey, you know what? It's a different era.
They had help. Yeah.
Anyway, let's do this. This is a pretty heavy piece. I mean, it's a pretty long piece, so we got to move. It's an option jive on leveraging liquidity for lasting growth. But leveraging liquidity is what this network's all about, is leveraging liquidity and efficiency. Let's go to the first slide, and we'll move through this quickly. So liquidity is crucial for new option traders and veteran option traders. We are liquidity freaks. We don't trade anything that's not liquid. And it's the ease of converting assets to cash without affecting market prices. And we obviously care about efficient and fair order execution. However, a liquid stock or ETF does not guarantee a liquid options market, so it's essential to verify options liquidity. Key liquidity indicators could be bid-ask spread, volume, open interest. We look at bid-ask spread and volume more than open interest, but sure. While the bid-ask spread is the visible indicator, volume and open interest often offer deeper insights. And this helps us to ensure that we can exit and enter at fair prices. One of the things we love about trading is it's short-term and it's liquid. Let's go to the next slide.
For sure.
So one of the core aspects of a liquid market is a tight bid-ask spread. If the price discrepancy between the highest willing buyer and the lowest willing seller, that's what a bid-ask spread is. It effectively represents the slippage between where we buy positions and where we sell positions. So we gave you an example here in the SPY, which is obviously very liquid because it's a $600 stock with a 3-cent wide spread. And on a percentage basis, that's about as tight as it gets. Let's go to the next slide. So for retail traders, buying at the ask and selling at the bid means the bid-ask spread is the cost of trading. It makes it crucial to trade assets with low spreads in order to get filled at a good price and avoid leaving money on the table. So, I mean, this is just common sense, but when you start to think about this, just compare it to sports betting, where the spread on $100,000, the spread could be easily $5,000 to $10,000 wide, or on a piece of real estate where the bid-ask spread based on the commissions could be easily $6,000 wide. Where easily on a $100,000 piece of real estate, easily could be a $6,000 spread. On a $100,000 sports bet, it could easily be a 5 to 10% spread. on a $100,000 bet in the markets, okay, we're talking in the case of SPY, $2. So $6,000, $6,000, $2. That's why we love markets. Okay,
Correct.
I'm not exaggerating or anything like that. $6,000, $6,000, $2. That's the difference. So if anybody asks you,
what sandbox do you want to play in for to get in and out of? Of course, the one with the tightest bid-ask.
yeah, I mean, 200 shares of spiders is $120,000 worth of notional. It's $2 wide. Let's go to the let's go next slide. Analyzing five known highly liquid underlyings, we can conclude that an underlying is liquid if the spread is around 1 to 2% of the option price. So we're looking here at SPY, IWM, Apple, Amazon, and GLD. GLD is probably the worst of all these, but even so, as a percent of mid-price, all of these are under 2.5%, right around there. The average is 1/4. It's in this case, we are close enough. Let's go next slide. We also prioritize liquidity in stock and options trading by choosing strikes with over 1,000 contracts traded daily. Now, that's not a rule that we follow perfectly. There's plenty of times when we'll trade things that have a little bit lower volume. There's times when they introduce new strikes, all this kind of stuff. But if you're just looking for kind of just ballpark stuff, yeah, we want stuff that has, some decent, this is not open interest, this is volume.
Yep.
But it doesn't have to be 1,000. On slow days, it could be a couple hundred, whatever it is. Sometimes we'll trade stuff with 50 contracts traded. I mean, it does happen, but for the purposes of this discussion, yeah, let's use 1,000 to start with. Open interest more than the daily volume indicates future liquidity, suggesting ample opportunities to be a counterparty in opening or closing trades. We really focus on volume. But if you want to look at open interest, you can change the drop-down menu, look at open interest, and you want that to be at least something pretty decent size as well. Let's go next slide. On the platform, we show open interest and volume. You can set up your columns however you'd like. And I think that's really important. So volume resets to 0 each day, reflecting the number of contracts traded within that specific day. And open interest, however, does not reset daily, but it updates at the end of each day.
Yep.
And you can see that we highlighted the strike there, and then we also highlighted the volume and open interest. Let's go next slide. So in the last example, taken 10 minutes before the close, the at-the-money put in the SPY had an open interest of 17,000 and a volume of 3,800. However, the next day before the open, the volume restarted to 0, and the open interest was adjusted with the number of contracts open or closed from the previous day. That's exactly what we said. Every day the volume will reset, but the open interest will just grow. Let's go to the next slide. A volume of 3,800 and being close to 4,000 suggests that if open interest remains unchanged the next day, approximately 2,000 contracts were open and 2,000 contracts were closed. However, in the previous example, since the open interest decreased from 1,000 by 1,000 from 17,000 to 16,000, indicates that more contracts were closed than open, possibly signaling a loss of momentum in the current trend. Possibly, but I don't know any traders that really try to dig that deep into open interest, trying to tell us what the market's actually doing. Be careful there. You can be misled very easily. Let's go to the next slide. And finally, when using tasty mechanics to pick high IVR stocks, beware of stocks with a small amount of expiration cycles or very low prices, as this also indicates weak liquidity. Stick to the more common underlyings traded on the Tasty platform. Make sure more niche underlyings, if you're going to trade those, make sure they're liquid and tradable. Sometimes with some niche underlyings, they don't have all the different months, they don't have all the different strikes, and sometimes the strikes don't come up until after an expiration cycle. So just be careful. It's just part of the nuanced know-how of learning. Let's go to the next slide. Some of the takeaways: the bid-ask spread is the difference between the bid, which is where you sell, and the ask, which is where you buy, of stocks and options, futures as well. Ideally as narrow as a penny, 2 pennies, 3 pennies, whatever. A narrow bid-ask spread suggests fair pricing and easier trade navigation, while a wide spread indicates an illiquid market and unclear pricing. If you see something that's $1 or $2 wide, just walk, run, do whatever. Just don't trade it. Option volume reflects the total transactions at a specific strike on and expiration on a given day, while stock volume shows the daily shares traded. Open interest, applicable only to options, is the number of open contracts at a specific strike and expiration. And high volume and open interest generally indicate higher liquidity and a narrow bid-ask spread, as do the underlyings with many expirations. Sorry, there's a lot there, but it's a really good reference piece on liquidity.
Beautiful. Let's take a quick 90-second break and come back. We'll catch this opening side off, which is basically unchanged. We'll be back in 90 seconds with Tasty Live.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend. You know what that means? The opening bell must be imminent, and it is here in about 90 seconds or so. Even the S&P is completely unchanged. All right, well, they're up 50 cents right now. NASDAQ up 30 and change. I call that unchanged also. Russell up 40 cents and the Dow down 38. It's all unchanged, Sadnoff. Volatility staying bid. That's the canary in the coal mine there, Sadnoff. It only went down by about 70 cents or so. It's still 21. Volatility is high across the board, which means products like SPY and the Qs are going to be high too. Ivy rank of 48. Remember, these were in the teens just a week or so ago. What are you thinking here, Sadnoff?
It doesn't look good, man. Doesn't look good. I don't know. We didn't trade any earnings last night, so we don't have a big position on coming in this morning. We don't have a big open position. I thought we were going to be short some deltas this morning. We're actually long a few deltas, but I think a lot of them are in Moderna. I don't really know. We'll see. I don't know. It's pretty flat. Yesterday's close was not a good one for premium sellers. They pumped a lot of juice back into the market on that sell-off. I don't know.
And then they rallied them, and then they rallied them after the close. I mean, your P&L probably is a little bit skewed right now. It'll straighten out this morning.
The expected move this morning was $70 on the Trump talk last night, and we're basically unchanged. And
there you go, Sadnoff. We are basically unchanged. Even the S&P's at out of the chute down 4. Let's see what crowd is doing for those that played it. CRWD down around $29, right at the expected move, but to the downside.
Yeah. It's weird.
Other stocks going. Oh, go ahead.
No, last night I was just, the market was so strong, that 40 handle rally after the close, and then, they didn't sell off at all last night during that speech, and they opened up 50 this morning. I thought, all right, well, this looks pretty good.
Well, it's not a gift yet, Sadna. Volatility up another 40 cents to 21.14. I think volatility staying bid here gives a little bit of a little bit of a ceiling on this up move, at least for right now. I think you got to watch volatility. If volatility contracts, then maybe this upside can get going, but it hasn't yet. Some of the stocks that are leading us a little bit lower here, Crowd and Lilly down 5, Crowd obviously down 30. That was for earnings. Costco down 3, Home Depot down around 3. On the upside, let's see what's moving the stocks higher on the upside. Meta up 5, Baba up 4, PDD up 4, your beloved AVGO up 370, Microsoft and Netflix up around $3. It does seem like the Nasdaq's catching a little bit of a bid, but we'll see.
It does.
Same thing happened yesterday. Remember, Nasdaq was kind of trying to bring us out of the doldrums early in the day, only to be met with sellers pretty quickly.
Yeah. Taking a look here to see if there's see what there is to do. I mean, do you have any big P&L? I don't have much.
No, my P&L overnight was a lot better than it is right now. I've got some long delta and SPX that I could use an over 5,800. We're 5,780 right now to benefit from that. Google was strong yesterday. It's basically unchanged. That helped a little bit. I did nibble on some Microsoft. Got some long delta in there. That helped a little bit. Tesla's only unchanged. Tesla was up $8 or $9. So last night looked a lot better than this morning.
Yeah, I think we all went home long little Tesla. No, feeling that I should know better, but I think I did go home long a little bit of Tesla, and it did not pay off. The only trades I've made so far this morning, just adjusting some of these Chinese stocks, moving up the bids a little bit. I don't have a lot of P&L here this morning, that's for sure. Very quiet opening. I felt
completely different than when I went to bed last night, what I thought I was going to have to do and where I was going to have to go. I was going to be taking some profits out. No, that's what I was going to be doing.
I know. I thought the same thing. I said, oh my God, they owe me some money from that vol pop. And, I kind of felt like they owed me money. And they didn't give it back to me today.
That's no way to treat the birthday boy tomorrow. I mean, you're supposed to give him a little present today.
Where's my money? Where is my money?
Patience, grasshopper, patience.
Yeah. My money ain't here. I'm looking to see. Yeah, we don't have a crazy amount of delta either. We're a tiny bit long here, like a couple deltas, but I think it's a little bit individual stocks. I got a feeling today's an inside day. I got to say it. They had so much hype going into that talk last night and yesterday's markets and the 300-point moves yesterday. I think the market's going to be a little tired today.
Yeah, I know it's only Wednesday, Sadnoff, but this might be this market might bode well for your Sunday night show. You might get some action on Sundays now with this overnight action that we get in the market. You might be able to play. You might be able to play some futures in the overnight market. So,
yeah, when I say quiet, I'm not talking about like I'm not bearish today because I thought they got too oversold last night on the close. But I'm bullish today, Sadnoff, but volatility is the one that's really hurting me right now. Volatility was red
were going lower, I'd be nibbling to the long side even more here.
Yeah, I don't think you can.
Screw Chris Vecchio.
I don't think you can because the VIX is up.
I know. That's what I said. Yeah, I gotcha.
So I backed off from getting any longer too.
Staying patient.
Yeah.
It's taught you anything. You know, take your time. You don't need to hurry here. There's going to be plenty of opportunity.
100%. And I'm just looking at a bunch of different. I look at a bunch of different positions, and I got to tell you, there's not.
Apple was weird yesterday. Like Apple was kind of strong all day when the market was weak, and when the market got strong, Apple actually, I think, closed unchanged or lower. Apple was kind of weird yesterday.
The market's kind of weird today, but pre-market, the NASDAQ looks so strong. Now, now it's the weakest. It's the weakest
same as
link.
yesterday.
Yeah, I know.
Same as yesterday. And volatility continues to uptick. 21.26 volatility, up almost 60 cents.
I gotcha.
Even the S&P's down 1.
I know. And NASDAQ's down pretty good. And they're not looking incredibly healthy.
Yep. You're right.
I just felt like I don't know if they closed underwater yesterday, but I felt like they got very, very oversold. That's all.
Mm-hmm.
But I've been extremely quiet this morning. Just waiting to kind of.
Me too.
Waiting to kind of see what happens. I'm looking at my my NASDAQ positions because pre-market. It's funny. Pre-market, I'm staring at the futures thinking, man, if NASDAQ futures start going down here, you just got to buy them because they're so strong relative. And now everything's just reversed in the first 6 minutes of the day.
Yep. Markets are dynamic, odd enough.
Yeah. I mean, I think this is, well, no, we're not at a new low. I was going to say we're at a new low in Tesla, but we're not.
No. Tesla was just actually up a moment ago. Is it down now?
Yeah, it's
down $2.50. Yep.
Yeah. There's
Tesla traded up to 274. It's 268 and change, down 3.
Yeah, I'm not sure Tesla's going to be able to get out of the way of all the negative press right now. I don't know if the stock's going to bounce, and I don't know. Some of these NASDAQ stocks just really turned around. Oof.
Yep, Apple down almost $2 now. Google down $1 and change. I know you don't want to trade Amazon, but Amazon down small.
Oh yeah. No, I don't care. PLTR, another stock that's been giving the good kids some trouble, I guess you could say. Two-sided trouble.
Down $1 today, 83 and change.
Yep.
Keep your deltas tight, ladies and gentlemen. Good premium to be sold out there right now. No hero crap. Wait until you see a little bit of direction in the movement, then you can pop on.
Well, there's good premium.
Ride the wave, Sadloff. Ride the wave.
I don't know what wave
2000 is back.
I'm not sure what wave you're talking about, but there's good premium out there for sure. I just
I don't know what wave I'm talking about either. Right now, there's good premium out there, so keep your delta in check is what I said. You know what I mean? Like, don't get too overweighted on one side or the other, no matter what your feeling is, until you see the market move in your direction. If you're a little bit bullish and volatility is contracting, then maybe you kind of lean a little bit in one direction to the bull side. If the NASDAQ starts selling off a little bit more and volatility continues to rally, well, maybe then you start leaning in a little bit on the short delta. But right now, it's place your bets. It's both sides.
All right, let's do. We got what's your assumption coming up?
Well, you know what? We got what's your assumption, Sadloff. Our viewers came to bat for you. Let's find out what they were looking at immediately following these messages. We'll be back in 90 seconds.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again.
Oh, good.
So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you?
Didn't.
Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive?
What?
Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh, my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but 2 trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
Tomas, we are back, my friend. And so even the S&P, they were just up 20. They're up 16 right now. Sounding up, but volatility still bid up 35 cents. You got a big tug of war going on in the market. All 4 indices are higher, and volatility is higher, and the bonds are higher, and Bitcoin is higher, and gold is higher, but not oil and not nat gas.
Not schmoil.
And the euro's still up big, Sadnov.
Up huge.
It's a 1.5% move on a currency. That's very big.
It ran through my upside, little bastards. And the British pound, I'm not complaining, out of control to the upside.
Sounds like you're biatching a little bit here, Sadnov, just a little bit.
Sounds like
big
it.
move in the bond in the pound too.
I'm not. I'm very happy with the moves.
Okay.
But I got a little caught in the euro moved more than
expected.
Oh my God, more than expected. Have you seen this thing the last couple of days?
Oh my God, sure. The last 3 days, move of biblical proportions in these currencies. That means the dollar gets a little bit weaker.
I mean, I've been sitting here yakking about how bearish I am in the dollar for a year now.
You have. It was early. It's worked out nicely now. Yeah, 100%. Bonds, you were bullish on bonds. Yep. Big move up in bonds.
I would call that. We like to say that I'm gifted.
Some would say that you were gifted. I would not be one of them, but some would say that for sure.
I think
Absolutely.
you're gifted, Tom.
Thank you, Beth.
Beth must need a day off or something. I'm sick, so I can't see straight.
I know. It's painful to listen to you.
You want to call in a lefty? Your son's here.
No. I'm going bell to bell today. I'm tired of this crap. I was bored yesterday afternoon. I was actually watching the show with you and Nick. Nick did a great job. I want to thank my son for at least saying some kind words about me. I appreciate that, son, as I do you. And you'll be able to see him today on Johnny Trades around 9:30, 9:45 Central Standard Time today, where he brings some more heat for Mr. Tom Sosnoff.
Ooh, some big moves in here. All right, let's do this. Trades that came into us, ideas, assumptions. Let's see what we got.
Ready.
It's 8:46, 9:46, 8:46.
Whatever. 8, 9.
8, 9, 10. Depends what time zone you're in.
It's 8:47, you monkey.
NASDAQ couldn't hold the rally.
No, volatility's still bid. Yeah, totally agree.
Yeah. Could totally agree. NASDAQ couldn't hold the rally. Bonds are rallying right now. NASDAQ down 30. Oof. Heavy market.
Yep.
Let's go to the next slide. And for starters, the pilots from Panama. They're doing something in Adobe. Let me take a look here. ADBE. Adobe. We do have one Adobe position on right now. What do we have on? We are short.
Ivy ranking Adobe is 85, Sosnoff, and the stock really hasn't gone anywhere.
45 days.
It has earnings coming March 12th.
They're neutral. Earnings jump in and challenge Adobe to bite me. Delta. We have the 365, 525 on in April. Let's take a look at this. 365. 525. Oh, this is not. We gotta roll up the. We gotta do something in here. I'm gonna take.
You got some explaining to do, Lucy.
Got some explaining to do for sure. The calls are $5, so we're gonna have to sell like a $5 put. Done. And we're gonna. I know what I need to do. Hold on 1 second.
I don't see any dings, so
I know you gotta wait 1 second.
That's what she said.
Easy.
You
heard that?
All right. I am going to add to my trade. Not a simple thing, but I'm going to add to my trade and change the strikes because the pilots have suggested an interesting trade, which I like in Adobe. You got to stay small in there, just so you know. And I am going to change my 365, 525 to a 385, 525 strangle. And hopefully filled. Did I mess this up? Yes, I did.
Yeah, of course you did. You did the contracts wrong. The percentage.
I did. Okay. 385, 520.
Is that what some would call user error? Oh, gifted one?
Yeah, maybe. But anyway, I'll fix this right now. It's no big deal. Okay. So I'm in the 525, 385 strangle. It's delta neutral. April.
Easy for you to say, oh, gifted one.
April. We're short the 385 puts and the 525 calls. There is virtually zero delta to that trade. Okay.
You're short a strangle.
Short strangle. There you go, pilots. Let's go to the next slide. Oh, Roku. Blake from Oshkosh, Wisconsin. Oshkosh, be gosh. Are those things still around, Beth?
Oh yeah.
No,
Overalls?
Are they?
Oh,
I seem to have a vision. I seem to have a vision of a young Case in overalls, maybe 3-4 years old.
Nope, never.
Oh, for sure. They're so cute.
Oh my God, 100%.
For sure. Yeah.
Roku. We have not traded Roku in a while. Blake from Oshkosh. IV ranks 30. It's okay. Decent IV, decent IVR. Should make a nice, clean strangle candidate. The stock is $80. We haven't traded this in a while. It got all the way up to like 100 something, didn't it? Yeah.
Roku, sure.
And
they're in every TV.
And they've myrtleized it.
And they're still in every TV.
And they've myrtleized the stock. I like the 70.95, Blake. The volume in here. What happened to the volume in Roku?
It's gone away. It has earnings April 24th, but that would be after April expiration.
I know, but Tony, look at the volume in there. It's nothing, and the markets are wide. I did this trade.
Markets aren't great. Watch your pricing.
70.95. Yeah, I think I sold it too cheap. I don't like what I just did. 348. 70.95. I think you'd do it for 352. Let's go next slide. Coinbase. Shahzad in Dallas. Shahzad, we have a bunch of different Coinbase positions on right now. Let's see. Right now, we're a little bit long Coinbase. We are short some 170 puts naked, and we have a put ratio spread. What does he want to do here?
He's looking at a strangle on April 17th.
Yeah, and I'm okay with that because I think Coinbase has been slaughtered. But we have a bunch of positions on there. I got to be careful about what I do. I'm going to go wide because I'm already short a lot of puts in here.
You look at the markets here in coin, Sadnov, they're not good.
I know, but coin you get filled at decent prices. I'm going to do some of a little small bearish delta because I have a lot of long delta in there already. Shahzad, so I'm going to do the 160. Actually, I was going to do the 160 290. I'm going to do the 160 300.
Okay.
Like I said, I have a lot of delta in there already. So $7 right at mid price because Vol's pumped today. Let's go next slide. I kind of like that trade.
Look at you doing both sides on just about everything, trying to follow the bat lead.
Let's go next slide, Beth. Joseph from Portland. Autonomous humanoids. Expecting a chat DPG moment in the near future. Tesla, he's bullish. I, unfortunately, am already long. What's it doing? It's up $1 now. Good. We are naked short the 200 puts. Oh, you know what? I take it back. We sold them yesterday morning at 5.15. They're trading at 4.10 right now. So that's not too bad.
No, that's great.
Yeah, I didn't cover them, so I feel good about that. What do you want to do? December. What December are you talking about, dude? It's only what? It's a little bit long, Joseph, for us.
December's almost 300 days away.
Yeah. So we're already long in Tesla, Joe. I'm in April. We're short the 200 puts naked. It's a low risk, low reward trade. Tesla was just up. Now it's down. I'll add to that position a little bit because it's a very small position. So I'm comfortable adding to it. Market does not look great. Markets on these puts are 425, 435. We're going to offer at 430. Sold. All right, we just added to our position, sold some puts at 4:30 of the April 200 puts at 4:30. We're already short some. We just added a little bit. Let's go to the next slide. Be careful not to get too long here. Zach from Allendale, New Jersey. Basing for a while, no tariff headwinds. Be careful in Etsy. It's just hard to trade. ETS, but I haven't traded in a while. Let's see. How low is this stock right now? Oh, it's pretty low.
Yeah.
We haven't traded this thing in a long time.
Since the last time you said, does anybody use Etsy?
Yeah, I don't know if anybody does use Etsy, but Zach does. Or he thinks they're cheap. It's weird, Zach. There's not a lot in here.
Yeah, no, I'd be rank at 21, Sosnoff. Markets are wide-ish. $5 wide strikes. You really only got one strike or two strikes to go to. I abstain with everything that's going on in this market. You don't need a position in Etsy. So many other things to do.
I'm just trying to think. A small bullish position. Market looks a little ugly. Stock looks super ugly. Etsy, April. What if we bought the 50s, sold two of the 55s, paid about 65 cents for it? Not a lot of volume. This is a tough stock to trade. I'm going to leave a bid in. Zach, we'll see what happens. S&P's down 11. They just whacked them.
Yep. Volatility staying bid up 83 cents now, Sosnoff, trading near its highs.
Yeah, I don't remember what the low was yesterday, but we got to be getting pretty close.
The low on the E-mini S&Ps?
Yeah.
Lows yesterday on the E-mini S&Ps were closer to 740 and change, 745, something like that. 744 even, I believe.
Well, they can't even find a bid right now. Let's go next slide. This is not what everybody expected today. Carlos.
Not when you went to bed last night.
No. CMG. Chipotle. It's had a nice little rally because we... Oh, no, not really. A little bit. What's he doing here? Bearish in the next 40 says perhaps sell a call spread. And the stock's had a little bit of a rally, Carlos. What call spread can you sell? The 55.60?
I guess.
I mean, that's really all it is. It's going to trade. It's around, I don't know. It's hard to say. The markets are a little wide. 140-ish. I don't know. I'm going to do a little price discovery. 141. Just a little price discovery. We're staying small, Carlos. Not loving. Just because I was just long CMG, but it did rally up. Let's go next slide. SPX. Jacob from Fernley, Nevada. 0 DT today. 1 iron condor, 10 strikes out from the center line, $5 wide. Close at day's midpoint. Managing early, boost pop, daily trade. This generally beats the theta generally beats gamma in this setup. Okay, let's see what he wants to do.
Apple down 4, Sosnoff.
Yeah, that's the problem child today. Let's just take a quick look at our Apple position. Yeah, we got to roll down some calls in Apple.
Apple just under 232, a number it hasn't seen in some time.
Yeah, I just rolled down some calls in there, flattened out our delta. Okay, let's go to SPX, 0 day. These are going to be hairy today, but you'll get paid for this, I hope.
Yep. That's the thought process.
What is he? What Iron Condor, 10 strikes out from the center line. The center line right now is 57.71. So 57.70, sure. So 57.60, And
Sadnov, it's time to pounce on the long side.
Oh, what just happened?
I don't know, but it's time to pounce on the long side. Volatility now up 33 cents.
I know, but Tony, something SMEs were just down 10. The number must just come out at 9 because SMEs were just down 10, and now they're up 20.
Maybe not. Maybe manufacturing number. I don't know.
I don't know. Whatever it is, S&P's just dropped 30 handles, and NASDAQ just jumped 100, and bonds just sold off 15 ticks. So as I was about to do the zero DT trade, which would have been absolutely worthless in a second, now let's go back to it, Jacob. Zero DT. Now the center line is 5,800. So we're going to go $10 away. I don't think you could even remotely go $10 away. Not today on the zero line. 10 strikes out. I'm so sorry.
10 strikes. He's good.
10 strikes. I was looking at so 10 strikes from 5,800 would be to 5,750. And then the other way would be 5,850.
Yep.
Right?
Yep.
Okay. And then how wide? $5 wide. So we're going to have to move these down. We're going to have to move them down because they just sold off a little bit. And $5 wide. Let's see where this trades. Around 250-ish? No, that's going to be too high. $245.
$245 it is.
Now, let me ask you a question. Doesn't that seem a little rich?
With the movement that we've been having, it should be rich.
I know that. So basically, basically this trade is a risk one to make one, right? That's all it is.
Yeah, it's basically a 50-50
It's a
shot.
50-50 shot.
Side. Yep.
And I said
NASDAQ down 15 right now, Sadnov. Trump tweeted out that it changes to the tariffs in Canada and Mexico this afternoon. He's considering rolling back the rate of sectors like autos and some others.
Yeah, Trump. I mean, listen, you could say whatever you want against the guy. You love him, hate him, whatever. He doesn't stick with anything for the second he thinks it's bad.
It's the art of the deal, Sadnov. The art of the deal.
It is not the art of the deal. It is the art of lunacy. Okay.
Art of the deal, Sadnov. Art of the deal. Get on board.
Lunacy. It's called market manipulation. But whatever. I don't care. It's working for me. So let's go next slide.
Market manipulation. Politics don't have play in markets.
No, just short-term moves like this. It's just fun for him. He likes just messing with everybody.
Take advantage of it, Sadnov. Hop on.
I am.
Get on with the cool kids.
I am taking advantage of it. I'm shorts premium. Let's see what happens. Right. Amazon bullish 45 days. My Taiwanese sources are saying the sell-off at Amazon is overdone. How about selling the 180 puts? Let's take a look. Amazon. Stock's up $1. We are currently in Amazon. We're short the 190 puts. We're actually long Amazon. Wow, how did this happen? Oh, no, we're not. Our deltas show us short Amazon. What does he want to do here? To sell the 180 puts. Sell the 180s and buy a Mercedes. All right, let's do this. April 180 puts. They're trading for, let's call it $2. Let's call it 198. Take a fill. I don't know. Right at mid price. We'll see what happens.
Beautiful.
Let's go to the next slide. Goldie from Israel. Let's take a look at Visa. I think we have a small Visa position on. Neutral. Solid company, sell the strangle. We have currently 330, 380, which is not exactly delta neutral. let's take a quick look. 330, 380. So for us to neutralize this trade, let's do this first. Let's roll down our calls, and then, okay, what strikes do you think we should do here? What do they suggest? 375, 330.
Yep.
And actually, that's what we're going to be in. Is the three? Okay, so we're currently in.
Oh my God, you never do exactly what everybody wants.
No, we're currently in the 375, 330, and so.
Oh, good.
375.
Tesla up 4 now.
375, 330. Visa. We currently have it on. Let's add to the position a little bit. It's going to trade around 650 maybe.
This volatility is it's understandable that it doesn't die, but it won't die. It's just sitting here at 21.
Yeah, by the way, Visa's hard to fill. It's not my favorite stock. I'm working the strangle right now. I'm not filled. I'm at 645. Let's go to the next slide. Teresa from Bern, Switzerland. She wants to trade copper. Man, I can't. Do you ever trade Visa?
No.
I'm not having a lot of luck in there. Getting filled. Teresa, we have not traded copper in a while. Oh no, HE is lean hogs. I'm sorry. Was it?
You always do that.
Yeah, I always do that. I have cattle on right now, which LE. Let's see how we're doing in there. I don't like these ones that we don't trade much. We're down small in cattle. What do you like so much about hogs? You're bullish. Teresa, bullish in hogs. Oh, because they've been annihilated. April, 40 days. I would just sell puts in here. What do you think, Tony?
Sure. I'm with you.
I'm working the 78 puts. They're 22 delta. That's right in our wheelhouse. That's exactly how we think, Teresa. Can't get filled in Visa either. Nothing done in lean hogs yet. I'll move it a tick. Take a fill. Okay, we sold those puts. It's like collecting like $420 for each put in lean hogs. I sold the 78 puts for 107.5. So it must be, $45 a point or something. It's weird. All right, let's go to the next one. Bonds down 17. They're almost a low. Oh, man, that's it. Hey, you know what, Beth? I did not get filled in Visa. I'm trying. I wanted to add to my position.
I'm trying.
Filled. Okay, now we're filled in Visa. Okay. I gave away a couple pennies.
Yeah, you rolled in Visa. That's what got them confused.
But then I just filled it.
Yep.
We were pretty active today. We did all 10, but we stayed small because of the high volatility. Adobe, we sold a strangle. Roku, a strangle. Coin, a strangle. Tesla, a naked put at the 200 level, which is probably going to be a good trade right now. We just sold it at, what price did I say?
Yeah. Tesla's up $4. It was down $1 or $1.50 when you did it. You sold them like $4.20 something. Talk about Tesla. $4.30 you sold them at.
$4.30. They're $3.95. So it's a good trade. Etsy, we did fill. Etsy, we sold. It doesn't say in there. Etsy, we sold a put spread. Let me just check. Oh no, I'm sorry. Etsy, we did not get filled. Beth, take Etsy off there. We did not get filled. Sorry. Etsy,
Are you working it or no interest?
No interest. We didn't get filled.
Got it.
I tried. CMG, we sold a call spread. SPX, we did an iron condor. Let's see how our SPX iron condor is. It is unchanged. Amazon, we sold a naked put. Visa, we sold a strangle. And in lean hogs, we sold a naked put because Tony is really bullish in bacon.
Bacon is. We've been trying to cut back on bacon. I'm not gonna lie, Sadnov, but you add bacon to anything and it tastes good.
That's a pork belly, but what is a lean hog?
A Sadnov on Ozempic.
I mean, what is a lean hog? Seriously.
I think I looked this up one time. I want to say like a new hog, like a young hog. Let me find out. What?
Oh, that's what.
I can phone a friend.
No. It might be a young hog. That might make sense. A lean hog is a
pig that weighs around 275 pounds. Oh no, it's 275 pounds and considered ready for processing. So I guess it's just the opposite. Not a young hog. It's a hog that's ready for slaughter, Sadnov. Ready for slaughter.
Anyway, we got 9 out of 10. That's good. All right, let's move on.
That's about as good as we can do, Sadnov. We're going to take a quick 90-second break and come back. Even the S&P is up 17. NASDAQ up 54. They seem to be in a holding pattern here. Russell up 7. Dow up 200. Volatility just under 21 to 2090. Really not going anywhere. Bonds down 11. They downticked a little bit, Sadnov. They were over 118 and change. Oil down $2, Sadnov. Thank you, Donald Trump. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with
Jacob.
The Skinny on Options, Matt. With Jacob. Back in 90 seconds.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap. You have to take a vision test.
Yeah, I test. I will pass. Don't worry.
Well, maybe we can test it out. Is there any way that we can test this out, Vanetta?
I think that there is.
Okay, Thomas.
Can you
why don't you read line 6? Why don't you start with number 8?
8? Easy. D, E, F, T, G, T, E.
And you're getting a bus pass. Okay, so whose readers do you have over there? Put them on for the people. Let's do it. Let's do a fashion show.
Oh, these are. Okay. With all due respect,
ma'am. Excuse me, ma'am.
How did I smell walking in? Because I was stuck in traffic next to the 35th Street.
Okay, now
okay, 35th Street L stop, subway stop, like 35th Street subway stop, and my car parked there for probably 10 minutes in traffic, and it was just like fumes of marijuana coming into my car from all the people at the 35th Street subway stop.
Ladies and gentlemen, good cover. She's high today is what she's trying to tell us.
Yesterday, my son and I put up, we were talking to you and you were getting a little fresh.
It's the four of us.
So we gave you a double, it's not a backhanded slap unless it's a bat slap, and you had the two of us. It really looked funny because the way it was set up, it looked like we were slapping the two of you.
I'm looking at it now. It's a beautiful picture.
Oh, yeah. That's not a backhand. That's a bat hand.
And your son has more. He's got.
Oh, my son's coming from downtown. He's got some anger in his. Yeah. I think he's trying to reach all the way over to Sosnov. We're going to take a quick 90-second break and come back. We got more Tasty Live right after this. You know what's coming up next?
Lunch.
you boomers cut out early, so you guys pieced out right after lunch, and you were like, boomers out, and you like skipped out of the office together holding hands. Meanwhile, the rest of us are like, what the hell just happened?
What'd you call Tom when he just comes for lunch and then leaves?
Oh yeah, you're a lunch badger.
Lunch badger. That's it. That's what we were.
Hey. I'm the only one here.
There are some people right now in production that are about to walk out because they're there too, and they're there every freaking day, Sad. Now, if that's right, I'm talking about James, I'm talking about John and Beth, I'm talking about all the crew there. They're there every day too, so why don't you give them a shout out?
Who?
Thanks, Tom.
Oh, John.
Just turn off his camera now. That's all you have to do.
Huh?
Make it real easy.
No, just get real close.
I was going to say, better yet, zoom in on. There you go.
Oh, I like this. Tasty After Dark. Yes.
Get the full scoop by checking out the archives at tastylive.com.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend, so you know what that means. Enough out of you. We got Jacob in the house. That's right, the Skinny on Options. Matt, how are you, Jacob?
Good morning, Tony. I'm well, but I hear you're feeling a little under.
I'm a little under the weather, but you know what? Nothing can stop me. I'm here, baby.
Yeah.
Ain't no stopping me now.
Not even a good idea. Like staying work for sickness.
No sick days today. Bell to bell.
Bell to bell. All right, Tom. How about you? You feeling contagious?
Oh no, I'm perfect. Only
Jacob. I know you were talking about this on the break a moment ago. You wanted to take a minute to wish Tom a happy birthday tomorrow because you won't be on the show. You'll do it today. Go ahead. Wish him a happy birthday for tomorrow.
Tom, it's impressive that you've managed to do another trip around the sun. Everyone's constantly amazed.
Thank you.
It doesn't come to an end.
and in one piece, you're 100% correct.
Yeah.
NASDAQ down 7. Saab, this volatility will not stop.
No.
Yet.
That seems unlikely.
Yep.
Yet indeed. Unfortunately, today we're not going to talk about how prices respond to changes in volatility because we're going to be talking most about the Black-Scholes model, which includes constant volatility. But we will be talking about how option prices behave under differing circumstances, especially as we enter sort of this non-normal phase of the market. So let's look at this.
Let's do it.
Because I think everyone is realizing that, the tail events, they happen. So we're going to talk about how to adjust our conception of the Greeks to account for the fact that reality is not normal, or has heavy tails primarily. So the Black-Scholes model came around in the 60s, really shook everything up. And one of its biggest the advantage was that it had this closed form algebraic expression for a fair price of an option. And because of that, you could take, any first-year calculus student and say, hey, how does this formula change when you change the inputs? And they could do calculus and they'd get all of the Greeks. And all of a sudden the traders could look at their positions and not just have sort of a raw feeling of like, oh, is this one in danger? Is that one in danger? But have a much more precise judge about how it's going to change value over time, how it's going to change value if the spot price changes, how it's going to change value if volatility changes. All these things became a lot more exact and precise. But those formulas aren't true. Right, because those formulas are all based on the Black-Scholes model, and the Black-Scholes model we know to be not quite true, right? It has these it's the constant volatility assumption that really leads to the problems, but how this expresses itself in reality is typically mostly in these heavy tails, right? That on the top we have a normal distribution, on the bottom we have a bunch of different distributions with different kurtosises. There's a black curve that's normal, and then the peaks and heavy tails make for leptokurtosis, more tail, more peak. And then the purple box one is platykardic, having almost no tails. So how can we keep this difference in mind, right? This heavy-tailed reality, and use it to sort of adjust just qualitatively. We're not going to like add points or subtract points. We're just going to think to ourselves how the reported Black-Scholes Greeks differ from sort of what the true Greek would be in under sort of a more realistic model. Let's go forward one. Why am I being all qualitative and under a more realistic model? Right, why not be precise, right? We know that the issues with the Black-Scholes model is that it doesn't capture the negative skew and it doesn't capture the leptokurtosis of real return distribution, right? It's got, it should have a broader peak, more moves between 0 and 1 expected move happen than normal distribution statistics, fewer between 1 and 2, and then again, more out past 2, right? The heavy tails, a broad peak, and sort of steep shoulders compared to sort of the normal bell curve that we think about. And then a little bit of a lean to the left also for some downward skew. We can't really be that precise for this Black-Scholes, for this black swan kind of reason, right? That the substantive aberrations, like the real differences between Brownian behavior, normal distribution statistics, and reality is out in the tails, right? It's things that under a normal distribution might only happen 0.3% of the time, in reality happen 1% of the time. But that's not enough data points to be really confident in any, right? You can cook up a lot of different fancy stochastic volatility models that will better fit this, but which one you would actually want to put your money behind and say is real is impossible, right? You would need an infinite collection of exactly our universes to do a bunch of experiments in, which we don't have, right? This is why social science is not as robust as physical sciences, because you can't reproduce things in this way. So there's really no way to have enough observations to be confident in any of the sort of refinements or alterations to the Black-Scholes model. And so we're going to be much more on sort of a qualitative facts, right? Where we know we have more moves that are small and more moves that are very big and sort of fewer moves that are around between 1 and 2 expected moves out than a normal distribution statistics are going to happen. And let's see how this influences delta and theta specifically, I think are two, banner Greeks. So let's look at delta first. And then gamma as well, because we're going to look at delta and we're going to look at how delta changes. So gamma will come out there as well. So it's not particular to the Black-Scholes model or really any model. As long as you have some idea that there's a bulk and there are tails, then you're going to get the fact that an at the money option is going to be about 50 deltas. Deep in the monies are going to be about 100 deltas, and deep out of the monies are going to be about 0 delta. Those points are fixed in a model-free way. But the kurtosis is going to affect how we get between 0 to 50 to 100, right? How that journey goes. Right. In the Black-Scholes model, it goes, low, and then it has a curve up, and then it flattens out again. The reality is that we're going to expect sort of that to be sharper, that those changes around between the 1 and 2 expected moves are going to be more extreme. So we're going to have a higher gamma or faster changes in delta, right? We know that the endpoints for our deltas and our midpoint for delta are going to be the same, but that the shift between them is going to be more rapid, and then out in the tails are going to be flatter. Right, and then if we want to throw skew in there, we realize this is going to be even more the case on the downside than on the upside. This is really backed up by the market, right? The volatility smile shows that the far out of the money options are priced with, more juice than a Black-Scholes model would say they should have, right? That's why we see them having a higher implied volatility than the at the money options. This is hard to trade on for most people. Like, you can realize that it means that your sort of 1 expected move options are going to be more gamma sensitive than the Black-Scholes model maybe predicts. But you can't really extrapolate this into, I really want to trade far out of the money, because this imprecision in the models, right? The fact that nobody really has a good model for tail behavior means that market makers protect themselves. And how do they protect themselves? The far out of the money options are just not as efficiently priced, right? That, an at the money option might have a spread of a penny or a nickel or a dime on a $5 option, which is a pretty small spread. But on a percentage basis, if you have a nickel bid and a dime ask, that's a huge difference, right? That's 100% bid-ask spread. Sure. So this doesn't make these appealing trades, because right? You can see the inefficiencies, and you know that as a retail trader, the inefficiencies aren't on your side. You want to stick to more of the better prices, right? More efficient, tighter markets. Don't be lured into thinking that these are good values just because under normal distribution statistics, these options should be free. So the fact that you can get a nickel for them seems like a good deal. But it's not. Believe the prices.
It's funny, you used inefficient markets, and I never think about it like being inefficient because there's a bid and an ask there. To me, that's efficient. But the way you said it is 100% correct. I mean, when you think about it on a percentage basis, which I don't usually like to go down, it's something to consider. It's inefficient. You're right. Yeah, there are better markets. Yep.
Yes, so. All right, and then theta is the other one where we can sort of have a nice revelation about how our heavy tails are going to change how theta behaves. So the key algebraic observation is that if the option stays out of the money, right, if the spot price doesn't move, then over the length of the contract, all of the value has to go to time, right? That's just by expiration, it must be zero, and currently it is whatever it is. So the integral is going to be constant. But when does that value come out, right? Under the Black-Scholes statistics, it comes out as theta goes. So, it starts low, it increases, but it increases in a sort of a gradual, gentle way until right before expiration, where it has a pretty mild spike, a square root spike in singularity analysis. But if we realize that we have this realization that we expect large moves more often, which means that, right, as time gets short, any fixed strike becomes an outlier move, but those outlier moves are more likely than they are under Black-Scholes. So we're not going to lose as much value as they're falling way out. And also right around, we're not going to lose much value. So when does the value have to fall out? It has to fall out in the shoulder, right, around the 1 to 2 expected move line. So that you're, right, because the expected move shrinks as time till expiration comes in, right? It's like a square root of time until expiration. And when the shoulder of the expected move, right, when your strike crosses into that 0.75 to 1.5 expected move range, you're going to lose, more value is going to come out of it than the Black-Scholes theta value predicts. So you want to think about those ones as having more theta sensitivity, and pretty much everything else is having less theta sensitivity until right at expiration, when the singularity is going to have to be a higher spike, which is to say that you get sort of more juice when you're trading in the sort of on the shoulder, in the, around an expected move, less than 2 expected moves, more than half an expected move. There you're going to get more theta juice, more theta decay than the Black-Scholes model predicts, and everywhere else you should expect to get less. And so this is a nice reason to sort of preference your trading, right? Avoid the really far to the money age efficient markets and preference your trading towards sort of in this shoulder phase where you get the good action. And that is my main takeaway for the day, is that we should really try to focus our trading. If you have the fortitude to trade at the money and deal with the really big swings, there's nothing wrong with that. Those markets are very efficient as well. But if you want to be a little bit more, high probability type trader, you don't want to go way far out. You don't want to go out into the tail, because the tails are going to burn you, right? You're not going to get paid off properly for them because of these relatively wide markets, right? Even if it's only a nickel wide, a nickel on a nickel is 100%. And so out here in the sort of the 1 to 1.5 expected move range, right? Even the 2 expected moves are probably, you're getting out sort of into the tail more than you maybe want to. And that you want, staying sort of closer in than that is a better place to be as a retail trader who, don't get to set your bid-ask spreads. You have to take the market prices as they are. Yeah. Tom, how do you feel?
I mean, I think I get this one. So,
yeah. After last week, I thought I should stick to one that's not number heavy.
I actually thought I got this one.
As long as there's not a lot of really complicated formulas, I get it.
Yeah. Well, and the point of this one is that we have those really complicated looking formulas for the Greeks, but those aren't precisely correct anyway, because those are all Black-Scholes based. So we shouldn't really over specify onto these complicated formulas. We can take those numbers, the platform will do it for us, and then adjust them a little bit.
I know, but the reason we rely so heavily on that or on those numbers is because we need a starting point.
Yes. And then today's talk is about sort of how to work from that starting point, right? You don't need to worry about what the formula says. You just look at the number that comes out of it, but then realize that number is based on a model that isn't quite precisely correct. and how we should try to adjust our understanding of those numbers based on that.
Yeah, I mean, someday you should write a book, essentially, Fooled by Black-Scholes.
To go with that fooled by compilation of books that we're going to have.
Right. There could be a lot of books that start with Fooled by.
Fooled by, and we have a nice series, yeah.
Yeah, but Fooled by Black-Scholes. I mean, it's not really. It's kind of like the whole Fooled by randomness thing, but it's just a little more option specific.
Yeah.
Mm-hmm. So the Greeks are powerful tools to help us anticipate how changes in the market might affect our positions, but the exact values come from the Black-Scholes formula, which warts and all. But we can manage to account for these blemishes. If we think about a heavy-tailed hypothesis without being precise about what that means, we should expect strikes around the expected move to be more sensitive to price and time changes than the Black-Scholes delta and theta values would predict, while pretty much all the other strikes will have more stable prices. And then last is the warning to be wary about over-inferring based on normal distribution statistics, right? Just because a 4x expected move is incredibly rare under normal distribution doesn't mean those options are overpriced. In fact, those options may be underpriced. Nobody really knows.
Very good. Good job. Good job out of you. Sazonov, good job out of him. What did you do? I don't know. Just sat there and looks pretty.
Great job at that, though.
That's what I'm asked to do a lot of times. Just sit there and look pretty.
It's his whole life. You know, when you got a face like that, you get to live off of it.
We're going to take a quick 90-second break and come back. We got more Tasty Live after this, Sazonov. You know what? You know what's coming up next? That's right. Your friend of mine, Mr. Scott Sheridan, followed by Johnny Trades. We'll be back in 90 seconds with Tasty Live.
I'm always disappointed you don't refer to John.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say? Other than, boom. Trade like a trader. Tasty Trade. Make your move.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. You know, and Tasty Live in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures from theory to practice. I don't think there's a show that I don't like, to be honest. You know, that education piece is highly important. I found that Tasty offered that.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
Tomas, we are back, my friend. You know what that means?
And I didn't say that. That is an old.
This man.
I just wanted to defend myself. That is an old quote. That was not a quote from yesterday.
Tasty Trade World Headquarters, your friend of mine from the Scott Sheridan Studios, Mr. Scott Sheridan coming in hot.
Please, Mommy and Daddy, don't do this. Please.
Okay, first
don't
of all,
divorce. I've gone through one already. Please, not another.
My Taiwanese sources say you did say that, and I am going with my Taiwanese sources. Tony's got his. I got mine.
No, your Taiwanese sources are wrong. Anyway, look what's in there. Look what a cat dragged in.
Welcome, Mr. Sheridan. Welcome, Mr. Batista.
Yeah.
I'm sorry I missed yesterday. You guys probably didn't even notice I wasn't on. But
no, I noticed. The show's not the same without you. I like bantering with you.
Thanks. Here comes Tom. He's going, no, it was amazing. Clear sailing.
Well, I can read you the emails. I can read you the emails from yesterday. I saved them. I've saved them. Can you guys
hear? How great it was.
I'll change the name to protect the innocent. This one's from Joe. He says, can you guys do more call-in sessions without Scott? It's way better. I mean, that was just the first one I got. And then the second one, let's just call this
Joe,
Jim.
I agree.
Let's call this Jim.
Yeah, Jim.
Jim says, you and Tony doing the call-ins without Scott, 1,000 times better. Those are two different people, Jim and Joe.
And Jim and Joe are really smart. I do not blame them. So anytime you do not want me on, just say, don't come on. I'm happy to not be here. Now, on the other side, I do want to ask, how was the Hawks game? Because I didn't talk to you about it. Did you find the tickets?
Oh, yeah, I went.
How was it? I have no idea if they won or lost the game. I don't.
It was absolutely great. It was absolutely great. They had they traded for a rookie goalie. I mean, a new goalie. He's 23. The kid was an absolute stud. He stopped 41 out of 42 shots. The whole place they won 5-1. And the guy in front of me was a friend whose people that he was with left. So we got to sit on the glass for the whole game.
Wait, he became a friend because he let you sit on the glass?
No.
Or he was a friend? I'm going with the latter because you don't have friends.
It's a guy I've known for a long. It's a guy I've known for a long time. He was at the game with somebody. She left with his daughter, and then
obviously, you never had any business dealings with this friend, because any friend that you've had a business dealing with, you can't keep. That's what Scott meant to say.
Correct.
I had business dealings with this guy, and it was actually quite good. And
so, why would his wife and daughter leave a hockey game?
Because it was his
ex-wife.
It was his ex-wife, and she spent 5 minutes there. She spent 5 minutes there with him and said, "I got to get out of here."
Do I know this so-called friend?
No. And the funniest thing was, and he waves us down. So Corinne was just like, the whole time before we got the game, she's bitching at me. She's like, I don't really want to go to a hockey game. Why couldn't Steve go with you? You know, like, why couldn't you find somebody else? Why didn't Tony want to go?
Why don't you have friends?
Why don't you have any friends?
Yeah.
You know,
now that story, I totally believe.
Yeah.
No question about it. She said all that.
So we get to the game, and for Hawks games, you can park at the good lot, by the way, because they don't have enough people to buy the good parking tickets. So you could just drive right in and park at the suite parking.
Are you saying bad things about Hawks fans?
No. It's great. It's great. So by the time we're on the glass and the game's in front of us, it's a great game.
Yeah.
Corinne goes through. She goes, before we get there, she goes, I want to leave at the end of the second period because I don't want to stay there and watch the Hawks. They stink. I don't want anybody on the team anymore. By the end of the second period, she's up and screaming and says, I go, you want to leave now? She goes, I'm not leaving.
That's good.
That is good.
It was really good.
Very good.
They won 5-1. It was fun.
That's a late night for you.
It was a late night because we had to stay all the way to till they give out the awards afterwards.
You had to.
Well, I wanted to see this kid get his due.
Look good.
I mean, he played great his first game. You got to, I guess the fans in Florida love this kid.
He faced more shots in the first period of a Hawks game than he faced in the last full game as a Panther.
Oh,
that's crazy.
Let that sink in for a minute.
See, the Bears got a guard. Did you see that?
Saw it. Oh my God!
Who?
He's a game changer.
Who they got?
Joe Tooney from.
No, not Joe.
Not Joe.
They got. They got the kid from. They used to play. He's not a kid anymore.
From the Chiefs.
When did this happen?
Today.
Oh, I didn't see this.
Yeah, well, breaking news. We got like an all-pro guard.
They got a guard yesterday they signed. He's good too.
Which one?
From the Rams.
From the Rams,
Jonah
he played
Jackson?
at Detroit for a couple of years.
Oh.
Jonah Jackson. He's good.
Things are turning around.
Again, we're going to the Super Bowl. 7.5 bids, Scott.
You and Pete. Pete's got him. I think Pete's got him penciled in at like 14 or something. But yeah. Okay. Question for you. Somebody said this to me yesterday. I'm finding this hard to believe. But Tom, I need to go to the Sports Almanac. Otherwise, I can reach out to Ira.
Okay. What do you want to know?
Is it factually correct that we've sent more people to the moon or landed on the moon than people got hits off of Mariano Rivera in the postseason?
No, that's not even. Who said that?
I'm not giving out names. In the postseason.
How many people have we sent to the moon? Only like 5, right?
Allegedly.
No, we've probably had more than that.
I don't know how many people we've sent to the moon. Tony, ask ChatGPT. How many people? This is what ChatGPT is good for. Mm-hmm. How many people have we sent to the moon?
24 astronauts made the trip Earth to moon between 68 and 72.
24?
12 have walked on the
12
moon.
people. 12 people have walked on the moon. Don't listen to his fake news.
24 went.
24 went. Oh,
Okay.
it's possible. 24 hits off Mariano Rivera. That's possible. Yeah, it could be. How many hits? Ask Tony. You got to ask him.
Okay.
I mean, Tony's our ChatGPT expert.
Gave up 13 runs. Mariano Rivera gave up 13 runs in the postseason in his career.
Runs.
He gave up 13 runs, but that doesn't say hits.
I show a big number.
What number do you show?
998.
Here, have more people walked on the moon, 12, than scored earned runs, 11 against Mariano Rivera.
13 earned runs in the postseason.
You are just a massive misinformation.
Yeah, fake news.
Yeah,
no,
fake news.
I said, somebody said this to me. I was coming to you for confirmation. I didn't say.
Yeah, but you didn't have the right details. You didn't have the right details.
Okay. I understand. Well, they gave it to me wrong, so it's earned.
This is why
runs.
Tom has to do everything himself. This is why he has to do everything himself.
This is why.
Can't trust you guys to do anything.
This is why.
Okay. What's for lunch today?
Ben Yehuda.
Oh, Ben Yehuda.
It's a good one.
I like Ben Yehuda.
I like the
a
pickles.
good Ben Yehuda.
I
like the little pickles.
I like the little pickles.
How many finger scoops are there going to be walking through the line? For sure the hummus. Maybe the tahini, just to see if you like it.
Yeah.
I like their tahini.
And Nikki, good news for you. There's always plenty, so you know you'll get to eat.
Yes. I know. It's tough on these weeks when we have the board members in the office and stuff, because then everybody shows up to the office. The lunch situation gets even worse because it's good on a normal week because half the people aren't here. So it's tough. It's been tough this week, but I don't complain. I do a little.
We judge, and we do not complain.
Yes.
Please tell me that Tori has modified on quantity.
No.
She over.
Well,
yeah.
That's something we got to ask. You can't up the.
But nobody's got
costs here.
Nobody's got the balls to ask her that question. Without you here, Scott, nobody's willing to step up and take a bullet.
I got it. If you know what, I'll do you guys a solid next time.
You're the only one that can rope her in and control her.
I appreciate that. By the way, I just got a reservation 30 days out. I'm going to May, the steakhouse you guys went to, the Global Ambassador, which you said was excellent.
It's great.
Yeah.
Great.
Okay, don't let me down. Tony, you were there.
No, he wasn't.
No.
What do you mean?
No, I'm the side piece. I don't get the fancy restaurant.
I thought you came. I thought you were in the Waymo. You weren't in Arizona?
Yeah, I was in Arizona in the Waymo.
It's not the same trip?
No, we went to Arizona.
Went with Daddy.
Where did you say you're going?
Dinner.
Where?
The steakhouse, the steakhouse, the Global Ambassador.
Oh yeah, we were there together. Yeah. It's good.
I went to that. Yeah, I didn't know what you were talking about. I thought you were talking about the place Sadnov just went to.
Yeah, I thought you were talking about a place here in Chicago. No, that place is good.
Yeah.
It's good.
That place was a scene.
It's a scene.
You better put it. That place was a scene. You better put on clean underwear.
Yeah.
Nikki, this is the advice you get from your dad. It's a scene. Put on clean underwear. Like put it like a spritz, like extra cologne. Like what do you got?
Whatever you need. Whatever you think gets you over the hump.
Yeah, it's a scene. It's a scene. I mean, the food's good, not great, but it's a scene.
Oh my God. You know what? Sadnov, you got a free meal. You ungrateful garnet. Okay? Seriously. Dude, I sent something to the gentleman and family who was nice enough to buy the whole team dinner. But you didn't send anything, and it cost me a lot of money to ship it too.
And you know what his answer would be? Why would I send something? Why would I send something? Like he did what he was supposed to. He was supposed to take us to dinner. Why?
I made that guy a lot of money.
My guess is you probably didn't even say thank you, you ungrateful SOB. Didn't even say thank you to the guy. You just looked at him and go, yeah, it was all right. I've had better.
I said, right. I did better than that.
Nice table.
I said next time, try to pick better appetizers.
Oof. Oh, he ordered family style? That's
bad. Yeah.
Oof. Ooh.
Brutal.
No, it was better that way. I mean, the people at the table there, a lot of picky eaters. I mean, like, it would have been the waiter was already having a problem. Like by the time he got to me, I said, dude, bring me whatever you want. Go ahead, go to the next person. I don't care. I'll be fine. Who wanted white? Who wanted red? Who wanted a mixed drink? I mean, the guy was. I said, just just go get anything.
Yeah, that's it.
Yeah, that's it. All right. I know.
Sadnov, so far, wait, I'm sorry to interrupt you, Scott. So far, Sadnov is right. It's been an inside day. It's been inside the 300 handles that we had yesterday. Good job out of you, Sadnov. You're a winner.
Was that your statement? It was going to be inside.
Don't let him say that. You're not going to give him a response.
He's sick. Okay. He's only. He's your dad, so I don't want to tell you this, but he's only got about 6 hours left to live. As soon as he gets to urgent care, in about 3 hours, they're putting him down. So you should expect a call.
Do not.
As soon as he walks to urgent care, they're going to be like this. They're going to be like, listen,
Tony, I'm sorry.
It's too late. There's nothing we can do to save you.
Tony.
Okay.
Tony, see, you're a pro's pro. I didn't know. I had no idea.
You had no idea what?
They didn't feel well. He comes in game face. Comes in. He's not giving the you would.
Oh my God, he's been fake coughing all morning. He's been going.
I never noticed one thing, and I hope you feel better. I hope they take care of whatever you need.
Thank you. I'm gonna have it come in here in a minute. We'll see what we can do.
Mm-hmm. Omaha.
All right.
I'm sorry.
Should we get to some business?
You know how it is, Bob.
I know.
Does she still have that nurse's outfit?
Oh my gosh.
Oh yeah, you kidding me?
Easy, boomers.
She had to go to a platform heel because her feet hurt a little bit. Not quite as impressive, but still good. Oh my God, she just walked in. I got the number one.
All right. Do you have Johnny trades? Because I can get to my list and get on if you need.
Yeah, we got Johnny trades. Sure, give it to us. Appreciate
Liz and Jenny live from the CBOE too.
There we go. Yeah. All right. Top 15 symbols going through the system first 40 minutes of the day. No broad-based indices or futures. Time for number 15, SMCI at a 39 for everybody else. Tesla at a 100, NVIDIA at a 53, Apple at a 66, CRWD at a 40, PLTR at an 84, Amazon at a 56, MSTR at a 39, and Meta at a 37, Microsoft at a 53, iBit at a 58, AMD at a 44, Intel at a 75, TQQQ at a 76, Noog with an L at a 50, and number 15 for Tom, SMC at a 39. Rounding out the next 10, mRNA at a 76, ASTS at a 41, GLD at a 49, AVGO at an 89, BABA at a 65, TGT at a 38, ANF at a 44, SoFi at a 62, and Coin at a 42.
Beautiful. Good job out of you, Scott.
Day off, didn't miss a beat. Came in, knew exactly how to read that list.
Nobody does that list like you, my friend.
Enjoy your Johnny trades. Tony,
Thank you.
I hope you feel better.
Thank you, my friend. Let's play some music.
Johnny trades. Ready for a couple trades?
Yeah. What do you think I do? I'm sitting here. The only reason I'm here is for trades.
Yeah. All right. Well, I got you a couple.
Yeah, that's right, Johnny.
Yeah, what do you got?
SPX.
Already put a 0 day on today.
Ooh, you did?
Yeah.
Wow. Look at you taking some risk. I like it. I'm going out to April.
We already put a 0 day on. Should we take it off? We're already up money.
Yeah. Take the money and run, baby. Let's go.
Let's see. Hold on.
You got about 20, you got 40 cents or something like that.
Yeah.
A little less.
Nobody makes 40 cents like you, Tom. Nobody. You're the best at it.
We got to go for 50.
Ooh, okay. All right.
Okay.
I like it.
All right, what else you got?
Well, for my little Johnnies, I'm going out to April. I think you got to play into this volatility. Obviously, you got volatility futures at 21 right now. You got the VIX. Yesterday we got into a 25 handle. It's certainly high. I'm doing a delta neutral iron condor.
What are you doing?
I'm going out and doing a 15-point wide spread. I'm doing the 54.75, the 54.60, the
50?
April 17th weekly expiration. So the PM settled. I don't like doing the AM settled. I prefer the PM, the week. So it's the day. It's the third Friday, but it's PM settled. You like the set? You like the settlement?
Yeah.
But
it's more liquid. I don't care.
It's not more liquid. It's SPX. They're all liquid.
All right, just give me which the strikes.
54.75, 54.60.
54.75.
Yeah, it's a 20 delta, 400 points out of the money.
54.75, 54.60.
Yep. On the upside, 6,100, 6,115. 400 points in basically in either direction.
What's the call side? 6,100?
6,115. You can go as wide as you want, 20, 30, 50.
6,100.
6,115 is what I did. You can make it wider if you'd like.
For what price?
I did it at 555, about 1/3. Vol play, little chop.
April 17th.
Yep.
For 5 what?
55.
Yeah, if you do the AM, it's a little less. Just saying.
Yeah.
But here's the thing. 6,100.
6,115. 54.75. 54.60.
You're selling a much bigger put. I mean, it's same delta.
They're the same thing. What? Put spread's $3. The call spread's $2.50. It's put skew.
All right. Hold on, Johnny.
It takes him a while to do 4 legs.
I know.
Nick, you know how it is.
I got all the legs in there. Hold on. I'm not filled yet.
You wouldn't believe he invented this stuff.
All right, go ahead. You wouldn't believe we did invent the Iron Condor and the platforms.
I know you did. I figured this would be easy. You'd know exactly. I say 20 deltas. It's the third Friday of April. 20 deltas. This isn't rocket science. 15 points wide. I mean, it took you 5 minutes.
Okay, go ahead. What's that? I'm working it.
Yeah.
Preach, son, preach.
I'm not filled.
All right. Next one. Oil. You got a position?
Yeah.
I mean, we're at the lows here. I did a little Johnny put spread here. Oil trading at 65 and change. I went to the April 16th, which is...
Oh, no, I'm not buying oil. I mean, I'm long oil right now because I'm short strangles.
Yeah.
But I'm not buying it.
All right. So you're getting squeezed a little bit. Too big for you. You're a little scared.
What? I'm not. No, I'm not bullish on oil. I'm not even sure it's oversold.
Really?
Yeah.
So what do you think oil goes to?
When do you know when something is oversold, Sadno?
You just know, Tony. I feel it. The cows lie down in the pasture when it's oversold. That's how I know it's about to rain or oil's oversold. Yeah. But no, I think oil can get in the 50s. Okay. But I'm short strangles in there. That's it.
All right, I'm doing the 62.61 short put spread. I did it $2, 24 cents, which is $240. A little less than 1/3 the width of the strikes, around a 28, 30-ish delta for the short option. Little dip buy into this.
Me no like.
All right, that's okay.
What's next?
Can't agree on all of them.
No.
All right. Palantir.
Oof.
83 IV rank. Doing a little iron condor here. 72.5, 62.5, 105, 115. Did it $3.02.
Let's see what strikes you're doing, because I have right now the 77.5, 95.
Okay.
But which one do you want to do?
I'm doing the 72.5, 62.5, the 105, 115. Delta neutral.
I'm actually going to just widen my strikes out to the same strikes you're in.
Sure.
Because I like that. I just did. And I just have the naked strangle.
Yeah. It's the margin requirement there because of the volatility is a little bit high. So I would prefer to be naked, but
I'm trying to fill this iron condor, and I'm nothing done yet. But I'm at 535, which should be about 20 cents worse than you got filled, which is where it should trade for the AM. I think about 20 cents less. Just not filled yet. I think I will be.
All right, cool. That's 3 Johnny trades for you.
Yeah.
Good job, son.
Yeah, get some short premium on. You got to when it's
I'm
IV rank.
I'm short a lot of premium everywhere.
Market vol at 20. Yeah.
I like this BLTR strangle too.
Yeah, good. Thank you for your approval. I
Even the
appreciate that. It's big for me.
Thank you.
No, thank you.
Even the S&P up 4, NASDAQ up 9, Dow up 130, and Russell up 5. Volatility hanging steady. VIX is down 20. /VX is up 11 cents at 20.80. Sando, we're going to take a quick 90-second break because we got to get ready. You know why? Liz and Jenny from the SIBO immediately following these messages. Good job, son. Appreciate your time. Peace.
Good stuff.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
If you missed the live show, here's our cherry on top weekly recap.
I mean, I watched an hour and a half of TikTok, and that was enough for me. Skinny waist, what is it? Skinny waist, pretty face.
Yeah.
Don't finish that song.
Yeah, that's Meg the Stallion. It's not safe for morning television.
Skinny waist,
Body yada
face,
yada
big
yada
bang, blah,
yada
blah,
yada
blah.
yada. Body yada 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 yada. Yes, Tom, you have.
I got it down to a science, Beth.
Yes.
I'm practically a TikToker. Skinny waist, pretty face, big bang, boom.
I didn't even know TikTok had music.
Yeah. I mean,
here you are, this big-time brokerage CEO, media mogul, TV star. You're a full-on celebrity, and you're running around singing TikTok music like a 16-year-old girl.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Hello, everybody, and welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Dierking. The beautiful brunette to the left of me is Jenny Andrews, and we're at our favorite place on earth.
I know.
You love it, the SIBO.
We are live from the SIBO, and it is a wild Wednesday. It's been busy since we walked on the floor, and we've heard that it's been busy all week, every day this week. Lots of action here at the SIBO.
Yeah, usually you'll hear our secret sources have told us that usually it's busy in the morning, you'll get a little bit of a lunch, and then at the night, they said the last 3 days, Monday, Tuesday, and Wednesday, have been busy, busy, busy.
All day.
Yeah.
Nonstop.
Like a low hum.
Yeah, right. So we can see spoons are down 750 right now.
950, 975.
Oh, they move fast. They move fast.
Okay, Jenny, before we get into pleasantries, let's pop on the Jajun if we're down, because this market has been in fuego.
It's been bouncing all over the place, down then up, down then up. Let's get into the platform. We'll put on the Jajun trade and see if we could get a quick scalp out of that before the end of the show.
Yeah, I think we can. I mean, spoons are down 10.
Okay, into the platform. I'm going to the 0DT. Wrapping this around the at the money call spread, 57.70, 57.75, paying 255 for it. And the market is moving so quickly that I think it just changed to 275 mid market.
It did.
I know. It's hard. There, filled.
255. You should be out now. I'm just kidding.
All right. I'm going to put in a GTC to close this trade to just take $50 out of it.
Yep.
I have gotten lots of emails asking, can we do this? Can we use puts and do a bearish trade too?
I'm not going to lie to you. If I were in my account, I would be Jajuning all over the place. It's just a quick scalp. So what we've seen since we've been sitting here we've been up as high as 23, down as low as down 10. That's where we just put the Jajun trade on just since we've been sitting here. So the market has had some two-way action. You know what I find myself doing, Jenny? Looking up there instead of here.
At the market.
Yeah.
And because we are moving so fast.
Yeah. And I will tell you, our platform is spot on accurate.
It is. It is. Okay, I love that you turned Jajun into a verb.
Jajuning. It can be used anything. It can be an adjective. It can be a noun.
Now we're Jajuning.
Because you can say that Jajun-esque like an adjective. You can describe it.
You might have to increase your volume because it's getting loud over here.
It is getting loud. Everybody. So no, it's good. Our amazing production team has got it. They've got it all locked and loaded.
All right, we've got it in. Spoons down 10. They're still down 10. We'll see. But we have watched them go negative, red to green, red to green, red to green multiple times since we've been sitting in these chairs.
We have.
I'm waiting for an explosion, and I hope it's to the upside.
Well, we're not seeing the VIX. I mean, the VIX is... Go to the VIX.
All right, here I go.
Now, we do have a jam-packed show today. It is a wacky Wednesday. We have What's Your Assumption? We've got a study from Jacob. We've got lots of trades to do. We've got an oil dilemma.
An oil dilemma.
We've got a basketball game to talk about.
Oil moved quite a bit today. Oil is down quite a bit. As far as VIX goes, it's up 6 cents now. It was down 10 minutes ago.
Well, because when we were green, VIX was down.
Now it's up 17 cents. As we get a little bit more into the red, VIX is popping up.
But I always look at it, you know, yesterday was a bonkers market too, because we went all the way, I thought no way we were giving back that rally at the end of the day.
Oh my gosh, that rally was so crazy, and then to give it all back?
All of it, and then some.
It was shocking.
I know. But we are in the middle of the SPX pit, and that's where you can hear yelling. And we were looking at those markets at the end of the day. They were so expensive.
Now, if you're just a regular investor, now we're traders. We're in and out. We have a million positions.
Yeah.
We're traders. If you're just a regular investor, are you even doing anything, or are you just listening to the news and just leaving your money as it is and not doing anything?
Regular investors look at their statement 4 times a year.
Right. You're right. Yeah, they're not worried. They might not even realize there's all this action happening. When I talked to my husband yesterday, I was like, "Do you see the market today?" And he's like, "No, I've been in meetings. No idea."
It's true. And I mean, Tom tells the story about the crash of '87, and he was just like, you know, hair pulling out, and then he went in to go get a hot dog, and it's like the world didn't know the market was crashing.
And not that we're crashing, but we have had crazy back and forth movement, and for a trader, it's been wild, kind of a wild ride, busy.
Well, I'm telling you, I was like so taken back. Where was I? When I was like, see the market? Oh, I was at the dentist, and the hygienist was like, "What's the market?" I was like, "Oh, good God." I can't deal with this right now.
Okay, you would think something was happening because it got really loud, but they're still only down 10.
They're down 10, but there's lots of orders, and I think there's a lot of two-way action. Speaking of, only because it's fun, let's go to SIBO's most active.
This
was bonkers.
Brace yourself. I got a little jealous, honestly. I got a little jealous. Okay, here we go. SIBO most active.
Which is great. This isn't something that just Jenny and I have. You go to SIBO.com, type in most active. It's all right there.
First thing I looked at, VIX, August 20th, 42.5 calls, 200,000 traded. 200,000 traded. And immediately I said, I'd sell those.
Yeah, she did.
But then you go and look at it, and you look at the VIX, August.
200,000 contracts.
August, 42.5 calls. There's open interest of 227,000. So this is a closing order of some smart person who bought these long ago for probably a dime, 20 cents.
I mean, they literally probably could have bought them not even that long ago. It could have been February 20th. I'm picking a day. I have no idea.
And now they're unloading their 200,000 August 42.5 VIX calls for over $1.
What do you think they're doing? Think they're going to Disney World?
220,000 of them.
Yeah. What else is on that SIBO most active list? Because that was pretty juicy. Our eye line went directly to that and then nothing else.
That was exciting. I mean, that you talk about Jack Tucker.
Maybe it was Jack Tucker.
Maybe whoever bought and sold those VIX calls. Nice work.
It is interesting because it seems to be the VIX. Okay, so because the volatility is higher, you go into that list, all the calls are VIX calls. Before you even there's no SPX on the call list.
I know. And then Cliff's Natural Resources made an appearance.
I think it's something else now, isn't it?
CLF? I'm gonna look.
I think it was Cliff's. Oh, I think it's Cleveland
Cliffs.
Yeah.
Cleveland Cliffs.
It's not Cliff. CLF was near and dear to our heart.
What is it? What's the unusual activity in Cleveland Cliffs?
It is the March 21st 12 call.
March 12 call. Okay, 10,000 open interest. How many traded?
20,000.
They're only 7 cents. Should we buy one for 7 cents to keep an eye on it? I'm buying one for 7 cents to keep an eye on this. We'll see if somebody knows something. Now,
nobody knows anything. We're actually just having fun, and it is fun to have one lot in there to see. I can guarantee you in, I don't know, let's say 24 hours, you and I are going to be like, what is this?
Oh, here. About that thing, about that call in our position. Sure. But as far as nobody knows anything, right. And if they trade on something, they know it's illegal. But as a trader in the pit who stood through quite an experience in the pit when we had a firm, and I'm not going to name the firm, brokerage firm, come in and buy thousands and thousands and thousands and thousands and thousands.
Well, you can say what stock it was, but you wouldn't say the firm.
Yeah, in Bristol Myers.
Yes.
So it was during the Implone scandal. The whole, Martha Stewart, she was involved in it.
What I think is so funny is if you say Implone scandal, the only people that are going to know that are traders from the Bristol Myers pit.
I guess. So they had a piece of it or part of it.
Although her and Diddy did have quite a relationship now.
Hey, and she made a lot.
Not Diddy. What's his name?
Snoop Dogg.
Snoop Dogg.
And she made a lot of friends in prison. She did. It looked like fun, honestly. But But I was a trader in the pit, and this brokerage firm came in and kept buying thousands of puts, and I stood there and had to sell them, and it took me out for quite a bit.
Now, market makers get to keep moving their market because that's what they get to do. But then, that was something that...
we were selling those puts, and then literally the news was out. Like, the whole implode news was out. Bristol Myers plummeted, and all of us stood there like, thanks a lot. Thanks a lot.
So somebody knew something. And they went to jail.
So I don't know what the Cleveland Cliffs call buyer knows, but...
yeah, that's true. But we've got it in, and we're going to keep an eye on it. Speaking of old pit days, Jenny, it is early. Wait, let me see. Screws are down 16 now. Can we jump into Twitter? Tony Batista tweeted something today. Very poignant. And actually, he's not even there. When he walks by, I'm going to grab him.
Who are you going to grab?
Ben. I want to show him this.
Okay, so Tony posted this. Love this. This is the old AOL pit, and this was actually across the street. Things have changed.
Yes.
Things have moved. We're in the SPX pit. We're in the old Board of Trade building. That's what we would have called it before.
The Board of Trade, correct.
And the SIBO was across the street, connected.
Correct. We're in, what would be the bond room? The old bond room.
The old bond room.
Yeah.
TP. The TP probably stood right here.
Yeah. I was too. I was with Bear Stearns in the bond room.
Yeah, right. So, but anyway, here's a picture from the old AOL pit. And honestly, this picture makes it look bigger than it felt.
No, it was a big pit.
I know, but it didn't I know it was a big pit, but it didn't feel this big.
In its heyday, it did. Because they were jammed in there like sardines when AOL was going crazy.
But the steps were it was kind of like stadium style.
Yeah,
the
stadium
steps
style.
were, so you see all these people, but it was
now the point of our story is I spy with my little eye Tony Batista, and he ran into our friend Ryan.
Okay, I'm gonna point right here, right there.
There's
one Tony Batista.
One Tony Batista. And he ran into our friend Ryan,
right
who's
here.
next to him, who we did not name him, but people on the SIBO floor would call him the Vanilla Gorilla. And his best friend stands right behind us, but he's not there right now. I'm going to grab him when he comes by.
Anyway, that was so fun to see this old picture, and it looks so old. This is probably like a Polaroid.
Well, here's what I was going to say. You and I were there during this time. Ryan's not much older than us.
No, we were there. So we were not in this pit, but we were there. I was probably in my little Bristol Myers pit.
Yeah.
No, I don't know what pit I was in at that time. I used to be in the Boeing pit. Yeah, I was in the Boeing pit back in this day when this picture was taken. I was probably in the Boeing pit.
Yeah.
Where would you were out? You would move around.
I was in every single pit on the trading floor. They moved me around every day.
Do you find it interesting that I spent a chunk of my life in the Boeing pit, and now that became my
arch nemesis?
Yes,
it's kind of weird.
And I used to like it back then. I don't even remember what else traded in the Boeing pit.
So did you hear Vanetta this morning? Let's type in Boeing. They were saying Boeing is the #1 exporter. I had no idea. Thank God for Vanetta.
Who's down 28?
Jajun.
Oh, man.
Honestly, though, on a day like today, I might leave it.
Oh, yeah, let's just leave it.
Yeah.
It might get hit. Okay, I heard them talking about this. This is this would be a good play for anyone interested. It's not a trade recommendation, but we do not have a Boeing position. I may go sell puts. Can I show what were we talking about the December trades on the show?
No. Well, we briefly touched on the December trade.
Dr. Data took interest in it, and he might do a study on it.
He did.
Yeah.
Well, we've talked about him on the show before. Why don't you go into this? So sometimes they work, sometimes they don't. You've got a 59 rank in Boeing, our #1 exporter, so it's kind of like a tariff trade, right?
Right. So, okay, I just pulled up regular April 43 day. This is something we would typically look at if we wanted to sell a put in Boeing. The 20 Delta 145 put, you're getting $278 using 1,600. That's not bad.
And it brings you down to like almost to the near-term low of where Boeing has been. I mean, it's been as low as 135, but you're wrapped around there.
So honestly, that's not bad.
It's not bad.
Yesterday, there were a few underlines where I did go throw in some December puts, but it's like a case-by-case basis.
Well, let's take a look at them. You did them in the high flyers yesterday, like Tesla, because it had 109 IVR yesterday.
Well, and because you could get so far. Now here in Boeing, where do I need to? It's not like I need to get in Tesla or Coin. You're getting 100 points lower. In Boeing,
I'm not going to lie to you. Go to the 100 in December.
So you're getting $1.64 using $1,000, but it's not that big of a. It was such a difference in buying power.
December?
Yes. You're in 2026.
Oh my God, I'm in Tesla.
Yeah.
I was like, hit that button. Jenny Andrews. You're getting, because I was like, we're in Tesla, and you're going to get $4 for that.
And so here, it doesn't make sense. I think it's a case-by-case basis because the buying power for the April was only $1,600. The buying power, if I do, the 125 here for $5, you're looking at $1,200. To me, April makes more sense here. But on certain products where I was cutting my buying power from 7,000 or 8,000 to 2,000, that was a big difference.
Tesla makes sense. Let's walk through it in Tesla just because it does. Your buying power can significantly come down if you go far out in time.
Do we have the nerve and the buying power?
I've got the power. We've got it.
Do we have to sell the naked puts in Boeing?
Sure.
Yeah.
Why not? Yeah, go do it.
All right.
It's not scary. We trade in one lots.
One lots in some of these underlyings could have really.
Well, oil took us out for a big chunk in a one lot.
I mean, it's kind of like Marvell. We had our naked put in Marvell. We changed that, and thank God we did change it to a diagonal because that's continued to plummet.
It has. Yesterday it was up. It had a little move up yesterday.
Okay. So I just sold the 145 puts in Boeing in April for 270 something. I'll put in the GTC to close those for 50%. And honestly, the way this market's been moving, it could come off today.
It could come off today. The other thing 50% might not come off today. But what I was going to say is we're going to show the Tesla December trade. We're not going to put it into our account because that's a very long time. I think you have to have a little bit bigger of an account to do that because it can hold up capital for a while.
What I think is
that's an investment versus a trade.
Is like a bigger surprise is coin because you go from 8,000 buying power to 2,000 buying power. Your buying power gets cut by a quarter.
Let's look at it then. Let's look at both. It's the same thing with Tesla though, isn't it?
Oh, is it? No, I don't know because Tesla in December was still a decent amount of buying power.
It was $1,000. I'm in our account.
Really?
Yeah. So, but
it was more in my account.
But I will tell you that in April, with the 200 puts in Tesla, it's $3,000.
We'll do both. Okay, Tesla, April. If I go down to
just the 200.
Okay,
go to 200.
So yeah, we'll go far. 200, 435 put in Tesla, $4,000.
Yeah,
$4,000 in buying power. If you go out if you go out to December, because again, with these moves and with vol so high, and we're having this discussion at the lunch table, and we were talking about it with Josh and Data and a lot of people. If you get a huge vol crush and we get a rally in the market, you can get out of these.
You're right. The buying power is $2,000. It's not that crazy.
It's not that much different.
So jump into coin then, so they can see what it is.
Okay, so in coin, because I've been selling puts in coin and I've been in and out of them, but I've been doing shorter term.
And it's using a lot of buying power.
It uses a lot of buying power. So let's say I go to that 170 put in coin, I'm getting $560. It's using 6,500. Honestly, yesterday it was using closer to 8,000.
It was.
So then, but maybe I was higher up. It might have been higher up. Then you go out to December, and you can literally go 100 points down. You can go from we're trading 209. Let's go to the 110. So 100 points lower. And you're getting $700 using $2,000 in buying power.
Yeah,
it's just it's
now your capital can change as time marches
the buying
on.
Power.
The buying power can change as time marches on,
or as we move. If the market keeps falling and falling and falling, and vol keeps expanding, then your buying power can change.
It can grow teeth, right?
And then what if you think, I have these on and it's using too much buying power now, you'd be forced to close them for a loss. If you had to close them, it's either put more money in your account or close them for a loss.
Right. That's a margin call.
That's
put more money in your account or close them for a loss.
And I was joking yesterday as I was selling these December puts in various products. I said to Liz, "I'm going on the cruise."
Well, I would like to say for the record, sometimes you have to put more money in your account and close them for a loss.
If you close them, well, it depends. I mean,
yeah.
I kind of joke to you if I'm on the cruise and the market crashes and vol blows up and these December puts are all using a lot of buying power, you're in charge.
I'm in charge. You heard it, ladies and gentlemen. She put me in charge.
You're in charge. Just something, I just found that very interesting that the buying power was so much lower.
Well, coin buying power has always been very high, which is why we've leaned toward diagonals, and those are expensive. It's just
down 25.
I mean, honestly, we've gotten such crazy two-way action.
Like yesterday was...
Thank God that guy got out of his VIX calls.
If you would set, and I want to, okay, I'm going to SPX, and I just want to, look at this. I'm going to set this chart instead of a 20-year to a 3-day. I want to set it to 3-day, and I want to set it to like 5-minute bars. Okay, this is the movement in the last 2 days.
I mean, I can't see that far, Jenny, but it looks like a lot.
So, and yesterday, okay, where are we? Where are we now? I want to go to yesterday when we went from, 5,800 down to 5,735, and with the afternoon rally, yes, at 12:10. That sounds about right.
I thought it was later, but yeah, whatever, it's fine.
Well, 12:10, we went from 5,773 all the way up to 5,811.
Yeah. You went higher.
Oh, I guess even higher. We went higher. We went all the way up to 5,864.
Yes.
At 2:30, then at 2:30 dropped from 5,864 down to 5,764. 100 points.
It was crazy.
100-point drop at 2:30.
Yeah.
What is going on in the pit?
I don't know. I can't see because that our buddy's silk screen is in front of it.
It's just a little crazy back there.
I like it. It actually gives me a lot of energy to be down here. I like feeling the energy of being down here.
Well, nuts.
Okay.
Okay. Anyway,
let's we have to manage our CL position. Let's do that first.
Okay. Now we had a rising star on. He has a trading strategy.
We're not blaming him.
No. We've talked about this before. What if you get a study and the study looks good and the average P&L looks good and everything about the study and the trade looks good, and the first time you put it on, that's the time that it is a loser?
A lot of times you're not going to put it back on. I'm not that afraid of this. Now he was different because he used naked options, and naked options are a lot easier to roll.
Now CL is having a big move today. So as far as
4% is not that crazy.
I'm just going to go back to a regular one-day chart.
Yeah, please do.
One-day chart. I'll just go. All right, here, 10-year one-day chart. And if you look at the chart and the move that oil had today, it's the biggest red bar that we've had in the last few weeks. So the move today is a decent move.
It's not that crazy. Wait, why does your chart look so different than mine?
I don't know. One day, 10-year.
That's what I have. Something's still funky in yours.
You think so?
Yeah.
I don't know.
Because it doesn't, it's 2%. It's not that crazy of a move.
And
now it's 4%, 3.85%.
I don't know. But for when you're, okay, if you're trading 45 days out, 4%, not that big of a move. If you're trading day to day to day to day, those dailies can't handle a 4% move.
No, they can't. But all I'm saying is it's not the biggest bar they've had. Like the bar.
No, I said the biggest bar they've had in the last couple weeks. Yeah.
Kind of. It's okay. I'm looking at a different chart than you are. I don't know what's going on with your chart.
But so if you're going to trade the dailies, you have to be prepared to take some losses.
And we know we're gonna.
Let me take a look at your chart.
You have to. You can. So there's big bars everywhere, but that's okay. You have to roll things out, and that's what we're gonna do. Or you can close it and take a loss, or roll it out, because I think it ends at like 1 o'clock today, right?
Or it could be. Yeah, we have to.
Yeah.
We can't just leave it. We can't leave it till tomorrow. We have to roll it or close it.
Well, we probably could, because they would cancel each other out if it stayed right here. You'd have to keep an eye on it because we're beneath our long.
Honestly, when we were looking at this earlier, the long was at the money and the long had a decent amount of extrinsic value. Now the long's pretty far in the money and it doesn't really have much extrinsic value anymore.
It's continued to go down.
Yeah, so CL continues to fall. So I might say just close this and we'll put on a new one for Friday.
Yeah, you could. Because rolling it is going to add risk. We can walk through the process, our thought process on rolling it, and then show why we're just going to close this and put on a new one.
So it was a lot better when our long was at the money and there was a whole day of extrinsic value in there.
Yeah, right.
If we roll, we'd have to roll further in time, and I was looking at rolling to the 12-day and moving to the 12-day, and we had the 67, 66. You'd have to widen it, and here at this point, you'd have to widen it.
And pay?
No, Well, you can't widen it by just 50 cents. You'd have to widen it by a full $1. Then you take in a $150 credit.
That's not. I like putting on a new one instead of rolling this, right?
So then we just close it and put on a new CL, or do you say, let me see how things shake out in oil? There's too much going on right now in the world.
I mean, there is a little bit. We just started. We could put a pause in it and come back.
Right, because if we think we're going to start getting some movement in oil, then maybe you wait.
Yeah, you could. Now, and keep in mind too, we keep falling in oil. Like you said, we were at 66 when we were sitting down trying to decide to roll this.
Right.
Now we're at 65.50. You can leave these. You're just going to get rid of that extrinsic value in your long. So let's close it. I mean, honestly though, yesterday oil popped as well.
Oil popped. I know. Oil popped up.
Yeah.
Oil was down early in the day and popped up by the end of the day.
Yeah.
But I don't know what time this expires.
We have no idea.
So, I don't know. Even if it pops up, we need it to pop quite a bit. But it could.
It could, but we don't have the time for that. Not
you know what we could do? We could, on the train, close this. If we want to give it a few hours chance.
You could. All you're going to lose is the extrinsic value in your long.
Which is $80 right now.
Yeah.
So,
but it was a short-term trade. We can't look at this and be like, it's worth $80. We put it on 2 days ago.
Yeah.
It's not as if it was, 45 days till expiration. Sometimes we put on a 45-day and we're like, oh, there's still 80 left in it. Take your $80. Not in this situation.
Now, do you want to, and I'm just moving it to the 2 day to Friday, do we want to put on a Friday trade, do this in Fridays? Do you want to or not? I'm not going to be here. You're going to be here with TP.
I would say no.
Okay, then
just
we'll
pause
wait.
it, just because these are something that have to be daily managed, and I'm going to have TP, Tony from Mexico, and our crypto specialist on.
I know.
So I don't think we're going to be doing much of. If it was, if I was having, who's our oil specialist? Thomas Westwater.
Yes.
We were putting that
on. Okay, so we'll keep an eye on this. We'll give it till a little bit more time to see if we get a pop in oil. Otherwise, we're going to have to close it. Or one would assign, one would exercise, one would cancel the other if they're both in the money.
Yeah, that's the one thing you got to keep an eye on though, because otherwise you're going to take action or you'll take ownership.
You don't want one in the money, one out of the money, and you're assigned on one, not on the other, and then you're coming in with an oil
and
future.
We'll keep it. We'll keep this.
Yeah. So don't forget.
I won't. I'm only laughing because Jenny's standing here like this, and she's talking like this. And the last time she was standing like this, where is he? One of the traders in the crowd thought she wanted to play like slap.
I was explaining something.
And he just started going like this, and I was like, "Oh my God, you're my idol."
The hand slapper. I don't know if he's here today.
It was so funny.
I'm sure
I was like, you are absolutely my idol. It's two brothers that are down here, and they're pretty funny.
They're funny. They are funny. We're going to try to bring them on one day and talk about, being brothers and growing up as brothers in the training.
I was just laughing because you were standing like this.
What do you want to do? Because I'm going to tell you something, Liz. Wait for it. Let me see if I can get out of this. Here we go. Did you see this countdown?
I know, you're gone.
One day.
So she sells a Boeing put and gets on a cruise.
Oh. Well, you'll be here. I mean,
don't worry. No, that's what I'm saying. She's like, it's my arch nemesis. Let's sell a put in it. I'm out of here.
One day, 14 hours, 26 minutes, and I'm getting on this ship, but I'm leaving tomorrow.
I know.
You're on your own, sister.
I am. Well, she'll be here tomorrow.
I'll be on the show tomorrow. But then I leave for the airport.
She'll be wearing red, and then she'll be wearing red all day in the airport.
I'm going to do the airport trade before I go.
The airport.
Tell me again, what is the airport trade?
You buy a ridiculous or sell a ridiculous amount of options and then get the heck out of Dodge. You're either never coming home or you're coming home a millionaire.
Get on the plane. I'm going to do not only the airport trade, the cruise ship trade. Get on the ship and not have internet and just look at my account when the ship comes in. The ship pulls in next Friday.
She did put me in charge of her account. Can't wait to see what it looks like when you get back. Okay, but we do have to go to Bob on Fire because we do have some earnings today.
All right, let's see if I can find Bob on Fire. Top down?
No, he's right there.
Oh, there he is. Bob on Fire. Oh, okay. So Marvell, Zscaler, MongoDB, JD, Kroger, and Macy's.
Yes.
I'm going to say I went to Macy's. It's gone downhill.
I haven't been to a Macy's in 10 years.
I went to the mall, and we were looking for something specific, and we checked every department store.
Oh. I mean, I haven't been to a department store in years, though.
I mean, we were looking for that horse ornament.
Should have went to Hallmark.
I don't know. I don't know why. We checked every department store.
A horse ornament in February or March.
That's why we couldn't find it. It took a long time.
Okay, but we have a position in Marvel.
We don't have anything in Zscaler. MongoDB.
We don't have anything in MongoDB.
No, I was thinking of Mondelez. Tim Knight talks about Mondelez all the time. I usually keep a Mondelez position on.
Do you really?
Yeah.
She knows it's my favorite snack too. And now I have bigger than a breadbasket in Marvell and JD, so I have to make some decisions.
Okay, let's take a look. I did adjust my Marvell position today, which, right or wrong, I don't know.
You did adjust it? What did you adjust it to?
So, let's see where ours is. You can't even find it. Oh my gosh. You can't even find it on this page, really. That's our short. Our short's 85 cents.
Oh, that's fine.
In the 2-day. And our long is...
That's not bad.
It's worth $3.80.
I know, but that's not as bad as you... I thought our long
At first,
was,
I couldn't find... At first, I thought it was our long. I couldn't find it on the page. Now we got to scroll to our long.
That's not bad.
We have a diagonal. If I look at our position page... It's worth $2.94. So if Marvel falls on earnings, the only thing we can lose there is $2.94. If it skyrockets, great, it could kick in. But it really has to move up for our long to kick back in.
It does. It does.
But we only have $2.94 at risk. If we changed it, we'd probably
have more at risk.
We'd have more at risk for sure. We'd be paying. We'd be paying to adjust it.
If you reestablish this, there will be more at risk.
So when you said what did I do, I had more than one. So basically, like, I took my multiples of my diagonals and then put on new diagonals, but less. So, right.
But less. So I don't know what I'm going to do in Marvell. I've got the stock. Wow. And then JD is another problem child for me.
But so Marvell at 87. Let's take a look at puts in there. I'm just curious.
And Ben just walked by. That is the friend that I was referring to.
All right. I'm curious to see puts in there, how much buying power they are. If we have 2.92 something at risk, if we wanted to cover the risk of our diagonal, you'd have to get pretty close.
You don't want to sell a put. You don't want to double up to catch up.
No, we were in naked puts in Marvell the 100 level. They were the hundreds.
And now we're 86.99.
And so you can sell the 80 put for 230.
You can. Are you in the 2-day?
I'm in the 2-day. And I know we took off our naked puts because we did not want the naked put risk. And I'm glad we did because now it's at 87. But we could sell the 80. Maybe we just...
I mean, Marvell has 105 IVR right now.
I know. I'm not sure what
it has been very good to me the last couple of years. But now we're back to a level where it was on my birthday.
Right.
Which is November 2nd.
So, Marvell...
Shameless plug.
So, I don't know if we just leave what we have and call it a day, which is... I don't want to say it violates the rules, but it's out of the money. We really need to move, but we'd have to put in quite a bit to bring it back down to this level, right?
So what do you think about put spread and a call spread?
You know I don't mind those.
And then our
where we only have 300. We have 300 in risk in this diagonal, but then you don't have much yet. You don't have a lot of profit potential.
Yeah, we need to go up for the profit potential. We made our bed. Let's sit on it, right?
Let's see, because that's $3 in risk. If we did that, where we bought a call spread, where we could sell a call where our call is, so we'd actually, if we bought that call spread, 243. You could just take off the diagonal and use that money, that $3 to buy a call spread. Basically, you get the $87.95.
And then it makes money as soon as it picks up instead of
having to go so far.
Mm-hmm. But you're in the 8-day, right?
Oh yeah, the 9-day. The 9-day.
Honestly, we made our bed, right?
We'll just leave it. We'll just leave it and hope for a massive move in Marvel.
Yeah,
that's what we need. All right, JD, I don't think we have a position.
We don't
in JD.
have anything in JD.
Now, it's been up. Some of these Chinese stocks have been up a little bit. Like, they're not bad. It doesn't look bad. It doesn't look like the rest of the market.
No, JD, they was the only green, and I have changed all my Chinese stocks and put it all into, and there's not a lot. Please, when I say this, I'm taking all my money and putting it into JD. It's still very small, but I've taken off Alibaba, I've taken off Baidu, I've taken off Tencent, I've taken off Temu.
Tencent.
Yeah. and I put it all, whatever capital I wanted in Chinese, into JD. No real reason except it's my son's name, and that has been green when the rest of the market has been
The last
red.
couple days, yeah. $3.40 expected move. That's not much. Are you surprised?
No, because it's only a $4 stock.
$40
stock, so it's 10%, it's just under a 10% move.
So what do we want to do in JD?
Wait, I'm going to see what Marvell is, how much, but that's 105. Yeah, Marvell's $10 move on an $86 stock, but it's got a 105 IV rank.
But JD is using a lot of their margin is higher. So if I sell the 40 put, you would expect margin on that to be like $800. It's using up $1,264.
That's a lot.
Yeah, the margin's high on there.
Okay, I don't think we do anything in earnings. I just wanted to see if we had any positions in.
I'm glad we didn't do CRM because CRM was it's only down $1.20 right now.
What?
It was down $30. Or was that yesterday?
No, that was this morning. No, you're thinking Crowd, CRWD.
Oh, yeah.
Not CRM.
I was like, CrowdStrike, down $35.
Listen to the noise. It's so good. What are they doing? Can you see it?
March 21st, 5,000 puts. Someone was buying them. The traders are selling March 5,000 puts.
There's
so if I go to SPX,
there's the AM and the other one, 5,000 puts.
I don't think it matters.
5,000 or
March
5,500?
21st. So March 21st, 5,000.
5,000.
The 5,000 puts. Yeah, orders are coming in to buy them.
They're $6.
Oh wait, I'm looking at the 5,500.
That's what I said. That's why I kept going.
5,000.
I was kept going 5,000.
5,000. That's something. That's something.
Yeah.
That's far. That's someone who's like a doom and gloomer.
There's a lot of premium in
That's someone who sees the glass half empty. Buying the 5,000 puts. Well, get your emergency kit from Costco. What were those called? Do you remember when they would sell those?
Yes.
The disaster. What was in that?
Disaster relief? I don't know.
It had like canned food and diapers. I don't know.
All I know is the straw that you can drink like.
Oh, I have that.
Yeah. Well, my kids opened it up and started using it. They're like, "Oh, I want to go use this." I was like, "No."
My kids tried it at the lake. They were like, "Let's drink the lake water."
Oh, lake water's. Your lake water's pretty clean.
Yeah, I don't know.
Oh, I'm thinking Lake Superior. You can just
this is Lake Michigan.
Yeah.
It's not the same. It's not the same. So, yeah, that's what was just trading. But there's so much trading that it's like the board's updating so quickly.
Yeah. That's gone.
So if that makes you think, right? The 5,000 put, it's a 3 delta. We're trading 5,754, so it's $750 down.
Well, it's very similar to the 200,000 VIX. The 200,000 VIX trade. It was
42 call.
It was so far away. All you need is a little bit of a pop, right? Or now them a little bit of a knockdown. And then they're going to sell it for something else.
And are we getting any pop in oil? No, oil's continuing to fall.
This is why we say thank God for defined risk. My biggest loss to date was in a CL futures position.
And it took you a long time, but you dug yourself out of it.
I didn't have a margin call, though.
Margin call? Who it is? All right, let me just take one more look at Bob's list. AVGO, that's Thursday. So Marvell, Zscaler, MongoDB, JD.
I mean, in this environment, when you're looking at things that have such a high IVR,
you're better off trading.
You're better off trading the regular names instead of the earnings names.
Right, you don't need the earnings.
And earnings, we know this.
Here, okay, thank you. Cupcake, Manchester, 13 degrees. And sunny. So now it's in Celsius. Yesterday,
they switched it.
Yesterday, they were
in 44 degrees, and she was like,
Celsius?
No, it'd be burning up.
Just to clear up the confusion, we are in Celsius, and it's washing on the line day again. Tiny bit jealous of the cruise trip, though. I hope you have a blast. Thank you.
I know. I'm jealous of the cruise trip too. But I'm getting on my own in 3 weeks.
3 weeks, you'll be gone.
3 weeks, I'll be gone.
And I'll have a star-studded cast.
Star-studded. It's going to be amazing.
All right, listen, Jenny.
Look at Liz and Jenny forever.
I love that. How cute.
I can't even read it. I'm not even reading. This is the cutest thing I've ever seen.
If one were so inclined to trade vertical credit spreads for short-term scalps, I like the 14-day 80 delta. How wide could you buy the wing? It's not like I'm ever risking the spread. Anyhow, I've been buying $15 but have considered $25.
Noelle, market opinion.
She is so cute. So cute. Okay, 14-day 80 delta. 14-day 80 delta.
So go to SPX, right?
Yes.
SPX, yeah.
14-day.
Yes.
80 delta. So if you're buying an 80 delta call, is that right?
Inclined to trade vertical credit spreads for short-term scalps. Yeah.
80 delta, you're far. I mean, 80 delta is the 5530. That's
It just says credit spreads. It doesn't say call.
But so 80 delta is $26,000 for the 80 delta call.
And then they're buying $15 wings or $25 wings. Let me look. I wanna look over here.
If I make this $25 wide or $20 wide, you're paying $16.40 for a $20 wide. I see. So then it's so far in the money. I'm just going to shift it because this might make more sense to us.
Yeah,
I'm going to shift it to the put spread. It's basically, and I might be getting this totally wrong, but it's like selling this put spread for $370. So selling a $20 wide put spread for $370, and it's the 20 delta.
I think that's where I was so thrown off. I was like, why are you in the money calls so far? So deep in the money. This makes more sense to me.
So it's like selling this put spread for $370.
The synthetic version of it.
And you are getting far. You are getting pretty far.
Yeah.
And $370 in 2 weeks, risking $1,600. And honestly, and if this is the trade, if the market falls,
they're saying $25 or $15.
I didn't have.
I think the wings are $15, not. I think the wings are $15, not $15 wide. Let me read again. Listen, Jenny, forever. This is their real.
No, because the wing is they'd be selling it. Why would they bother?
It's not like I'm ever risking the spread anyhow. I've been buying $15, but I've considered $25.
All right, walk me through what their trade is.
No, I was just saying if you're selling that,
but if you're buying the 80 delta, cupcake.
This is Listen, Jenny, forever.
Oh, Listen, Jenny, forever. I like the 14-day 80 delta.
I'm not gonna lie to you, Listen, Jenny, forever. You know what you're doing. We don't know what we're doing. I have no idea what that is.
No, I don't. I need some clarification. All right, Punish Pixels. Morning, ladies. Might be a good day to do butterflies today on call and put sides. Maybe $50 wide on SPX or XSP.
Let's take a look.
So $50 wide butterfly. $50 wide 0 DTE butterfly.
You go to SPX?
I'm just going to do 5750, 5700, 5800. $50 wide, you're getting 3380.
That's the iron fly. He's saying calls and puts. The butterflies might be to the upside and to the downside.
Oh yeah, right.
That's an iron fly, and he said do butterflies today on call and put sides, maybe $50 or wide.
So I don't know where we want to start it.
Yeah, let's start wherever. Just grab one. Yeah.
720, and then the 70. That would be $50 wide.
Yep.
720, 5770. Sell 2 of those, but that's expensive. 5770, and then we need to go to 5720. Here's a $50 wide at $660. $600.
Yeah, that's not. That's not bad. I think that's more what he's doing.
If you think the market's going to keep going and land.
Well,
in
he
the
said
middle
calls
of that.
and or puts. Like you could do both.
Yeah. But then if you're paying that much, you don't want to do both. If you're paying that much.
Well, and I was going to say you're going to win on one and not the other.
Right.
They won't. This won't come into fruition until the very end.
Or you can win on neither. But unless you're starting them both right in the middle.
Yeah. But you might be able to get out of them as they move, like because you're getting the two-way actions. Who's there down 36?
Right. But we've kind of been hanging around here for a little while.
I know. What happened to our up market, down market?
And then just one more hour to the blast upside. This is from FK, the operator.
That was 36 minutes ago.
So now we have 23 minutes until the blast upside, to the upside.
Yeah. Which is going to be 10 minutes after our show ends.
I kind of hope so. We've all been looking for an update. We haven't had it.
Yeah.
We'll see.
So look at this. Go to SPY. Go to SPY.
Okay.
And go to the 577 calls and see how much they are.
570 in the 0 day?
0 day.
577 calls are
Loading.
118.
Yeah, that's what he's doing. He's loading up on these.
Oh, he's loading up on these.
Yes. Load the 577 and 582 calls. And then the word is multi-bagger.
Okay. All right. Yeah, I mean, it's a $115 shot. You're loading them up, whatever you want to risk. Again, these are a shot. If you think we're going to have a rally like we did yesterday. Yesterday we had...
Well, I'm not going to lie to you. So you're, in my opinion, I think it's better to do this, and you're risking $150 as a scalping vehicle than going out and buying them or buying a future.
Honestly, I'd rather play with options right now where you're buying them or buying spreads and defining your risk than buying and selling futures, because they're moving so much and you can get hurt.
You can get hurt.
You can get hurt.
Yeah.
So when the show ends, I might join you.
577. If I were in my own account. I'm just kidding.
Well, all right, we never got to what's your assumption. What do you think? And we never got to Jacob's study.
Okay, so
there's a lot to do.
Let's go to what's your assumption.
Sure. Yeah.
Okay.
I'm in. I'm all
let's
in.
jump in.
I'm in. What's your assumption, John? Music, please. Hit us with music.
So what's your assumption? We've got a couple to go through. We kind of looked at them a little bit before.
We picked a handful. We just got rid of things that we already have or positions that we're not that interested in right now because they have earnings coming up.
Yeah. And what we could do for the study, because the boys are going to go over it tomorrow. This one was easy for us, Tom and Tony, by the way. We could go to the takeaways if we don't have anything else. Like, we can go into the takeaways and talk about it if we have time.
Yeah, I mean, we could go through the whole study if we have time, but it's already 10:45, and the boys are doing the study tomorrow. So when we have a busy day, and there's a lot going on, I don't mind if we don't get to it because Tom and Tony will do it tomorrow.
I know, I get it too.
Yeah.
Okay, so first up, Roku neutral. Blake from Oshkosh, Wisconsin. April, decent IV, decent IVR, should make a nice, clean, neutral strangle candidate.
Okay, strangle and Roku. Let's take a look. Roku. Now, I believe we have, and it's up today.
Woo! It's a big red bar.
Oh, at the drop.
Yeah.
But it is up today. Strangle. Let's see. 32 rank. We could sell April. Earnings are after. If I
think
just
we're
get
looking more iron condor.
60. You can get pretty wide. 65, 105 for $1.55. That's pretty wide.
So let me ask you this. Roku's got a 32 rank. Now, this is their assumption, not ours.
Yes.
So it's fine. How much capital is it?
$800.
Not bad. In this market, would you like to bring it in and define your risk?
Maybe. I'm going to bring it in. I'll bring in the 95.70. And if I make it $5 wide, we're getting $1.50. Honestly, that's not bad.
I think to me, in this environment, I would rather have a defined risk, only because it's got 43 days. If you look at the last 43 days, we're all over the place.
We're all over the place.
Yeah.
So in this market, if I'm doing iron condors, and I'm not a huge fan, but if I'm doing iron condors, I will, if we have a huge rally, I'll buy back the puts. Or if we have a big plummet, I'll buy back the calls. I'll manage these separately. With 43 days to go, I'd manage these individually.
Correct.
All right, so that's working. That's working.
Okay. Then next.
Tesla bullish December. Look at this. Joseph from Portland. He's reading our mind.
Well, we already went through the Tesla December.
Tesla December. Okay, FSD and humanoid expecting a chat GPT moment in the near future. He went December. We didn't put it on, but we could probably. Let me just take.
Well, I think December selling puts is a very long time for this account to hold up capital. Because you can watch us. We get into and out of trades every day on the show. I mean, our trade count is high.
In December, if we just went to, and you can go very far, the 150 put, so it's $120 lower, is $9.
I know. I was showing you that.
Yeah.
And I was like, forget
about
it.
But it uses 3,000.
We were looking at the buying power.
It uses 3,000. It's a little bit much of buying power for this account, but I did this yesterday, sold December puts in Tesla, and so did you too, didn't you?
I did, but I'm out of them.
Yeah, you got out at the end of the day with that. Got out in that short, brief rally.
Yeah, thank the Lord. But I mean, you can just put them back on again today. I just said, okay, I don't know what's happening.
Right.
I'm out. I took a quick scalp. But it's not bad.
So I have it. I personally have it.
Okay, next.
All right, Etsy bullish. Zach from Allendale, New Jersey. 30 to 45 days, basing for a while. No tariff headwinds.
Okay, let's take a look. Etsy, there is no tariff headwinds.
Yeah, yesterday I got my delivery from Etsy. I told you about it.
Oh, you told me.
It was wrong.
Did you call him?
No, because it's too late. I'm not going to get what I need in time. I ordered some things.
Matching shirts.
Matching shirts for the cruise, and they were slightly wrong. So.
I hope Tom's listening to this. Yes, they're wearing matching shirts on the cruise.
We told Tom he's going to be on a Disney cruise at some point in time.
Okay, and listen, Jenny Forever will understand this. I said in 5 years, he's going to be in the Walt Disney suite on the Dream with his grandchild.
I pulled up Etsy, Liz. We do have a position already. We have a short put spread in Etsy.
Yes, we do.
And it doesn't look terrible. In this market, it doesn't look that bad.
No, but we should roll it. That's why we left this in here.
Oh, 16-day.
Yeah.
All right.
So we're only down $60. This is one of those where you can just take it and roll it out in time, and it shouldn't be a problem.
50, 40, taking in 67 cents, moving it out in time.
Yeah.
We'll do it. We will do it. The markets are a little wide. I lowered it by a couple pennies.
No, that's okay.
And it's working.
Okay, so we're in.
All right. Then we're doing pretty good. It's only $10.50.
Next up is CMG, Chipotle Mexican Grill. Bearish, 40 to 60 days. The CMG trend appears to be similar to that of Tasty Neverland. Bearish in the next 40 to 60 days, perhaps sell a call spread.
Okay, Carlos, I think we have short puts in CMG. I think we do.
Wait, we have something in CMG.
We have something in CMG, just a short put. If you're bearish, we have a short put, which is bullish, but we could add on a call. We're short the 55 put. We could add on the 55 call for $1.60, or we could add on the 55.60 call spread for $1.18.
I mean, I don't care if you're adding the 55.60 call spread, I would prefer just to add the 60.
Add the 60 call.
Yeah.
Sure. We could add the 60 call.
Yes. So that'll make it a little bit more. This is neutral to bullish, but still, we're adding your assumption onto ours.
Adding a call, just getting another 45 cents.
It's got a 54 rank. There are no earnings, right?
Earnings are
after.
Over.
Oh, look at this. If you look at the earnings line, they might be in the 43-day cycle.
Because the vol pops a little bit?
It pops slightly.
It does. It does. And
that's okay.
Well, but I will say, I can't tell you how many times, this 42 cents for the call, and if you look at the chart, Chipotle's nearer the recent low, and how many times it blows through the call, and we're like, why did we sell? Did we need 43 cents, really?
No. All right, fine.
I think we just leave it. I think we just leave what we have.
So sorry, Carlos. Just kidding.
Sorry, Carlos from Toronto. Just kidding. We love Toronto.
No, we do.
All right.
And now I get, because he's from Toronto, and that's why I said similar to the Tasty Neverland. He's from Toronto.
Oh.
All right, next up.
Oltar from Cyprus.
Great name.
What time is it in Cyprus?
These are questions I don't know. She's asking it into the...
Amazon bullish, 45 days. My Taiwanese sources are saying that the sell-off in Amazon is overdone. I'm with you. I have a position in Amazon. I think I just have a diagonal.
Okay, so we're going to look at something like that because we can't, given our buying power, we're not going to load the Flotola on puts, but it's not a bad idea, Oltar. So let's take a look.
I'm just going to look at the 9-day, 16-day diagonal, see how expensive it is.
Okay.
If I sell that 215 put, and I could take in more with the 212, 212 in the 9-day, in the 16-day buy the at the money. So I could do the 205, 212, $7.50 wide for $4.30.
I mean, now we like more than that for earnings, but it's not that bad if it's going to be a durational one.
I could adjust one and make it wider. I could sell the 217 and a half. Oh, wait, hold on.
What's the rank in Amazon?
I could buy the 205 in the 16-day, and in the 9-day, sell that 215. So then I have $10 wide for $4.92.
It's not bad, but so what's interesting is the diagonals make sense when there's not a lot of Ivy rank. I mean, maybe we go to a put spread if we're willing to risk $400.
And I think we talked about also looking at those, like buy a call spread and sell a put spread to pay for it. Something like that.
Because if you're willing to risk $400 and you've got a high Ivy rank, I'd rather risk $400 selling $200, $190.
I know. Okay, well, and I've got to get out of the 2-day. I'm going, where do you want me to go? 9-day, 16-day?
Oh, yeah, no, we're not doing the 2-day. Were you in the 2-day?
By accident.
Oh, okay, good. Well, it's his assumption, not ours, 45 days.
Okay, 45 days. Then with 45 days, I would say just stick with put spread. Like the buying a call spread to sell a put spread, I think then you're better off just doing one wider put spread.
Yeah, no.
I only do those in the short term.
Oh, you only do those in the short term?
Yeah, because those call spreads.
Well, those are very similar. The buying a put spread to sell buying a call spread to sell a put spread is very similar to diagonal.
But when you're going to a longer term, you just widen your put spread.
Yeah.
You bring your put spread all the way up.
Yeah. So Amazon, he wanted to sell the 180 put. That was his 45 days. It's $1,800 for the 180 put.
Honestly, and I don't mind it. $180, $1,800. I don't mind it.
I don't, but we're really taking down our buying power.
No, we can't. We need to define our risks, so we need to bring it up. We have to bring it up. And
I don't like any of these.
It's so hard. It's so hard when if a bigger account, sure, I would sell that 180 put.
Right. We have to, so we trade with handcuffs on, right? So when you have a smaller account, you have to keep buying power in mind. And that's why we lean towards those diagonals.
Right, because instead of putting up $1,800, we're putting up
then maybe
$400.
We do. Now, don't get me wrong, it's got a high rank, but let's make it shorter term and put in a diagonal.
Yeah, $400 instead of $1,800. Yeah. And I know it's not. It still needs to go up to make money, but it's just less buying power. And then if something happens and the market continues to fall, so that one, 205, 215 is 498. I do want to look. I do want to see if the buying power is significantly different out in December. Just curious. If you go to December and you go to like the 10 Delta, the 145, 140, you're getting $3 and using 1,400. You're still using a lot.
It was the Coinbase that we really.
It's only some of them.
Yeah.
Okay, so I think we stick with the diagonal.
Yes,
205, 215.
Perfect.
493.
Yeah. Ship that.
All right, that's it.
Now we have one what's your assumption left. I almost say we go to it and then table it. We'll show it and then table it.
Oh, lean hogs.
Yes, because I think I don't want to just jam something in, and I actually do want to take a look at all of these things.
I want to look at all the.
Yes.
So I want to look at lean hogs, corn, soybeans. Tomorrow's Thursday, so it can be our futures day.
Yeah, so we'll take a look at all this stuff tomorrow. Thank you very much, Teresa from Switzerland. I love it.
I know we have people from all over.
I know, I love it. Now we have a very, very serious question.
Don't even ask me. I thought we were leaving it.
We are going to leave it, but we have to talk through it. We're down $75 on it. I say we leave it. It's now $25 away. When we put it on Spooz, we're down 10. We're now down 27. I forget what his name is. In apparently 14 minutes, there's going to be a large rally.
According to FK, the operator, the blast to the upside. The blast to the upside. So I say we leave it.
We'll be at 11:13 or something like that.
Scott Sommer, your show comes on live at 6 p.m. in Cyprus.
Oh,
6
thank
p.m.,
you.
So 6.
Our international man of mystery.
Thank you, Scott Sommer. Hopefully our viewer in Cyprus is enjoying their dinner while we're on. It'd be interesting to be trading during dinner hours.
Remember our midnight put seller?
Yeah, David Poon.
David Poon? Yeah.
Yeah. All right, 10:57. It was a busy day.
It was a busy day. Let's talk about what we did, and I just want to make sure I've got everything
We
out.
didn't get filled on everything.
I mean, that's okay.
So if you look at our activity today, we were only filled in Jajun, which we're still, fingers crossed, hoping for a rally.
Yep.
CLF, we bought our 7-cent call. Boeing, we sold the 145 puts in Boeing.
Okay.
And Amazon, we put on a diagonal. That's it. We're working Etsy. We're working rolling our Etsy.
Okay.
Roku. Is that from today?
That was from today. That was what's your assumption?
Mm-hmm. So we're still working a couple trades.
Okay. Well, we will see what today's market brings.
Oh my gosh, Spooz are only down 11.
I know.
Then do we scratch Jajun? Maybe we do.
Down 5. What do you got in Jajun?
Holy smokes, we were only down 4. Let's take a look. With 2 minutes to go. We're going to use every minute we have.
We're up $25. Close it.
Yes. Where is it? Okay.
And now we're down 90. It's all over the place. These markets are so wide.
I'm going to say 275. Wait for it.
We'll leave that because this could very.
Spooz are only down 150. That should hit.
It's because the markets are so wide. I'm watching this thing go. It's down up $75. It'll go from up $75 to down 5.
Come on, Jajun.
It's okay. We're leaving. We're leaving this one.
Yeah, I mean, that should come off. It's crazy how the market is whipping around so much. We were just down, what, 36, 38, and now we're down, then we were down 2?
Yeah. So
can I see some green on the screen?
Dow's up.
All right, so I cut our profit target down. And
That's okay.
We're hoping to get filled. And I've said this before, if we're willing to take less, if that order would have been in, it might have been hit.
No.
But this
we
is
were
just,
all over the
just,
place.
Yeah. Yeah. What an afternoon. What a morning.
Okay, everybody, we're taking
We're
up
on
time.
it.
It's
We're out of
11
time.
o'clock. Everybody remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We will see you tomorrow.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
I want to play a game. It's a relationship game. So I'm going to ask you each a question.
Who loves the hardest?
Yes, yes, yes. So are you ready?
Kentucky.
Who's more stubborn? Who's more public? Who's more patient?
These are two of the least. These are the least patient people I've ever met.
I'm going to say him just because he's a little older than me.
Who calls or texts more? And who do you think takes longer to get ready in the morning? Who's a better driver?
I drove a truck in New York City.
I can fly an airplane.
Who loves the bed the most? Who's the bigger spender, do you think?
Me. Yeah.
Who's the alpha in this relationship? Who is more spoiled?
Oh, him.
Who do you think is funnier? Who is the better debater?
I'm gonna give it to him.
Dylan, you think you're the better debater? Are you the master debater?
No, he's he's good because he doesn't answer the questions, which is great for debating.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I got my man, Mikey Butler, with me as always. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever, just come hang with us for the next hour of the day. My favorite hour of the day, I get to spend with my buddy, Mikey Butler. How are you, sir?
Doing great. You're doing great. It's been a wild market this last couple of days here, and I don't expect it to change. We just saw a 40-point rally in the E-minis in like 30 seconds. Volatility is still staying bid, which is always fun. Staying elevated above 20.
Yes.
It's a new thing for us, a new experience.
Yeah.
But yeah, we still have some earnings this week, and we've got plenty of potential movement priced into SPX. So it is not over yet.
Yeah. I was talking about it with Tom yesterday on the close. The expected move in SPX for today was 74 handles, which, if you're looking at the market, if you just woke up and the first thing you did was open your platform, you would think nothing happened today because the E-minis are only down 7, SPX down 5 and change here. But we have had that range, or about close to it. We had about a 64-point intraday range on SPX. So we've certainly realized that despite the market being basically flat right now, it's been a wild ride. Lots of news headlines, lots of volatility in either direction. I also highlighted with Gus, have you looked at the E-mini contract volume over the last week or two?
I have not, but I know it's significantly more than.
Yesterday was 3 million contracts. I mean, we are used to, I would say, typically 1 million to 1.5 million is like usually a decent day. We can even highlight it here, and I can go to the continuous contracts too, because this will even show it too. I mean, this past 2 weeks has been some of the highest volume we've seen, and that's a function of just markets whipping around.
Yeah.
But today we have over 1 million contracts already traded, and we are, halfway through the day because it includes the overnight session.
Yeah.
But that is still just huge volume. I mean, when you look back at just like, the past history of recent history, 1 million to 1.5 million, that's kind of the range. I mean, we're just having absolutely massive volume. It's been wild. A wild trade.
Over 100 million volume in SPY yesterday too. So there you go.
I mean, things are moving.
Yeah. I'm interested to see IBIT. IBIT started off pretty hot, but it wasn't the highest we've seen in IBIT. Over 100 million on January 23rd.
Still a huge number.
But yeah, I mean, everything's flying around. The activity levels are peaking. People are interested. People are trading, and you love to see it.
This has been a
trader's paradise.
A trader's paradise. Been amazing. Quick little market update. I know we just did a little bit of it. E-minis down 4 right now. Before we got on the show, they were down 30, 40.
Yeah.
I mean, they just rallied 40 or 50 handles in the span of like 10 minutes. NASDAQ down 44. Looked like in the overnight session, well, we had obviously that strong bid into the close yesterday. In the last like 10 minutes, they took basically all of it away, and we were down like 50, 60 handles. And then in the after the close session, the 30 minutes that it stays open, we had a 40-point face ripper. And it looked like everything was going to play out perfectly. You're going to get a little vol crush today, probably a nice little move to the upside in markets. They sold off in the overnight session into the morning and opened basically unchanged and just continued to sell off from there. So it's been just an absolute whippy market here. Craziness. Dow up 100, I should say. The Russell down 5. Oil getting killed today. I got a little long delta in there in this account, but I also put on a new position. My Johnny Trader account just sold a put spread there. 65.44 on oil. Oil getting absolutely smoked. Volatility futures 21 and change here, up 35 ticks. We got as high as 21.75, so about 75 ticks higher from here. Bonds down 18 ticks. They've been super strong over the last couple of weeks here. You got gold and silver both taking a leg higher. Gold's up $10, silver up 65 cents. And then Bitcoin having a nice little move here, up 2,100. We did get a 90 handle at one point today. 2,100 on the futures. Spot up 1,800. Another big moves in the market. Natty Gas up 43 cents. The currencies, a lot of these currencies mooning. You got the Europe 175 ticks. Even the Canadian dollar, which I closed this morning, up 50 ticks. Things are moving.
Yeah,
you can trade.
And Thomas pointed out the fact that he was looking at getting long currencies.
Yeah.
And That's a smash. That is a smash green bar if I've seen one.
Natty Gas, short, not smash. But
not smash, but
still time.
I did actually close 2 of those agriculture positions.
Yeah.
So we bought the little dippy-do in a couple of those. I'm still long corn. I have the 490 505. It's picking up a little value today, but still down. That was from last week, though. Yesterday, I placed a wheat diagonal spread and a soybeans diagonal spread, and I took those off for an 80-cent winner and a 90-cent winner. So this is the kind of market where
you take the money and run.
Yeah, you're not really looking. I mean, you can look for 50%, but when you get 20% or $100 overnight, that's when we're kind of taking off the risk. I would rather take that smaller profit and take the risk off, see if we get a reversal of that move, and then just reload it. That's the market we're in.
Yes, 100%. I mean, with volatility this high, you should expect to see big moves. We've talked about it before. The VIX right now at 2343. It was in the 25 handle yesterday, but a 16, 17 VIX implies a 1% move in either direction on a day-to-day basis. When you're at 25, you're talking about like 1.5 to 2% moves potentially in either direction on a day-to-day basis. So, when you're seeing something, a long position you have, and it moves that much in a single day, it would not be out of the realm of volatility in terms of volatility for that to completely reverse through the rest of the day, if not the next day. And so you have to be nimble in this sort of environment and take what you get, even more so than like we normally do. Maybe instead of $100, you take 75 if you get it, 50 if you get it.
Yeah.
That's the sort of market we're in. So
yeah, we're in a delta market. We're in less of a theta decay market.
Oh yeah.
Yeah.
I mean, theta would not at the moment. Obviously, the stuff that you're putting on now, your 45-day trades. Like I did a Iron Condor and SPX. I had one in here too. I don't even think it's moved all that much. Even though the market, when I put this trade on, we could even look at this.
Mine's a scratch too.
Yeah, I put this Iron Condor on SPX. So this was on the 25th, which is, let's call it, so it's 10 days, a little over a week and a half. Market has dropped 150 points. So we'll call it 3%-ish from when I put this trade on. And it hasn't moved. And that's because of volatility. Volatility has expanded, and that this position hasn't gone anywhere. There hasn't been any decay. It's a relatively wide spread, 20 points wide. But that's what Mike is talking about. Of theta decay, you're not getting any theta decay. It will if you get a volatility contraction, ideally this position too, with a little bit of an up move. But if we see the VIX at 19 or 18 in the next week or two, this spread is going to move a lot. This spread comes out $200.
Yeah.
And so that's, when Mike is talking about a delta market, he's saying you're getting paid on the moves. You're not getting paid on the volatility contraction or the theta decay. You're getting paid on these big up and down moves, and taking those profits on those moves specifically is what you're referring to.
Correct.
So I love it. It's been crazy.
It's been wild.
It's been an absolute blast. I love it. I hope it lasts for 4 years.
There's a strong possibility that does.
I think so. I really do think so.
I think you're gonna get paid off on that bet. Yeah.
Other trades. Did you do anything else today?
No, just close those the quick ags wins, but that's it.
E-minis up 1. We are saved. I closed out the Canadian dollar position. Katie got us in. I actually have 2 contracts in that. The way the posting works on the follow page sometimes it gets all funky. But I took about 20, 30 ticks out of that. I put on a new SPX position in my Johnny Trader account. I think if you haven't gotten into a quote unquote core type position with volatility this high. You can structure it however much risk you feel comfortable with. My Johnny Trader account, I did it 15 points wide. This account, I have the 20 point wide. I think you did one similar to that. I think it's certainly a time to start considering that, given how high volatility is. I did a little dip buy in oil futures, so I sold a put spread there in the Johnny Trader account, did it at a little bit higher prices. I got into an iron condor and Palantir. Palantir implied volatility super, super high, so that one kind of stuck out to me there. Managing a couple other positions that I have on FCX, I had a naked put at the 38 strike. If you're looking at FCX, it's having a big move to the upside, $2 and change. Copper is having a move today. If you look at copper futures, up almost 5%. Huge move there. FCX, one of the biggest copper names in the U.S. market, so obviously that's having a similar type move. UAL, I rolled down a call into this $2 or $3 rally that we're having. Stock has gotten whacked over the last couple weeks along with everything else, so you had a little bit of a bounce today, rolled down the calls just to reduce some delta. It was an iron fly. I used a little bit extra buying power here to roll down to $200 or so extra buying power, but just playing into this move, hoping for a little sideways, if not small up move more from here. And then in SoFi, the position that I will be keeping on for the rest of the year, I have quite the position on in there. I'm basically a scratch right now, if we look at it. And SoFi, if you remember, we did this basically at the highs. So I've got all sorts of rolls and adjustments here. The way we traded this was we had the covered call position, so I was long stock at 16 and change, sold a call against it, and then I did a strangle on top of it because the buying power was really, really low here. So I have a naked put, 100 shares of stock, 2 calls against it. My net position is very much similar to a straddle here. So when you think about my delta exposure, here, I have 100 shares of stock, and we can look at this on my actual positions. You can see my delta is about 82 deltas here total with the position, and that's with 2 at-the-money calls, the 100 shares of stock that I have, which is 100 deltas, those offset, and then I've got this in-the-money put. So from a position perspective, I'm basically short this straddle, the 15 or maybe 14 and a half straddle. You can see the delta here. If I had like I guess I'm more like the 15 and a half straddle, really, when you think about it here in terms of my overall delta exposure. So ideally, a little bit of an up move here in SoFi would be nice.
Yeah, that's a affordable product. You can do a lot of different things in there, which is nice. That's kind of the key point for our year-long trades, is picking something that we can withstand any kind of variance that we see in there.
Yes.
IBIT, SoFi, DraftKings, all nice products with high implied volatility.
Yes.
Yeah. So markets are flying around. We've got
crazy.
What do we have the rest of the week?
We had CrowdStrike after the close yesterday. It's down 33 and change. I think that was right around the expected move. It did go lower from here. I know Abercrombie and Fitch was another one, down $12 and change. That stock has had a really nice move to the upside and then given a lot of it back.
Yeah. It outperformed NVIDIA at one point, and then I think people realized this is Abercrombie and Fitch, not NVIDIA.
Kids like it.
The kids love it.
Kids love it.
I used to love it.
Yeah.
It's been around forever.
Yeah.
But yeah, seeing some big moves from some earnings, which should not surprise you given the realized volatility in the market overall.
Yes.
But we have Broadcom earnings tomorrow after the close. We have Costco earnings tomorrow after the close. I've got earnings previews for both of those on the News and Insights tab on tastylive.com.
What's your lean? What was it?
I think
Costco and what else?
AVGO, Broadcom.
Okay.
I mean, Costco is just smashing everything.
Yeah.
I'm expecting Costco to split this year. And I think that could be a bullish catalyst for the stock. Pre-split maybe, but post-split definitely. I think it's just one of those stocks that, like, you know, your everyday trader probably wants to buy.
Mm-hmm.
Broadcom is interesting because it's come off of the highs similar to other AMD, NVIDIA products, but they're posting big numbers too. So I think you could see a bounce in both of those. But yeah, Costco, I would be shocked if they don't announce a split this year. We'll see.
We're going to do, this is an expensive one. Can I go naked? No.
And yeah, today we have the Fed Beige Book at 1 o'clock.
Yes.
Thomas brought that up yesterday. And then we have jobless claims Thursday, 7:30 a.m., and then unemployment rate, 7:30 a.m. So still a lot of things that could move the market, which is why you're still seeing for the next 2 days in SPX, 110-point expected move, which is huge considering we used to come on the show on a Monday and see an expected range for the week, 50 points. Yeah, which is nothing.
Yeah.
So we're back, baby.
Mm-hmm.
But yeah, Costco is expensive. Of
AVGO
course,
is expensive.
AVGO is expensive, but it's a little more palatable, $190. Like you could do a diagonal spread in there if you want, but Costco going to be forced to do vertical spreads or calendar spreads depending on the situation. But I'm going to come back to that tomorrow. Since this market's flying around, I think this is definitely if you're doing an earnings trade, wait until the afternoon before, because these markets are just moving.
I wanted to get some long delta in AVGO.
What's stopping you?
Just figuring out what I'm going to do.
Well,
I'm going to be a little bit more. I was going to go in the weekly, but I'm going to do it a little more conservative.
There you go. Yeah, the weekly premium, 17-point expected move, pretty big considering it's a $190 stock.
Yeah.
But yeah, you can get into a lot of different stuff here.
I think I might just go into the March. 16 days, give me a little bit extra time. If something goes haywire.
Why not?
I mean, the 170, 160 trades at $1.92. It's probably,
A little put spread?
Yeah.
Or even a diagonal spread. You can buy a 15-point wide for less than $10 going April, March. That could work too.
I mean, 175 puts us back to like the lower end of where this thing was trading in pretty much most of last year. I am going to just do this. I'm going to do the 175, 165 short put spread in the weekly. Instant pain, instant gain.
There you go.
I mean, if we get to move to 170, which would be, lower end of where it was trading in the last year or so, I could probably roll that out. My risk is really like below 170. Then I won't have much opportunity to manage it. Okay.
I like it. But yeah, I think another thing to consider is the fact that this market is flying around. So that can certainly play a role in participation in earning stocks or lack of fortitude to really dive into it. Like
for us specifically.
For us and just the general market, like I would see more people trading Costco versus Broadcom in this kind of market, personally.
Yeah, Costco's just such a.
It's expensive though. It's like
stock.
hard to do anything in there.
Yeah,
but we'll see what happens tomorrow. If we get a continuation of this little rally here with a little vol crush, I think maybe you'll see more participation, less fear.
Yeah.
But yeah, craziness.
Nuts. Absolutely beautiful.
Beautiful and crazy.
E-mini's up 12. NASDAQ up 50.
Classic. Green.
Crazy.
See it.
Crazy. Some big moves underneath the surface, if you haven't noticed. Apple was down like $6 and change this morning. It's now only down $2, but it basically gave up all the recent rally it had. It's been really the only thing strong through the broad market sell-off that we've seen. NVIDIA looked like it was going to catch a little bit of a bid in the pre-market. It's up 75 cents here, but it was certainly lower from here. Google was in the red earlier this morning. Amazon as well was giving up, some of its move. Tesla cannot catch a bid. Now up $1.
Microsoft is up 15 points from the low yesterday.
Wow.
That's crazy.
Yeah.
But it's not surprising. I mean, when you think about people, if you're gonna like get into a stock that you've been waiting on, you're probably gonna go to the Mag 7.
Yeah.
And that's kind of what we're seeing.
Yeah.
But yeah, doesn't mean it can't change. But I think that also means people were already in the Mag 7, and that's why you saw, I think, more of a pressure to the downside, because a lot of these stocks gave up a ton of cap into this recent sell-off here. Very concentrated moves. But yeah, a lot of rebounding if you were looking for it in those products.
Yeah.
I certainly was. We're streaming live on Tasty Live's YouTube channel. If you want to join us there, just pop over to Tasty Live. You can see this video streaming live. I've got the Cherry Picks link at the top of the chat, so you can go sign up for that for free. The Tasty Crypto newsletter came out this morning. That was a nice one. You can get that on tastycrypto.com as well. Both free newsletters, so why not?
Yes.
But yeah.
Cherry Picks yesterday was great.
Yes.
If you missed it.
Yes.
Go get it.
Go get it.
Now.
But yeah, we're going to answer some YouTube chat questions. So if you want to join us, just pop in your chat along the right-hand side. We'll get to it shortly.
Yes.
Let's kick it off with Manny. Hurting with a short put in Goldman Sachs. 590 April put with a $7 net credit. Hesitant to sell a call given how the underlying has yo-yoed lately. What would you do to manage this?
Yeah, it's tough. The banking stocks, and we highlighted it in the Cherry Picks yesterday. A lot of the move that you're seeing in the small caps, the weakness there, and like the Russell, if you look at the Russell, it's down 15% or more this year now. A lot of that is coming from these bank stocks, which have gotten a hit over the last couple weeks here. XLF is the big name, so your JP Morgans, Goldman Sachs, those are the stocks that are in there. But when you look at like KBE, which is a regional banking sector, it basically looks the exact same as IWM. If you look at IWM, the small caps themselves, in terms of that move, it's just been an absolute bloodbath there. So that's a lot of it there. But anyway, Goldman Sachs.
Yeah, so you got the 590 put with a basis of $7, trading at $2,900. So you're taking losses here. I actually don't mind like turning this into a strangle with something like a 650 call or, you know, around there.
Yeah.
Because you're still, if you look at even though you're turning into a strangle and you're taking upside risk, Goldman Sachs would be near the recent high at 650. Plus, your raw value of the 590 put is $3,000. The raw value of the 650 call is $600. So if there's a rally and you're taking some heat on your short call that you added, you're making back significantly more on the short put anyways, as it makes up a significant chunk of this total premium. So if you want to hedge, I think staying in April and adding a call outside of the expected move is something I would consider.
I agree. And you got, volatility is so high right now that even
on a rally, you could still see the call.
Yes,
dissipate.
Exactly. I mean, you got an IV rank of 83. It's much easier to sell this call. And I think with volatility this high, it leans me even more into what you're saying of like selling a much lower delta further out of the money option rather than, going to a 30 delta or something like that. Being less aggressive with the delta, but still, cutting it a little bit.
Yeah.
I totally agree with you. I think that's a prudent move.
Yeah. But yeah, tough position, but there's still plenty of premium there outside of the expected move.
Yes.
Smack Lovin' waiting for an up move in the markets to roll an XOP 135 straddle from March to April. With XOP getting smacked, would you consider rolling an in the money put and relocating the straddle at 130?
Yeah, I think if you're going to roll to the 135, you've only got $1 of extrinsic value. I might just, if you can take shares, you can take the shares there. But it's a tough one.
Yeah, I mean, you can pay a debit to move to 130.
Yeah.
It depends on where your total credit is. If you have like
small debit, I mean, relative to the position,
right?
You got.
But if you only have like $4 in credit and you're paying $1.74 to move it to a 130 straddle, I don't like that. But if you have $10 in credit or more and you're paying $1.70 to move it down, I think that's better. Basically, the more credit you have, the more you can rationalize paying a debit to move your strikes closer to the stock price. But yeah, I also like Nick's take on just taking the shares, and then
if you're okay leaning
if you're
long,
okay, yeah.
And which I have long delta in oil, so
Yeah.
I'm in that same boat.
Yeah, and if you take the shares, I would just sell a call it where your break even is.
Yeah.
Call it a day.
Yeah. Yes.
Because that's going to be your lowest point that you can sell a call while still making a profit if there's a reversal.
Yeah, and the reason we look at that option, the 35 strike option, and say you might as well just take the shares and get that static delta, because this will be an extreme example, but the 35 strike, if it were to go at the money, if you were just long the delta via the shares, 100 shares, you'd make $1,600 back. If you are just short the put, that put is still going to have extrinsic value. So instead of the $16 that you make back with the shares, you'd only make back $1,000, which is still great, but they're the same sort of risk profile. The share right now, yeah, but less $100 of extrinsic value, which you don't care about because you're out. Your option is trading at $16. You don't care about $1.
Yeah.
So that's what we talk about when we say you might as well just get the delta, because if the stock goes down $10 more, it's the same exact risk.
Yeah.
If the stock goes up $10, you have more potential value add via the shares than you do the put, but the shares are going to use more capital. So, I mean, there is always a trade-off, but just as an example.
Yeah. Mr. Market, along with this VIX level at 24, how much buying power from the overall portfolio should we be using? 35%? Yeah, I'm like at 50%.
Yeah.
But I was also buying the dip into this move.
Yeah.
I have some neutral positions. Like I've got the SPX Iron Condor that Nick has, similar setup. I've got a United Airlines strangle. I've got an IBIT strangle. I've got, I think I had one more strangle on. DraftKings strangle. Mm-hmm. So I've got some neutral positions. I've got some bullish positions, and I've got a bearish position in BABA. But yeah, when you get these vol spikes, that's when, especially if you've had cash on the side where you're only using 10 or 20%, this is the situation where we're going to start to look for more opportunities for sure. But still not going over 50% of cash to just make sure you're not over levered in situations like this.
Yeah. Depending on the size of the account.
Yeah.
Because, in our size account, it's hard to be less than 50%.
Yeah.
Especially when you have opportunities like now.
Indeed. Leonardo Teixeira, getting good results with really far out of the money iron condors on VXX. My best results for the last 5 months overall. Is there something I should pay attention to or worry about? Mm-hmm. You mentioned another day something about volatility. I think we talked about calendarizing volatility in like volatility futures.
Or the
someone wanted to do calendar spreads and volatility futures. That's a no-no for us because they're different prices. They're different products entirely.
Yeah.
The backwardation can go really crazy, and that's what can kill you in a calendarized volatility trade. VXX, though, it settles to VXX, so no issue there.
Yeah.
I would say
it is still.
Yeah, they'll still move.
Well, the roll.
The roll
is going to have.
Yeah.
Backwardation or contango, exposure.
Correct. So backwardation is actually good for VXX spiking if you were bullish.
Yes.
Contango drags on that potential profitability to the upside.
Yeah.
In a longer term form. That's why like VXX and UVXY during COVID, they were really fun instruments because you'd get because of the backwardation that was so strong, VXX was kind of ignoring the 100-point rallies in the market. But if it reversed back down 200 points, you'd see a pop in VXX. So it was those are the opportunities. If you're trying to be bullish on VXX and UVXY or the VIX, it's when we're in a pretty steep backwardation. That's when they're already popping, but that's when you can really see it go from, VXX specifically 50 to 70 to 80, something like that. Yeah. But yeah, iron condors in here, you're doing good because you're getting heightened implied volatility and you're still seeing this chop around a 10-point range.
Yeah,
I'm kind of surprised that this is your best trade.
Yeah.
But if it's working for you.
If you're doing it like day to day, maybe, or like weekly, something like that. But if you're doing this with any duration on it, it's probably not moving all that much just because of the nature of these volatility products. They, into a spike in volatility expands. And so these spreads, especially if they're relatively tight spreads, they're not going to move at all. So it's not something we really trade all that often, especially not neutral trades, just because of that dynamic. You just don't get paid on something 30 days out.
Yeah. But yeah, if you're using near-term cycles, it makes sense.
Yeah.
With over 100% IV in like the March cycle, for example.
Yes.
What is a SoFi position you would open today in an IRA account with a buying power of $1,500 to $2,000?
I mean, it depends on if you're bullish or bearish. If you're lean, I don't know. I don't know if I would have been bullish this when we started it, but it had high implied volatility. It was thrown out in the chat. I figure why not get a position on and we'll manage it and deal with it. I mean, it's basically a scratch right now, despite a $2 or $3 down move, which is a 20% move in the stock. So it's a huge move. So it's certainly liquid. It's certainly high implied volatility. It moves. It's great. If you were leaning bullish and you wanted to do something here, I think you could do just the stock and do like a covered call type situation. If you wanted to be a little bit more capital efficient, you could sell a put spread. And the reason I say spread because, for 5, 6, 7 cents, you can cut your buying power in half. So if you're in an IRA account, selling this put is going to be cash secured. It's going to cost you $1,200 and change. You buy the 8-strike put for 9 cents and you cut that from $1,200 down to $500. And it doesn't mean I wouldn't go and then do 2 of these unless you're comfortable with that risk. But it just allows you to have more positions on with the same amount of risk. The 8-strike put, you don't expect this to come into play. You expect to burn that $9, and you burn it so that you can free up $800 to do some other trade.
Yeah,
and you'll make more than $9.
In an IRA account, there's no reason not to have that on.
For sure.
I would say because you're also like there's also no reason to put up the same amount of capital as it going to zero.
Yeah.
With a short put.
Mm-hmm.
So in a margin account, it's a little different because your buying power is $200 anyways. Yeah. But you could still buy that put if you wanted to. It doesn't change your buying power. It defines your risk though. But yeah, I would agree with that. I might go to like slightly in the money, like a 14 or 15 put, just give a little extra juice there.
Yeah. Is that a covered call type setup?
Yeah. But yeah, something like that is probably where we'd land.
Yeah. And in terms of the put I would buy, I like to go to something that has a bid-ask spread. You can buy whatever put you want. But, when I'm looking at this, I would want to be at the 8-strike or the 9-strike if you want to for 10 or 15 cents. Obviously, it depends on how much you want to pay. But I tend to look for something that does have a bid-ask spread because, these junky options, they're going to move and skew your P&L values and whatnot.
Mm-hmm.
And this one you can actually sell out of for something if, you might get a penny or 2 or 3 back. These ones will be worthless if this trade works out.
Yeah. Eugene asking, can you explain how market makers make money on the bid-ask spread?
So it's all volume, right? So when you look at SPY, let's say you're looking at the 585 strike and Mike's buying it at 12.30 and I'm selling it at 12.26, they're taking both those transactions. So there's a 4-cent spread between those where if you have somebody, a third party that's taking both those orders, they're making it, they're making that 4 cents. And they do that
in size.
Yes. I mean, when you look at this, you know, this option has traded, let's look at the volume here. And this is just, you know, one option 800 times. When you look at a 0 day, you know, this has 200,000 contracts. And so when you're doing that back and forth 200,000 times, and you're making a penny or 2 pennies or even a fraction of a penny, because a lot of these are fractions of a penny, because sometimes there might be 5 buys and 1 sell and whatnot. And so you're talking about very, very small amounts. But when you're doing that 500,000 times, and that's just one single option, when you look at all the option change, all of them, that's how they make their money.
Yep. Yep.
And so the common thought people have is like that there's some malicious entity against you. I can assure you they don't care about my one contract trade.
Yeah.
They don't care about Tom's trades. They don't care about any Reddit forums trades. They do not care as long as it keeps coming, because that's how they make money. And so, and the benefit of them is that you have these penny-wide markets. If you had to come to me and Mike was like, oh, Nick, what's your market on the 582 strike with 4 hours to go? I would tell him it's $2 at $1. I'm not giving you a 2-cent bid-ask spread, because I have to take that risk. So if you want to buy it, it's $200. If you want to sell it, I'll take the other side at $1.
Salesman.
It's not a salesman. It's just I have a lot of risk. I'm not taking 200 million contracts.
Best I can do.
The best I can do is a $100 spread. Yeah. That's what I would say, and that's what markets were like when Tom and Tony were doing their stuff. It wasn't that wide, but the markets were much wider, and so it's a benefit.
Yes, you should be worried more about your NBA players skewing your bets.
That's true. That's much worse. Yeah, that's something where,
That's some stuff right there. When you say take the shares, does that mean let the contract be exercised? Yeah, or you can just close the position and buy the shares, so you don't have to deal with assignment fees.
And you don't have to wait.
Yeah. Why can't this market just stonk off 100 points every day like it's supposed to?
It is.
Yeah.
The E-minis, I think we're probably at 100 points. We're at 94. Intraday. Range. From high to low. We opened at 58.32, so we're 20 points off the open in the overnight session.
This is a new thing for us, seeing an actual sustained rally here. See if it holds.
Right. As foretold.
Would you rather open a put credit spread on SPY after a down move to fade the trend, or as the market rises to follow the trend?
I don't know. What was the trend 2 hours ago? The trend was down, and now it's up.
Yeah. So if it's a put credit spread and you're selling it out of the money, I would say I would do that into a down move, because you want to get the volatility pop that pairs with a market sell-off. You want to see that put premium kind of flatten out as you go further out on the tails, and that just allows you to get a similar credit with further out of the money strikes. And an out of the money put spread, if you assume, like yesterday we saw a 100-point sell-off, today we're seeing a 22-point rally, your out of the money options right now are getting crushed relative to closer options, because just the range is more narrow. So out of the money spread into a sell-off. If you're looking for a trend to go back to the highs that we saw recently, then that's different. That is like more of an at the money put spread situation, or an at the money call spread, I would say, where you're playing for the delta move to continue versus playing for that implied volatility move. So slight difference there, depending on where the spreads are.
I mean, I pulled up just a April 570 SPY put just to illustrate the difference, because it's today. We're looking at the prices today. I mean, just 40 minutes ago when we were down, which let's all just take into account that the 40 minutes is probably not a lot of difference in the market. And besides the move is big, obviously, but 40 minutes is a short period of time. It's hard to take action on that short of a time frame. It's already moved, $2-3. And that's because you had the down move plus a little bit of pop and volatility, and that was just 40 minutes ago.
Mm-hmm. I think most market makers now are computers. How could they not be?
Correct.
Yeah, it's algo based for sure.
Well, it's all all in a big vacuum.
Yeah,
it all just gets sucked up into a vacuum.
Mm-hmm.
It's good because they have to take. They take everything.
Yeah.
They can't say, "Oh no, I don't want that one."
Yeah, you can get filled.
Yeah.
Just at what cost? At what price?
Yeah.
Johnny Mac. I've been selling naked puts at around a 10 delta. Would it be safe to assume that I could perpetually roll this position for a credit? Yes.
Yeah.
Yeah. Any undefined risk position you can roll out in time for a credit.
Yeah.
The only situation or exception where that might be the case is where if you're dealing with a really illiquid market and the bid-ask spread that you're rolling into is just weird and doesn't reflect your credit per se, but you're still going to get it.
Yeah, you're going to get a credit. You're just going to
it'll look weird.
Markets.
Yeah. But yeah, naked put in SPX around a 10 delta, you can always roll that out in time for a credit.
Yes.
Just because regardless of implied volatility, further dated cycles will have more premium associated with it, because SPX is, and even in like earnings events, even if your implied volatility is skyrocketing in the near term, you still have more premium in the further dated cycles because there's more time associated with it. And that's it. Bob, looking at a Baba Strangle. After multiple rolls, I've got the 135, 140 April Strangle that's now underwater. Bullish on the stock, so how can this trade be salvaged?
Well, now you're bullish. Have you been rolling? I imagine they've been rolling up puts then.
Yeah. 135, 140 Strangle.
You probably did this into earnings.
April.
I mean,
it's a straddle pretty much.
Yeah, you're basically flat here.
Yeah.
I think you got to hold it. If you're bullish, this move today has significantly helped you.
Yeah. When
you look at the change, this is what you wanted to happen.
Mm-hmm.
So, if you were bullish, you could move. You could adjust your strikes. Like you could
take. What I was gonna say.
Take your 40 and roll it to the 50 or something like that.
Or you can just manipulate this whole thing. This is the beauty of undefined risk trading.
All the wins.
You can literally, like in the same April cycle, you don't even have to go to May. You could buy back your 135, 140 straddle-ish and go to a 155 straddle and just shift your risk. Like if you're actually bullish and you're comfortable with that move, you would be picking up deltas and you'd pick up a credit, but this position will benefit from a continued upside move. And the credit is really intrinsic value that you're selling. But again, if you're bullish and you want to shift your risk profile, you can do something like that.
Yeah. Or you go to the even adjusting to like the 130, 160 strangle.
Yeah.
You can see the change in delta. It gives you 20 more deltas. 18 and change.
Mm-hmm. But yeah, I would say just make sure you're left with a decent net credit regardless of what you're doing, and you'll be in a decent spot. But yeah, it's tough to roll to May.
I think you got to wait.
Yeah, because May is 72 days. You're not picking up that much premium to go out there. I mean, you could manipulate something like you could go to May, go to 140, 160 for $1 credit, like something like that. Like you can do whatever you want in here, but I kind of like sticking with April and just moving the strikes in the money if you're truly bullish. Is there a way to see net P&L for a stock that I got assigned through a put spread? It should be on your order chains. Order chains would reflect your assignment.
You think? Oh yeah, they do. I think.
I'm pretty sure.
That was not a new, but like middle last year update, right?
Yeah. In the money put got exercised, sold the remaining long put for a profit.
But that's
against your losses on your short put.
Yeah.
Now holding the stock $5 below the short put. So yeah, it should be in your order chains.
Yeah.
I believe. But yeah, because I got assigned on DraftKings and it was in the order chains, so you should be able to see it. But you still need the stock to go above where your short put was.
Yes.
Or close to it to be profitable in that position. A couple more. All right, back to Manny. Goldman Sachs, we suggested the 650 April call for $6. How about a March call ratio for $3 instead, a 620, 625?
Sure. I would move it. I think you got to go closer and a little bit wider on the ratio. But you're going to use more buying power. So if you have the naked put and then now you have upside risk in the shorter duration, you're going to be margined on both of them. So that's, that is a caveat.
Yeah. I think that kind of trade, and that's just it. Like if you go to the same cycle, you're picking up credit, which can help you. If you're going to March and you're doing a wide ratio for a small credit or even a debit, you're looking for help with intrinsic value. Just a slight difference there.
Yeah, you get, what was it, the 590?
Mm-hmm.
Yeah, your risk profile will expand to the upside in terms of your profit potential. You'll see, there you go. Boom, boom, boom. That little peak.
Yeah.
But you use 12 grand instead of the 6 that you're using now.
Yeah. Yeah, it's more clean if you just stick with the same cycle.
Yeah.
Andrew sold a Delta Buster in the queues. Haven't heard that strategy in a long time.
Yeah, what was that? That was. I'm thinking Spiked Lizard was the ratio. Was Jade Lizard with an added ratio, right?
Yeah.
I forget.
Long the 483, 492 puts. 483, 492 puts in the queues.
In March?
Short.
What is this? In the weekly?
In the March 14th.
Okay, 483 long.
Yeah.
What were the other longs?
483, 492.
Both long.
I believe so.
Okay. With?
And then in April, monthly, short the 525, 555 calls.
Oh,
525, 555.
Okay. So this is like a double. 525, 535.
555.
555. That's
or maybe this is a super wide spread. I don't know. Would you consider paying up 75 cents and rolling up the long put spread to at the money strikes?
Is the Delta Buster selling a call spread to buy a put spread?
I think so.
Okay. I don't think that's the Delta Buster. That's the Super Bear.
Yeah. So let's just, all right, so you got a call spread that's like 30 points wide.
Yeah.
And then you got a long put spread, 483, 492. Okay, for a 240 credit. So it's a super bear spread, defined risk. Would you consider paying 75 cents and rolling up the long put spread to at the money of 489, 498? Sure. 75 cents is not going to really change the world for you, especially if you sold this for like $2 or $3 and you want to pay 75 cents to bring that spread closer to the stock price. It improves your probability of having that spread go in the money is the easiest way to put it.
Mm-hmm.
So I don't mind it. If it was like a $2 debit, I would say probably not. But
I'm a little confused on the position. I mean, if you had this on any time prior to yesterday, was it on yesterday?
I'm not sure.
I mean, I would think this has got to be a home run trade.
Yeah, I mean, yeah. The last couple days, it had to be.
Yeah. I don't know what more you expect.
I don't know.
It's a big move.
I don't know. Good morning from Australia. Good morning. Ever experienced chains not updating? No. Order chains?
Sometimes they get a little kooky. You can email support at Tasty Trade and they'll reset it. So they'll re-pull it.
If you've got like some weird stuff going on.
Yeah, I have one of my SoFi positions like that. I have to have them do it. But just email them and they'll reset it. Because we do it all. You know, this is all, we built this. Like this isn't something that, you know, is anywhere close to normal in the industry. So,
yeah.
All back end stuff. So just email them. They'll take care of it. Promise.
Yeah. Lisa, welcome. No such thing as a dumb question.
No.
Do we have paper trading on the platform? We do not.
Unfortunately not.
No. Yeah. You can open an account without funding it and you can see everything moving around, but we do not have a paper trading system. I think that's it.
Cool.
Do we have any earnings today after the close, or is it just tomorrow?
I have not looked. Marvell, MRVL, MongoDB, Zscaler, the awful.
Really? I didn't even know they were publicly traded.
Yeah, of course.
So we short them?
Probably. JD, it's tomorrow before the open. I don't know. Kroger before the open. Who cares about earnings when you got 50-point moves in the market?
Yeah, that's true.
I did my AVGO earnings, so that was one.
You're in. All right, that's it for us.
Beautiful.
Thanks for tuning in. If you've got any further inquiries, you can find us on Twitter. I'm at Trader Mikey B. Nick is at Trader Nicky Bat. We got plenty more content on the YouTube channel as well as tastylive.com coming your way, so stay tuned. Go get your Cherry Picks newsletter pinned to the top of the YouTube chat, tastylive.com/newsletters. Also, go get that tastycrypto.com newsletter. Comes out every Saturday morning and Wednesday. But yeah, the market is a-moving. We've got...
Be nimble.
Be nimble. Be quick.
Yeah.
Something.
Yeah,
but yeah, we got the beige book, Fed beige book coming out shortly. We got unemployment numbers tomorrow and Friday, so plenty of projected movement in SPX throughout the week. But yeah, we'll be back same time, same place, 11 a.m. Central tomorrow. Peace.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Ben Bernanke. Cry your eyes out past the hanky. Gone from the Fed, but still looks swanky. Bye-bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Ben Bernanke. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
If you missed the live show, here's our cherry on top weekly recap.
You have to take a vision test.
Yeah, I test. I will pass. Don't worry.
Well, maybe we can test it out. Is there any way that we can test this out, Vanetta?
I think that there is.
Okay, Thomas.
Can you
why don't
read
you read line number?
Line 6.
Why don't you start with number 8?
8? Easy. D E F T G T East.
And you're getting a bus pass. Okay, so whose readers do you have over there? Put them on for the people. Let's do it. Let's do a fashion show.
Oh, these are. Okay. With all due respect,
ma'am. Excuse me, ma'am.
How did I smell walking in? Because I was stuck in traffic next to the 35th Street.
Okay, now I know
Okay, 35th Street L stop. Subway stop. Like 35th Street subway stop, and my car parked there for probably 10 minutes in traffic, and it was just like fumes of marijuana coming into my car from all the people at the 35th Street subway stop.
Ladies and gentlemen, good cover. She's high today is what she's trying to tell us.
Yesterday, my son and I put up, we were talking to you, and you were getting a little fresh.
It's the four of
So
us.
we gave you a double, it's not a backhanded slap unless it's a bat slap, and you had the two of us. It really looked funny because the way it was set up, it looked like we were slapping the two of you.
I'm looking at it now. It's a beautiful picture.
Oh, yeah. That's not a backhand. That's a bat hand.
And your son has more. He's got.
Oh, my
whip
son's coming from
His-
downtown. He's got some anger in his.
Yeah.
I think he's trying to reach all the way over to Sosnov. We're going to take a quick 90-second break and come back. We got more Tasty Live right after this. You know what's coming up next?
Lunch.
you boomers cut out early, so you guys pieced out right after lunch, and you're like boomers out, and you like skipped out of the office together holding hands. Meanwhile, the rest of us are like, what the hell just happened?
What do you call Tom when he just comes for lunch and then leaves?
Oh yeah, you're a lunch badger.
Lunch badger. That's it. That's what we were.
Hey. I'm the only one here.
There are some people right now in production that are about to walk out because they're there too, and they're there every freaking day, Saad. Now, if that's right, I'm talking about James.
Thanks, Tom.
Oh, John.
Just turn off his camera now. That's all you have to do.
Huh?
Make it real easy.
No, just get real close.
I was going to say, better yet, zoom in on. There you go.
Oh, I like this. Tasty After Dark. Yes.
Get the full scoop by checking out the archives at tastylive.com.
We are back. It is Wednesday, March 5th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, another slinky kind of day here in these equity markets.
Yeah, we're going up and down, searching for direction. We'll have to see how it shakes out. We still got some events this week, so it's not over.
It's the Michael Scott market. Snip, snap, snip, snap. We're red, we're green, we're red, we're green. Right now we're back in the green. S&P's up about 0.7%. NASDAQ up by 0.86%. It's certainly off the lows from earlier in the session. But the question that we're seeing here, is this the tariff turnaround, Thomas? We've heard some headlines that Howard Lutnick, the Commerce Secretary, has been negotiating with his Mexican and Canadian counterparts to try to find a way for Canada, Mexico, and the U.S. to meet halfway in the middle. We've heard from various officials over the past 24 hours that this is probably just a prelude to a broader USMCA renegotiation, which is set to expire next year. As it were, the market seems to be getting a little juiced up right now on the idea that we're not going to be seeing this trade war continue in perpetuity. Well, there are questions about whether or not we now trust any agreement to remain in place. Let's talk about what's going on with US GDP, though, here, because I think this warrants a deeper delve. I know in the past few days, Thomas, we've been looking at like the Atlanta Fed GDP Now growth tracker. It's at minus 2.8% for the first quarter, as it were. When we think about the components that are weighing this down, it's largely net exports. People are buying a lot of stuff, which in concert or context of what some surveys have showed, it's probably because people think that prices will be rising in the future thanks to tariffs. But the economy right now doesn't necessarily show this kind of sensitivity if you look at other growth trackers, right? The New York Fed Nowcast is still sitting closer to 2.9%. Other regional Fed trackers are in the 2% range. The various banks, JP Morgan, Goldman Sachs, have issued new reports in the past day or so saying that the growth rate is probably between 1% and 2%. There will be a slowdown, but not a recession's coming on just yet. I guess my question for you is, as we take a step back, how much should we as traders care about recession prospects versus how much should investors care about recession prospects? Because those seem like very different time frames.
Yeah, I mean, if you're a trader, you got to be watching growth a little bit more. Long-term investing, you're going through the cycles. Your time frame's expected to overcome corrections, bear markets, things like that. So I think as traders, you got to be watching this. You got to be watching the tariff news pretty quickly. It's changing very quickly, so you have to watch how, not necessarily what they're saying exactly, but how the price is reacting to it. And especially as we get near levels that we're sitting at right now, are debt buyers willing to come in? Is volume coming in with that buying? Is volatility contracting with that buying? Those are the questions you got to be asking yourself when you put on trades. So, I do like the Atlanta Fed GDP tracker because there's a pretty clear methodology to it. But there's going to be convergence because other models look at different things, they weight different things in a different way. So you do get divergence between some of them. The important thing to watch is if those other growth trackers start to trend down, and if they all start to trend down, then that's sending you a clear signal on yes, there is concern in the economy that growth is going to be stalling.
The question then becomes if the tariffs and the trade war that were going on are a temporary price adjustment, but then it ultimately paves the path to a broader, more durable deal. Will the reasons why people change their spending habits, why businesses change their hiring and capex plans, will those snap back to where they were prior to the tariffs threats saber rattling, if you will? And I think that the answer would be yes. I mean, Thomas, this is basically an offshoot of the conversation you, me, and Ilya had yesterday on Overtime. If there is a trade deal announced, right, if there is a definitive timeline for tariffs, when they'll be implemented, how long they'll be sustained, in what categories or industries, the market may actually react positively to that. It's this cloud of uncertainty that's hanging ahead that really leaves people unmoored and on, pushing up volatility right now. But if there is a set direction that we're going to be heading down, it may not be a direction that people like, but it's a direction, and then we know how to plan around it. So just in terms of this tariff conversation today with Lutnick and whether or not we're going to be meeting the Canadians and Mexicans halfway, how do you plan, I suppose? How do you trade around something like that, knowing that this announcement could be just right around the corner? Do you skate with the rhythm of where the market is that day, or knowing that there's a possibility that it's a rug pull situation insofar as maybe the announcement that has us all ginned up isn't here? Do you look at the intraday bounce in the stock market today, which I suppose we should turn to, as an opportunity perhaps to fade this move? 58.06 right now. It's worth noting the S&P has come in fairly decently here in the past few minutes. There's that 5-minute candle back from 58.30 or so back down to 58.10. So these are markets that are moving intraday, even if we're getting these wide ranges. They're headlines that are kicking us around.
Yeah, I think with volatility still where it's at, we're elevated. VIX still 22.7. That's still high. It's come in a little bit, but right, it's still, there's a lot of uncertainty in the market, because what the VIX is telling you essentially is that traders are uncertain right now, right? So I think you be strategic. I think you diversify. If you're usually trading heavy equities, maybe you broaden your portfolio exposure with something like agriculture, nat gas, whatever you want. Or even within equities, you diversify your exposure. If you're just trading the ES, maybe you trade some ETF names that are more prone to rotation trade. Things like consumer staples. If there is recession fears remain, they don't underperform as much typically, but you broaden your exposure. You don't necessarily need to reduce your capital at risk. Diversifying is one of the ways I do that when there's market uncertainty.
We do have some of these comments coming out here from Howard Lutnick, the Commerce Secretary, as well as Donald Trump, the President. Lutnick says there's going to be a short period of time where there are higher prices on certain items following the tariffs. Donald Trump and Trudeau have wrapped up their phone call now, saying that the phone call ends in a, quote, somewhat, unquote, friendly manner. And Trump told Trudeau that the fentanyl efforts at the border are not good enough, which, Thomas, just from my read on that situation, I don't know what proof the Canadian government can provide here to say that they're good enough. In the month of January, less than an ounce of fentanyl was stopped at the Canadian border. We talk about 13,000 pounds coming across in the year 2024, less than an ounce. The entire border with Canada, I mean, that's pretty darn good for stopping the flow as much as you can, right?
Yeah. And I mean, if you look at some of these people that have been snagged up running drugs across the border, more oftentimes than not, it's actually Americans doing it, right? Because they can get back into the country easily. They're going across Mexico for a day. They're the mules that are running it. So it's hard to, do that, especially for Canada, when there's already a smaller amount because there's a smaller target in place that you're trying to get. So, yeah, I'm not exactly sure I haven't seen anything tangible from the administration saying that they want, XYZ to be done. But I imagine the Canadians will eventually make concessions if that's what they're pushing.
Thomas, the S&P 500 yesterday and today, to a certain extent, fell into its 200-day moving average, right near the swing lows that we have in early October and early November. Of course, the stock market had basically erased all of its post-election gains in the past week and a half. My question to you is, with volatility so high and the market having these pin bars down here near support, is this enough for you to take a stab perhaps at selling some put spreads below recent trading ranges, say 5,700?
Yeah, that's actually what I was looking at just before we got on. I think it makes sense to take a stab here. There is some buying right above 5,700. There's obviously some appetite at these levels. If you're a trader looking at the risk coming in, saying, recession fears are growing, things like this, the question is, have we already priced a lot of that in? We're near correction territory, but not quite there yet. It's a trade you got to put on, and you have to be watching it. It's not something you can put on and step away from the desk for a couple days. But I wouldn't. I myself, I'm probably going to take that stab there at 5,700, selling put spreads. There's certainly the volatility there after this sell-off to do that. The risk to reward on some of those trades is pretty good, actually. So I think it makes sense to take a stab here.
The most interesting of these charts perhaps is the NASDAQ for me. Those election swing lows that we have in the middle of the month, we did breach them. We see here that the actual pre-election lows come in closer to 20,250. And while we touched them yesterday and today, if we were to pivot further from here in the NASDAQ, right, we would find ourselves back to that November 19th swing low, which I have drawn here as the neckline and a potential double top, and would also see us pull back above that 1 week moving average, which, just as a filter, we've been trading below it on a closing basis since February 21st. 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row now. So moving back above it would perhaps be a sign that the short-term momentum has been broken. A close there would be more welcome than not, considering that we have seen action above the 5 EMA in recent sessions without much fruit to bear. But you could see if we get 20,650, 20,700 here in the next session or two, and we're closing out the week on those terms, this looks a little bit more like a technical failure of a breakdown in the short term. And then I have a little bit more confidence to saying, it looks like there is a turn coming. I didn't catch the exact low, but momentum is improving. And with a high enough volatility, this gives us a base of operations. It's that way in ES and NQ, where ES on the ESH5 contract is sitting in that zone with swing highs dating back to last July. Some stability in here, and ultimately a turn higher would give you a reasonable technical basis for thinking this is a floor, having been resistance and support in recent months. I feel much better about doing that in the S&P or the NASDAQ than I would about the Russell, Mr. Westwater. This still's a dog. It's only up by 0.1% today. 0.01% today. It's clearly struggling more than its counterparts. Do you think that there is an opportunity to perhaps use the Russell, or is this just too much of a dog for you right now that you have to let it do a little bit more barking before you take it in from the kennel? Where's this analogy going?
This is a dirty dog. It's not something I'm touching right now. The Russell isn't where I want to put my chips if I'm betting on equities. It's going to be ES or NQ if I do that. One thing I'm surprised about today is SMH is up after the comments from last night that, showing some appetite by the administration to pressure Congress to roll back the CHIPS Act, so going from subsidies to tariffs to implement those policy intents. So that's pretty interesting that we're seeing that. So I'd say SMH being up in light of what you could say is potentially bad news for the U.S. chip sector is a positive.
The Russell here really can't find any help. It's a 48 IVR, and what's interesting about this is it brings us back to a world not too different than 2023 and 2024, where you could sell put spreads in the Russell to help finance long calls in ES or in Q. We need some more signs of return, though, for jumping in on that POV. Again, that 1 week moving average carries us all the way down to an area below the swing low that we have in September. Reasserting ourselves back through there, back above the 1 week, would give us a tangible reason to look for some sort of bounce. Is it a bounce that lasts? For now, I'm still in the sell the rips and then buy the dips kind of mindset. So if I'm operating here on a long delta side in stocks, it's very, very small, very short term, and ultimately looking for a rally to fade at the end of the session. Yeah, there's a nice movement here upwards again during the day, but this is a lot of vol sticking around, Thomas, right? VIX here in the session, it's up, it's down, it's now back to basically flat, 22.99. Vol doesn't stay sticky typically at these levels for a long time unless something really, really bad is happening on a prolonged scale, like in 2022 with the Fed rate hikes and ultimate invasion of Ukraine, the supply chain disruptions post-COVID, yada, yada, yada. So this is an appealing spot. Technically, you're at support. Vol's above 22. If there's an opportunity to take long deltas on, right, now that we've seen some of this perhaps exhaust out. Yesterday, we had 3 million contracts traded in ES, which historically, the last few years, you don't see that unless it's a capitulation type day. There might be enough to work with. And I think that there's certainly something to look at. But technically, I want to see the move above the 5 EMAs, and then I think I'll be ready to engage again. I've been waiting. I've been watching. We're getting close to the turn. What will another day or two of waiting and watching harm us? I don't think it's going to do any harm.
Yeah, no, I agree. Are you doing anything in FXI or Chinese equities?
Yeah, that's a great question. I have not taken advantage of anything in FXI over the past few weeks. I largely missed the move in September, although caught some with copper. And likewise, I know that there's a big rally in FXI today, but I have long deltas in copper, so I have a proxy through there somewhat. This looks like a really good chart, though. I mean, this is actually not like the biggest miss. I think the biggest miss I've had recently is Poland, which worked out well until last year. And then all of a sudden we've dramatically changed how we're approaching the world here in 2025. Poland was a country and various European countries I thought that would suffer because of being put in a difficult situation where they're going to have to, within the confines of their current debt and deficit spending plans, they're going to have to reduce spending otherwise to pay for military action. As we learned from Germany this week, that's actually not the case. They're removing the debt breaks and debt limits, deficit spending around, defense. So fiscal stimulus spigots are opening. It's kind of a shock. You and I have been doing this for how long together, Thomas? The Eurozone debt crisis has been going on and off for almost 15 years, going back to 2008 through 2000 and, call it 23, little spits and spats and bursts of it. So I think it's a big surprise to most investors that we've seen a fiscal spigot open up in Germany and opening up in Europe. So I've missed the move in Poland. I was certainly not correct about it going down, but worse, it's one of the best performing individual country ETFs in the world this year, maybe number one, in fact. FXI is something I've likewise missed. But, one of the things that we should keep an eye on here about these other equity markets is that a lot of the reason why U.S. equities have outperformed their peers in recent years, 5-10 years, is because we were doing more to support the economy here than anywhere else. We talk about China not having the right kind of fiscal stimulus, or Europe constantly dealing with austerity. The U.S. has been running budget deficits. So if you're a foreigner, where have you been putting your capital? We've seen a lot of money come into the U.S. from abroad to support our equity markets. And if all of a sudden there's a question over our place in the world, we're going to cut government spending while all these other countries are going to ramp it up and finally open up their fiscal coffers to fill the U.S. spending gap, you can make an argument that foreign equities in those markets with the boosted spending are going to outperform their U.S. peers for the foreseeable future. So if China is finally getting its act together, their tech companies are showing growth and they're spiraling away from deflation, FXI looks pretty good still. I have no reason to fade it.
I'm actually making some changes in my my retirement account to overweight China and Europe now. You've talked about the shift in fiscal policy. Germany is finally, it looks like, getting serious about energy infrastructure. It's not just a defense thing, this $500 billion I believe they have to suspend a constitutional restriction on spending for this, but it seems like there's appetite in the government for it. Meanwhile, China is the National People's Congress, 5% target for the third year in the row. They did lower their inflation target. They boosted their deficit to GDP target. So that is telling us pretty clearly that we're going to see more policy support from China. Copper is reflecting that as well today. FXI, copper, German bond yields, definitely all telling us that the fiscal faucets are going to open up over there.
They certainly do. German bond market is showing signs of stress. Yields are up, prices are down. But again, that's because of the spending that they're going to be doing, which is great news for the euro, which is up 1.7% today. That's unheard of for currencies. We're going to have to go over there in a little bit. But this is perhaps the most alarming part of today's action across the board. There was a moment in time this morning where it was dollar down, treasuries down, stocks down. It was a sell US. The Trump trade in 2016, 2017 was the opposite of that, right? There's money coming into the country. People looking to take advantage of the deregulation, taking advantage of the lower taxes, the animal spirits. That's not some of the action we've seen here today. Now, obviously, stocks are back up, so perhaps pish-posh, no reason to be concerned about that. It's starting to feel different. It feels different. It's been feeling different since we had the S&P PMI back on February 21st, when we had the episode of Futures Power Hour called Recession Imminent. But bonds here have stopped their rally. Notes and bonds yesterday advanced into a pretty important level. We look at the 10-year yield chart, Thomas, and we see that 4.15%, levels that we last reached in early December. We fell into them, and we have since reversed. We are now making an advance today. Note the change in trend behavior. We are above the 1-week moving average on a closing basis for what could be the first time since February 19th. So this thrust lower appears to be exhausted. It's occurring right around the 200-day moving average in 10-year yields, which I don't know if people look at 200-day moving average on 10-year yields. Nevertheless, ZN, of course, would be the mirror image of that. And to that extent, where do we see ZN failing once more? ZN is failing up against its 200-day moving average. So a short-term pullback in U.S. yields looks like it would occur with this news of tariffs coming off the board, right? No significant trade war, no significant recession risk. No significant recession risk, no reason to have bonds. We can go back into stocks, folks. Everything's fine. At least that's what it seems to be the case here. As the day goes on, stocks are up and bonds are coming back in. I still have long deltas in ZN, but given the overall growth trajectory, I feel comfortable saying that on pullbacks, if I didn't have long deltas, I'd be looking to establish them. ZN, of course, is the more approachable product for retail traders, and it's still a 33.6 IVR. So right now, there may be opportunity coming. I would look closer towards 110, where we have a swing high here on February 7th. If we can get into 110, that sets up a compelling place because it's right near that 1-month moving average, which is at 110 and 007 ticks.
And you're talking about buying that dip?
Oh, yeah.
Okay.
Buy the dip. Buy the dip. Even if there's sign that the economy is slowing down now, legitimately. Right. Even if you don't take the Atlanta Fed GDP now growth tracker at face value, which it's March 5th. Just because there's a different president doesn't mean we're going to abandon our principles, Thomas. We don't pay attention to the actual level of the GDP tracker until about 2 to 3 weeks out from the actual government release. Until then, you treat it more as a momentum gauge, right? What's the directional move? Is it moving up or down? Is it going fast or slow? It's going down, and it's going down quickly. So then we take that in concert with the New York Fed nowcast and the various other regional bank forecasts, and you could see a similar story that's not quite as extreme, but growth is decelerating by all intents and purposes. We did have an ISM services release today, which I think was worth noting. That was at 10 a.m. Eastern. ISM services PMI helps the case because it's a little bit stronger than expected at 53.5 versus 52.6. Now, again, how much of that is pulling forward purchasing because of concerns about tariffs? Appears like a decent amount. So yes, better than expected ISM today. Beneath the hood, not painting a pretty picture.
Yeah, definitely. The PMI numbers, I think if they were bad, we'd get more of an equity sell-off. The growth fears would be a little prevalent in the market. So I think that helped a little bit. Obviously not enough. One ISM print, one PMI print isn't going to do enough to reverse broad spread fears of economic slowdown, especially when you have uncertainty on tariffs. So I think the point where some of these growth fears cool a little bit, or at least where you get certainty on the economic outlook, is when we at least get a solid plan on what's going to happen with tariffs with Mexico and Canada. We're already seeing that they're going to do carve-outs for autos likely. That's some good news. Auto business in America is it's still small relative to the whole economy, but substantial when you look at it compared to other singular things.
Small pullback here today. ZN, ZB, yields are up across the curve. A bounce at an important turning point, right? You see ZN hitting the December highs and then finding a little bit of a pullback. This looks like to be an uptrend, at least here off the lows, higher high, higher low. And maintaining that would mean holding 110, which is right near that 1 month. So I'm very comfortable keeping long deltas there, Thomas. ZB is a little bit of a different story. It's a much bigger contract than ZN, twice the size. It also has a little bit more vol at 43.4. So I know this is a future show, but if you were to head over to TLT, it's effectively the same product, ETF, which means it's a little bit more manageable to scale. So if you look at the 43.4 in ZB and say, that contract, not the cut of my jib, TLT can accomplish more or less the same goal with a little more fine-tuned risk management, if you want to think about 20-year plus bonds as opposed to thinking about the 10-year notes. But Mr. Westwater, we are more than halfway through here, in part because today is Truth or Skepticism Wednesday. So Radigan and Sosnoff are here at the top of the hour. Let's turn our attention to some of these commodities and to what's happening in the world of FX here. Copper's having a huge day for copper, which works out very, very neatly for us, Mr. Westwater. Which, if you recall our conversation last night on Overtime, I was making the case that there was enough meat on the bone here technically to take a stab at some long deltas, insofar as we had hit the former swing highs in November, swing highs in January, which then have clearly become support of sorts. More importantly, since the start of the year, as we rally and break out, these pullbacks into the 1 month moving average have been a catching point of sorts, and we were exhibiting that same type of catching behavior here the past few sessions whilst this was holding up near that swing zone. This is an enormous 5.27% rally in today's session. So first things first, now that I got lucky and got in just a few days ago, is it worth holding on to if people are in the same shoes? Or because the move is so swift so quickly, should we just take profits and look to reorient ourselves otherwise?
Yeah, I think this move is going to continue. This is the biggest one-day move in copper we've had. You have to go all the way back to November 2022. So really substantial move here. And if you look at what copper has done after these types of 4%, 5% moves, you do always, not always, but more often than not, get a continuation in the rally, because usually when copper makes these big moves, it's on some type of news out of China, right? And that's what we saw overnight. These new growth targets come out. They speak to more stimulus coming out. So the sentiment for China, and China consumes about 40% of the world's copper, so that's by far the largest. That speaks to a larger story than just micro things in the economy. So I think the copper move, I wish I took it yesterday when we were talking about copper. I didn't. But it was playing into the way I see the market overall, which is dollar down, and China kind of outperforming versus the U.S., at least over the short term. I think this is a move that can keep going for sure. You want to see a break over that 4.9 level that we were back in mid-February. And then if you look at the structure of this chart, you get these pullbacks, you get some consolidation, pullback again, consolidation, and you keep going up. So the trend is working in your favor here if you want to take a long stab. I'm probably going to wait for it to cool off just a little bit before getting long now. But definitely I think the trend could be higher. And that's that comports with a lot of big bets in the market right now. Druckenmiller is still long copper. He said it was going to be a multi-year play for him when he put it back on, I believe, sometime late summer last year. But yeah, I think copper is a good play here. I think China is going to come out with more stimulus later this year. I think we're going to see the copper market do pretty well. I think I lost your audio, Chris.
Sorry about that. A little cough there. Yeah, still short the put spread here. For 50 days expiration, short the 445, short the 450. So obviously long calls would have worked out a little bit better, but not going to complain. The IV was high, the tasty way, sell vol when it's high, and we did so at support. So this is nice and moving in the right direction. Same thing for silver. What a rough few days that had been, Mr. Westwater. First, you shunned me by selling silver back in early February when I was still long, and then you got out of your short and made some money on it. I continued to ride it out, and then just got punched in the face again. So for my sake, Thomas, considering that you've made money when you've taken the opposite side of my trade, can you please confirm that you are not shorting silver here for my sake?
No, I'm not shorting silver. I'm going to get back on the long side. I think it kind of plays into China again. Silver has somewhat of an industrial component to it versus gold, which is more just seen as a hedge against inflation, hyperinflation, some risk off, flows going to it. But the level you have on the chart here, that December high, is the place to look where I'm going to be adding to long positions if I'm not going to take it before that. So I see dollar going down more, not necessarily in a straight line. I think there's going to be pullbacks where you could sell it again, or rips where you could sell it again. But I think this could play into a broader strategy if you're thinking dollar down, weakness in the U.S., more strength coming out of China. I think copper and silver will do well here.
Copper, silver up today, still holding gold as well, which did bounce a little bit more. And we're seeing a potential turn through the pivot area right near 29.30 or so. Not quite over the hurdle just yet, but we start to see momentum reasserting itself, Thomas. This 1 week moving average is now back above the entirety of its envelope, which is a good sign. And we're beginning to see that prices are trying to pick back up towards the all-time high. So yes, riding the rails. Why not? It hasn't been comfortable. It hasn't been fun, but riding the long deltas in the metals this year has been far easier trading than doing whatever's going on in stocks. So I'm just going to continue to work with what's working for me. Gold, silver, copper have treated me well in 2025, and I'm not going to abandon the strategies that have carried me here. So lean long as far as I'm concerned. And the vol pickup, by the way, here, that's a good sign. We like to see that a lot.
Yeah, definitely. You want to see volatility expand when gold is going up. It's all about these recent highs. We have to take out that level, then look at 3,000. So maybe some psychological exposure there where you could get some more profit taking, but ultimately I think we prevail higher above it. And I'm still long. I got long deltas on gold right now. So yeah, like you said, it hasn't been an exciting trade, but I think, we could be coming out of a moment here where we get some more direction.
Do you play the gold miners, junior gold miners at all?
I used to. I do not anymore. And that's because I haven't done well in it. Gold miners, you get these divergences that lag a couple days from the price of gold. So I've found it more efficient just to trade the gold futures than the miners, and that's pretty much just why I stick to the gold futures. It's just more efficient, in my opinion.
Thomas, we usually don't talk ag here, but by the time you and I will meet again this time next week, there will be a WASDE report that comes out March 11th, 12 noon Eastern. As far as my calendar says here, if that's correct, I hope it is. Obviously, with the trade war flaring up between the U.S. and Canada, Mexico, and China, some of the exports from the United States, soybeans, corn, for example, have been under particular heat the past few days. There's a nice little rebound here in soybean corn. But what should we be thinking about for this upcoming WASDE report, seeing as how people may not have a chance to hear from you on Futures Power Hour before next Tuesday?
Yeah, so the WASDE is the monthly World Agricultural Supply and Demand estimates. It's pretty much the biggest market mover for the AG products, wheat, corn, soybeans. And as such, every trader is watching it. You usually get pretty big moves. It's all about looking into this. Planting season is happening. It's starting now. It's going to go through May for corn and soybeans. So with these tariffs, farmers are having to decide what to plant in the ground. The tariffs could invite some maybe volatility into the forecast because, it is putting that uncertainty on farmers of what crop you want to plant to get the most bang for your buck. And we'll have to see if the soybean estimates come down for supply because China, the most efficient counter tariff or retaliatory tariff they could put on U.S. agriculture is soybeans. So I think it's important on that next WASDE to be watching those numbers closely, but this report isn't necessarily going to reflect too much of that yet. I think we'll see it in the next report back in April. But yeah, it's going to be a market mover for sure. Corn crop is looking pretty big for this year. You have to look at Brazil too, what they're doing. CONAB report is the equivalent WASDE for Brazil. I believe that always comes out or usually comes out a day after the WASDE. So you get two big reports in 1 week. So, sometimes you see positioning taken off before these uncertain WASDEs. I'm not sure if we'll see that this time. But, again, the thing on right now for the minds of AG traders is how these tariffs are going to come in, how these counter tariffs are going to come in from China. China recently jawboning saying they're going to, see this war to the finish. That could be a prelude to them taking more extreme measures. And they have more room to run, right? They announced an extra 10% on soybeans. That puts it around 35%, I believe. You can go a lot higher than that. That's just an opening shot to start this tick for tack trade war thing. So I would be interested in the WASDE, but I'm watching these tariff headlines more than anything.
The tariff headlines are clearly moving these markets, Thomas. If we think about the price action here since the end of February when it looked like, oh, wait, we're not going to just kick these out another month. Corn, soybean, wheat all have taken a hit here, but it is a nice rebound today. I think what matters most for traders, though, what an interesting volatility profile, right? 70.5 in ZC as it falls back to its 200-day moving average here right now for the first time in about since the first week of the year, but also wheat prices too. Again, now down in the hole, 44 IVR. Do you find any compelling trade setups in the soft ags? I know we don't talk about them much, and really given the movement in stocks, I assume most people are trading ES or NQ right now. But there may be some out there who are looking for ways to diversify their beta-weighted deltas in their portfolio, and going over in a soft ag seems, at least on the face value, a good idea. Would you argue that they're too tied to the tariffs, though, to have any diversification potential relative to equities?
Not necessarily, because you have a lot of volatility to play with in here. So selling a put spread in soybeans, even doing it around that deep December low we had back there, around 960. Between 960, 980, selling that put in the put spread, I don't hate it right there. You definitely get bang for your buck with how much volatility are in these products. So I think you have to take advantage of the volatility and at least have at least one AG trade on amid your portfolio.
Thomas, let's turn our attention here to what's happening in the energy markets, because it's a fascinating move here in oil prices today, finally buckling under the weight of all this supposed supply that's coming from OPEC Plus in the near term. $66.21 right now. That's a minus 3% move here in CLJ5. We're off the lows, believe it or not. We were sitting down near $65.22 at a point in today's session. It's bringing us back into an area where the market has previously found some support, though. And I think as people who look to, say, fade some of these moves when they seem to be extreme, this is an appealing spot where lows in September, we could see them here in October and November and December. We really didn't punch down through 66 or so. Do you think a 31.7 IVR in crude is worth putting on a trade to try to catch this falling knife?
Yeah, so I did put the put spread on yesterday. Obviously, a little early after this 3% move we're getting right here. But we have a lot of support right here. So I've got a decent amount of time. I'm at 42 days out for selling that put spread with selling the put at 66. I don't know. It's risky given, OPEC says they're going to bring more supply onto the market in April, around 130,000 barrels per day. It's not much. It's less than 1% of global consumption. So it's not necessarily huge, but what it does signal is OPEC's political appetite to work with the U.S. because President Trump, he has been calling, on OPEC publicly and both behind closed doors to bring supply back on the market, which is in line with his energy intents for the market to bring down gas prices. So it's really about how much spare capacity will OPEC release? Are they going to do this one time and then say, let's wait a few months, see how the oil market plays out? Or are they going to raise it for April, and then are they going to next month announce a raise for May again? If they do that, there's more downside risk to the market where I wouldn't see oil prices going above 70 in that outlook. But if they pause, and these growth concerns shake out of the market a little bit, I think oil is pretty fairly priced between 65 and 70 here.
You have oil sitting at decent levels, but again, for me, the vol just 31 on the IVR after this kind of downward move. If it was like a 40 or a 50, I'm happy to jump in with the wedding crashers mindset, as we like to joke around here. When you sell a short put spread, when you're short a put spread, you're basically saying, I don't think that you're going to keep falling. I'm not saying you're going to go up. I just think the fall is going to stop. Oil is in a place where you could pick some recent swing lows at the end of last year into the beginning of this one and, paint yourself into a corner and say, I could actually do that with these levels. Natural gas, on the other hand, this thing is just running and screaming and climbing and climbing and climbing. Up another, 2.34%, 2.4% today, $4.54.514 cents. So we're making new highs here in the past 2 days. This is going to be a new closing high for the year. Natural gas has just bounced violently off that 1 month moving average. I didn't quite catch it. I missed it on Monday dealing with this impromptu kitchen renovation thanks to a leaky pipe. And so this swing low that we had on Monday, I missed grabbing to try to get a new long entry. Obviously not feeling that happy about it. But what can you do, Thomas? Natural gas, though, continues to run. And I think that's really the story here. Natural gas is not something that when it starts moving, it moves quietly. It moves quickly, it moves aggressively, it moves fast. So with the 66.2 IVR in this rallying, how would you approach this? Do you think you should step in and sell some calls or take a different tact?
Yeah, I stepped in yesterday, sold the call spread, 4.3, 4.35. Obviously taking a little heat over the past 2 days. But weather forecasts, we're looking like we get 2 more weeks of draws, and then we start going flat into building season. So the appetite from bulls, there's not much more to work with here over the short term, given the rise we've seen. But at the same time, the strength of this move has been surprising, not only for me, but a lot of people in the nat gas space. I think you get a lot of bearish appetite coming in, given that we're coming out of withdrawal season, going into injection season, starting April 1st. That's why you're getting the 2, maybe 3 more weeks of withdrawals, and then you're flipping to building back inventories. So you have to watch the weather risk here. If there's a late season polar vortex or something, this could put more juice to the upside. But what we're seeing is the deficit for natural gas and LNG pressure on the U.S. for exports is going to keep prices elevated through the summer, where we're not going to get back 2.4, 2.5 into the summer. We're probably going to be staying somewhere more 3.2 to 3.4, maybe even up to 3.6 through the summer. And then you're going to be coming into next year with Europe possibly not having built their inventories as much. So structurally, you're seeing that there's a lot more appetite for medium-term pressure on the bullish side. And I think that's feeding into the short-term expectations here, given that we're coming out of the winter below the 5-year average for the U.S. European inventories, they've seen a colder than average winter, so their inventories have shrunk more than expected. This $500 billion for energy infrastructure out of Germany, yeah, it's going to put some, it's going to fix some things with Europe's disastrous energy infrastructure, but that's going to take time, right? It takes a lot of time to get that much money out into the economy, especially when you're talking about very labor and material intensive projects like energy infrastructure. That doesn't just happen overnight. It doesn't even happen over a single season or a year. It takes years and years to do that. So we're kind of doing a paradigm shift on natural gas right now, where we're coming back into a more bullish structure going through the summer seasons. So I think, if you get big dips, I think you buy them, but shorting right here, I'm comfortable with.
New headline out, 1 month extension or exemption for the big three automakers outside of the tariffs from Canada and Mexico. I'm sure we're going to hear more of these headlines throughout the day. Thomas, the dollar's pain recently is the euro's gain, or really the euro's gain is the dollar's pain, because so much of the euro move is being driven by domestic European policy, not just what's happening here in the United States. Although the change in domestic European policy is a result of what's happening here in the United States. Trump is pulling back spending for defense, support for Ukraine, disappearing. We cut off intelligence sharing with them today. So we're no longer going to help them paint targets of Ruskies in the eastern part of the country. All right, maybe that's a step towards peace, but for the European defense industry, it is a big whopping opportunity. And we know it's a whopping opportunity because the German government's stepping in with suspending its debt brake as it comes to defense spending. This has been a question for years, and it finally happens. European yields are up across the board because of German bond yields being up across the board. And this, for now, is helping the euro to a obviously very significant degree, where we were trading near 104 at the end of last week, and now we're up near 107. Where's the occasion where you add a full penny in 2 consecutive days in a currency, Thomas? Whether or not this is staying power is a different story, because the countries that are now seeing their yields go up, like a Spain or a Portugal or a France or an Italy, doesn't have the type of room in its fiscal balance sheet that Germany does, and the higher yields will hurt those countries. So let's see how long that can last. But this is just more signs of a dollar top. The dollar topping process is well underway at this point in time. It started a few weeks ago. It's really broken out here the past, well, we'll call it this week, since the calendar turned into March. But again, we're back near the 200-day moving average, Thomas, for the US dollar. Is this a move that you're looking to fade in the euro? 82.4 IVR failing up at its own 200-day moving average today.
Yeah, I'm not going to be fading it. I'll be buying it on the pullback, I think. I think it's a pretty big shift for Europe. There's a lot of arguments saying that it should have been done years ago. It probably should have. That's an easy argument to make. But they're finally getting serious about this spending. The euro obviously reflecting it. Dollar growth concerns in the U.S. not looking good. So I think this is a move that can last, but I think we do get a pretty big pullback here given the last 2 days of run-up. Really significant. Yeah, you don't see the moves like this quite often in the euro, or for really any currency for that matter.
Canadian dollar's up by 0.92% today. The Mexican peso is up 1.77%. The currency market is the world's deepest, most liquid market in the world. $6 trillion change hands every single day. Back in early February, when it looked like these tariffs were real and not just a threat, the market melted down. All of a sudden, we learn how to handle it. And while we get a negative reaction the past 2 days, we're kind of shrugging it off again. I don't want to call it boy who cried wolf, but it's kind of a situation like what happened with the 2-year yield in 2023 and 2024. When you bump up into 5% for the first time, it's real scary. Second time, not so much. Third time, so 5% 2-year yield. We've been here before, right? So with the tariffs this time, a less negative reaction in the currency on the way down. were being bought up a little bit more quickly. We saw this here in early February too. It's a 96 IVR. So if you think that Trump's going to remove the tariffs at some point in the near term, the market seems to be thinking that they will ultimately be removed, given the comments from Commerce Secretary Lutnick. You have a tariff play here in a typical Tasty fashion with a 96 IVR. It doesn't get much better than that, folks. You seem to have one last thing to say before we go off of FX, Thomas.
I think the dollar going down is going to continue. Not much else to say about currencies. I do like the yen as well. Thinking about getting some long yen exposure, but wage pressures in Japan look good. So I think this is going to be a good year for the yen too. But I said that last year. As did I say it last year and missed the July move. So when we think about what's happening with these tariffs, more dollars circulating in the economy, more demand for dollars initially up front, right? It's a one-time increase in price level if that's what happens. Central banks care about inflation when prices are constantly evolving. If this is a one-time increase in price level, what does this then do moving forward? Tariffs will then reduce American growth. Tariffs will reduce real post-tax income. Tariffs will reduce consumption. All those things then reduce the long-term potential of the economy. So the Federal Reserve can ultimately think about cutting rates. So we have European yields skyrocketing at a time when U.S. yields have been coming down. It's a death knell for the currency. The British pound somehow is whistling by it all, really enjoying the in-between, not quite being tagged as nasty as Europe by Trump, but also, still has its own problems. Either way, though, a dollar top appears to be in place. Fading rallies, selling rips as opposed to buying dips in the U.S. dollar seems to be the MO, Thomas. And I know that's music to Ilya's ears because he's been doing that for a few weeks. What's next on the calendar? We'll just wrap it up here, Thomas. We have to make room for the gentlemen Sosnoff and Radigan at the top here. We do have an ECB rate decision tomorrow, though. Keep that in mind. They are probably losing their ability to cut rates if we're talking about a German government that's going to be spending this kind of money. Further to that point, a press conference later, and then there's initial jobs claims in the U.S. Those did spark a big move last week because they surprised to the upside. They might have that potential here again tomorrow on March 6th. But Thomas, we're going to cut it out here for Futures Power Hour. We'll be back later today. Of course, you and me will be on. I'll be on overtime, and I think you may be joining us again tomorrow, perchance. So hopefully see you then. But until then, good luck trading. After a brief break, it is Wednesday, which means it's time for Tom Sosnoff, Dylan Radigan, Truth or Skepticism, here next on Tasty Live.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
I bought a stock when I was first old enough to open a brokerage account. It went up 1,000% and I made a bunch of money and I was hooked. I felt like I was just pretty much gambling in the markets. I had a big win and it was mostly failures thereafter that. And I thought I need to find a way to consistently pull money out of the markets and find a more consistent, repeatable system. Fast forward, I ran into Tasty Live. Really loved the market measures and the data they had behind to back up the research they were doing. My biggest takeaway is that you can find an edge in financial markets. It lies in volatility overstatement, volatility mean reversion, and having solid mechanics.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
I bought a stock when I was first old enough to open a brokerage account. It went up 1,000%, and I made a bunch of money, and I was hooked. I felt like I was just pretty much gambling in the markets. I had a big win, and it was mostly failures thereafter that. And I thought, I need to find a way to consistently pull money out of the markets and find a more consistent, repeatable system. Fast forward, I ran into Tasty Live. Really loved the market measures and the data they had behind to back up the research they were doing. My biggest takeaway is that you can find an edge in financial markets. It lies in volatility overstatement, volatility mean reversion, and having solid mechanics.
If you missed the live show, here's our cherry on top weekly recap.
You have to take a vision test.
Yeah, I test. I will pass. Don't worry.
Well, maybe we can test it out. Is there any way that we can test this out, Vanetta?
I think that there is.
Okay, Thomas.
Can you
why don't you read line
6?
Why don't you start with number 8?
8? Easy. D-E-F-T-G-T-E.
And you're getting a bus pass.
There are some people right now in production that are about to walk out because they're there too, and they're there every freaking day, Sad. Now, if that's right, I'm talking about James, I'm talking about John and Beth, I'm talking about all the crew there. They're there every day too, so why don't you give them a shout out?
Who?
Thanks, Tom.
Oh, John. Oh, John.
Just turn off his camera now. That's all you have to do.
Huh?
Make it real easy.
No, just get real close.
I was going to say, better yet, zoom in on. There you go. There you go. There you go. There you go.
Oh, I like this. Tasty After Dark. Yes.
Get the full scoop by checking out the archives at tastylive.com.
Hello, everybody. We are back. It's about a minute after 1 o'clock Central Time. I'm Tom Sosnoff. He's Dylan Radigan. This is Truth or Skepticism. And Dylan, I'm ready, man. You better be bringing it today.
This is the most significant moment in American history since World War II.
It is?
Oh, yeah. I mean, if you look through American history, you have the Revolution, you have the Tea Party, and everything from 1776.
Okay, I remember that.
Ben Franklin. You remember that?
Yep.
Then you had the Civil War. I was maybe the most significant event in American history, which you might have heard of.
Heard of it.
Yeah. And then you had World War I and II, also notable. And you had 1989. Which was a sort of a moment where the world went from having multiple great powers competing for influence. And then in 1989, it became one single great power with total domination of the entire world. I mean, I'm being slightly hyperbolic.
You mean U.S. domination?
Yeah, the U.S. domination was consolidated into total domination in 1989. And that basically the Cold War, the U.S. won the Cold War, to speak in a very literal sense.
Okay, sure, I'll give you that.
So since 1989, so you had you had multiple spheres of influence in the world, British pound, Russia, China, and then the Americans. And you have the shift from that consolidated group to the singular power that is the United States in 1989.
Okay. I'm with you so far.
It's now 2025. And by all appearances, the new president of the United States is behaving in a way and isn't acting in a way where he appears to be acting in a way, I should say, and I think it's broadly accepted, that is returning to a multipolar world, that the United States is no longer the single arbiter of all that exists and all that is power in this world, but that the United States is a very powerful and perhaps even the most powerful actor in the world, but that also China is a very powerful actor in this world and must be acknowledged as such, and they have their sphere of influence. And India is a very powerful actor in this world, has a sphere of influence. And for that matter, Russia, particularly in the context of this moment. Anyway, it's a long way of my saying we're transitioning from a singular point of power to multiple points of power. Which, again, this is not a political podcast. I'm not here to offer a big political analysis. But what I am saying is, because you and I talk, and you've really been made this point very clearly, is that the U.S. is the deepest, most significant, most important capital market in the world. The U.S. dollar is obviously the dominant currency. It is the currency of the world. And I'm interested in whether you have a point, what your perspective is on the change in the relevance or value of the U.S. dollar, or the change in the value or the liquidity or the existence of the U.S. capital markets as we transition from a single point of power, a hegemon, a unipolar world, whatever word you want to use, as we transition to a more multipolar world, and its relevance to markets in general, and is it even a tradable thing, or is it all risk? Is there upside? I mean, it's just a new way of we've lived in a world where there's been one point of influence for 36 years or whatever it is.
Well, it's one point of influence because he who writes the checks gets to make the call, essentially, right? That's what this is about. That's what this whole discussion is. He who pays the bills gets to make the call. He who writes the checks, however you want to say it, gets to make the call. So, that's been our role on a global scale, and that's where we are today. Or I'm sorry, that's where we.
And America's now saying we're not writing all these checks. USAID. You know what's going on.
The new narrative. I'm not exactly sure that this is the platform that this administration was elected on. It was more of, I feel like the platform was immigration and lower prices. The platform wasn't necessarily that we are going to stop being the leader of the free world type thing. But I think that was, there was a certain amount of, chatter about that. But the whole concept of make America great again, the whole concept of, of we're going to take care of ourselves first, and then we're going to take care of everybody else. I think you're asking, is this good? Is it sustainable?
And does it change the fundamentals of trading? I mean, what I really think about when I see it is Tom always makes the point that the United States is the deepest, most liquid, it's the most reliable contract law. It's got the deepest capital markets. The thing that's different between America and every country in the world, China, Russia, Spain, Germany.
So I feel very strongly on this topic because I don't think there's no doubt in my mind that the world's heading towards digitization. Technology is by definition, as technology advances, it's by definition it distributes, it disseminates, being able to digitize everything and for everything to be traded and integrated together. So what happens in a world of advancing technology is everything becomes much more global, not less global. Everything becomes more integrated, not less integrated. Everything becomes more decentralized and less centralized, okay? So that is just the nature of technology. And what we're doing right now is we're essentially saying, just think about this for a second. Is there ever a world? Can you ever think of an example, okay, where he, and I'm only saying he, but it could be he, she, whatever, he who takes care of himself first and only takes care of himself and doesn't take care of those around you to make everything a better place ever comes out on top?
Okay. Yes. So but
that's the basic.
Okay, go ahead. I'll let you finish.
That is everything from goodwill to human nature to to being a good person. The whole concept. Or if you don't share, if you have everything and you don't share, and sharing is defined lots of different ways, all you can do is set yourself up for failure. There is no other outcome.
Right. Okay.
I mean, it can always revert back. Since we're in a democracy, at least for now, everything can revert back to the way it was because obviously elected parties can lose. They can, things can go back to the way it was and things like that. But you do run the risk of true disruption. I think the marketplace has made some very bold statements in a very short period of time, especially the fact that the US dollar in the last week has basically crashed. Now, that's not a surprise to me because I've been bearish on the US dollar for years now, just because it's been in a bull market for 15 years. It needed to crash. But versus a lot of other currencies, we've basically seen the US dollar in crash mode right now. That is not a crazy coincidence. Yes, it was overpriced, but just because you brought up US dollar, yeah, the US dollar is in crash.
Well, I mean, that's the sort of
US dollar's in crash mode. US volatility is, up at ridiculous levels, and the US stock market has been in trouble, but it's just, it's rallying a little bit this afternoon. I think this adds an element of risk. I think this approach is very short-sighted, and it adds an element of risk that we haven't seen in a long time. Now, again, it's early. We're only a couple weeks into whatever you want to call this. We're only a couple weeks into this. And so lots of things can change and people can come to their senses and this and that. But, it's...
But I mean, from a trade, would you buy the dollar on this dip?
No. No.
Would you get short the dollar on the break lower?
No, I would get short the dollar in any rally.
Okay.
I'm already.
You're already there.
I'm already there. Yeah. Yeah, I'm already there. Yeah.
All right. So let's just, because this is sort of like because normally this would be like, oh, well, who's going to be the president? Who's going to be prime minister? But that's not what we're doing here. We're doing money.
Yeah, sure. We're doing money.
The underlying thing that's happening on the earth, without question, the underlying thing that is happening on the earth is total integration of people. Transportation, technology, live video between countries, currency, efficient flow of payments across borders and across currencies, the total unification and integration of that was a total increasing integration and unification of all humans and human assets. the American policies are designed to slow that down. Right? A tariff is a policy to create friction between international transactions. And I know this is not a tariff discussion, but there are those who think that it's good for the United States to no longer be financially responsible for policing the entire world.
Of course there is.
And bring more resources home to America.
Of course. I understand that.
And so, and for that matter, that tariffs are good for the dollar.
Well, tariffs are obviously not good for the dollar because the dollar crashed. So
I get it.
You can make the argument that tariffs, you can make the argument. I think the best argument you can make for tariffs is that you're trying to move manufacturing to the U.S. or you're trying to move manufacturing to, you're basically trying to move manufacturing to the U.S. and create U.S. jobs and manufacture with other companies investing in the U.S. There's a fundamental problem with that, which is as soon as you start messing with Mother Nature, and I talk about this all the time because the beauty of free markets is that you need other countries and you need other economies to participate in order for a global economy to expand. You can't do it solo. Everything moves together. Like the US Fed does not move without central banks now. The economy of the US cannot move solely by itself with no other economies following suit. It just doesn't work like that anymore. So there's everything's too closely integrated. So to say, oh, we're only going to do business with you if you do business here. Listen, are the rules, do we overpay? Yes. Are there unfair costs for US companies to go to other places? And the answer is yes, there are. But there's also access to capital in the US and access to US listed markets to raise capital. And there's far more opportunity in the US than there is anywhere else. And so for other places to be competitive, would we have, let me give you a couple of examples. Would we be where we are today, technology-wise, if it wasn't for technologists in other countries, like Taiwan, for example? Like, would we have the AI growth and the semiconductor growth if we weren't building chips in Taiwan or China? Would we have the intellectual capabilities that we have today if it wasn't for industry and education in other places around the world that we have helped to foster, invest in, and grow? It's not a one-off situation. You can't just simply argue that, oh, if it's back in America, we got this covered. Because would AI even be where it is today? Would quantum computing, where it's going to be 10 years from now, will it be 5 years faster? I bet if you ask tech companies in Silicon Valley, they're like, don't slow down Taiwan, don't slow down China, don't slow down any other places around the world, don't slow down India, because we need these places to generate the competition to create, all the money that's been raised for AI. Just for example, in Silicon Valley, the trillions of dollars that have basically come to marketplace are partially in place now because of what happened in Asia, speed to market wise.
Okay.
So let's not discount that. Let's not be foolish enough to discount that right up front and say, you know what? Make America great. Like do everything here or don't do anything, because you won't get it done. We'll fall behind the rest of the world.
You're saying the velocity of global capital is more important than any particular transaction or the fairness of any specific transaction. And you're saying to say that, like, just because whatever this one particular tariff on, or one particular transaction doesn't even be a tariff, but one particular thing is out of balance, doesn't mean that net that you're not performing in a way that's to your advantage. That being part of that imbalance is to your advantage.
Sure.
And as evidenced by the velocity of capital that can be assembled.
Ask. I wish Jensen Hung was on this discussion, and you can say to him, where would NVIDIA be today if it wasn't for access to different economies around the world? I'd love to ask Tim Cook the same question. Where would Apple be today if they couldn't build stuff in China and build stuff in other places around the world, including Taiwan and chips from all over? Where would any of these companies be? Where would Dell be? Where would the companies, where would IBM be? Let's stop being this so ethnocentric, so short-sighted, and so incapable of seeing what's going on in the world, because everything is not a political discussion. Everything is not just about lining your own pockets. It can't be.
But so, I mean, what is the biggest, so if the number one risk is with the bond, or excuse me, the number one risk is with the dollar, excuse me.
Is it with the dollar? Is the number one risk with the dollar? The dollar, who cares if the dollar goes a little bit lower? I mean, the argument's going to be lower dollar, cheaper to invest in the U.S.
So then what do you believe the number one risk is?
The number one risk is that we get disrupted. The number one risk is that right now we are the leaders of the free world. Okay? We police the free world. We support the welfare of the free world. Okay? We generate, basically, we're the foundation of the economy of the free world. The risk is that we lose that title. Now, some people are going to go, there's going to be a bunch of people. There's going to be a bunch of fiscal whack jobs that go, that's perfect. That's exactly what we want. Now, screw them. We don't need to spend any money on them. Who cares about AIDS in Africa? Who cares about healthcare in Tanzania or wherever? Timbuktu. We don't care about the fact that there's no electricity in Mali, whatever, in Timbuktu. That's my whole point. It's very easy to say, why do I care? I care about what happens in rural Iowa or rural Alabama, whatever it is. But it's not that simple. And if you want to lead the technology revolution, and if you want to lead the decentralized charge so that everything, ultimately, we maintain the center of liquidity here, we have to maintain that role as leader of the free world. In order to do that, we cannot just care about ourselves.
Yes, of course.
Because you have nutcases out there. You have crazy people like Putin. You have crazy people like him, other dictators that are probably a few steps away. Putin will be dead soon, but you have other dictators that still want to step up. And you have to be very careful, because you know what? It takes a joint effort. It's not just everybody flying solo. That is not a good thing.
Where are they going to go, though, Tom? I think that it's like, it goes back. It's almost like the quantitative easing, where it's like,
sure,
the U.S. has so much economic leverage. Are they really going to go to China? Are they really going to go to Russia? Europe can't even agree on a language. I mean, Europe can't even agree on a time of day. How are they going to? Do they really understand how hard it is and how difficult it is? To take that kind of a leader, to take that kind of a leadership.
Every single company that has said throughout the years, where are they going to go? In the old days, that was a very difficult. That was a really good question. Today, things are cheap. I mean, I know it sounds like, but where was NVIDIA 10 or 15 years ago? It's a different world now. You can build stuff without the cost, without the infrastructure cost to all the technology. Anybody can be a disruptor. Anybody can come to the plate. I don't know where it's going to be from. I don't know. But I'm going to tell you that disruption is, it's not It's not something that I don't rule it out. And it's not you don't need a big number to do some real disruption. Like, we're not talking about, you just have to do a little damage to our GDP and the whole country goes into free fall because you can't service your debt. There's a lot of things that happen. And you got to be very careful about that.
Because the point is, once you lose it, you never get it back.
That's right. And, there's a lot of other things that are important. You can't just, the world's not just a simple bottom line. It doesn't work like that. We've had this discussion.
It's not just the plus or minus of today. You're saying it's not just whether I got $5 from you or you got $5 from me today.
That's right.
It's about whether I can trust you for the next 30 years of my life as a partner.
Because
or even the next
things
year.
Take a little time to build, and everything needs to be done. You need to work together nowadays. Again, I get back to this globalization argument. Globalization, tokenization, digitization. These are not just words. Decentralization. All of these words. Okay, this is our future. It's going to happen fast too. In the world of AI and machines and quantum computing coming right around the corner within the next decade, stuff's going to happen. Shit's going to happen overnight. Nobody's going to be immune. This is not like 3D printing where you're thinking, I could print anything, anywhere, anytime, so everything's covered manufacturing-wise. That's not what this is. This is a whole different world. We're way past that.
On a scale of 1 to 10, how alarmed are you right now in terms of real immediate risk?
1.
But 1 is a lot more than 0.
Right. On a scale of 1 to 10, I'm at a 1. So I'm not that alarmed right now. But what does scare me.
But it's a risk that didn't even exist a minute ago, is the point.
It's a risk that I didn't feel existed a year ago or 2 years ago. What scares me is that there's more support. Is that I don't know if people. I just don't like it when we A, can't debate, and B, when everybody listens to somebody for the sole purpose because they don't want to lose their status or their job. It's a horrible situation. I mean, it's almost, it's bad. It's anti-American. Period.
Do you think that the policymakers in the United States are concerned about the weakening of the dollar?
No.
Or any of the financial metrics of any of the financial metrics?
No, the policymakers in the U.S. right now are market structure and financially illiterate, literally illiterate. There's not even, I'm not talking just on.
But not even
side,
Howard Lutnick or Scott Bassett or any of these people.
I mean, do you think Howard Lutnick has a say in anything? Sold.
That's the thing. I don't know that he does.
Sold.
Yeah.
I'll sell that. I'll sell any of those guys. I just don't think there's a person that has a say.
Would you get, I mean, this is again, because would you originate, are you more bullish on India or China because of what's happening?
It's very hard for me to say. I just don't know how bad the situation is in India with respect to, I don't know how much bureaucracy. My experience dealing with Indian regulators, I've never dealt with the Indian government. I've only dealt with Indian regulators, securities regulators. My experience dealing with securities regulators in India is one of the worst you can imaginable. Like, it's so bad. I can't even describe how bad it is in India. But it's more of a legacy platform than it is, a willingness to change. In China, I just don't have any experience, so I can't say. I've never done business in China, and we don't have any experience with, Chinese regulators or anything like that. So I can't answer that question. From the outside looking in, I'd say the Chinese government is more dangerous than the Indian government, and I'd say the Indian regulators are worse than the Chinese regulators from the outside looking in.
how much 22 point some odd percent of the people in America voted for the current administration. 21 point some odd percent voted for the opponent, and then everybody else didn't vote, basically, because they don't want anything to do with it. Right. I take a little bit of hope in that when I see policies, by the way, from either side, where the Democrats do something crazy or the Republicans. I'm like, honestly, this is not what most people really want. This is just what the sort of extremist leadership of one or the other parties is saying that they want for whatever their reasons may
I mean,
be.
that's always been the case, though, Dylan. We're always
no. I know. I know it's always been the case. But what I'm getting at is to the degree to which markets, like for instance, I forget who is the crazy prime minister, Liz Truss, the 3-week prime minister in England, who wanted to do some crazy tax thing, and the bond market in England flipped over on her, and she was done. Do you believe that the markets are in a position where if the American policies became so out of whack that there are enough people in leadership in New York, in Chicago, in the finance world, whether it's at the banks, the BlackRock, or JP Morgan, the New York Stock Exchange, wherever the power lies these days with the financial institutions, whatever, that if the American policies become full cuckoo bananas, whatever that even means at this point, that the financial markets are a corrective force. The first thing that Mike Bloomberg used to say to us when we were 23-year-old junior reporter at Bloomberg was, everybody, it's all fun and games until the bond market decides you're done, and that ultimately the bond market dictates what's acceptable and what's not acceptable, not just in the financial world, but even in the policy world.
I worry about that less with Trump than I would with somebody else. Like a different type of radical agenda would scare me more than Trump's agenda. And the reason being is that most of first of all, I consider him to be a capitalist, a hardcore capitalist. And Trump. And so I don't think he wants to mess with that. And I also consider his largest supporters and largest contributors to be very much hardcore capitalists. Like they run large financial institutions, like you're talking about, BlackRock and Blackstone and
Goldman and Morgan and
Goldman, Morgan, Citadel, Susquehanna. These are the biggest players.
These guys, Ken Griffin is a big Republican.
Yeah, I mean, Jeff Yaz, Ken Griffin, just the whole gang. These are the hardest core, financial people in the world. I don't think that. I think that I don't. So I don't worry about that with Trump. He's got a hardcore.
But the dollar getting shellacked is not nothing.
I don't think they care as much about the dollar getting shellacked because a cheaper dollar contributes to what their objectives are, bringing back investment in the U.S. If companies can come here and it's cheaper for them to come here because their currency is worth more, it's cheaper to move money to the U.S. right now. It's cheaper. You're buying cheaper dollars.
Got it. So that a weaker dollar brings capital flows from Europe, from China.
Yeah.
It's easier that you get more dollars for your yuan or your euro or your yen.
Everything. I mean, a cheaper dollar, and I don't even think the dollar is cheap. I think the dollar is just getting.
I said it's all relevant. I mean, of course.
Yeah, it's all relevant.
But your point is that I see what you're saying. Your point is they don't a weaker dollar is not as a positive, not a negative, or could be construed as a positive through this policy framework in a way that weaker NASDAQ or a spike in rates would not.
Yeah. Trump's team's not looking at a weaker dollar going, oh my God, we got to make the dollar stronger. I don't think that's even. I don't even think that's part of the conversation.
Got it.
I mean, there's no question that they would prefer to have lower interest rates when they have to refinance debt. I mean, there's no doubt about that. But I don't really think the dollar matters that much.
Do Do you think that what they're anyway? What I'm really fascinated by is this obvious tension between the hyper integration. Like there's going to be the crypto is going to hyper integration. Like generationally, the younger the human beings are, the more they're less nationalistic and more connected with their friends from Instagram in Canada or Mexico or Brazil or in Spain or Japan or whatever. Like the whole thing is less.
Which is the crazy, which is the hypocrisy of this whole thing, especially with Trump, because on the one hand, he's a supporter of digital assets, cryptocurrencies, and blockchain, and that whole movement, the whole decentralized movement. I mean, he's clearly supporting that, no question about it. But the decentralization on a global scale essentially means allowing technology to engage more people, because technology is the great equalizer. So technology engages more people and brings way more people into the economic pot. That's the whole purpose. It brings people into politics. It brings people into different economies. It levels the playing field. It opens up all the borders. That's the beauty of decentralization, is involving everybody and just changing the game. You don't have to have a gazillion dollars to enter the game. That's the whole Solana. That's Cardano. That's everything about Ether. Same thing. It's everything these guys have been talking about, all the founders. And yet it goes completely counter to make America great again and close our ecosystem and become, with some form of isolationist policy. Makes no sense.
And it just feels like, to me, it's going to create some big tension. The conflict like that creates tension.
Well,
and in this case, I actually feel like it's going to be crypto positive, because the one way you work around terror transactions is with crypto transactions.
Yeah. But
I mean, I guess that's not really the truth.
But crypto's a technology, and it's not the kind of thing where you can say, okay, only in the US. Like, that's not the whole point of decentralization. So I don't understand how you can have it both ways. And I think it is important to be, it is important for us to be leaders of the free world, and protectors of the free world, and to provide welfare to the free world. I think that is important. That's an obligation of living at the top of the food chain. You get all the other benefits.
A realist would say that was fine between 1989 and 2025, but it's over.
I mean, no. A realist would say that actually works, and we just have to we have to continue to improve things and do things better. But to try to change things and go back in a different direction is incredibly difficult and dangerous.
And that danger manifests in unquantifiable economic risk that we cannot identify at this time.
Well, no, but you're empowering your greatest competitors. You're basically empowering your greatest competitors to go after you.
Meaning Russia, China,
everybody.
And you're turning your allies into adversaries.
Exactly.
That's the other thing.
You know the old saying, keep your enemies close.
Yeah, of course. But it's also interesting to turn Canada and Western Europe into an adversary is an interesting policy decision.
Keep your enemies close. That's always, keep your competitors close. And keep your competitors close, and you'll be in great shape. Piss your competitors off, and everybody's coming for you.
How are you trading these past few days? I know you gave me your dollar comment, but are you fiddling with the NASDAQ?
Yeah,
Have you been short? Were you short coming into this?
Yeah, but I'm just a trader. Traders are. I'm a trader monkey. My view of the world with a conversation with you is not how I trade. I can't trade thinking that 13 years from now we screwed this thing up, or 4 years from now. I mean, I'm trading from where things were priced this morning to where things are closing this afternoon. You know, like I can't have I don't take a long-term macro view of anything. I just trade them.
No, but how are you trading this?
Right now, we're really just selling a lot of premium because, you know,
Okay.
volatility is so high. We're flat deltas selling a lot of premium. That's kind of the way I see this thing.
Got it. Okay. It's an opportunity to sell vol and don't get tangled up in the direction either way.
Yeah, try to keep it a little bit close to the vest and don't get too tangled up. Exactly right.
Does that include oil and all the rest of it? I mean, is it across the board? My best thing is I was short oil coming in. It's the only thing that worked for me last year. It's the only thing that worked for me this year. The equities, I stopped fiddling around with it because it always just ends disastrously for me, honestly.
Crude oil's been a little bit of a free fall, but you know what? Crude oil being in a free fall is good for this administration because if you get lower gas prices at the pump, you have a much better story to tell. I think what people don't understand is like nobody control like it's not like you know Trump or anybody else can control gas prices. Joe Biden couldn't control gas prices. Trump's not going to control gas prices. No president controlled gas prices. So, I mean, with oil at 66, sure, gas is going to be cheaper than with oil at 76, and hopefully oil drops into the 50s, and they've got a good story to tell.
Mm-hmm.
I don't care how they're spinning. Let's say, oh, we did them.
No, of course, I get it. Yeah, I got you. But at the end of the day, deglobalizing at the peak of at the most globalized moment in the history of the world is I would think it's an impossible task. I mean, I guess Russia made it, long after 1945 or 1960, whatever they did at 1945, made it illegal to leave the country. East Berlin, I'm in Berlin now. I went over to Checkpoint Charlie this morning. You forget that they were on August 13th, 1961. They're like, nobody leaves.
I know.
Like, no joke. I mean, not that we're, I'm just saying when the political movement towards restricted movement, in this case, it's restricted movement of goods and services, but restricting movement is something that governments do.
It never works.
And it never ends well.
It never ends well. He who isolates himself, he who doesn't take care of those around them, he who is not charitable, he who does not act in good faith. I'm not getting all religious or anything, but these are the people that end up, it doesn't work.
In a bad place.
That's right. All right, Mr. Radigan, a great discussion today. I didn't know you were going this direction.
This is high global politics. This is the highest level of this is the destiny of the future of the world, sir.
I did not know we were going this direction today, but I like it. I'm Tom Sosnoff. Right. He's Dylan Radigan. Every Wednesday, Truth or Skepticism. Thanks for spending the last 40 minutes with us. Thanks, Dylan.
All right, see you in a week.
Looking for a better broker and a bonus? Sweet.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
You have to take a vision test.
Yeah, I test. I will pass. Don't worry.
Well, maybe we can test it out. Is there any way that we can test this out, Vanetta?
I think that there is.
Okay, Thomas.
Can you
why don't you read line 6? Why don't you start with number 8?
8? Easy. D, E, F, T, G, East.
And you're getting a bus pass. Okay, so whose readers do you have over there? Put them on for the people. Let's do it. Let's do a fashion show.
Oh, these are. Okay. With all due respect,
ma'am. Excuse me, ma'am.
How did I smell walking in? Because I was stuck in traffic next to the 35th Street.
Okay, now I know
Okay,
where you're going with
35th
this. What the
Street
hell is
L
she talking
stop, subway stop, like 35th Street subway stop, and my car parked there for probably 10 minutes in traffic, and it was just like fumes of marijuana coming into my car from all the people at the 35th Street subway stop.
Ladies and gentlemen, good cover. She's high today is what she's trying to tell us.
Yesterday, my son and I put up, we were talking to you, and you were getting a little fresh.
It's the four of
So we
us.
gave you a double, it's not a backhanded slap unless it's a bat slap, and you had the two of us. It really looked funny because the way it was set up, it looked like we were slapping the two of you.
I'm looking at it now. It's a beautiful picture.
Oh, yeah. That's not a backhand. That's a bat hand.
And your son has more. He's got.
Oh, my
whip
son's coming from
His-
downtown. He's got some anger in his.
Yeah.
I think he's trying to reach all the way over to Sosnov. We're going to take a quick 90-second break and come back. We got more Tasty Live right after this. You know what's coming up next?
Lunch.
You boomers cut out early, so you guys pieced out right after lunch, and you were like boomers out, and you like skipped out of the office together holding hands. Meanwhile, the rest of us are like, what the hell just happened?
What do you call Tom when he just comes for lunch and then leaves?
Oh yeah, you're a lunch badger.
Lunch badger. That's it. That's what we were.
Hey. I'm the only one here.
There are some people right now in production that are about to walk out because they're there too, and they're there every freaking day, Sad. Now, if that's right, I'm talking about James, I'm talking about John and Beth, I'm talking about all the crew there. They're there every day too, so why don't you give them a shout out?
Who?
Thanks, Tom.
Oh, John.
Just turn off his camera now. That's all you have to do.
Huh?
Make it real easy.
No, just get real close.
I was going to say, better yet, zoom in on. There you go.
Oh, I like this. Tasty After Dark. Yes.
Get the full scoop by checking out the archives at tastylive.com.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
What is going on, everybody, and welcome back to today's assignment on this, not a sell-off day, but another rally. We're going to talk a little bit about the sell-offs, but before we do that, Dr. Jim, how are we doing today? It's Wednesday midweek. Got a couple of days left to go of the trading week.
I mean, it's a rally right now, but check back in 6 minutes. That could all be gone, dude. Like, it's crazy, man. Like, you wanted volatility, bro. Like, here you go. Like, you wanted your VIX over 20, bro. It's at like 23, 24, man. Like, what's up with that?
I feel spoiled right now, but I'm not gonna get used to it. I'm gonna take what the market's giving me right now and trade based off of that. But so your point that you just said, in 6 minutes we could be to the downside, and I got a couple stories to share with you from just today. So before we do get into that, though, Dr. Jim, I do want to touch on one thing: the Mavs, Kyrie, my favorite player in the league. I don't know if you heard about the news.
No, I mean, obviously you got the Luka stuff, but I mean, I have no idea. Like, what's up with all that? No.
Kyrie to the Nuggets. No, I'm just kidding. Kyrie's.
Are you serious?
No.
Oh.
he did tear his ACL though, and just one of my personal
that's
favorite.
Brutal.
Yeah, and he's 32 years old now, so I think that might be a wrap for him. AD's hurt.
No,
Luka's gone.
come on, dude. It's not a wrap for him,
now.
dude. Come on, you got your boy Aaron Rodgers. Dude, he tore it. He was back in the saddle in like 12 weeks, dude.
Aaron Rodgers got to sit. He just has to sit in the pocket with a nice offensive line, and he's good.
Kyrie just shoots threes anyway, right? Just sits back there and just launches threes from the logo, right?
No, this is one of the best ball handlers, floor facilitators we've seen in our time. You know, if he was playing back in the 70s, they would have thought he was a witch. They would have thought he was doing witchcraft. He was doing the stuff that they're doing now today.
That's crazy, though. Did he tear it? Did he tear it in the game?
He did. You can kind of see it. Looks like over or hyperextended his leg. You can kind of see it, and then came out, tore the ACL. But it's a tough one for the Mavs. You know, the Mavs season is kind of looking like the market the last week and a half. So we'll touch on these market sell-offs. But what are our thoughts right now, Dr. Jim? As we head into this first slide, I want to touch on the sell-offs. We got a couple of data points for you today. I want to talk about some of the positions that I have on with reference to this sell-off that we're getting. So where's your head out right now?
I mean, I'll just tell you this, man. Like, obviously, the last week or week and a half, I mean, the market has not been able to get its legs underneath it at all. It has not been able to hold any type of rally. There have been many attempts that honestly have looked a lot like what's happening right now. I mean, I'm looking at the screen. You've got ES up 67. You've got NASDAQ up about 270. If it can't hold this rally, that can't be good, man.
No.
Like, you have to imagine, like, it's going to have to cling on to one of these guys. Otherwise, I mean, I don't know, man. Like, are we going under 20,000 NASDAQ? Are we going, under 5,700 for ES? I don't know. It's pretty crazy stuff. I personally think, and I said this at the beginning of the month, even at the end of February, I think we're going to rip pretty hard to the upside in March. I don't know if that means all-time highs, but I would think we're getting at least a couple percent back in the major indexes. I do think we'll probably put in new lows still for the year, of course, but I would be surprised if we go much lower in March.
Yeah, no, I hear you. And we got 2 touching points on that right here for you today, Dr. Jim. VIX above 25, you just mentioned that. We did get my VIX over 20. It didn't seem like it was going to be very long-lived, and then we got a little bit of a gap down overnight tonight. So then I was like, oh, maybe we go higher on VIX. Maybe that's the case, but
it's pretty crazy. Like, I'm looking at it right now. It's pretty wild. It's been a while since we've seen the VIX is down $1.80, and it's down to 21.70. Like, that's pretty crazy, man. Like, it's down almost $2, but it's still at almost 22. Like, that's pretty wild.
I think we're doing well. Maybe we're getting a little bit of maybe we have more to come. I know we've done a study before on how volatility likes to cluster. We need to go back and find that exact reference, but I believe we've talked about that before too. So maybe we get a plus 30. I don't want to get ahead of myself here, but maybe we get something like that. But
tell you what, I mean, this is what the market feels like at a VIX at, 22, 23, 24. Man, if it hits 30, 31, 32 and stays there for a little bit, like that's gonna be pretty crazy, man.
I'm not complaining. And before we get into these slides again, with the VIX above 20, right? I trade very directionally, right? I know whenever we see a vol expansion, we're able to collect more premium than we typically could have. But also for the traders that trade a little bit more directionally, you definitely noticed a shift in the overall market behavior, market sentiment, whatever you want to call it, especially with VIX being above 20. I think we can see a direct correlation to just the volatility and price action and just trading directionally with a higher VIX than we've seen pretty much all year. So anything else to add before we hop into this one slide?
Well, I have one quick question for you since you kind of brought up the directional trading. So, you and I, we talked about kind of risk and return, and we talked about different approaches to the market. This was maybe last week or the week before. I can't remember. But I'm curious. So when volatility expands, because I know that you like to do like a 1 to 2 or 1 to 3. Like that's kind of the sweet spot, correct? For your risk return?
Right.
Okay. Do you expand that? Do you go for a greater kind of return per unit of risk, or do you actually shrink it down and go for less when the volatility is higher?
That's a really good question. I would say whenever the volatility is higher, like right now, at least something that I've been doing is I've been using less contracts. So I'm not as quick to add a contract. Still looking for that 1 to 2 always in terms of if I'm looking to take 30 points from the market, I'll risk 15 points. So that still stays the same. But the direction that the market could head in, and whenever we're whipping to the upside and downside, we move so many points than we've seen, even just in January. So one thing is just sizing down. I'll still go for the same thing, but I'm going to use less contracts, if that makes sense.
No, it absolutely makes sense. It absolutely makes sense. And it's the whippiness is crazy because just sitting here like watching the market, right?
Yeah.
Like I know you like to trade the NASDAQ. I know that's pretty much one of your go-to indexes. The NASDAQ, even when things are quote unquote slow, the NASDAQ moves. It still moves quite a bit, right? But now the NASDAQ, I mean, it's 20, 30 points every couple seconds. Right. And now even ES is moving like 8, 10, 12 points.
ES is actually moving.
ES is moving quite a bit, man. Yeah. So it's pretty wild.
No, it's saying something if ES is making those moves. But VIX above 25, we'll see what we get in the last couple of days of the week. wanted to manage some expectations for the last 2 days. I believe Dr. Data and Nick Batista did a great cherry pick the other day talking about some of these down moves. So I'm referencing this cherry picks that they did, and I pulled a couple of these data points that they had in there, and it was that the S&P 500 has an average of a 1 month return of about 0.5% and a median return of about almost 1.5-ish%, 1.37%. And the market tends to be positive following the VIX spikes, right? We have about a 60% positive return on the market after the VIX is spiking above 25, and about 40% of the time not to the upside. So about 85 instances, and then 60% will take in about 128 instances. So what does this mean? I don't know. What does this mean to you, Dr. Jim?
Well, yeah, right. I'm a little bit surprised. If you would have asked me what I thought these numbers would be, kind of, sight unseen without looking at the data or the results here, I actually would have expected it to be more skewed to the positive side. So instead of it being 60-40, I would have expected maybe 70-30.
So it's not a surprise it's leaning to the positive side.
No, not at all. No, not at all. I think that, I tweeted about this yesterday, but I tweeted about it when the NASDAQ was 600 points lower. But I was like, hey, if you're getting short now, like, you're doing it wrong. Like, I don't know how you're doing it, but you're doing it wrong. Like, that is not how you do it, right? And so, but generally speaking, this is kind of, the contrarian nature of the market. This is, right when they scare everybody, and this is where everybody starts loading up on their puts, buying puts, of course. This is when the market just, reverses course and rips everybody's face off, and we're right back to all-time highs. And so I would have expected this result to be a bit more skewed to the upside, but I'm not at all surprised that it is skewed to the upside.
No, I hear you completely. I think I'm in the same boat there. I think I would have expected it a little bit higher, but at the same time, not surprised by these results. And lastly, back to what you just said, Dr. Jim, I saw that tweet. I commented in quotations, deletes order, like as if I was getting short, like, oh, Dr. Jim tweeted that. And I ended up not sending it through, but I was about to post.
Yeah, I'm like, I didn't see that. I don't think I saw that.
I was like, cancels the order. I was about to post that.
Oh, that's good. That would have been good.
Yeah.
That would have been pretty good. So what do you think? I'm curious, just to go on record here, like, where are you at? Do you think that the lows are in for March? So do you think the lows are in for this month?
It's a long month, Dr. Jim. The month just started. We're in the first week of March. Okay. I'm going to go with, I think in the beginning of March, I think the lows are in for the next week or two. That's where I'm at personally.
Okay, so you think we're going to make it through NFP, we're going to make it through CPI next week, we're going to make it through Powell on Friday, we're going to make it through all of that with the lows intact?
I do think so.
I agree. I think the lows are intact for the month.
No.
But, okay.
And as we get into my positions here, I think my positions are definitely going to reflect that opinion. But I want to jump right to this platform though, Dr. Jim, and start getting your thoughts on some of these positions. I got what do you call it, whipsawed, or how do you guys call getting chopped up in the market? Whipsawed, or what do you say?
No, I think that they both would apply. You chopped up, you whipsawed.
Yeah.
They both essentially are pointing to the same. To the same thing. No, you get whipsawed, and that's not a fun feeling to have to experience, but we've all been there. It happens to every single one of us, and now you've got a nice little like I said, you've got a nice little rally in the market. So the question is going to be, can it keep the rally intact?
Well, we have a nice little long right here, Dr. Jim. We got long here. This isn't telling the full story though, and that's what I'm going to get into here in a moment. We're long here at about 20,548 on these contracts, and we got long right about here at this little range, you can call it. And this range is representing one of the levels that had the most trading activity from last week. So that's all of that blue highlighted zone is. And essentially, I was looking to get long, and I'm going to be looking to sell at around this high over here, or I'm debating on taking this futures contract off at yesterday's high that we put in right over here as well. So I'm going to hold this one a little bit longer, but that's the futures contract on NASDAQ that I have on right now. But I got chopped up right before this. So earlier I was getting short about here. So I started to get short here. We sell off. It was great entry. And then in 5 minutes, I look at my screen and I'm having to stop out of my position because we're ripping to the upside. So the goal is for these levels is it doesn't let me know, okay, I'm going to start getting long here, or I'm going to start getting short. But I do know at these levels, right, I like to call it the value area low. Whenever we're trading at these levels, it just lets me know this is going to be a great area to get a decent risk to reward. So it's not letting me know, yo, start getting long or start getting short, but it's letting me know that the market is going to make some critical directional decisions at this level. So that's kind of what I was going for right here. And by me stopping out here allowed me to manage my risk a little bit better, and then flipping get long, change my position. And I'm going to be holding this one for a little longer. Hopefully we get to this high or this range high right here, and I'm going to look to take it off from there. But Dr. Jim, I was looking to get short from here again last night. And this is why I typically don't swing trade with the futures contracts, because when you're trading directionally, timing is important. And we don't like to focus on timing of positions like that, right? So I'm looking to get short last night, and I was getting short around where was I getting short at? I got short around the same exact level. So we're selling off. Right before I go to bed, I'm looking at the market. It's selling up. I'm like, all right, we're doing well. We wake up this morning and we start. I'm sorry, I was looking to get long. I'm sorry, Dr. Jim. I was looking to get long here from last night with the futures contracts. And then overnight, we started selling off again. I'm like, man, are we really going to head lower again and take out some of these lows to the downside? So I ended up cutting that position this morning and then getting short here again, cutting this one for a smaller loss. And now we're ripping to the upside. But what can be frustrating sometimes is now this position is going to have to finance, once I exit it, it's going to have to finance that loss that I had to take overnight, which was a heftier loss than I usually like to take. I think it might have been 100, it might have been 150 points, something around there. So that's one of the risks that you have whenever you're trading these futures contracts overnight. You don't have any type of breathing room. You can't sell it out of the money, get more breathing room. Of course you can if you're selling the options on the futures. But this is just one thing I wanted to point out whenever it comes to directionally trading these futures, especially holding them overnight. So hopefully that position that we have on now will get financed to that. So you see here now, Dr. Jim, at the bottom, the open position that we have on is making up for those two losses that I had taken from last night. And then right before that, tomato, hindsight's 2020, blah, blah, blah. But I don't typically trade the futures contracts overnight. But this is a great example of something you got to look out for, because yeah, you can say, oh, you should have held it, but it's like the market could have made new lows and I would have been down $500 to $1,000 off of a micro. It's like, is that really worth the position size that you have? Is that worth the mental capital that comes along that you chip at as well by taking some of these losses? So just another one I wanted to point out, because I know we talk a lot about risk to reward, and I want to show the reality of trading directionally, especially if you're trading these futures contracts and holding them overnight. So we'll get into the rest of these positions here, Dr. Jim, but these are some of the things that I'm doing right now with these micro contracts.
Well, and this is a really good example of, like, you've got the one trade. I mean, this is essentially the game that you're trying to play. This is what you signed up for. You've got the one trade now. You've got the winning trade that right now is covering multiple losses.
Yes, like, and one that was oversized. I took an oversized loss than I even typically take, which is annoying. I will admit it's annoying, but it won't knock me too far out of the game if I can get one of these under the belt.
Yeah. Now, what's interesting also, though, about this chart is, so you got long. So where did you get long? So show me where you got long overnight. So overnight, you got long.
I was getting long the same level pretty much.
Yeah. Okay. So here's what's interesting, and this is kind of the way that I view the market.
Yeah.
You got long before you went to bed, right?
Right.
The market started to drop, so you cut it and you managed your risk. You managed your risk. You managed your loss. Whatever. Had you just held it though, you would have gotten paid. You'd be getting paid right now. Like it didn't even take that long. Okay. The second trade, the second loser, the one that was short, that started to go in your favor, and then it reversed and stopped you out. Right. So that was right around what, 20,560 or whatever it is, right?
Right.
I bet you that in the next, 12 hours, again, if you just would have held that position, you probably would have gotten paid.
Oh.
And so again, it's tricky. Yeah, it's dicey.
It is tricky.
It's a very different different approach. You have to make sure you're sized correctly.
Yeah.
Like, you can't be in a spot where, 500-600 points is going to completely do you in. Like, you need way more bandwidth than that. Yeah. And so just something to think about, something to consider.
That's true. The thing is, I think about it too. It's like, man, I don't know if I want to stomach a negative 5 to 1,000 P&L, and I'm only using one, I'm only using one micro. But
I mean, your hairline right now, it is pristine, bro. Like, your hairline, like, that's what they put in textbooks. Like, you don't want to be messing with that, dude. So I understand.
No, I don't know how much longer I'm going to have this hairline if we keep getting lower lows, especially this week, because of the positions that I have on.
Yeah.
But I will say, man, I know this isn't a session to get into the NASDAQ and ES as well, but one thing I do want to say is if we do get above, because for example, I like to watch NASDAQ and the S&P 500 in tandem. So hindsight is 2020. And, you know, you can always go back and be like, yeah, but there's this and I missed that. That's why I took the loss here as well. But also, you know, the S&P 500, when we talk about those levels where there was the most trading activity from the previous week, it's like I took that long understanding this time was a little bit more of a gamble because I was waiting on ES to catch up and getting into that trade prematurely. I could have experienced that premature loss. So I was kind of okay taking that premature loss too, but we'll kind of get into ES and NASDAQ and tandem because they're both necessary, in my opinion, with trading directionally because they're both two highly correlated assets. And I think if you're trading directionally, you know, paying attention to both of those assets can really help. But I will say, on NASDAQ, before we get into the rest of the positions, if we start trading above here on NASDAQ, above here, like in this region, what price is that? 20,767. I would be pretty surprised if we come right back within the next 24 hours to come back and take out these lows that we put in today, if we get high enough. But I'll be
that would be crazy.
Right.
That would be quite a reversal.
Well, another thing,
it might take a couple days. If it did it in like a day, that'd be crazy.
Right.
It might take a couple days.
Right.
Yeah.
And one more thing, Dr. Jim, when the trade, it's almost like, because we use a lot of these same thought processes with different types of positions that we put on. Like I know there's some options positions that we adjust to where it then becomes a risk-free trade. So because the trade has moved significantly in my direction now, I have my stop loss at break even. So it's one of those trades as well too. I can kind of sit in very comfortably. So if something crazy happens over the next hour, at worst, I'm going to break even on this because I'm going to set the stop right at the entry price. But anyways, that's what we got so far in the micros, Dr. Jim. And let's transition on to some of these other positions. They still reflect the same opinion in the market. Again, when you open up this platform, this looked completely different this morning. I'll tell you that. Things are looking good now, but this looked completely different this morning, especially with the gap down. But we've been rallying. So last night, right before the bell, I think maybe 2 minutes, I sold an out of the money put spread on Meta. Really like the IV rank. Earnings aren't the way. There's no dividends. And I was able to collect more than a third of the width of the strikes with not being too close to the strike price. So I wanted to take advantage of that vol expansion. So that's what I ended up doing with Meta, selling an out of the money put spread. And then QQQ, we got quite a few things going on here, Dr. Jim. Stay with me now. But we have a few positions expiring at the end of this week. We have some out of the money put spreads that we sold on QQQ throughout the duration of, I think, last Friday and then also a couple this week. So we have a few of those positions on. I sold the 495s on QQQ, and then I also sold the 505 puts. So just to get a quick visual, the 505 and the 495s, hopefully QQQ can sustain this move here, Dr. Jim. But we have a couple of those on right now. I just want to give us a quick visual on exactly.
And those guys expire on Friday?
Yeah, they do expire on Friday. And the 505 that I sold is still underwater, which we are coming up to where I'm maybe break even if today was expiration on it. But that's only if we can hold this leg up that we're seeing right now, Dr. Jim. But these are the two positions. These two dashed lines represent the short positions. If I can move this, that I have on QQQ right now at the moment. Oops, I don't know why that's. Anyways, that'll give us a little bit more of a visual. And then on top of that, we have a longer dated out of the money put spread that we sold on QQQ, selling the 490s and then buying the 485s. So we have 3 different positions on. 2 of those expire at the end of the week. They're both long positions. And then we have another further dated out long position on QQQ as well. So that's what we've been getting going on in this portfolio. As you can see, all of it pertains to the aggressive sell-off we've seen over the last 9 or 10 days. So we're sitting pretty heavy long delta right now, at least.
No, I mean it all looks pretty good. I mean, especially with QQQ. I mean, you've got a 505 500 spread and you've got a 495 485 spread. It looks like. I do. And that's all set to expire in a couple of days. So okay, and then the longer dated trade is a 490 485.
Yeah, 490 495.
I mean,
Or
you've got
45.
you've got lots of room on that guy. You would think at least, right? I mean,
Yeah, you would think.
11, 12 points in QQQ apparently is just not that much to burn through in a day or two. But and then Meta, the nice thing about Meta, man, Meta is such a high price stock. You get in there with some nice volatility, like you got really far away from the stock price, even on a put spread, which normally put spreads, it's hard to get a good price on a put spread just because of the way the volatility skew sets up in the marketplace. So the fact that you were able to, I mean, do you remember what Meta was when you put the trade on? Like, what was the stock? Was it more it's up 18 today, so was it 630, 640?
I put this on yesterday I put this on yesterday at 3:59, Dr. Jim. I'm less than a minute before the bell closed.
Well, hey, wait. Have you ever used the market stay snapshots? Right click on that. So right click on that.
Right here?
Yep. Go to view market stay. There you go.
Okay.
So right there, it's telling you what the underlying price was when you put it on. So hover over the yellow diamond.
Okay.
That's in the middle.
So that's
Where
sitting at
does it
about
say?
640.
Yeah. So yeah.
Oh,
or you
hover
can
over
just,
the diamond. Okay.
Well, it'll give you the exact price if you do that.
Okay. So
But,
we got
so just over 640.
Right. 640.
Yeah. So there you go. Okay.
That's
so
pretty cool.
I mean, yeah. I mean, still, I mean, you got a 620, 615, right? That's a nice spread with a good amount of room. That's nice.
Yeah, 620, 615. Fortunate on this one. Again, with the market selling off lower in the beginning of this week, which surprised me already from the week that we had. I was like, oh man, hopefully I can get into something like Meta with that ongoing sell-off. But hopefully that works out. Again, things are either going to work out really well or I'm going to have to do some managing because, again, all of these positions are sitting on the same side of the road. So that's where we're at right now, Dr. Jim. Again, something that's top of mind is just financing those couple losses that I took this morning on NASDAQ. Waking up down 400 was not nice off of one contract, especially with the continued sell-offs we've been seeing. So again, that was just one of those reasons why I didn't want to risk it and then end up taking, or even getting to the point, Dr. Jim, I don't know what your thoughts are on it here, either getting to the points where it's like, okay, I want to cut now at 1,000. And it's like, now this is now one of the worst times to cut. Now you want to get out here at the quote unquote bottom or the quote unquote top. So it is one of those things that just gotta have that defined risk. Just know what you want to risk so that you don't have to make those emotional decisions in the moment. You know what I mean? But yeah, if you technically would have held from last night, you'd be sitting in the profit and you wouldn't have been worrying about that in the first place. So.
Well, I kind of think that, just listening to you kind of talk through that as far as like, you get to like down 1,000, like that's the worst possible spot to be in terms of, do I want to cut it here? I sort of feel like, and again, I'm just kind of stream of consciousness right now, but I sort of feel like you have to do it one of two ways. You either need to cut your losses pretty quickly, which it sounds like that's kind of the approach that you take, or you've got to be willing to let that rubber band stretch for a while. I think you get in trouble when you land somewhere in the middle. Like if you land somewhere in the middle, then I think that can be really, really tricky and it can be difficult to manage.
That's a really good point because now you have no sort of consistent process and you might be biting both ends of the bullet.
That's right. That's exactly right.
Yeah. No, absolutely. Going to be keeping an eye on.
So what do you think about NFP on Friday, my man? We got NFP on Friday.
I mean, I don't know what I think of it. I think I hope the market digests it in a positive manner, at least for the short term. I'm kind of in the spot as well where I know anything can affect the market directionally, but without any type of relief pop, any type of significant relief pop, it would just surprise me to see any outcome not be to the upside as of now for myself. So that would shock me. What are your thoughts on it?
I'm sort of in the same camp, I guess. But man, I'll tell you, I've really been surprised the last couple of days by the quickness and the swiftness with which these rallies have just been erased. They've just been erased. And so I'm very curious to see what the next hour brings on the close here. Like, can they hold this? Can they push it higher? Or are the bears going to come in and take half of this away or the whole thing away? Like, that's going to be pretty wild. And then, of course, on Friday, Powell speaks, I think, at like 12 or 12:30. And so that is potentially going to be even more market moving than the actual NFP print itself.
Yeah, and who knows? We might get, I don't know. I was just sometimes I'll have the news on a little bit more often now, Dr. Jim. I'm getting older. I got the news just playing in the background. I feel like there's definitely a lot to look out for. Like you just get random spikes of volatility, and I see, the president is speaking on the TV, and I'm like, wow, I didn't recognize I got to start managing my positions right now. So it's just been a lot of uncertainty. And again, I think that with this administration, I think that is just a lot of uncertainty that comes along with that. And then again, the markets always react in some fashion with the level of uncertainty. So it's just a new market environment that I'm really looking to be careful with and just get my footing in before, making any critical decisions in the market, if that makes sense. So that's just,
yeah, definitely. And I'll tell you, I think one thing that has surprised a lot of people, myself included, is, if you look back at President Trump's first term, right? Like he was really, he says a lot of crazy stuff, obviously, right? So that's a given, right? But in his first term, he was really, really proud of and fixated on the stock market performance during his term. Right. And so I think a lot of people thought it would be the same. I certainly did. But now he's come out and he seems to be kind of not really that interested in it. He seems to be so focused on other things, whether it be tariffs, whether it be whatever else.
I feel like more the crypto market.
Whatever. But he's kind of like the market's down, 6-7% or whatever, giving up all the election, gains, and it's like, man, he doesn't seem to care. That's very surprising. I think a lot of people didn't see that coming.
No, I hear you completely. So we'll see what we get. We'll see how the market digests everything. But anything to add before we hop on out of here today, Dr.
No, this is it, man. If you're a trader, if you're a volatility seller, if you're a premium seller, this is what you train for, man. This is what you do all those extra sets of walking lunges for. It's for this.
Single leg squats, single leg walking lunges. None of us like doing those over here, Dr. Jim. We don't need we don't need Coach Jim right here.
They gotta be done. They gotta be done. I don't make the rules.
No. We'll see what we get here for the rest of the week. Again, we'll be managing this position. Going to be looking to take off this micro at around 20,760, maybe yesterday's high, maybe a little bit above that, but we'll see if we can manage that one. And then with some of these weekly contracts expiring this Friday. And then we got Meta. We'll let Meta cook for a little bit since that's a longer dated contract, unless we get another leg up tomorrow and then I can take that one off a little earlier. But other than that, thanks for taking the time to hang out with us today, Dr. Jim. We always appreciate you having you here, getting your feedback, advice, anything of the sort. Be sure to stay tuned for more segments coming up, and we'll see you guys next time. Peace.
Peace.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Everybody, happy Wednesday to you. M. Knight here, and we're going to catch up on the wonderful world of charting and this very cool market. We've got a very green screen, which until recently I would have found really a bummer, but no, not anymore. I think that's great. I've lightened way up to almost 50% cash between last night and this morning, and I'm waiting to get in full blown at the right time. Now, we're already beginning the bounce, and I don't know if the bounce will finish tomorrow. I don't know if Friday's jobs report will do the job. It's I don't know. None of us know. But I do have levels in mind I'm watching, and we're certainly not there yet. So it's interesting because in recent days, it's been frenetic. I feel like I can like barely keep up with everything going on. Don't want to miss opportunities and want to try to manage things well. Today's been weirdly calm, and that's good. The only difference is that it's been so frenetic for the 8 days prior that I've been sort of having to force myself to be like, don't do anything. Now's the time to relax. Now's the time just to step back, let things sort out, and better prices will come. So that's kind of the mode I'm in right now. Let's get into the charts and see what is going on out there on this lovely day. Here's the spider, which hit the lowest level since November 5th yesterday, and is bouncing mightily right now. As you can see, and let's change this to a candlestick to really bring it home. We have essentially undone all of yesterday's drop. We're right now near yesterday's high price. And I think we at least have about this much to go. I'd feel a little more comfortable at these levels before shorting anything else. But yeah, nice big bounce. And I think it'll bleed over until tomorrow. And I hope it's a strong one too, because what would be pitch perfect would be if we got nice and high Thursday, and then the jobs report came out Friday and things really got hit. So that smells about right to me. Another important reason for caution is the VIX. Yesterday, the VIX got up to 26.35. That tends to be as high as it gets. It has been a very long time, way back to like 2022, that the VIX would bother to dare go into like the 30s. Right? For a couple of years at least, the mid-20s is about all we get. And so we look here, this goes all the way back a good 2 years. And you can see what we've experienced has been one of the better ones. What we've just got out of is looks like to be, just eyeballing this, about the fourth best VIX pop we've had in 2 years. And it sure felt like it. It was a nice ride. But the concern is, well, are we going to once again spend weeks just grinding down to 14 on the VIX again? I hope not. This is too fun. But that's kind of where we've been at. I will say that the frequency of this dynamism has definitely increased, because you can just tell by eyeballing it. Before August 2024, it tended to be a very long time between these VIX pops. Recently, now it's like, every couple of months or so. Look at these zaps. EFA, lifetime high. Gotta say, I'm surprised with all the tariff wars going on and so forth. Not what I expected. I had a medium-sized short position on this going into the day. I got stopped out about a millisecond into the trading day, and I'm just standing way over there where it's safe. I'm not touching this thing. Yeah, but definitely a surprise. EFA blasting to lifetime highs. Crude oil has helped. Crude oil has been quite weak. If you saw the president's address last night, you'll remember that getting crude oil's price down was an important element of the fighting inflation plan. And if that's policy to beat crude down to $50 a barrel, then expect lower prices ahead, I guess. But from I'm an energy bear, and this has been beautifully expressed with XOP. I've been following this for weeks and weeks and weeks. It has finally finished the pattern. After all this waiting, back in the day, it looked like this. It was just sort of, maybe it'll finish the pattern one day. Well, that day is here. XOP has completed the failure of this pattern. So I think being an energy bear really makes more sense than ever at this point. The energy companies are in profound trouble in spite of the drill baby drill stuff going on. Paradoxically, I think it'll be horrible for them. I'm hanging on to my DBN puts. Those are doing quite nicely. I got out of and forgive me, I'll mention that in a second. Murphy oil, I'm not in because it's too thinly traded. But this is a nice example of just how deeply things have sold off. And if you sort of, in your mind's eye, kind of follow the trend line here, you can see connecting the dots down, which is why on COP, which I had a big long put position on, I got out with every intention of getting back in again, hopefully on a bounce. This had fallen tremendously over the past 3 days, especially this one. So we got this big plunge here, and then more, and then more. So I took profits earlier today and got out completely. Hey. Okay. XLU. This was a good winner over the past couple of days. Early yesterday, I entered a very large short position on this, and good timing, and it fell most of the day. And it opened up today falling even more, and I got out. We tagged and got below this channel midline. And just, this was a short-term trade. I will mention as an aside that I am sticking with NEE, which is a utility that puts on NEE. I do think it's a terrific looking long-term bearish pattern. So just to repeat, big XLU short yesterday, got in early, got out this morning for nice profits, but still committed to a specific utility, NEE, for a longer term trade. I think these are September puts I've got. And I'm looking for completion of this pattern by getting below this dashed green line that you see. And then, carrying on from there. So, looking real good on NEE. Another element of the new administration is to get the dollar down, get the U.S. dollar down, and it is working. Here's UUP down today alone 1.2%. We peaked on this one about Jan 13, and as you can see, have a series of lower lows and lower highs. And in turn, naturally, with the dollar getting weaker, precious metals are getting stronger. The front month on gold is up about $10 right now, getting close to $3,000 an ounce. GLD itself has zipped higher, not quite at lifetime highs. I still think it's looking pretty long in the tooth myself. Silver having a very good day, up over 2.5%. And like so, and this is a tough read too, because this chart, on the one hand, this chart has every marking of something that's going to head a lot higher. And the ratio charts that I've shown over and over again all speak to much higher silver prices. So I just want to be emphatic about that. Long term, I think silver is going to do great. Short term, I don't know, because gold especially has gone up so much. I will tell you that hesitation that I just expressed has cost me a lot of silver dollars, because on the whole it has been going up. It's wiggly, and it's got plenty of gyrations, but on the whole it's been a good general movement higher. Some real high flyers aren't flying so high anymore. This one, until recently, had been crazy. This is Sam Altman's nuclear power for AI company, Oklo, OKLO. And I got thrown because I was looking at OKTA today, which is doing pretty well. It's a very different thing, but Oklo, OKLO. And if we zoom in here, this peaked almost at 60 just a month ago. February 7th, peaked around 60. It's at half that now, 50% drop in a month. Of course, it had been doing sensationally well, so it's only undone the craziness recently, but still 50% is 50%. The whole quantum computing space, of course, has been weakening. But in the midst of what has been a lot of selling off, I do expect just about everything to have some kind of bounce. And as I said yesterday, particularly with semiconductors, as I looked at NVIDIA, ON, AMD, ARM, all of them looked, as of yesterday, to have really been bottomed out. And so SMH is up again. But the kinds of instruments I'm looking at in terms of the bounce is probably done, are principally the RTOI futures, IWM, kind of the same thing, SMH, and Bitcoin also. There's a lot of items that I think, if we get to certain levels, that's probably enough bounce. And as I say, honestly, it's not like how many months do we have to wait. To me, it's will it be 1 day or 2 days? This is the kind of decision that I'm struggling with, how quickly will it pass? Another item that I think would be helpful in terms of the bounce that's done is Tesla. Tesla's had a horrible time. It peaked back on December 18 at 488.54. It's down into the 200s now. It's approaching half, another 50% loss. But we're seeing a little bit of stability here. Getting back to around 300 would be a nice sign, I think, that the stocks are on sale bounce is just about done. Sorry. Chewing on electrical cables, really a good idea. And You want me to put you on display again? All right. Adjunct to Tesla, I just wanted to also mention that, as predicted, Rivian, it just sputtered. And, that happens every time. Base, don't go nowhere. And this was a particularly bad sputter. Didn't even bother getting out of its base formation here. Yes, I know we're almost done. Lucid also right near lifetime lows. So quite obviously, with the change in political environment, EV companies aren't exactly the cat's pajamas anymore. Tesla's the king of kings, and even that was down almost 50%. So the also rans like Lucid and Rivian just mush at this point. Since I mentioned semiconductors, just real quick about it, here's NVIDIA. Just beautiful. This trend line is just dynamite. Look at this. So there was the tag here, and then there was a tag yesterday. And in this instance, it actually did go up for, 2 weeks, over 2 weeks. So maybe I'm being impatient. Maybe 2 days ridiculous. Maybe we've got a long rise ahead of us. I don't know. But the first prospect of a reversal, I think, would be the aforementioned levels. Like RTY, so this is looking for somewhere close to that pink pattern, or at a minimum getting back to this Fibonacci level right here. And as I said, Bitcoin, something 90,000-ish, which we're kind of close to right now as it is. So we had blasted higher here based on the strategic reserve news, and gave that all away. At the moment, I think a line around 90,000 makes a certain amount of sense in terms of dividing overhead supply versus the drop zone. A couple other weird charts to look at. This one, it's a surprise. And listen, hats off to Janet Yellen. She pulled it off. This was the big bank bailout from March 13, 2023. And they borrowed a whole bunch of money, and they paid it all back. So that chart's dead now because it's all been zeroed out. But yeah, quite a shock. I was skeptical about that, but I guess the old gal pulled it off. Here's mortgage rates. My impression from this is mortgage rates are going to head a lot lower, which would be nice. We'll see. Just as with a stock, this pattern has to complete first, but it's hammering out what might be a really major reversal lower in interest rates. So just to wrap things up, and just to kind of drive home why it's dangerous to scurry around buying stocks because they're cheaper than they used to be, the channels have broken. Here's the ES. Here's the channel. This is not conjecture on my part. These are parallel lines. This is just geometry for you. The ES has broken. And the question is, how high will it go? Maybe it'll get up to yesterday's high. Maybe it's got farther to go, more along the lines of like back up to the trend line. Let's do that. Let's be conservative. We'll just put that there for now as a good target. That makes more sense, I think. So there's ES, and then here's InQ. Same idea. There's the channel. We do have a failure, and frankly, at the moment, we're already back at the trend line. So it'll be interesting to see if it actually gets past that or not. Well, bottom of the hour, and I will get out of here. But thanks for your time and attention. Hope you're doing all right. And the next couple of days are going to be a lot of fun, I think. I'll see you tomorrow. Bye-bye.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a tastytrade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live at the last call. And as foretold, Sadnov, can I do that today? Even the S&P's up 63, NASDAQ up 260, Russell up almost 20, and the Dow up 480. But I must admit, it was the hardest hold. I mean, it was actually harder than yesterday. Because yesterday...
I'm going to disagree with you.
You thought it was an easier hold today?
Oh, my God, 100 times easier.
Wow, I don't think so. Volatility never really collapsed today. It's only down 33 cents. Maybe it was a little bit lower than this a moment ago by 20 cents or so, but not by much. We didn't have as many stops and stalls like we had yesterday, and the swings were nowhere near as great. But you felt like you were at least I felt yesterday, you were buying them cheap when they were down 50, 60, 70 handles. Like it felt like it was cheap, and you can scalp them in, you can scalp them out. Today, they go up 10, 15, 20. They go down 10, 15, 20. They go up 5. They go down 20. You know, like it was a lot more chop and churn, at least for me, and without volatility. That was my thinking.
Yeah, I get all that. I thought it was like multiples easier than yesterday. I thought yesterday with the 300-point moves during the day, 2 down, 1 up. I thought that was next to impossible. That was next level. Today, I don't know what it was today, but when they were down 30, 35, earlier, like around after the show this morning, I didn't even flinch. Like I
agree with you there. I didn't. You know why? Because you finally started listening to my son. He finally knocked a little sense into you yesterday when he was on the show. I mean,
no, what's funny is no, I didn't listen to him one bit, but I
think you did.
They were down 30, and I was like, you know what? In like 2 seconds, they're going to be up. Just because I didn't feel any urgency today to roll down calls. I didn't roll down a single call all day. And
I didn't either. Yep.
And it worked out. And premium came in a little bit.
Sometimes it's better to be lucky than good. And today you didn't even have Apple participating. I mean, the stock's unchanged, I think, isn't it? Yeah, down 20 cents, 30 cents.
Yeah. Today kind of worked out. I didn't really take anything off. I didn't really take anything off. I mean, I covered some puts in Target, and I didn't even think I covered my puts in Apple. I didn't.
Yesterday, I was trying to get you to nibble on Microsoft. Big move today, 3%, $11.50. Big move in Microsoft. Big move across the board on a lot of stocks here, Sadnov. I mean, the upside certainly had its winners. You had Meta up 16. You had Netflix up 18. MSTR, I don't even count it that much, but it's up almost 30, 29. Your beloved BABA up $11. That's a big percentage move in there. Volatility still good at 69%. I'm talking about the IB rank. Costco and Coin were up good. The downside was small, Sadnov. I mean, I think the biggest leader name is Apple, and it's basically unchanged. But a lot of oil-related stocks, XOP, and volatility obviously lower today.
You know, what has earnings tonight?
I can give that to you right now, my friend. This comes from my friend Peter, by the way. Marvell, ZS, NDB, your beloved JD, Dr. Jim Schultz's Kroger, and M. So, what's that game? Wait a minute. What's that game you play? Dr. Jim tweeted something out. You know that game you play as a child where you got to get like 4 of a kind, and then you would say to somebody, they got to grab a card. You would say,
what game?
Yeah, you got to get 4 of a kind.
Euchre?
No, we don't play euchre with 5 and 6-year-old kids. You
Go Fish?
You play a game. What's it? Yes. What's it called?
Go Fish?
Go Fish, right? Go Fish.
Yeah.
Dr. Jim thought it was called Goldfish, and he's homeschooling his children.
No, it's called Go Fish. Go Fish.
Yes, I understand. I know that. I corrected him, but he thought it was Goldfish, and he's homeschooling his children, Sadnov. We have to take his pen and pencil away.
No, his wife is, so your kids are safe.
Okay, good. Thank God.
Yeah,
I had no idea.
No, thank God. Anyway, Marvell.
Yeah.
Never an easy one, just for the record.
Never an easy one. Really got me in a lot of trouble last year, the beginning of this year.
Stock has been crushed.
Myrtleized, as Tom would say.
Stock's been myrtleized.
Expected move $10. Make you holla. Big expected move on a $90 stock, $10.
With 3 days to go?
2.
Oh, 2 days to go? I don't know. What are you doing? I got to turn my sound on.
If a guy like you would probably sell the 75 puts.
You know me too well.
Wait a minute. Was I right?
For sure.
Yeah, that double nickels right there. I mean, they're not gonna let those puts speed.
What calls do you sell though?
Oh, you don't sell calls, Sosnoff.
I mean,
are you crazy?
I think you sell 3 puts in one call.
3 puts in one call. A guy like you, what call would you sell?
There's a lot of call skew.
There's a lot of call skew. You probably want to sell the 110s, but you're going to go down to the 108s. Oh wow! Am I there? Am I there again?
Well, I want to be 2 times the expected move, so it's not easy. That takes you down to 109, 108, whatever. It's not that close. It's not that easy.
Oh my God! I'm morphing into Tom Sosnoff's alter ego.
I don't know what to sell.
I don't hear nothing from you.
No, I mean the 75 puts.
Oh, it was the 108 calls. Look at that.
75.
Darn, good.
75 108. 2 by 1 or 3 by 1.
What could happen?
Well, I mean, the stock's been killed. I don't know. SPOOs are up 70. I don't know if it's safe to get back in the water, but least volatility went down a little bit today. Bonds went down a little bit. They're back
still not as much as it's been, Sad. Now, if you look at where we are right now, I mean, we're at yesterday's lows in volatility. I mean, and yesterday was elevated.
Yeah. I mean, I think you can sell the 116 puts in the bonds.
Yeah, bonds back under 118, 117 and a half. We're a little bit lower.
I think they're getting
12.
I'm hoping they're going under 117. But ZB, where are we? April 25th. It's a long way away.
Mm-hmm.
It's a long way to the top if you want to rock and roll. All right. We're going to sell the
15 puts.
April 15 puts at 101. And Marvell.
You did the 75, 108. 75 put, 108 call. On a little bit of a ratio. More puts than calls.
Yeah, I'm selling 3-1. I don't know. I don't like the other earnings trades. Marvell's the only one with a lot of liquidity.
Okie dokie. Good job out of you. Gold continued its rally, although only up $10. Usually have $30 moves in gold. Bitcoin stayed bid all day, $90,000, 700 on Bitcoin. Volatility's back though across the board. South Nat Gas has been on a screaming tear to the upside. It's up another 2% today, or 9.5 cents. Corn, wheat, and soybeans, South they all caught a bid today. First bid in all of these in about 2 weeks or so. And significant, 1 to 2% across the board. And then you've got your beloved euro coming up here. There we go. Your euro still up almost 2%. Big move in the euro. Saznoff, what do you think?
The euro move is a true outlier. The last couple of days
Yes.
there, it's up huge. I mean, the British pound's up huge, but we're long that. The euro's up huge. We're flat it now. I was long, but I got short today, not intentionally, just short premium. And the yen, we're still long the yen and Canadian dollar. Yeah, that trade's been the trade of the year so far.
Mm-hmm. Been good. Yep.
Same with bonds, I guess. But we'll see. But we needed this rally in the S&Ps. It was finally, we got back the money from yesterday and most of the day before, so pretty good.
Beautiful.
I mean, we got a few new trades on today. We sold some premium. We definitely have some, definitely got some okay positions on, I guess. Would you buy in short?
You got an okay P&L. You got an okay P&L, so you must have an okay
Would you buy in
position.
short puts into? Oh no, I already sold calls against it. I take it back. Forget it. Nope.
Oh, buying back some Tesla puts, you were saying?
Those puts I wanted to sell yesterday morning, sold them at over $5 or $3 now. It's nice. The puts in there really move. Anyway. Yeah, I think everybody needed a little bit of a relief rally today. I don't know if it holds, but another day where the NASDAQ had about a 500-point range. And
definitely not an inside day today, right? I mean, we had some movement today.
Well, I put an iron condor on in the SPX this morning. We took like 50 cents out of it because I just had a resting bid.
I saw you closed it at like $2. I think you sold it at $2.45, just doing it from memory, and I think you bought it back.
Where do you think it is right now?
Oh, with the way we moved, $10.
It was a 15-point wide. I'm not looking, but I'll say it's less than $3.
Oh, I don't remember your strikes you had, so I was just trying to look. But let me see. You paid $2 for it. No, it's $1.95 right there. Yeah, $1.85. Yep.
It's the same price.
Right.
Same price I've covered it for all day. Didn't even move against you. That's pretty good.
Yeah, that's pretty good, especially in the 0 day. You must have been far out. I didn't realize where you were.
I was 50 points away from at the money.
Yep.
So
because we had a $60 move today in SPX, so
I know it didn't get hurt.
Just thought
it didn't get hurt.
Yeah.
So that's pretty cool. Yeah.
And you did that pretty early in the day too.
8:55.
Mm-hmm.
Yeah. Well, it's 246 right now. So, pretty wild day. How's the S&P volume today? Is it
huge S&P volume? First of all, /ES is over 2 million cars today. And then let me give you some more. Are you ready for this?
Ready. I'm sitting down.
Millions of millions of over 2 million SPUs trading again, and then you got a big SPX 3 million and SPY 10 million. The bond volume was real big today too. 9 times the norm in bond volume.
9 times the norm in bond volume? Why?
Yes, sir.
That doesn't make any sense.
I don't know.
That doesn't make one iota of sense.
I don't know. The Jajun trade paid off.
What's the bond volume today?
Bond option volume big too. It's over almost 26,000.
Bond options.
Yes, sir.
How many bonds traded though?
625,000.
Yeah, that's about 2 times normal. I mean, 1.5 times normal volume.
I'm just saying option volume was like 9 times the norm.
Option volume. Yeah.
Yes, sir.
Okay. I'll give you that.
This is according to my Taiwanese sources who are spot on, Sosnoff.
Well, usually late in the day, your Taiwanese sources are kind of drunk. Early in the day, they're probably very aware, keen. Late in the day, your Taiwanese sources are probably halfway to, they're getting ready for bed. 3
sheets to the wind.
Yeah.
Wow.
Well,
must be nice to be king.
Taking a look at my screen yesterday, everything was down. Today, exact opposite. Up, up, up. Up, 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 up.
Any moves to the downside surprise you at all in anything? I mean, I guess besides Apple down 40 cents.
I mean, you're going to hate the ones that surprised me today. The crappy moves to the downside that surprised me today were only Intel is the only stock that it's only down 45.
Well, it was somebody on this show said yesterday, I'd rather be buying anything in the entire world than buying Intel right now. You've got a fire sale going on across the nation, and you want to go into Intel. Talk about kissing
that's
your
not fair.
sister.
That's not fair. I bought Tesla, Target, Microsoft, Microsoft, Coinbase. I bought a lot of stuff yesterday.
I know. But you also bought Intel.
I also bought Intel.
And you know what? You build 1,000 bridges, Sosnoff. You know what I mean?
It's the only loser I had of all those trades.
Build 1,000 bridges. You do one bad thing, and that's what you're remembered for.
And that's what they remember you for.
That's what they remember you for, Sosnoff.
Tomorrow is.
They don't remember all the kind acts that you've done. They just remember you sitting in first class, passing your warm nuts back to us.
And I hope that continues into perpetuity.
Yes, me lord.
I got to tell you, it's the weirdest thing. I haven't been on an airplane. I feel like I've been on an airplane at least once every 2 weeks for the last 25 years. I have not been on an airplane for like 3 or 4 weeks now. And I'm a little bit going through withdrawals.
You get withdrawals? You really want to be treated poorly in an airport or something like that? You want me to frisk you?
I'm just telling you, it's the craziest thing. Like, I have not been on an airplane, and it's wild to me because I've been on a plane at least twice a month for the last 25 years.
My Taiwanese sources just said they are drunk. They're drunk with money.
Tell your Taiwanese sources that monopoly money does not count. All right. Let's see what else we got here. What else do we got here? Scrambling. Oh, wow. They just sold them off. I closed my screen down.
I just said that to you. I just said they just sold them off by 15 handles. I got nothing from you. And you go, oh, let me see what's going on here. You go, oh, they just sold them off by 15 handles.
If they close them down on the day today, I'm going to be pissed.
If they close them down on the day, sounds enough, I quit. I'm not going to come in tomorrow. Okay, that's it. If they close them 15, that's it. That's it. I'm not going to do it.
I thought.
Unbelievable.
And I did not buy them. But I turned to someone here and said, wherever they are, 10 minutes before the close, you got to buy them today. Because 10 minutes before the close yesterday, they just crushed them.
Well, you got your opportunity. You just had your opportunity. You're right there at 10 minutes. You're at 8 minutes right now.
I know. I didn't do it.
They were just down 10 handles lower.
I know. I didn't do it. I missed it. I was too busy listening to your psychobabble.
Again, it's my fault. Of course. How silly of me.
Cost me a trade.
Now I owe you money.
Now you owe me money. Exactly.
Uh-huh.
All right, let's see what else do we got going on here, going into the close, to see if there's anything that I need to do. No, I mean, we played Marvell. It's the only stock. Marvell's after the close today, right?
MRVL is up $1.48, and its earnings are after the close today. You are correct, sir.
That is the only stock we played, MRVL.
And it's gotten cream these days.
It has, and the puts I just sold are a bit higher, so you can. Oh yeah, you can sell this stuff, Tony. It's right in your wheelhouse.
Marvell has my number. You know what? I'm man enough to admit when. I try to be a man enough to admit when I'm wrong, and I'm certainly man enough to know that Marvell's got my number. You care about MDB or ZS?
I do NBV. No. Why would I care about that?
Okay, just want to make sure. My Taiwanese sources want you to know. They don't want to hear any bull crap after the close.
Man, the calls are a bit higher. The puts are a bit higher. You could do this better.
I'd be ranking 97, not going down, not at all.
Yeah, they just bid up the puts and the calls.
Ooh, I wouldn't want to be you right now. Hey, let me see who we got in here from overtime. We got any of these jamokes. Who we got? Bring them in. Bring it. There they go. Oh, we got all three of you amigos. How's everybody doing today?
It's a great day.
It's a
terrible
day.
Terrible
Mr.
day.
Vecchio, you want to bow to my greatness?
It's 52 with light rain. How's my day? It's cloudy.
52 and light rain. You could be in New York, London, San Francisco,
Chicago,
Yeah, San Francisco's pretty
Chicago,
close. It's
Italy,
like, 60 in light rain.
Berlin.
I'm actually sitting right behind you, Tom. Don't turn around.
Dylan.
No,
be in Oslo.
Dylan, I strongly recommend in Berlin the Soho House.
Oh, really? That was a subject of great debate at breakfast this morning, was whether the Berlin Soho House was a thumbs up or a thumbs down. It's a pity you were not there to cast your vote.
It's a thumbs up.
When I die, I want to come back as Dylan Radigan, man. I surely do. I really do.
It's your time to shine in the in the Berlin Soho House.
I was singing the praises of the Chicago version as one of the greatest of all time.
Oh yeah, the Berlin one's not nearly as pretty as Chicago, but it's a cool place.
All right, I should not have
in the right place at the right time, Dylan. Unfortunately, though, the exchange rate's moving a little bit against you.
No, it's an abomination. I'm gonna have to move back.
Yeah,
that 3% 2-day rally in the euro is the biggest 2-day move in it since 2022.
You don't have to bring it up.
I mean, I'm long, so I'm kind of happy about it.
Yeah, so is Tom. I'm
all I can say is
plays.
I've been on this train for day one and haven't stopped, but it's taken 2 years to be right.
I have not been on this train for 2 years. I've been long dollars until late last year, which was working, but I have flipped completely. I have sold the dollar against pretty much everything and anything. Pound, Aussie, Canadian dollar, euro, across the board. Yen, across the board.
It was hard to defend the last 2 days in the euro. I got to tell you the truth, though. It was really hard to defend it because they blew through every single strike. So it was a tough one. So
I bought more.
So what do you guys think
you
here?
Bought more what?
Euro.
What do you guys think here with this the S&P move? Have we is there a bottom in place, or is this just
no,
a little bit of a relief rally? Ilya says no bottom.
Looks like a relief rally.
This guy who hired this guy?
We're still trying to figure it out. It looks like it was a forged parade out here.
He's like Kramer.
He was a holdover in pickup
It looked like it was a forgery.
Showing up and working.
He just came with the lamps and
no one knew. He just started talking, killing my whole vibe.
What do you think, Dylan?
This permable parade, right?
I think Ilya's more right. I actually more inclined to agree with Ilya. Despite my emotional sentiments, it's hard. I mean, I just think that everybody that they want, higher bonds, lower rates, weaker dollar, lower energy prices.
He gets everything he wants.
Yeah.
Europe has had the biggest bond sell-off today since the 1990s.
Yeah. So
what's
there
it
you
mean?
go.
Defense spending.
It means you're going to borrow some money to do a war with Russia on the side.
Yeah.
Who wouldn't?
The European Commission wants to spend 800 billion euro on defense. They want to give the member states 150 billion euro up front in loans. Just give them money to spend on rearming. Suddenly in Germany, after the election, there's kumbaya between the two big parties. They want to scrap their debt break and spend a bunch of money. ECB rate cut expectations are falling apart. The ECB is probably not going to fight it today. There you go. Yield spreads on euros versus dollars.
How about a dollar reversal? You got any dollar reversal in your tarot cards there, my Russian friend?
Not in the near term.
Why is Vecchio not talking?
Listen, there's no reason to have a fifth voice jumping into the fray.
I mean, you're our resident permabull. You are the voice of all that is optimistic and prosperous, and you're
apparently not. You know, it takes one Tony Batista tweet to besmirch my good reputation that I've tried to brandish these last 2 years. Just one.
I mean, you spent years acquiring this status.
Can I tell you something, Chris? Just a word of advice. Just get off Twitter, because since Tony's on, it just ruins it for everybody else.
It ruins the whole thing. Is that why you're not there?
I'm not on there because I can't read what he tweets about me. I can't take it.
You refuse to blindly buy one time, and now you're a perma-bear, Chris.
My mistake. My bad.
It's all right. I accept your apology, Chris. You can go back to being whatever you think you are. All right?
Thank you.
There. I anointed you. You're all right.
Hear ye.
I'll even say it on Twitter for you so we can make it official.
Oh, you.
So that there's a documented record?
There's definitely a record of it. Yes, 100%.
What a guy.
Sadlov, we held a rally. What does that mean to you?
Not too much here. I mean, not really.
I kind of agree with you. Volatility really not coming in too much here. Actually rallying a little bit on the close. I don't think we're out of the water either. I think we're going to have some more chop. I agree with everybody on the panel. Except for Dylan, who just seems miserable with all of us.
Of course, now we're all wrong.
Listen, when you're in a euro, go ahead, Ilya, please. I shouldn't even be talking.
That's it. We're all in agreement, so we're all doomed. That's
you were going to say, Dylan?
No, I'm not going to say. I'm going to say I was enjoying your hockey coverage.
Thank you. It's over now. You'll have to.
I'm a little late. I have to catch up after the fact. How'd it go?
We lost in overtime. Thanks for bringing it up.
It's okay. Sorry about that.
It's all right. Second place is not the first loser. It's just a stepping stone to the next level.
Although they do say that the silver medalist is the most mentally troubled in the Olympics. You're better to not come close than to come close and lose. Actually, is what they say. Just so you know.
That's good. That's good encouragement for Tony's kid, Dylan.
you hit that many. You're 15 years old. 15 years old. You're washed up. All right, everybody. Enjoy your evening. Overtime is next with these three gentlemen. Peace. 15 years old. Kid's got to hang up the skates. He's done.
He'll be okay. He'll be all right. Better to get.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade. Named best online broker for options trading. Genius loves company.
All traders are free market freaks. It's the lifeblood of risk takers. Nowadays, though, I still wonder how a productive free market economy will evolve to face the challenges of a more complex and divided world. So sure, I'm a bit concerned. In fact, as I think about the growth of digitization and AI, I know things are about to change at a pace we probably can't fathom. Regardless, one area we can all agree on is the power of decentralization to bring free markets into the future. The bullish case is that free markets will thrive when more people are empowered to participate through technological advances. Most of us also recognize the importance of sensible regulation to make sure that markets are equitable for everyone and will provide consumer confidence necessary to attract new capital. It sounds so reasonable on paper, but now come some of the challenges. Can we have a true free market when some of the megatech monopolies have a larger market cap than the GDP of most democracies? Can a free market thrive under the weight of income inequality and billionaires dominating the political machines? Can AI and quantum computing disrupt the tech backbone in a positive way to support consumer empowerment? And lastly, will the confusion around regulatory integrity be a meaningful hurdle or a showstopper? If corporate or individual fraudsters are allowed to run wild, then the importance of boundaries is meaningless. The bottom line is that free markets do not have default risk. They'll likely be around forever. But let's be careful not to mess too much with Mother Nature's ecosystem. Everybody has some level of fragility.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Oh yeah. Tasty Nation, good morning.
Stocks close green. What does it mean? We're here on Wednesday, March 5th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan, to take you through the next hour, 55 minutes as we wrap up this trading day. Futures close at the top of the hour. If you're on the website, if you're on the platform, come over to YouTube. Tell us what you're trading, what you think of this rebound off the lows. I'll ask you the same question that Tony asked. Are the lows in? To that end, if you're already on YouTube asking and answering those questions, come over to the platform, see what we're all about, tastylive.com as well. Guys, it was a topsy-turvy morning. We didn't quite take out the lows. We rallied back. We don't quite take out yesterday's highs. It's an inside day for the S&P 500, which is up by 0.95% now. The NASDAQ up by about 1%, Dow Jones up 1.09%, and the Russell, the laggard, still up 0.87%. Bond yields are higher across the curve. Oil prices are breaking down. Metals are surging on the back of a Chinese announcement that they will continue central planning. And ultimately, we see the dollar falls apart. The euro is on a tear, as Ilya noted on last call. Some of the biggest moves that we've seen in the German Bund market in decades. And that is setting the stage for an ECB meeting tomorrow. But guys, we got to go right to stocks because this is the main market as we're paying attention to it. Volatility comes in a little bit, but not really a lot. It's still a 40.6 IVR. We are bouncing on that 200-day moving average, which I suppose is a good thing, but we have yet to scale the 1-week moving average. So Ilya, with the ECB tomorrow and non-farm payrolls on Friday, do we have lows here in place?
I think just looking at the price action, the natural answer is no, because or at least we don't know that they're in, and we can't make the call. Because if you look at what's been going on here, it's been a very clean stair step down. Just take a look at the last big green candle. We had the break of the most generous version of the up moves bounds from the August lows. That's that yellow line there. I say the most generous because it doesn't run the sort of internal lows. It runs a very wide reading of what the uptrend is. And back in sort of late February, we cracked that. Look at that green candle, the last green one before today. It's a very clean retest of the underside of the prior range before we get resumption. What do we see today? The same thing. We gap a little bit higher at the futures reopen. We don't ultimately end up going anywhere, and we just test the underside of that green candle of the prior stair step. So this looks like a retracement on the way down, not a confirmed reversal of anything. Now, could we get a reversal after this with one more candle or a little bit more of a further push higher? Sure. I'm certainly open-minded to the idea that this could be confirmed as some kind of an intermediate bottom over the course of the next day or two. But as it stands right here, if I was not if I didn't have any exposure, I would not be a buyer. And as a seller from the highs in early December and the top of this range, I am not shaken out of my exposure.
Dylan, are green shoots emerging in these markets after what's been a rough 2 weeks?
Well, no, I mean, I think this would be what I'd say. The question is this the ultimate buy the Trump tariff madness opportunity? Because basically the only thing that really lives in this all this madness is some version of a tariff reversal of consequence that we have seen in the past, especially on the Mexico and the Canada tip. They already did a carve out for the automakers, apparently. I mean, who knows, with the way the headlines fly around. So, I mean, I think that's this is one of those charts where, like, either, this is a great opportunity to buy them, but you're straight gambling. You're just gambling that Trump is not going to do what he says, because generally he doesn't do what he says.
So is this the ultimate?
There's not going to be war in the Middle East, and what's that?
So is this then the low to buy?
I know. I mean, that is the only question. I think, Tom really hit it on the head, which is, I think the rational thing here is to take advantage of is to try to not have to pick a direction, because nobody knows if this is the low to buy, and take advantage of expanded volatility, which exists, and try to stay neutral, because I don't think anybody can say with conviction which way this thing's going to go, if any which way. But you can say that volatility has expanded a touch over the past, this past week or whatever, and certainly over the past few days, and that this is a good time to be sort of an old school or a new school, I guess, but whatever, a tasty trader, stay directionally neutral and sell some premium. Seems to be the only logical new trade to originate right now. Everything else is a coin toss on a good day and a suicide mission on a bad day.
Dylan, I let's entertain that here, right? You may be onto something. You talk about being directionally neutral and looking to take advantage in the typical tasty methodology. We are currently sitting at the midpoint, effectively, between the lows that we have in early September to where we go to the highs in December in the NQH5 contract. If we were to go out 43 days, we were to look at a short iron condor trade. We short the strikes at 22K and 19K. We go 250 points wide for the wings to buy back. That gives you a 63% probability of profit, basically a 2-to-1, risking 2 to make 1 here. What's notable about those levels where the short strikes lie and where you buy back the wings, they are right on the opposite ends of the lows in September and then the highs that you have in December. So unless we immediately go back to the highs or we go down to the lows and we can grind this out for the next week or two trading within this range, there probably is a good directionally neutral opportunity here. So for the sake of having a few minutes left before and while we can get some things filled, let's get this off and potentially working. If not, I'll put it back on when the futures market reopens tonight and try to get it filled. But I think that this is actually, that's the first way to play this. And this can be structured in a number of ways.
It's the only thing that has some logic that's not just pure spec, just, straight up gambling.
Right. And on Futures Power Hour today, Thomas and I, Westwater and I, were looking at, the conditions for what we would do to size up and play a swing off the lows here. And specifically, I mentioned that I'd like to see a close back above the 1 week moving average, the 1 week EMA here in both ES or NQ. And both ES and NQ treated that as resistance today. We rallied up into the 1 week. We failed to close above it. We haven't closed above it since February 20th in NQ over in ES. It's a very similar story. We haven't closed above it since basically the 19th, 20th here. Likewise, what do we see? We can't get back above that 1 week moving average today on our chart despite our bounce. So it feels like it's a hold right now of the 200 that would draw some people in right at a pretty clear swing zone. This would be a great place for a low to be formed. But I like to be a little bit more confident that the near-term directional momentum's been broken before taking a stab. And that could simply be by time, right? We could trade sideways and then perk up, and that's that. Or we could make a V bottom. We don't seem to be doing it just yet, which is one of the reasons why I'm still sitting on my hands idly, at least in the stock market for now. But I do like the directionally neutral trade, Dylan. So I have that on the board here. If that gets triggered, it'll go to the Tasty Live follow page. If not, I'll make sure that it gets put back on after the market reopens tonight.
I don't know if I believe that vol contraction is what's next. I think if you're making the bet here that you don't know where this thing is going and all you're looking to do is for things to settle. Okay, yeah, maybe, but when things settle, given where vol is currently, I mean, just take a look at the VIX. If things settle here, I mean, that implies directionally that you get a relief because obviously we've had a strong sell-off, and that strong sell-off has come with vol expansion. So if you're betting on vol expansion, you're betting on a bounce. And if you're betting on a bounce directionally, I think you're a little bit early. So,
but couldn't you be betting on the end of sell on a reduced rate of decline as well?
Perhaps. So I think that becomes a very kind of narrow needle to thread. You're essentially saying, I want the decline to slow, but the decline hasn't been that fast. So doesn't seem like there's that much there. I mean, yes, for a day or two, I could see this thing idle. I could see vol come in as the S&P basically stalls right here and hangs out until we get Powell and NFP on Friday. And that could give you some IV to extract. But the trade might be no more than a 48-hour kind of adventure. Because after Powell and NFP, it seems like whatever the market would be waiting for, that signal would be there. And then maybe you get an explosive end.
But it also feels like the market is now driven entirely by the White House and not by AI or the jobs market or inflation. That it's driven by an executive policy that is different than anything that's been seen in some time.
And this is really the essence of what we were talking about yesterday, that if you're getting stuck on tariff headlines, you might be missing the point, because the issue isn't the tariffs. yesterday's seesaw in markets, first you get, oh, the tariffs are going. Markets sell off. Then they rapidly come back to scratch. Why? Mainly tech, mainly NASDAQ. Why? Well, because most of U.S. growth is the service sector. The service sector is mainly serviced domestically. It's U.S. firms in there. That's been the main kind of pocket of growth globally. It hasn't spilled over even to Canada because it's services and not goods. So, okay, you put a bunch of tariffs on Canadian and Mexican goods, but goods demand is weak anyway. Do you really hurt U.S. growth by doing that? Not really. But you also don't really save U.S. growth, because the problem with U.S. growth isn't in goods at all. It's in services. And so the reason the markets are afraid of recession isn't the tariffs. If you thought that relief on the tariffs was going to take away the market's concern about recession risk, it's not. That isn't where the recession risk is coming from. The tariffs aren't good for growth, but they're not the incrementally decisive factor.
Yeah, I mean, the question that the Fed has to address is whether or not the tariffs are going to lead to a one-off rise in prices or a continuous rise in inflation. And the tariffs initially are probably inflationary up front, but if the cost of goods goes up, people are going to ultimately scale back consumption. Consumption flatlines or falls, right? You know, if I have to buy widgets from Canada and they cost me $1, but now I can only buy them in the, in the U.S. because of the tariffs for $2, right? Or I can import them from Canada for $2, but I'm a patriot, so I buy them here in America for $2. That means I still have $1 less to spend elsewhere, right? So it could lead to a drop in overall output. It could lead to a drop in real incomes after an initial inflation spike. Commerce Secretary Howard Lutnick said as much today. People are going to have to deal with higher prices for a little while. That's what happens with tariffs, and it's nice to see people from the administration finally suggesting as such. But I think it's the tariff news today that sparks us all around, right? We hear that the USMCA pass-through for auto tariffs will be in place at least for the next month. The big three automakers, Stellantis, GM, Ford, seeking the administration's reprisal, and ultimately they get it. Dylan, I think you're speaking to a point that I certainly feel right now, which is to say that the market isn't being afforded the opportunity to pay attention to anything else, that it's tariff and I don't bust.
Yeah, I mean, I would say that's, and for me, I also just don't think that it's tariffs, although obviously it's tariffs. I think it's an attempt to recalibrate to an entirely different philosophy of economic policy making that ranges from the wars. We're not going to pay for a war with Russia. We're going to make the Europeans pay for it. So we'll bump all European rates higher. We're going to internalize all the tariff rhetoric, which we just went over, and then beyond that, this is surely rhetorical, but that we want to get rid of the income tax, that we want to, that the view of tax policy in general is not what it has been or was for the last, since 1913. To listen, if you were to take the president at his word, which is obviously, illogical, but that there's been a philosophy on taxation in America that's been the same, some version of the same, since 1913. So for 90 odd years, 92 years, and the new administration is going back to a tax policy from the late 1890s. And that nobody really knows what that means in terms of all of the financial metrics. Does that mean a stronger dollar? Does that mean a weaker dollar? What does that mean for equity? What does that mean for growth? I mean, it just layers in through all of it. I think that the tariffs on Canada are like the proof that they're serious in their minds, if that makes any sense.
I think it's really interesting that the tariffs on Canada are being talked about at the same time that we are Trump's discussing treating Canada like the 51st state, one of the main reasons why McKinley put the tariffs on in 1890 was a way to cripple Canadian industry so that taking over the country would be easier. So the tariff conversation with Canada, I mean, like you saw Trudeau yesterday, he was pretty adamant. Like we've stopped basically all the fentanyl flow across the border. We got it down from less than a few pounds to less than an ounce. We can't really stop anymore. By the way, most of the people bringing in the fentanyl are American citizens, Mr. Trump. You know, what more do you want from us? And if Trump keeps praising these McKinley tariffs while calling him Governor Trudeau, and he keeps saying it's going to be the 51st state, I mean, like, I think someone just showed him a book about what William McKinley did in 1890. And Trump's like, yeah, I'm going to do that again. Because it's the same exact playbook at this point in time, the more I think about it. And Ilya knows I've been on a tear reading American history. So, like, coming across that recently, that's fascinating. That we
and I agree with that, and I think that that's why the markets become more interesting, because it's not just a traditional tariff kind of discussion or tariff, thesis. It is an apparent attempt by the new American president to resurrect the economic ethos and philosophical thesis of the 1890s, which ironically was the era of the robber barons. I mean, that was Rockefeller and Carnegie and that was the anyway. If you read that was a moment of extreme concentrated power and wealth, sort of that preceded the trust busting or the antitrust movement of Teddy Roosevelt, which is probably 10 to 15 years in America's future if this keeps up.
Yeah, I mean, if you read the great biography of the House of Morgan, the House of J.P. Morgan from Ron Chernow, you really get a sense for just how much the entire thing was really in the hands of a very small group of bankers and industrialists, and the lay of the land, I mean, I think Dylan's absolutely right, is starting to look very much like that.
Well, concentrated market power, probably bad for people, probably good for corporations. Guys, the Mag 7 index ETF, MAGS, is bouncing at its 200-day moving average here, but not quite back above its 1 week just yet. Dylan, we talk about 5% pullbacks in this market being good opportunities. It's been way more than that here in the Mag 7. We peak in December. That's a high on the 18th, 58.69. So we're down to 50. So we're down, 16%? That's not nothing. Is a 16% discount the best it's going to get? Or don't bother yet? Bueller.
I think at this point, if you are going to have a bet on equities, it probably doesn't, to sort of the thrust of what we're talking about, it probably doesn't behoove you to try to get cute about sectors, because this seems like the kind of an environment where everything looks the same and the correlations are going toward one. I mean, I think last week was a great example of a sort of liquidation-like dynamic where even gold got sold just because everything was going to cash. We certainly see it across the breadth of U.S. equities. And if there's a generalized risk-off thing that's going on here, there's so much market cap that's in a skewed, lopsided way buried in the mags and buried in tech, that's the place for which liquidation comes first. So if you're going to be selling whatever is not nailed down, you're going to be obviously first not wanting to lose whatever incremental P&L you've secured on what has been the outperforming part of the market. So one would think, don't assume that there is anything separate occurring for the mags than there is for the overall landscape and thereby operate as you would in the S&P or in the NASDAQ. And from that perspective, what you've seen over the past 2 days has been corrective at best until further notice. Now, maybe tomorrow it'll stop looking corrective and start looking like a bottom, but I don't think we know that yet.
My thing, every time the market has gotten pounded, buying it has been the most winning strategy ever invented.
Just buying the 5 or 10% dip in this market. S&P was
the question is when.
Over and over and over again. COVID this, inflation that, war this. And every time it's like, this time is different.
Yeah, but the question is when, right? If you bought the COVID sell-off in February, you were too early by about a month, right? And you had to have tremendous intestinal fortitude to say, you know what, this is fine, and not be on a 45 DTE cycle, but to just outright own things, not be leveraged, or just own a ton of duration, and have the intestinal fortitude to be like, you know what, I bought too early, and the thing to do is to keep buying until eventually it bottoms. I don't disagree in the slightest that the trajectory for U.S. equities and equities in general, but U.S. equities in particular, is historically and even near term very biased to the upside. But that does not mean that this is a tradable bottom to buy necessarily. Again, maybe it is. I think we'll see. But there could be another 5-10% of losses behind this as easily as this could be the bottom at this point. So, yes, it has been the right thing to buy the dip. But if you bought the GFC dip in December, you regretted it. You should have bought the March one.
I think the difference this time, Dylan, is that the growth scare is happening. And, you know, we can quibble about growth scare and what does that really mean and all this. But the fact is that oil's down, yields are down, broadly speaking. The dollar's down, not benefiting from this because interest rate differentials are moving against it. Fed cut odds are up and stock markets, you know, going through a bit of a thing here the past 10 days. So I guess the question is oil. Guys, this has now shown some verticality a little bit more. We touched
word right there.
Yeah, bro. We're no longer sideways shuffling. We are clearly reaching some escape velocity to the downside, but we fell into an area where the market's bottomed out previously. Yeah. So, Dylan, I guess I want to ask you this. If you were willing to sell rallies in oil for various geopolitical reasons, do you find the same level of interest in looking to fade some weakness on purported growth concerns given everything that we know, what's going on in the world, and it's a 20.3 IVR? Do you try to catch the falling knife?
No way. I mean, if anything, why wouldn't you just? I mean, maybe you'd sell some put spreads. You know, I've been short oil, and it's the only thing that's worked for me in this whole mess, as I've said a billion times. But maybe some put spreads.
Do you catch the falling knife here, Ilya?
I don't think you try. I think the lay of the land, and as you know, I traded the move down in crude from about 77 to maybe like 72. And then when it stalled there above 71 or so, 70, like upper 70s, 71, that's where I got out and just moved to wait and see mode. So I missed this last leg, these last $2 or so, $4. So I'm inclined to be short, but I haven't reloaded yet. And I think it's the risk reward here. You're hitting, as you said, the bottom of that congestion that we can see on the chart. So you're right at support. I don't think anything tells you you're necessarily going to hold that support, and you may well push right through it with the right mix of NFP data and Powell commentary in a mere 48 hours less. So I'm a little bit circumspect. I'd rather sell the break. Of course, ideally, there is a bounce. It gets to something like a 69. It does a test of the underside that it just broke at that former swing low, right on that yellow upward sloping line that you have there, the last test before we cracked through it over the past 3 days. That low, that would be ideal. You get a bounce there, I want to be a seller right there. But I would take selling a break. I just don't see why buying crude oil lines up with anything that's happening on a macro level. There is a global growth scare that has motivated a lot of this recently. There is a situation where you probably have at least a bias, never mind capacity, but at least a bias from the current administration to output more. It's unclear how much more they can really output. We're already at record output, making the most petroleum products ever, in fact, more than Russia and Saudi combined. So I'm not sure where we get sort of incremental output. We could. If we really wanted to ramp things up, the number of oil rigs has been declining even as we've increased output. The number of fracking operations out there has been declining because we've gotten really, really efficient. So I suppose you could have some sort of federal mandate and incentive set to turn those things back on. But at some point, that does start to become counterproductive. Prices fall such that it's no longer economically viable without subsidies, and maybe you get enough subsidy, but it does look like, at least bias-wise, it's toward more output and less demand. That doesn't mean that we're going to fall off a cliff tomorrow, but it doesn't look like the kind of an environment where you should be expecting structurally higher oil.
Yeah, oil prices are in a throw right now. I mean, I guess what I find so interesting about the oil move today is that it doesn't respond positively whatsoever to the Chinese fiscal announcement last night in the same degree that we see with Chinese stocks or even copper prices, which are up 5.49% today. Chinese stocks up 5% themselves, now closing at a fresh yearly high. It's actually higher than we closed at any point in 2024.
Mind you, these are Hong Kong names. So all of that is listed in Hong Kong. If you look at ASHR, it's much more circumspect. You're still in the same range for mainland shares, which has been a story in recent weeks. Things listed in Hong Kong go higher. Things listed on mainland go nowhere. And that sort of comports with flows we've seen along the Stock Connect that bridges mainland and offshore Hong Kong markets, and it's been flowing one way. Money is not flowing onto the mainland, that is northbound. It's flowing out of the mainland to boost Hong Kong stocks, that is southbound. That does not look like optimism in China's ability to revive its economy. It looks like a way for people to get their money out of the mainland through Hong Kong because they don't have that confidence. So it's an interesting set of circumstances here. If we get a mainland stocks rally tonight, of course, that will be a different story. But so far, this doesn't look like optimism in China's ability to land this thing. It looks like the opposite. It looks like money's running away from it.
Dylan, what's the word on China now from Europe? It feels like the world is shifting beneath our feet. Relationships
No,
are
I mean, I think
apart.
that it's not even the word from Europe is the biggest move in the bond market since the Berlin Wall came down. How do you like that for anything? Okay. The hell with China. All right. It's the biggest move in the bond market in Germany, which is the biggest economy in Europe, since 1989. Okay? And so whatever is going on, there's been a massive policy, a cataclysmic multi-decade policy shift has been internalized in Europe. Going back, so let's say it started with the J.D. Vance speech, whatever it was at Munich a couple weeks ago, which was you're on your own. and then the consistency of the Trump White House and whatever has been coming out of Rubio, and then this Zelensky dispute, public dispute, and then the speech from Trump last night. And so if you keep going and going and going with it, obviously Germany has taken, and Europe is taking the American government seriously when the American government says to Europe, you are on your own. And so if you wanted to know what is the value of the American subsidy to the European, meaning specifically the American defense subsidy of Europe, it is whatever the move today was in the German bond and the French, I mean, it was across all the Euro bonds, Italian bonds, everybody got a bump. But it also makes you wonder, okay, there's going to be, I don't know what the number was, but it's hundreds of billions of euros are about to be spent on European infrastructure, and Germany is going to stand up a military, apparently.
Historically,
which has not happened since World War II.
Oh, well, I was going to say, historically, that's worked out well for the rest of us.
I mean, it rhymes, it doesn't, it's history rhymes, so who knows what it ultimately means. But
what does it mean?
It means a stronger euro. It means a stronger euro, and it means higher borrowing costs in Europe. I mean, that's what it means.
Yeah, what's really fascinating, Elia? Like, we talked about this in November, got a lot of it right. Geez, I got a big thing wrong. It was good looking for most of the end of last year. I think, to talk about this rally, Polish equities, best performing equity market in the world right now. Okay. Yeah. And it's all come in the past few weeks. Post-election, they were stumbling out of the gate. So what's changed? What changed the equation for EZU, for the German DAX, for European equities? I think the biggest story of perhaps the first part of my career in finance was how governments in the United States and Europe were handling the post-global financial crisis wounds. The United States and Europe both opt for austerity to varying degrees. Europe is a lot more strict about it. Germany's in control. The United States, we still run budget deficits. They're just smaller, but we still run budget deficits. So we've been spending a lot more money and continuing to add and add and add to debt in ways that Europe hasn't been. And the question that we've been asking for the past 15, 20 years almost has been, when is Europe going to finally do the spending to move closer towards federal union? Less Articles of Confederation, more constitutional America, right? When are they going to make that jump into the same sovereign risk pool and do what's needed to become a world superpower, as opposed to, they are basically the Confederation of European states right now. There's easiest way to think about it in terms of how our government has worked over here over the 249 years. And so to that end, right, the fact that they're actually doing something, they're removing the debt brake, they're putting together a 500 billion euro fund. These are the things that people have always talked about happening, hoping happening. Maybe they need to happen. Will they happen? Probably not. It's Europe. Forget about them. I mean, they're actually putting rubber to the road now. And so taking that a step further, right, if we are thinking about a Europe that is now seeing a huge surge in fiscal stimulus, and enormous, right? If the United States today were to unveil a $500 billion spending plan on military outside of the normal confines of its budget, people would say that's a lot more money, right? So yeah, if Europe is doing this right now, if we're seeing that America's standing in the world is seen as less reliable in terms of a partner, right? America's place in the world is basically, you make a deal with America, you're in our security umbrella, we honor those contracts, and we got your back. And now it doesn't feel like that so much anymore. So could this become a drag on U.S. equity markets for the foreseeable future, where incremental allocators are saying, forget the uncertainty of trade with Trump, Mexico, Canada, China, right? Like, Europe right now, they're spending a ton of money. We don't need to worry about spending cuts, austerity anymore. All these low PE ratio companies, like, there's a great deal of value there. And we don't need to worry about the 29 PE with, XYZ ticker that's in the Mag 7.
I mean, Dylan, makes a lot of sense. That makes a lot of sense. I mean, if you look at the fiscal impulse, Yeah, I mean, I think you're absolutely right. If you look at the fiscal impulse, what are you seeing in the U.S.? The biggest fiscal impulse in a positive direction is we are going to take the tax cuts we already passed in 2017 and we're going to extend them. That's okay, fine, growth supportive, but to pay for that, we're apparently taking an axe to all kinds of other government spending in a very rapid, wanton kind of way. Because obviously, if we were to extend these tax cuts, they would blow out deficit expectations. So we extend them. Okay, maybe we reshuffle them for a little bit more of a SALT deduction, which Republicans in high tax states like New York and California want to get done. That's probably the price of admission on extending the tax cuts. That's the positive side of it. The flip side of it is the Doge axe and how you pay for these things. And so the impulse in the U.S., at least fiscally, is, let's call it, not uniformly a tailwind, and maybe a headwind depending on which side of this balance wins out. In Europe, it's unmistakable. They would like to spend a bunch more money. And we see it in ECB policy expectations. I mean, we dramatically moved on what ECB policy is expected to be today, ahead of an ECB meeting, by the way, when the markets shouldn't want to have conviction. They should want to get to the other side of the event risk to make up their mind. Not today. Not today. The front run has been huge. We went from 80 basis points expected out of the ECB this year to now more like 60. A massive, massive rethink. So, and next year we're starting to flirt with the idea of hikes. There's a hike that's about a 50-50 chance next year for Europe now. And the ECB hasn't even met yet. So,
so you think the euro could take a run back into 110, 120? I mean, you think the euro could go really
Totally. I wouldn't really start to get worried about the euro getting top heavy until we're back to 113.
Back to 113's 6 cents, 5 cents, Mr. Spivak. That's not small peanuts in the currency world. I mean, we've also done. We're up 4 cents in the euro the last 2 days.
Yeah.
I think, I've been reviewing this. I bring up this whole European spending thing, not just because of the euro here, but like the prediction that I laid out was the European equities would be hurt because they're going to have to make a trade-off here. And I think what makes me wrong, they're not making a trade-off. They're removing the debt brake. That's such a important.
What do you mean they're removing the debt brake?
Ilya?
In Germany, in the wake of the historical scars of hyperinflation, there is a debt brake. Now,
meaning a leverage limit?
Meaning the government is not allowed to spend money past a very, very low ceiling on how much of a fiscal deficit you're allowed to run. That has been an appalling headwind for Germany over recent years. It's kept them from modernizing. It's kept them from really doing the things needed to get the economy to grow better, more, and most importantly, more efficiently. I mean, if we think our government in the U.S. is creaking along, the situation in Germany, sort of the bureaucratic state of affairs in Germany and how slow public services work and the government works, it is in a different decade, if not a different several decades, and needs massive revamp and hasn't been able to do that because they have this brake on spending. And so they've been arguing back and forth as to whether they should relax it. We just had an election in Germany. We have a new chancellor coming in. He's already struck a deal with the SPD, the Social Democrats. He's just defeated in the election. They're going to have a grand coalition. They're going to hold the AfD out of power. And they've already agreed that they're going to spend a bunch of money and they're going to let this debt break go. They're going to amend the Constitution to suspend it so that they can go and spend a bunch of dollars on all, or a bunch of euros, as it were, on all kinds of defense stuff. At the same time, obviously, there's the Stability and Growth Pact in the Eurozone, which tells them you have to keep deficits within, if memory serves, 3.5%. You've already seen the European Commission come out and say, yeah, not on this, though. Commission President Ursula von der Leyen out here saying we're going to spend 800 billion euro on defense, and for the governments that don't have it, we're going to give them the money as preferential loans, raising it by selling euro bonds in the open market. That's a very different fiscal perspective in Europe. They've basically said, forget debt breaks. We're going to borrow. And by the way, there is no trade-off, Chris, because if the U.S. is less reliable of a borrower because the markets are afraid it is being erratic, you know who isn't being erratic? Let's go buy some European assets on the cheap. They're going to be able to sell these bonds like hotcakes, I suspect.
So does that mean that you think the yield spike is too much? And that mean that would if we buy into the Europe is now the stable borrower or predictable policy world?
It's just a more attractive one incrementally, near term. I don't think the U.S. has lost its dominance by any stretch.
Doesn't that also cap the euro a little bit? And
not for a long time yet.
Mm-hmm.
Yeah, I mean, like it's so difficult to argue that the euro is where Europe's moving into safe haven territory. It looks relatively more appealing right now, and I think the performance of these various stock markets says all that you need to know. But in exploring why the thesis went off the rails, it's because there has been a new variable in play here, which is to say that the debt brake being removed shows there is a fundamental change in European thought, and they're no longer holding themselves to austerity because guess what? They don't need to worry about their defense. They can just hang on to the security umbrella provided and afforded by the United States. So doing so, I mean, I guess the next question is, can Europe become a safe haven of sorts and replace the United States in that role, the dollar as a safe haven or global reserve currency? Probably not, given the myriad problems that remain. We do see that outside of Germany, right, there are sovereign debt limits for the EU, broadly speaking, on an individual sovereign basis. And we talk about the German bund yield shooting up today and helping the euro. Yields across Europe went up today. And so it's becoming more costly for those governments to finance and service that debt. We have a stifling regulatory apparatus, high youth unemployment, energy dependency. Maybe they're trying to stop the industrialization. And it seems like they're going to try to keep fighting this war. It seems like they're getting ready to make sure that there's no more war, peace through strength, of course. But in the short term, if the U.S. pulls back, the U.S. has stopped today providing intelligence reports to Kyiv on incoming Russian missiles to civilian centers. Who's going to fill that gap? Europe seems like it's trying to step up to the plate in the short term. I don't know if there's a trade for the British pound in there, but the UK seems to be avoiding all of the noise and hatred throughout all this. The ire's directed at Canada, at Europe, broadly speaking. So the pound's doing quite well. Ilya,
and the UK is on board. I mean, it was Keir Starmer that was the place where Zelensky went after that blow up in the White House. He hosted the summit of all European leadership. He's been saying that he'd like to cultivate a closer relationship post-Brexit with the continent again. It seems like the UK and the European Union are very much on the same wavelength here. So the pound is rallying right alongside the euro because they're going to have to spend a bunch on defense too.
How's the vibe over in Europe, Dylan? I think that's actually a really important question because the business community here in the United States seems to be.
I think it's serious. I would say the vibe here is serious business, but I think it is what I mean when I say serious business. It is exactly what the German headlines: biggest move in the bond market since the Berlin Wall fell down. Europe is on its own. America is not an ally. And also Europe is basically not just going to lie down. They're not just going to lie down and be like, oh, well, we're so weak, we can't do anything. They may not succeed, but their attitude is, okay, we need to get our shit together, and we're $1 trillion up, and we're going to do it. And if it means that borrowing, if it means all these repricing of things, that's what it means. But we're not just going to roll over like a half dead frog just because Donald Trump or America is no longer our friend. I mean, my sense is that Europe is saying, and Germany for sure is saying, okay, let's figure it out.
Yeah.
But it doesn't seem angry. It doesn't seem sad. It just seems serious. Like if you're in a serious situation where you have serious risk and serious consequences, you have 500 million people, more people than America. You better get organized. If you don't get organized now, it's not going to be so much fun later.
The runway is running out to get your stuff together.
It's now or never. It's now or never. And I don't mean that like it's there's years to do this, but this is the generation that must transition. That there was 1945 to 1989, with obviously gradients within that domain, plenty of them. And then there was 1989 until 2025, chapter 2. And now chapter 3, 2025 until ...
So we talk about Trump perhaps trying to incentivize people here. I think this perhaps adds a little bit of color. Is he trying to incentivize Europe to get its act together, or does he really want to pull back from Europe? There was something of note. The $53 billion reconstruction plan proposed by Egypt for Gaza was rejected by the U.S. and Israel today. So Donald Trump still wants to go ahead and transform Gaza into the Riviera of the Middle East. He doesn't want other people's money. He's not saying this just to get other people to come to the table. They really want to do it his way. So this could be a sincere pullback from Europe. I suppose we need to wait to see if we close down like Ramstein Air Base or anything in Germany to really see where the ball's going. But it's a new opportunity then, right? We're in a different world. And we're in a different world where the U.S. markets right now, after outperforming for so long, I myself as the resident perma bear, right, Ilya, have been saying for so long that, the U.S., where else are you going to put your money? Europe's in deindustrializing, Brexit in the UK, Japan is Japan, South Korea is South Korea. But now all these countries are not acting that way anymore. They're acting like countries that can use their balance sheets, that can make government investment into critical industries. And that means a lot of these companies with valuations and stock prices that have been depressed because of a lack of curation by public resources to help seed the ground, a fertile environment for private business to flourish. That's turned the corner in a dramatic way. Whether or not you like it, that's just where the world is right now. So I look at what's happening in the United States, and I can't help but see these are two sides of the same puzzle right now. European stocks are soaring. U.S. stocks are struggling. It feels like allocation is moving to, again, where's there a bottleneck? Well, we're loosening government spending here, right? We're being told we're going to pull it back. Republican budget considering resolution aside, we keep hearing about balanced budgets, all right? And in Europe, they're opening the spigot for the first time. Rates have come down in Europe, as you know, Ilya. And so if lower rates coupled with now a lot of fiscal spending, that is something that typically helps asset prices. If this was happening in the U.S. and the U.S. was seeing new spending plans coupled with a central bank tomorrow that's going to cut rates again, perhaps, and yeah, it could be the end of the road, but they're going to cut. That's going to be asset inflationary in the short term when these things materialize out of thin air. So this is one of the reasons why I have some hesitation here in our lovely S&P 500. I'd like to see them move back above the 1 week in both ES and NQ before I engage and take a swing off these lows. We're not there quite yet.
That's right. I mean, if ever there was a motivating reason to say things outside of the US, and in particular in liquid Europe, have been underperforming, and now you have a catalyst for them to catch up, here we are.
It's a new world. It's a new world. Same world for gold, though. Back into the midpoint of its recent trading range, not quite scaling 29.30, Ilya. Yesterday, you were talking about on that 4-hour chart when Westwater was here, how we can't quite just punch through the underside of the previous trading range yet. But no such problem for silver today, up 2.64%. No such problem for copper today, up a surging 5.43%. Square the circle for me. Copper's up, oil's down. Which one is correct? Ilya, you're first.
I think if you look at what copper's doing here, you're just really oscillating to the top of the range. And given the sort of story you're hearing from China and the impetus that you pointed out earlier that you see in, let's say, something like an FXI, maybe that's helpful here. I don't think that it's actionable in terms of a buying opportunity because you're right near the high, and so, or at least the closing high, and so the risk reward is off. It's a similar story in oil, only on the flip side. So neither of these things look like a tradable opportunity to me, but my skepticism of China's ability to get this right is greater than my confidence in a weaker demand, greater supply story for oil. I'm inclined to think oil is the correct one.
Which one's correct, Mr. Radigan, oil or copper?
Oil. Oil for sure.
You guys want
to not just because of the economic variable, because I think oil is additionally benefits from the sort of the peace movement, if you want to call it that.
So you guys want a bit of conspiracy, some tomorrow's news today. I was looking through the Doge tracker earlier, as one typically does. There are different websites out there that are doing this. Polymarket's doing it. There is dogetracker.com. Apparently, the U.S. government has found $105 billion of fraud, waste, and abuse in the system, which I think everyone's happy about, right? We don't want our taxpayer dollars going to waste. I'm going to tell you why we care about this. The GOP's House Appropriations bill that's going through is going to add $350 billion to the deficit in the forthcoming year. I will place a bet with someone if someone wants to create a market for me. When this number crosses the threshold for what the GOP House deficit will be, Elon Musk will come out and say that they've made a balanced budget because they've saved taxpayers enough money through Doge to offset the increase in deficit spending that we have. And we're going to have a whole market reaction to whether or not this new math and accounting is actually the way that we should be conducting business here, because apparently GDP's a Keynesian devil hidden in plain sight, Mr. Spivak. But we have to get to that tomorrow because overtime is out of time for this Wednesday, March 5th, 2025. We'll be back same time, same place, right after last call, 4 p.m. Eastern, 3 Central. So for Ilya Spivak in San Francisco, Dylan Radigan in Milan, I've been Chris Vecchio in New York. Good luck trading. Come back, though. Tasty Live continues after a brief break. It's Ilya Spivak with Macro Money up next.
See you there, everybody.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Dear Karen,
thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top.
Did I see a birthing room?
Birthing room?
Yeah,
stop. Please
behind
stop.
JJ, is there a birthing room?
That's not a birthing room, you genius. Okay. Oh my God. Yeah, we have a whole birthing room. It's called, oh my gosh, I think it's called a lactation room. Okay.
No, we have a birthing room. Hey, Tasty, we're delivering babies.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but two trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back? But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
It is the biggest move for European bond markets since the 1990s. That's what we're going to figure out here today. An absolutely crazy day for the markets around some of the news we've seen of all places coming out of Washington, D.C. and the reaction to it. We're going to figure out what that has to do with the euro and why it has been an absolutely explosive market in the past 48 8 hours. This is Ilya Spivak, head of global macro here at Tasty Live, and you're watching Macro Money. The headlines are coming fast and furious here, but the conversation to be had about stock markets hasn't really changed in a very dramatic way. The Wall Street response to all of this has been somewhat tepid. We've kind of come off the lows of recession fears over the past day or so, but that does not change what has been the really big impetus for these markets, and that's really the situation happening in Europe. So let's take a look at first what is going on against that backdrop, and then, of course, likewise, take a look at how all of this lines up with what is the next big influence for event risk, pertinent as it is, of course, the ECB monetary policy announcement, which comes at us in just mere hours. So the first thing to consider here, the price action itself. The move in the euro has been absolutely staggering. In fact, over the past 2 days, we have a rally of nearly 3%, which for currency markets, liquid and relatively constrained, though they are relative to others because of that liquidity, is an absolutely enormous move. In fact, this is the largest 2-day euro rally since November of 2022. What is motivating it? Well, we've talked at length on this show, and certainly updated on this last week, that the main driver has been, we can clearly see it here, the spread between German and U.S. 2-year yields. Put another way, however the relative power balance or the relative yield advantage balance looks at the front end of the yield curve, Europe versus the Fed, that's what you see in the euro. So when you get the Fed coming out and sounding very dovish, and the market says, whoa, that's too dovish, you're not going to do all these rate cuts, hold on, in September, there is a shift higher in U.S. yields. We, of course, see it with a massive sell-off in the U.S. Treasury bond market, in a rally across the yield curve from September just up to mid-December and into the beginning of this year. And of course, in parallel, you get a strong U.S. dollar rally as the U.S. yield advantage expands. But since then, you can clearly see we've started to move the other way. And over the past 2 days, that move the other way has really gained a tremendous amount of traction. Ostensibly, this had to do last week, to the past 48 hours, with the idea that we've had relative stasis in Eurozone monetary policy expectations. We'll take a look at those in just a second, but the outlook for the ECB was mainly looked anchored. At the same time that the story for the Fed was becoming less hawkish as soft U.S. economic data began to signal that maybe the Fed is going to have to do more easing than the markets were anticipating. As a matter of fact, looking at U.S. policy expectations since that fateful day on February the 21st, when we got that U.S. PMI data showing an absolutely eye-watering slowdown in the service sector. It wasn't quite the contraction initially reported, as we learned today. The revised set of numbers came out today and showed that, no, the U.S. service sector ultimately did not contract in February. It did manage growth, but it was a very slow rate of growth. And it turned out that on the whole, when we look at just how much growth we ended up with sort of relative to history, it was the weakest since April of last year. So we're looking at a situation here that's not altogether supportive for U.S. yields going much higher. At the same time, those in Europe are holding up, and so the yield spread kind of starts to shift in the euro's favor. But boy, has it picked up steam. We can see it in these absolutely record-breaking moves here. And in the blue, what you see is Germany's 10-year yield. In the magenta is the corresponding bond. So you can see here the bonds, again, in the blue is the note, in the magenta, the yield. The note absolutely falling apart here. This is, in fact, the biggest sell-off in German bonds that we have seen in, just about 3 decades, give or take. And the impetus could not be more powerful, it would seem, on the euro. Why are we seeing this? Well, clearly there has been something of a geopolitical reshuffle that has gained momentum. Over the past day, we've seen that in the wake of last week's very tense exchange, let's call it, between embattled Ukrainian President Volodymyr Zelensky and U.S. President Donald Trump and Vice President J.D. Vance. In the aftermath of that, it clearly seemed like things were starting to gain some momentum toward a reorientation. But subsequently, the U.S. has moved to stop military aid, or to pause military aid to Ukraine, and to pause intelligence sharing too. That has really crystallized for Europe, it would seem. Of course, after Zelensky had that meeting, he promptly went to London for a meeting with UK Prime Minister Keir Starmer, as well as all of the continental European leadership. And the outcome has been that Europe has seemingly decided that it can no longer just rely on an American security guarantee, that it needs to dramatically rearm. News out of the European Commission, the president there, Ursula von der Leyen, saying that the region has agreed to look the other way on its own debt limits, to announce an $800 billion or 800 billion euros, some $840 billion package on defense spending. And at the same time, the incoming German Chancellor, Friedrich Merz, who just won the election, about 2 weeks ago, he has already reached a pact with rival SPD, Social Democrats for a Grand Coalition, and they've already agreed to suspend that country's even more restrictive debt brake to boost defense spending. Now, that's a whole lot of money flowing through fiscal spending into the regional economy. Not surprisingly, that's something that might be reflected in higher inflation. And you can see it in German break-even rates across the board. Just a brief reminder here, these are the measures of implied inflation expectations in the bond market, as reflected by taking the difference between nominal bond yields and inflation-adjusted, or real, as it were, bond yields. When you take that difference, you end up with the inflation adjustment that it takes to go from nominal to real. It tells you what the bond market thinks about where inflation is going. Well, here we are. Clearly, over the past several sessions here, we've had a dramatic upshift in Eurozone inflation expectations across maturities, not just the front end here in the red, but all the way out to the 20-year spread. All the way up here, everything is showing a massive shift in inflation expectations, and that, of course, giving us this massive upshift in rates. You can see it in ECB policy expectations too. And that, of course, is what is particularly in focus here as the ECB gets ready for a policy meeting. Now, we can see currently the deposit rate 2.75%, and for this March meeting, a rate cut is still all the way priced in. You're looking at 2.5. That much is probably not going to be a headwind for the euro because the markets have already discounted it, and in fact have discounted it for quite some time. We can see that these curves have not shifted very much at all on this question going all the way back to October. So October, December, the January meeting, and now ahead of this one, all of these curves had rates at about 2.5% at the March meeting. So this rate cut is going forward, and it's been in the market for a long time. The larger question is what has happened with the direction of travel for the curve. And of course, we can see with this surge in rates, the curve has become much flatter. So the end point for the end of this year has now clawed back over the 2% line. And we can see clearly we're looking at the least dovish curve that we've seen out of this from basically the past 4 meetings. That is not quite telling the whole story. The move has actually been much more dramatic than it appears. And when we look at these sum totals for what's occurred, you start to really see it. At this point, we are only expecting 56 basis points in net rate cuts this year and next from the ECB. That is a dramatic rethink of what is going on. If you took a look at this just yesterday, that tally wasn't 56, it was 86, veering on 87. So what we've done here is essentially moved for the entirety of the outlook this year and next by a cumulative 30 basis points. That's a very big shift, and you can clearly see it in this dramatic jump in the orange line. For this year, the outlook has moved pretty significantly as well, from 88 basis points being baked in for easing this year, so erring on the side of 4 rate cuts, to now one of those cuts falling away. About 19 basis points gone out of this year's outlook, and we're down to just 69, maybe 70 basis points. So 2 cuts and a strong leaning toward a third. Moreover, the outlook for next year is starting to look like maybe we're going to start to see already a pivot in the other direction. So 14 basis points being baked in there. That's about a 56% chance, so a little bit better than even, of a rate hike of 25 basis points next year. So the situation has dramatically changed. Now, why are we so relatively stayed here? Well, at this point, as we mentioned, the reason why we got this shift already starting to happen before this surge is because ECB policy expectations have been relatively anchored, and it's the U.S. side that's gotten more dovish on the other end of the spectrum. And so we've had a shift that's been mainly U.S. driven. Now, of course, we're getting a shift that's not just U.S., but also Euro driven in the same direction. The reason why things were relatively stayed in Europe is they've been trying to figure out how to reconcile cooling growth and sticky inflation. In fact, we just saw updated Eurozone CPI numbers this week. They came in a little bit warmer than anticipated, 2.4% versus 2.3% expected. And if we look at the breakdown for what's been happening, we don't quite have the January numbers yet. They don't release that breakdown when they publish the early estimate of CPI that we got this week. But we can look back to December, and we can clearly see here still the trouble that the ECB finds themselves facing. The lion's share of inflation, in fact, the thing keeping the ECB from its target, is this stickiness in restaurants, hotels, essentially the hospitality sector. Take away that 0.5 percentage point, and you've got this thing down to 1.9%. But clearly, this has remained a sticky part of the equation. Influences from the energy side of things have come and gone, and that's actually explaining what's going on here. This is fuel costs. When you look at what's been the uplift in the miscellaneous component, it's been mainly insurance and mainly for vehicles. So that's a knock-on effect from what's going on here. Same thing for costs of transport. So all of this seemingly coming down to autos for the uplift, and that's come and it's gone, and now it's come again. This has been relatively sticky. And of course, the problem with it being sticky is that against this backdrop, the economy has been relatively anemic. We got a little bit of a revision in the PMIs that just was published today, the final versions of these numbers, but they don't really change the bottom line. The manufacturing sector continues to be in contraction mode. That may change with all of these defense spending outlays, but so far, anyway, the manufacturing sector below that 50 boom-bust level for the PMIs that separates contraction from expansion. We can see, of course, the pace of contraction has eased a little bit recently, but nevertheless, we're below 50, so manufacturing is contracting. Services has slumped down to basically standstill. It's hugging that 50 line after 2 months of slowdown. The composite index taking in both, given how much services outweighs manufacturing in the total, looks like it's following the service sector, much as it does for most major economies. And so we are hugging neutral, we're hugging standstill on growth indications. So the ECB is a bit stuck before you have today's moves and yesterday's moves. It's a bit stuck because it can't really cut any more to boost this growth situation while inflation is going the wrong way. And of course, that slower economic conditions aren't bringing down inflation in what you'd think is a fairly discretionary spending, cyclically sensitive kind of a sector like hospitality. Tells you there's not an easy path into a trade-off here for the ECB. It's not easy for them to say, well, growth is slowing, so hospitality and hotels will disinflate because it's discretionary spending and the slowdown will take care of it. We have the room to start to cut a little bit more aggressively to boost the economy. Well, even before these latest moves, that was a tough sell. So the euro already was in a position where the outlook looked fairly anchored, and the rate cut was probably not going to be that much of a headwind for the euro. But what we now have is much more dramatic. Not only do you have this sticky inflation, but again, looking back at these break-even rates, now inflation expectations are dramatically marching higher, because if Europe is going to spend all this additional money on defense, then you probably have a whole lot more of a fiscal impetus toward inflation, and that's how you end up with the kind of rejiggering of the overall path for interest rates that you see here. That's how you start to shave away 30 basis points from the outlook. And then, of course, you're going to want to hear what ECB President Christine Lagarde says. Because if the rate cut is fully baked in, as we've seen already, there it is, then the larger question is, does the central bank, after the governing council's meeting, give you some sort of an indication that it is going to cut its cycle short, and this curve then perhaps is going to get something of a kink in it, where the long end starts to move higher, or perhaps we even just flatten out a bit more and go from the 70 basis points that are already on the menu for this year to a little bit less. But the impetus here for the ECB to jump out the window seems relatively low. Changing course and complicating fundraising efforts for regional governments at a time when they need to borrow a bunch of money to do all this spending probably isn't the likely next step. As long as CPI doesn't start to dramatically run away from target, the ECB probably has room to sit on its hands and do relatively little. So, if we're not going to get a more hawkish ECB, that seems unlikely, to say the least. If you're not going to get a more dovish ECB, then the meeting just represents event risk. With that in mind, looking back at the euro, now that you've hit 108 as an important inflection point here, we can see it's been acting as support, then resistance, then support, then resistance, now resistance again. Now that you've hit this barrier, you might see a bit of a pullback into the ECB just because the markets don't want to be tilted too far on one side or the other ahead of major event risk. They clearly have already front-run the central bank by a big margin here with this move, just slicing through former support, now acting as resistance here at the mid-106s and 107. So maybe you get a pullback here a little bit over the coming hours until you get the ECB. Maybe that then gives you a tradable bottom from which to look for a long position at better levels. In any case, the risk reward to chasing this long now looking fairly shot as you're pushing nose up against this key barrier. So from a trading perspective, all of the ingredients for euro gains seem to be on the board. From a price action perspective, you probably have a bit of room for a tactical pullback or at least a confirmed close through this immediate resistance as the possible scenarios to start to think about how to be a buyer in this market. And if, of course, you're not a buyer already. And that's where the ECB opportunity lies, in that you have major event risk. You maybe have the opportunity for a little bit of a mulligan, a little bit of a pullback to look for an attractive place to capture this larger shift in the European macro backdrop. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and what may follow. I am likewise on with Chris for Futures Power Hour Mondays and Fridays, on with Victor Jones for The Price of Truth on Tuesdays, back with Victor and Tom for First Call on Sundays, writing for the News and Insights portion of tastylive.com, commenting at Ilya Spivak on the platform formerly known as Twitter, and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money's back tomorrow. Good luck out there.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
All right, we're back. Tasty Crypto Show. I'm Ryan Grace. With me today, it's Wednesday, of course, Shelly Van.
Hello, hello.
How are you?
Doing all right. How about you?
I'm good. Yeah. Can't complain. Usually I'm able to find something to complain about, but we can complain about the weather any day here in the winter in Chicago. But other than that, I'm good.
Sounds good.
Yeah, I'm feeling better. Bitcoin over 90. That's about all it takes for me.
right.
Yeah, Bitcoin over 90. Everything's great.
That's cool.
Yeah, nothing else is a problem whatsoever. Everything's good. How are you doing? Aside from, lots going on at work here today, but beans, we've got to keep pumping it. I know that we've got growing viewership. I'm sure, hopefully, we've got some people coming over to this show as well.
Yeah, actually, some friends in chat have joined and won prizes. And so,
Hell yeah.
Sophos, Frank, get in the Discord because we have questions for you. We need to know wallet addresses, things like that, so that we can send giveaway prizes accordingly.
Go get that money, Lone Sophos and Frank. Question for the chat today. I guess, first of all, if you aren't streaming this on YouTube and in the chat and typing just crazy shit and speaking your mind in here, what are you doing? Get over to the chat. Mm-hmm. Shelly, what's the question of the day?
Pet peeve.
Ooh, okay.
Yeah. What do you got?
Oh, where to start? I mean, this is one that probably is I don't know if it's a pet peeve or just like, everybody hates this. When you're eating food or you're eating with someone and they are scraping their fork or spoon or whatever, just it's hitting the plate.
Yeah. The
Yes.
cutting a steak on a porcelain dish.
Yeah. I mean, I guess like, oh, wow, Ryan pulled out nails on a chalkboard. That's his pet peeve. Very original.
That was specific, though. That counts.
How about yourself?
I have quite a few. Recently, though, I have a sunrise alarm clock. It's beautiful. I set, if I set my alarm for 5 a.m. at 4:30, it very slowly lights up my room.
Okay, I was going to ask what a sunrise alarm clock is, but that makes sense.
It's magnificent, especially during these hours when you wake up and it's pitch black. It kind of just, the natural circadian rhythm is activated. Well, mine's glitched, and the sun is rising at like 2 a.m. So I'm going to call that my pet peeve because I've been very tired. And I'm like, why? What's happening? And then I'm like, at 2 a.m., I woke up and I was like, why is the sun out? So, yeah.
So it's like a one-time occurrence, or what's the deal here? Are you going to unplug it tonight, or?
Oh, it's
okay.
It's happening tonight. There's going to be a whole fight.
I can see how that's annoying.
Uh-huh.
Yeah. I've got another one. Just came to mind. I haven't experienced this recently, but if you're on public transportation, usually you do.
Ooh.
When people are playing video games or TikTok videos or whatever on max volume on their phones with no headphones and no awareness, clearly.
Mm-hmm.
Pet peeve.
Yep. Mm-hmm. Well, we could do this all day because now I had just 4 more come funneling in.
Just
But
generally.
I want to know in chat, what are your pet peeves? Lone Sophos, someone talking over me when I'm speaking or interrupting me. Mm-hmm. That'll just rudeness, I think, is totally fair. Grumpy Mike, raining here. Uh-oh, it's Shelly Van. Why uh-oh?
I think it's like a good no, like, yo! It's Shelly Van, yeah. I think at least that's how I interpreted it, right, Grumpy Mike?
Yeah, go with it. Jose!
Wherever Grumpy Mike's at, I don't know. Is Grumpy Mike in Hawaii or something? Second time this year?
Well,
as in like 60-some days in, you've had rain twice?
in Hawaii,
I don't know where he is,
Well,
but
if you-
what the hell?
I was going to say it rains like every day in Hawaii, unless you're on like the Kona side.
Yeah, I've never been, so I don't really know what you're referring to, but it sounds nice.
Yeah, oh yeah. Recommended. Recommended.
Shelly, let's jump into the show. We've got a lot to talk about here today, specific to some of the things that we're doing on the Tasty Trade side of the business. We're associated with crypto, so we're going to talk about all areas of the crypto offering, whether it's Tasty Crypto, it's Tasty Trade, or here on Tasty Live, the crypto content. But I want to discuss the new tokens that we've added to the platform.
I love them.
5 more. I think it takes the offering to maybe 12. We've got another 5 coming. If people have demand for other tokens, other coins, let us know what you'd like to see on the platform, and we'll do our best to get it up and running ASAP. But let's talk about the 5 that we added this week.
Mm-hmm.
Shiba Inu, Cardano, Aave, Avalanche, Chainlink.
Well done.
Do you own any of these?
5 for 5.
You own them all.
I do.
I should have known.
Across a few wallets. I'm interested to learn about them from you, though, because I will admit, in my AP ways, I just bought in early and they sit in my wallet.
That's okay. I can respect that approach. You've got to have a little skin in the game. You then have an incentive to learn a little bit more about these.
Mm-hmm.
I don't know how relevant or necessary that is in crypto at times. I mean, I suppose that's also applicable to the stock market. You don't really need to know what you own, but you maybe should. That's some people's advice, at least. But I commend you jumping in head first, all 5.
Mm-hmm.
I don't own any of these presently, but in the past I have been trading around in some of these, and I've had a Chainlink position for a long time, but I did sell out of it as we got this recent rally. I don't know when it was. I've probably been out of it for a few months, but once we finally just got off of those lows that we were in for some time, I was able to take some positions off the table and consolidate a little bit. But who cares about me? Let's talk about these tokens, Shelly. Start with Cardano, because I believe, and we'll get to just a comparison around market cap and performance here in a second, but I think this is the biggest one by market cap that's on the list of these 5. You want to take this one? You want me to take this one?
You take it because I'm realizing I have to look way over here to
Oh, okay. You only have the live stream up there. Okay. Ticker, A, D as in dog. A, again, as in apple. Cardano is a proof-of-stake blockchain. It's created by Charles Hoskinson, and he was one of the co-founders of Ethereum. I don't trade this. I mean, I have nothing against it, right? Sometimes people think that, oh, you don't own it, you must hate it, in crypto at least. Not the case. We'll probably get into this, and certainly now that it's at Tasty Trade, definitely on the radar. We will put expected moves and, the performance dashboard pieces in place around this as well. I think of this as Ethereum. When you just do a quick search, you look at the description in the Tasty, through CoinMarketCap. It's not in the Tasty Crypto app yet, is on Tasty Trade. But when you look at the description, you'll find that this is, focused on being environmentally sustainable. It's a proof of stake blockchain. The initial objective was to improve on some of the functionality that exists with Bitcoin and Ethereum. Like many other networks, you can transfer tokens across it. ADA is the native cryptocurrency to the chain. And this is one that, from what I've seen anecdotally, a lot of people are interested in. There's a lot of demand for. I'm not quite sure, where the activity is when we look at this from the fundamental perspective that supports it. So we can do a deep dive on this later. But high level, this is what
music NFTs on Cardano.
You do.
I do.
Oh, awesome. Okay.
Yeah, this was a couple of years ago, but it's all coming back to me now because I have an artist friend who's like super Cardano maxi, and I remember it was a little confusing to get them at the time. Once I had them, I was like, well, that was interesting. It was cheaper than ETH, basically.
This is done well recently, given going back to the tweet over the weekend. We still call them tweets, right? Even though it's X.
I do.
Yeah, I do too. It's going to be hard to shake that. I don't know what else you would post.
Well, they're called posts, but that
Post on X, cool. The tweet over the weekend from President Trump did mention ADA as one of the assets potentially included in a digital asset strategic reserve of the United States. And so, like the others, this has exploded higher in price. I just want to get a quote really quickly. 98 cents. So just a couple of days ago, it was about 60 cents or so. So nice move to the upside. It has pulled back a little bit, but topped out at about 120. So a nice 100% move on that tweet. Still up about 44% on the week. So keep an eye on it. I've got it on the watch list. It's now in the Tasty Trade platform, but let's move on to some of the other offerings. The next one being Shiba Inu. How would you say it when you just see the ticker? Shib, but Shiba Inu.
Sheeb.
Another cute little dog.
Mm-hmm. We like our dogs.
Shiba Inu is a token on the Ethereum network. So this is an ERC20 token that has also become a popular meme coin like Doge. I think of this as like the Ethereum version of Doge. Doge is obviously its own chain. This is a meme on Ethereum. And there's a lot going on here. We're not going to break down every element to the communities behind this, but you hear meme and you kind of just think, oh, it's just speculative. But there's actually a lot behind this. A little bit of backstory first, though. This was originally something where, well, you can see it here on the screen, 1 quadrillion tokens were minted. So basically unlimited supply, similar to Doge and many others, and a significant portion of it was then sent to Vitalik Buterin. That said, he burned 90% of what he received, and then he donated the rest to charity. So there's not quite 1 quadrillion tokens anymore.
There's also the Layer 2 network on SHIB. That's the Shibarium.
Okay.
I'm not super familiar with it, but I like the sound of it.
I think I have that in my notes if I can find it here. There is an ecosystem to this. So you have Shiba Swap, decentralized exchange. You've got Bone, Shiba Swap, and Leash. These are other tokens that are associated with the Shiba Inu ecosystem. Bone, for instance, is used for voting in the decentralized Shiba Inu's Doggy DAO.
Mm-hmm. This is real life, people.
I used to have an opinion on like interest rates and Federal Reserve monetary policy and big macro trades, and the Doggy DAO is my thing now.
Yep.
I love it though. You can trade Shiba Inu now at Tasty Trade, which is exciting because I think when you look at memes, we've made this argument before. There is a place in the portfolio, specifically in bull markets, where you want that volatility exposure. And as much as we joke about this, I think it's still true today. We'll have to run the numbers. But I believe the best performing crypto asset is still Dogecoin, outperforming Bitcoin. You're going to live by that volatility and experience it on the downside as well. But even in the last year, Doge is up 11% still, up hundreds of percentage points at one point in time. So we joke about the memes, but I do believe there is a place in the portfolio for them.
Memes don't take offense.
No. Got to be able to stomach the volatility, though. All right, next on the list, Chainlink. Arguably a little bit more of a fundamental use case here. and an investment case as well. Chainlink, if you're not familiar with it, is a decentralized Oracle network that provides data to smart contracts. Now, this is very important if we believe that smart contracts and blockchain networks are going to power more things in the future, even beyond financial use cases. So with smart contracts in this scenario, or if we think about the growth here, there's going to be an increased need for external data to be fed on chain, right? Obviously, you can reference prices, you can reference on-chain data, but you need to also be able to, in many cases, reference in a secure manner off-chain data. Maybe that's just the temperature outside. But all of these things that exist in the real world, you want to be able to reference so that smart contracts can function as a result. Chainlink solves this problem by allowing smart contracts to securely interact with external data feeds such as APIs, and you can also think about it as databases in the traditional sense when we look at bank payments, other centralized databases. And I see in the chat, great comment, Pyth is a strong competitor to Link as well. Yes, there are more than one. There's more than one Oracle solution out there. Chainlink is probably one of the better known ones at this point.
Can I ask you just a sidebar question relating to smart contracts? What do you think the future holds for smart contracts? In terms that right now, I think NFTs gave sort of a really... They gave smart contracts a bad name, in my opinion, because everybody focused on the JPEG instead of the underlying technology, which is the smart contract. So I'm just curious, like, take off the JPEG and get that out of our heads. Smart contracts.
Yeah, I mean, I think it's the foundation or the core to, obviously, applications, decentralized applications that run on blockchain networks. I mean, this is just code on chain. It's, again, the basis for building applications on these networks. I think becomes more and more relevant when we layer on top of it this AI component. If you believe that there's going to be this continued proliferation of AI, which I don't think there's any reason not to believe that, then more complex smart contracts are going to facilitate more processes and add more value, more utility, if that makes sense. Today we think about smart contract interactions where I might trade through a decentralized exchange. So that's going to use, obviously, smart contracts. But when we think about, some of the processes that exist when we look at the real world, real business cases, how businesses engage or interact with one another, how supply chains are managed, et cetera, I think, I guess whether AI is involved or not, that's where these complex smart contracts play a much larger role in just kind of automating things.
Health insurance.
Yeah.
I want that so bad.
Yeah, it is odd that your health records still kind of are stored like with your doctor, and then they have to send them to another doctor, and you don't really have ownership.
In 3 states in the last 3 years, I'm like a newborn.
Yeah.
They're like, what's your medical history? I'm like, what do I want it to be? Because clearly you don't have any records.
So I think, blockchain in many ways helps to solve for that. But I think what you're going to see, and whether we think about what's happening at the contract level or not, it's going to be facilitated by smart contracts. So Chainlink is an Oracle, and at the end of the day is, is going to play a role in terms of obviously feeds for various types of data and how that data is referenced in order for different things to function on chain.
Can you define Oracle for anybody who doesn't fully understand what that is?
I just think of it as a data feed.
Yeah.
Yeah, that's kind of high level how I think about it. I don't know, is that like Greek mythology? Oracle, all-seeing, all-knowing.
I just think of the Matrix.
Yeah. But in this case, I just think about it as a data feed or a network of data feeds that can be referenced, and you can pull in or ingest data on-chain that just otherwise doesn't exist on-chain. Right? That blockchain doesn't know what the score of the baseball game was. But if you have an Oracle network that can take those prices or those values or that data and it can be referenced, then, smart contracts can, I guess, function as a result, operate as a result.
So Flower Power 2222, how do you keep records private if the blockchain is public and accessible by everyone? Would an Oracle be a solution to that if there's a privacy layer to that data?
I think so. I mean, it's a good question. I don't think that while, things are transparent on chain, it doesn't mean that you couldn't have private blockchains where this could work. I don't know. I honestly don't know if anybody has solved for this yet, but just the concept of being able to own your own data and take that with you in the same way that you're the custodian of your assets on chain. I guess look at it this way. Sure, the data is transparent in some form. The wallet address, if we just look at it today, is transparent, and we do associate, these balances and these tokens with symbols, and we have a concept of a price and this kind of real-world approach to it. But it can be masked, right? Even when I think about a wallet address, unless you have a .eth or you've gone out there and you've associated or attached a name to it, it's just an address. I don't know your address.
Right.
And so I think there is some degree of privacy in that sense, but problems to solve for sure.
We're early.
Absolutely. Chainlink. Up next, Aave. Aave is DeFi. It's a lending platform built on the Ethereum blockchain, allows users to lend out their cryptocurrencies and earn interest on them or borrow against their crypto holdings by providing collateral. And if you've ever been on the Aave platform, it supports a wide range of cryptocurrencies for both lending and borrowing. Huge use case, right? I mean, this is banking 101.
That's awesome.
Finally, Avalanche, ticker is AVAX. Avalanche is another blockchain network. It's a high-performance one, scalable blockchain platform designed for creating custom blockchain networks and decentralized applications. I'll be honest with you, I'm not super familiar with the intricacies or the inner workings of Avalanche, but what we have on the screen tells you that it consists of 3 built-in blockchains. You have the exchange or X chain, the platform chain, and the contract chain. And each chain then serves a distinct purpose, optimizing the network's overall performance and utility. So we just kind of have some words up here on the screen. But I think you have been involved with Avalanche to some extent, right?
Only because I like shopping for funny things to invest in. I did look on OpenSea because you can shop for Avalanche based NFTs on that platform. There aren't that many, just a few. But
there are these ones though.
Sausagers, villagers, but sausage. I mean,
I love them.
This is real life. You could own one of these or many of these if you wanted to. But you need the AVAX token.
Okay, so that is the underlying currency. And that's important that when we talk about a lot of these blockchain networks, they have an associated currency or cryptocurrency, the native
token. Yes.
And in this case, it's AVAX or AVAX. Okay. These aren't the ones that you own. These are just ones that are
I
for
was
sale.
just shopping because I was like, oh, interesting. These are hilarious.
So when you're shopping, what are you looking for specifically? Just kind of pops out at you?
Yeah.
Or are we going for one of these like leopard print sausages?
I kind of like the female ones.
Okay, yep.
Because the sausage with boobs is just, why not?
Yep.
Come on. Gotta have it.
Yeah,
that's how I shop. The funnier, the better. And it's culture on chain, Ryan. That's kind of my thing.
Now, I do have to call this one out. I mean, this one is a sausage with a baby while smoking a blunt or a cigar. I'm not quite sure what that is. I'm assuming it's a cigar, but could be something else. Crack pipe? I don't know. Sausage with a crack pipe and a baby. You can get it for 5 AVAX. Could be yours today. Oh, I do love this stuff. It's fun. Avalanche is, again, another blockchain network. There are a lot of these. I think over time, you probably see some degree of interoperability. There are different use cases for different chains. I think there's also an argument to be made that there is an excess of block space in some cases. And so when you think about how you value these things and you think about blockchains as security layers or the business being that you sell block space, well, there's seemingly a lot of block space. And, at times that's reflected in the price. There are, to an extent, as we've talked about, we wrote about this in the email over the weekend, there are fundamentals that you can track. And so if we just jump to the next slide here, just an objective look at where we are. I have no opinion on one versus the other. No one's here saying that, you should own Shiba Inu versus Aave. These are entirely different things. We're simply just expanding the available product offering at tastytrade. But Cardano is the largest by market cap. Aave is the smallest presently. And you can see some of these have done fairly well, while others, not so much. Shiba Inu, like many of the memes, is down significantly, but you can see this thing go up 100%. We do have volatilities when we look at ADA or Cardano of 231%. Now, that's a realized volatility on a 30-day basis. We just look at the 30-day realized vol and we annualize it. They can only go to zero, which would be a 100% vol. So when you have a 231% volatility, it means that this thing has at times experienced exponential asymmetric returns to the upside. And so very, very volatile. Be aware of that, I guess, if anything. But if you're looking for tokens that could potentially outperform in bull markets, then again, you want to own some of these things that have vols north of 100%, because in the event that they go up, they're going to go up a lot, but they can also go down by 100% as well. So keep that in mind.
And something like SHIB, you can get quite a lot for a very little bit.
Yeah. You can own hundreds of millions of Shiba Inu if you want, given the initial supply of a quadrillion. Shelly, before we wrap things up, I've got to mention a new update to the tastytrade mobile application. Super excited about this. The team behind it has been hard at work for the last couple of months, and this is a huge change to the application. So if we could just quickly throw this up here on the screen. I've got the mobile app loaded up. If your tastytrade app doesn't look like this, we typically phase out the release update, but you can go directly to the iOS or Android store, the Google Play Store, and you can update this manually if your app doesn't look like it. But if we can throw the interface up here on the screen, we'll just take a look at this. Boom. So what we've done really quickly is if you start on your dashboard, you look down there at the bottom navigation menu, you'll now notice there is a separate crypto tab. When you click on that, you'll now see everything in one place, all the new tokens. If you don't have crypto trading enabled, which this account doesn't, you'll be able to quickly enable that. So you have to enable crypto trading for your cash or margin account with Zero Hash. That's the third-party service provider, the custodian of the crypto assets. And then you'll have everything right here. So this acts as both your launchpad for trading and also a watch list. I personally have never seen prices update this quickly. So that's one thing that I love about this, right? I use the Coinbase app. I use others. It's not a knock against them. They do many things well, but damn, this price feed is fast. And that's what you want, right? Fast prices updating in real time. So you can see that the price change there, really like that. As you scroll down, you've got this content section here. So you can learn a little bit more about some of the tokens, about crypto, about Bitcoin, et cetera. And then if you want to trade the futures, you want to reference those prices, we've got that here on the screen. Got the ETFs as well. And clicking on any one of these is then going to bring up that trade ticket everybody's probably used to if they've used this app. And so when you click on that, that'll start that process and you can jump back there. A lot more coming, but this is phase one. Step one was released just yesterday. So if your app doesn't look like this and you haven't received the auto update just yet, you can manually update. Go to the iOS App Store, go to the Google Play Store, update your tastytrade app, and get this brand new badass crypto interface.
Shout out to the teams.
Yes. Yeah, they did a fantastic job here. So I'm super excited about it. And the workflow in here, at least in terms of how I typically approach the market, This works really well for me. I love having everything in one place. You can jump to a trade. I could buy my $2 worth of ETH, and then I can jump back to the main screen. So I like it a lot. But yeah, as Jose is saying in the chat, and shout out to Jose, everything crypto related, all in one place. I got a ton of stuff that is coming to this as well. More improvements coming soon. And we've got a new update of the Tasty Crypto app that went to the store today. I think it's still in review. I haven't seen that it was approved yet, but we will demo that. A lot of new stuff in there as well. But that's going to do it for our show. 5 new tokens on the Tasty Trade platform, 5 more coming next week. We'll keep you up to date when those are live, and we'll talk through them as well. But Shelly, thank you for coming on the show. You'll be back on air on Friday with Dan for Beans. Check that out over on the Tasty Crypto Network, I suppose we can call it.
Ooh, yeah.
Tasty Crypto YouTube channel. If you're not a subscriber, get over there and hit that subscribe button.
Thank you. See you on Beans.
See you then. Until then, I'm Ryan.
Shelly.
Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, I mean, stay a while. Take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
good
on,
enough.
take your jacket off.
Nope.
Come on, take it out.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short.
I mean,
This is moving so fast, and I like it.
Yeah.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but 2 trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back? But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Oh, yeah, it is Wednesday, March 5th, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live's evening show, a little podcast called The Price of Truth, a show where we like to explore the incentives that govern our world. It's Wacky Wednesday, everybody. You know what that means, an extra heavy dose of chest hair. What's going on, Christopher Vecchio? I got you. I got you.
And I know how to listen, and I know how to read. So we've checked 2 boxes here at the start of the show.
Let's step on anyone who's in Montessori school or sent their children to Montessori school. I visited one the other day. Have you visited a Montessori school? Are you going the Montessori route? Or are you going to go the traditional, like Rothschild, Henry Ford, assembly line, traditional school type route? What are you doing with the children?
Given the direction of the country, I think she'll be working in a factory soon. So she has small hands that are very dexterous.
I visited a Montessori school the other day. No offense to anybody who went to Montessori school, and no offense to anybody who put their kids there. It seems like the kids were really well adjusted socially, and totally independent and autonomous. I just don't get a model that says, here, 4-year-old, teach yourself to read. I'm just curious how that works out in the long run. Chris, what do you think?
I've seen some studies about the Montessori schools, and the kids who do Montessori through like elementary and middle are testing at or above their non-Montessori peers in math and science. So maybe there's
another lie propagated by the big Montessori industry.
Yeah. By big finger painting and self-directed education.
Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile applications. But if you want to be part of Bing, this chat box that I think maybe just popped up on your screen,
there's only one place to do it, and that's heading on over to the evil Google YouTubes and, moving those phalanges, metacarpals, or just your entire skull smashed against the keyboard. Random ass characters will do, as long as you spoof the Google algorithm into creating a bunch of activity on this chat, and they'll put us in front of as many people as possible. We can save the world or deprogram the world one view at a time. Chris Vecchio, they liked him at 5,800, my friend. Is this like the last stand here? Are we making a last stand at 5,800? What do you think?
I have not engaged down here just yet, despite a desire on a technical basis to do so somewhat. Both ES and NQ are bounding around near multi-month lows. ES has erased all of the post-election gains. And in the process of doing so, it returns to its 200-day moving average. It bounces from there a little bit yesterday. It bounces from there today, of course. But really, has the momentum to the downside been broken? That's the question I'm asking myself. And one thing of note is that over the past 2 weeks, we've seen the S&P and the NASDAQ close consistently below their 1 week moving averages. That wasn't broken today. In fact, the 1 week EMAs proved as resistance for both NQ and ES in today's action. So if we can get ourselves above there, then you have a case to be made. Okay, we have some evidence that short-term momentum has been broken at a level that's been consistent with support in say, the past 6 months. There's a reason to look long down here, which again, I'm a momentum guy. I'm never going to blindly jump in with 2 feet like say Tony was yesterday and seeing the S&P near 5791 and saying vol's up, I'm just going to sell some puts down here. So I will miss the exact low, the exact high in these turns, but the technicals look good. The question is whether or not we're going with a legitimate growth scare or if this is a scare in the market akin to something that happened last July, early August. And I know that's been a point of interest that you and I have been discussing for the past 2 weeks, particularly after the PMI reading. It feels a little bit like late July, sentiment-wise, and surely enough, the price action for the past the interim week since we last spoke, I think kind of sticks to that environment.
I took a few shots. Last Friday, I bought some E-mini futures when we approached 5,800. Yesterday, I didn't feel as confident. So I didn't buy a ton of upside. The only thing I did was I sold a VIX, one of those big boy VIX futures. And at some point today, we were down 20, 30 cents or something like this. So I scalped out of it. I'm like you. I think the first time we got to 5,800, I think there was, from my point of view, there was like conviction that you could get this to hold. It doesn't mean the market is going to buy them here, but on a short-term trader's bounce, it's a decent risk-to-reward area. The second time, same idea, but less conviction. And it's just any upside, man, any rally is still getting sold into. And the momentum of the market, to your point, whether you're looking at the moving average or just the slope of the market, whatever, anything you look at here, the momentum is not great. But we've had two, I'm not the most technical guy, but we've had two pretty long lower wicks to the market over the last 2 sessions. In other words, we get to these lows in the market emphatically at any point under 5,800. It looks like there's some decent buying for the last 2 days. The question is, how long can that last? How long can they hold them here without some sort of catalyst, emotional or otherwise, to really get us moving in the other direction? And I suppose my question would be, if you go into the tail end of the week, do you see any short-term catalysts on the economic calendar or on the earnings calendar? Do you see anything that could provide some sort of solid ground to stand on from the market's point of view? Like, what would a strong jobs number actually mean? Would it be good in this type of environment? How do you break down what we see on the calendar for the rest of the week?
Yeah, I think we're back in a good news is good news and bad news is bad news kind of world, particularly for the non-farm payrolls. If it's a bad non-farm payrolls report, the first report that covers the reporting period entirely within Trump's term. So now we're actually moving into the data that is no longer from the Biden era. It's no longer straddling Biden and Trump. It's now becoming more Trump's data. So this is now the first report for February, of course, which encompasses the first full month of Trump's term. And we see from the PMIs, from the ISM, from the consumer confidence surveys that businesses, consumers are feeling more uncertain about which way taxes, tariffs, what have you, coming out of Washington's going, because there's just so much, for lack of a better phrase, chaos. It's not that the market doesn't like or want the 25% tariffs. I'm of the mindset that while that's going to be inflationary, it's going to reduce growth, net, The market just needs to know direction, right? If Trump came out tomorrow and said we're going to do 30% tariffs across the board and they're going to stay in place for the remainder of my presidency, I'm not going to back down no matter what, that would hurt in the short term, but we'd be able to do a whole bunch of planning then. We could project costs. We could say, okay, we need to source some materials from here or there. We don't need to worry about a tariff being slapped on in the middle of the night at a 3 a.m. tweet or a Truth Social post. We have some clarity about the future of policy direction. And it's one of those reasons why markets like gridlock in DC. Probabilistically, nothing's going to happen. So you can kind of just check the box and say, okay, well, inflation is going to be between 2 and 3%, and government spending is this, and yada, yada, yada. Right now, you can't make those kind of projections. So the uncertainty does hurt a bit. So then the non-farm payrolls, then, they are coming into the void. They're stepping into the breach of, are we in the midst of a growth slowdown? And the GDP trackers are doing us no favors with that conversation. Of course, the Atlanta Fed GDP now has plunged to minus 2.8%, a move largely driven by a surge in net exports, thanks to the fact that, well, what are we doing here? We are buying everything right now as soon as possible. So I should say a collapse in net exports, a surge in net imports. But we're buying everything right now. We're basically front-running the tariffs before they go into place. Do recessions start when people are spending this much money on importing goods, when imports spike to the degree that they have? That's not something we have any historical bearing on. And that's part of the reason why other GDP trackers like the New York Fed Nowcast haven't keeled over to the downside the way that the Atlanta Feds have. So if we want to split the baby, right, we're still more than 2 or 3 weeks out from the official government release of GDP. And so consistent with a longstanding view I've had and shared with you, we don't really care about the actual level until about 2 to 3 weeks out, but we look more for the directional moves in these GDP trackers. And directionally, the New York Fed one is down from like 3.12% to 2.9 or so. And the Atlanta Fed, of course, is cratered from 3.9 down to negative 2.8. So I think we can make the case that right now momentum is weakening, softening for the economy. And so a non-farm payrolls report that comes in week that says, yes, indeed, those concerns are well-founded, the economy is rapidly deteriorating, would not play well for equity markets, which now are examining why we're doing rate cuts. They're no longer for maintenance reasons, they're for recession reasons, and equity markets do not like rate cuts for recession reasons, period, end of story.
Yeah. I wonder, though, let me ask you this question. I agree with that statement. It's sort of like this eternally true statement that the markets don't like uncertainty. However, you have I think in most cases, many cases here, you have your worst case scenario. So you have your worst case scenario from the United States, and it seems like in response, with the exception of maybe Mexico, which hasn't necessarily laid all their cards out, I don't think just yet, you sort of have the responses, and not entirely from China, but you sort of have some idea of what they might do based on what they did last time around. So I'm just curious, don't you think the market has enough information to price the worst case scenario, but then you just have a really wide distribution curve around the potential of outcomes in that worst case scenario? Do you get what I'm saying? Like, it's not completely unknown where we're headed. The worst case scenario is known, and you just don't know if that worst case scenario is going to materialize. You don't know if we were going to meet Mexico somewhere in the middle off of 25%, or meet Canada somewhere. Are we going to keep the 20% on China, or is that going to be negotiated down? But for the most part, you've got your worst case scenario and the retaliation on the table.
You do. And, I question how far this goes without reaching a place of other countries just being like, we can't negotiate with you. We're going to put up these tariffs. We're going to bear the pain ourselves. I think Trudeau's press conference yesterday is really illuminating, if only for 2 reasons. One, of course, he's going to take a tough stand. He has nothing to lose. He's on his way out the door. So he can be as, pro-Canadian national interests as he'd like. But to that end, he pointed out that
all of a sudden he's not a globalist.
Well, but to that end, right, he says, Donald wants us to stop the flow of fentanyl. In January, we stopped less than an ounce at the Canadian border, right? And that's not to say that they're letting all of this through, but in terms of the seizures, you go from, they've seized in 2024 of the 13,000 plus pounds of fentanyl that came into the United States, that was seized at our ports and borders, 42 of those 13,000 pounds came through Canada. And so they've now reduced the monthly flow rate down to less than an ounce. I don't know, Vic, that means year long. We're talking about, let's say, 12 ounces of fentanyl coming through the Canadian border. That's basically tight as tight can be. So what more can Canada do to prove to the U.S. that's no? But this is, but again, Canada's
you and I both know the reality is
of course
he's using reality the fentanyl thing is sort of red meat to the base to oversimplify the trade negotiations with Canada. It's much easier to say this is about stopping fentanyl, and then everyone rallies around that, than the nuances around wanting, banks to be able to operate freely in Canada and all the other things he's like lightly alluding to. So and the increased tariffs he wants them to put on China so that there's unilateral strength from North America towards China so that they don't game his tariffs the way they did last time. So I think the reality of what we're negotiating for, or he's negotiating for, it's not the fentanyl thing. And so speaking to fentanyl is an attempt, I think, from Trudeau for the hearts and minds of the people, right? It's not a good faith negotiation, and neither is it a good faith negotiation tactic from on Trump's side. What do you think Trudeau is doing? I don't get. You think he's trying to save his political career, kind of like Macron? What the hell is he doing? Or just save his legacy right now?
I don't even think it's about saving his legacy. Like on what pretext should Canada entertain any tariff negotiations with the United States if the pretext is wholly bullshit? Right? Like Canada's not the source of this. As we know, as our own data shows, as the Trump administration readily admits, they've sent people out on Fox News, CNBC recent days. It's mostly Americans who are trafficking the fentanyl, because I can go back and forth across the border as an American and make day trips to Mexico. Right? Same thing for Canada. And so like if the Trump administration's own data saying like, hey, this isn't really a big problem. The Canadian government data saying like, yeah, it is. But Trump's out there saying, hey, we're doing these tariffs under this emergency relief statute. We can do tariffs on national security grounds to address this crisis. And Trudeau's like, there's no crisis here, man. What are you talking about? Like, this is not a Canada problem, realistically. And so why should he have to play Trump's game? And I think that's the side of the equation that we're missing as Americans. We are, of course, the biggest economy with the biggest military, and we can do, by and large, whatever we want on the global stage. But other countries have national interests too, and they're just not going to be pushed around. And Trudeau has nothing to lose. He's not up for re-election, and his Liberal Party standing up to Trump has totally changed the polls in Canada. The Conservative Party with Pierre Poilievre was, 20, 30 points ahead at some points in the polls? Yeah, and now they're neck and neck. And it's because Poilievre is saying that we have to help Trump with the border. Canadians are like, you're trying to sell out the state. But Vic, this is all, I kind of had like an epiphany recently because I'm working my way through a whole bunch of books on American history. And I finally got into the late 1800s. And as I'm reading more about these William McKinley tariffs, part of the stated goal of the McKinley administration in administering the tariffs in 1890 against Canada were to shrink the economy so that it would be pressurized to become a state at the time, which wouldn't be the 51st state. It would have been like the 40-odd something. But part of the stated goal of the tariffs under McKinley were to get Canada to buckle as kind of revenge for the 1812 war. And so we think about where we are today, and Trump's calling him Governor Trudeau and talking about these aggressive tariffs about Canada. And oh, by the way, saying how tariffs are the most beautiful word in the English language, and McKinley was the best president to ever do it, and we were at our richest as a nation in the late 1800s. I got to tell you, Vic, it sounds like he's serious when he says he wants to annex Canada. And I think that's what the Canadians feel. They don't see this as just talk. They see this as a legitimate threat against their sovereignty. So they'll dig in. We'll dig in.
I think these types of things can be used to enthuse a sense of nationalism. I think the reality is, I honestly don't know, and I don't want to presume to know, but I would imagine what we're really going for is solidarity when it comes to eventually this turns from pointing the gun at Canada and Mexico to solidarity from the North American continent and then pointing that gun over at China.
Sure.
I think that's what this is.
Yeah, Fortress America.
I don't think he really wants Yeah, I don't think he's serious about making it the 51st state. Would we have MOUs or things like that in place? You see that all over the place in Southeast Asia. One nation does an MOU with another nation for specific resources, and we have that in our own way with sort of our version of NAFTA or the new version of NAFTA. And you and Ilya talk about the renegotiation of this. I think it's really hard to deduce what's happening down to just like he's trying to strong arm Canada and he wants it to be the 51st state. I don't really think that's what this is about. I think there's a bigger game.
Let's say it is about the renegotiation of the USMCA.
Mm-hmm.
Vic, if you and I are negotiating on something and you say the pretense for renegotiating it is something that you and I can both independently verify as objectively untrue.
Yes.
Why, as your negotiating partner, am I going to take you seriously at all?
Because I've got a lot of cards. You know, because the pain. Because collective play. I know. I'm not saying it's. Look, I'm along for the ride with you, man. But I think the idea at some point is that we can bear more pain than the next person, and I hope that we don't put that to the test, but it does seem like that's where we're inching our way towards finding out who's got the greatest pain tolerance, and then at max pain,
sure.
and then at a max pain point
for more pain.
That's not what I voted for. I did vote for pain.
We voted for lower prices.
I know what I voted for. Do you know what you voted for? What'd you vote for? What'd you vote for?
$6 carton of eggs. Gustavo Fring, the chicken man, got my vote, Victor.
All right, man. Let's talk. If I know how you feel about the S&P here, which is, I think, bearish, at best case neutral.
Well,
how do you feel? Go ahead.
Yeah.
I don't want to put words in your mouth.
Yeah, no, so I'm looking for a little scoop here in the S&P long, but one of the trades that I was talking about in overtime today, which I'm reinitiating now on the Thursday session, is a short iron condor in the NASDAQ futures. Excuse me. Why? I think we're 42 days to expiration now in one of the NQ expiries. If we were to look at the one standard deviation move, it rare is the occasion that it works out this perfectly, but the one standard deviation move effectively takes you back to the all-time highs on the way up and to the swing low in September on the way down. Now, if we were to treat the NASDAQ recent consolidation as a potential double top, the measured move brings you exactly down to that September swing low. So where does that leave us? Halfway between the September swing low and the all-time high. And if we were to put on a short iron condor trade here with basically I think it's like a 63% probability of profit I last checked, going 250 points wide between the guts and the wings, you're looking at basically a 2-to-1 risk to reward, risking 2 to make 1. And obviously NQ, it's a bigger contract, but saying that we're going to stay in the midpoint of this recent trading range for at least the next 20 days, if we're thinking of the typical like 45 and 21 day out tasty window, I think there's a pretty good bet that unless we see a market crash, that we're probably going to stick between those highs and lows. So I'm wanting to lean long deltas in ES, but I see a juicy opportunity in Q where, probabilistically, I think that's worth the roll of the dice.
This one, the NASDAQ looks even. It's been a while since I looked at the technical structure of the NASDAQ. Because I've been looking at the S&P, it looks even uglier than the S&P. It violated its lower bound. I did not see that.
Yeah, no, the NASDAQ looks gross, and it's kind of bouncing off of its 200-day, but it's still below the 5. And so could we see a big directional break? Yes. But 20,600 is basically the midpoint again of those lows in September and then the highs that we had in December. And 41.6 IVR, right? That to me is certainly a worthwhile look in the short term. And if we see that vol continues to spike and this thing starts to get really directional southward below 20K, cut it for a small loss. Because then it looks like we're going below 19K at least from the measurement of this double top.
I think we're going to move quickly below this bottom end of the range. I think we're going to violate 5,800 and find a new range. And I think we're going to put a lot of pressure on equities really, really quickly. But I personally don't think it would be a good thing to be fearful on that move. Like I just tend to think we're going to find max pain, and that's going to be a point at which it incentivizes the power structures to come together and negotiate. You know what I mean? Like I do think, and I think I've listened to a lot of people who have said this. I don't know how you feel. It seems like the Trump administration does have a tolerance for equity pain. I talked about this with Ilya yesterday. I talked about this on this show a week ago. I think the first administration, they used the S&P 500 as sort of this barometer for success. They constantly were cheerleading it higher. And I think it pissed opposition off. And I think to some extent, Biden administration ended up doing that same thing later on. I don't think that's going to be the case here. What do you think? It seems like they got a tolerance for pain here in equities. Do you agree with that?
The Trump put is not in SPY. The Trump put is in TLT.
Boom. Say more. Agreed 100%.
The stated goal of the administration is to bring down lower end rates because that will help boost economic activity within the economy by expanding credit availability. And more importantly, it will reduce the financing costs as we face a significant refinancing cliff over the next few years.
$7 trillion.
If we're, yes. And if you think about what Bessent's been saying, they keep acting as if they're targeting the 10-year yield because from which the 10-year flows, so do mortgage rates. And we think about anchoring any sort of risk or personal loan you're going to take out. But if you can bring the 10-year down, it's not yield curve control. But if you're implementing policies aimed at lowering inflation and boosting, lowering growth, you're going to get that, which is kind of the funny part of this equation here, right? How do you take term premia out of the long end of the curve? Well, you have to reduce uncertainty in markets. So a set policy direction helps. You're going to have to kill growth. You're going to have to kill inflation. Now, oil's doing its part, right? Like the Starship Troopers meme. Like oil is definitely doing its part in trying to help that inflation conversation along. 66 and change for oil prices after a pretty steep pullback. That's not nothing. Gasoline futures, those likewise are falling. That's good. And if it means Americans have $10, $20, $30 extra in their pocket per week, it means a few $100 a year. And a few $100 a year can get recirculated into the economy in other ways. So lower gas prices are a good thing. Asterisk, as long as they're not down because of growth, which I think as everyone forgets, and this is one of the strangest things to me, people saying that gas was so cheap under Trump. Yeah, it was cheap in April 2020. There was a pandemic going on. There was no economic activity. Of course, there was no demand for it. Oil prices went negative in the futures market for a period of time. So we don't want gas prices low for that reason. But if it's because there's a lot of supply, thanks to, what I think will ultimately be a security arrangement with KSA, Saudi Arabia, they pump the oil. We give them the protection. It's a deal that George Bush turned down in the 2000s when he was offered a deal to peg oil prices at $25 a barrel for security guarantees and pass that up. So we're replaying history to a certain extent, maybe rewinding to a place where we should have been or not been. Of course, Saudi Arabia has a particular role to play in the 9/11 attacks, which we'll leave for another story, another episode of First the Truth, Victor. But that all aside.
That's a long episode.
But that all aside, right? Like if we're pumping more oil supply, we're going to get lower inflation expectations. There is kind of this also sense in my head where the uncertainty itself is a policy end to reduce activity.
Correct.
I'm probably going to, am I personally consuming as much? Whatever I'm not buying that I would otherwise be buying and offsetting with my increased egg purchases, I am, and I make that as a joke, I eat 3 or 4 eggs a day. So these egg prices being up, this is personal. This is personal, Victor Jones. This inflation is personal. But outside of that, I know that I'm just waiting to see where things go, right? I'm going to do my normal spending, of course, but big ticket items, we're talking about getting a new car now sooner than we wanted to.
You just bought a car.
When?
I thought I bought a car and you bought a car at the same time.
I bought out my lease in January 22.
Yeah.
January 23.
I don't know.
But we need more room. So new car's coming. But again, depending upon the car brand.
You having another one? Oops. I'm sorry. All right. So your 4 eggs thing threw me, and that's all I've been thinking about is those 4 eggs.
What do you want to know about them? Scrambled, poached?
Yeah, actually, I'm a hard-boiled egg guy. I have four hard-boiled eggs for breakfast, and then my wife makes a bunch of quail eggs. Then those quail eggs are like this big, and I just pop them like Skittles throughout the day.
That actually sounds delightful.
It is so good. It's the best. So I think you're still, so again, your negative growth here, which means you're sort of, until there's a resolution, you think there's more damage to be done in the S&P. Is there, like when we were going through this whole mess in 2022, we were able to look at a multiple and say, for this type of marketplace, when you have inflation above X, a typical multiple would be, let's call it 15 or something like this. And a 15 multiple on this market is Y price. Do you see the world through that lens right now, like an appropriate multiple where you would start to get interested, or are you looking more at the technicals as we sort of turn over and press support areas? Like, how are you looking at the market to know when you feel you'd be getting decent value to participate and sort of change your negative bias?
So I think a good example of how the market is struggling with this right now is to look at the reaction to Marvell earnings after hours here today. Last time I checked, they were down 13% or so after hours. They closed at 90.14. They're currently trading in at $78. Now, this is a company that continued to beat, continue to do very well, but its guidance just wasn't high enough. And when your guidance isn't high enough, when you have a 70, 80, 90 PE multiple, it means your stock price is going to come down. You have to constantly guide higher, guide higher, guide higher, which is why I don't think it's a surprise when we look at, say, Tesla, for example. What's Elon Musk out there tweeting about when it comes to Tesla? How he could easily see that they're going to
1,000%.
You saw that too, right? And that's because, as the CEO of the company, you have to convince people that with that type of price to earnings ratio, if you're investing $1 today, you're not getting paid back basically in your lifetime, right? So you have to convince people that the growth is going to come. And so you have to be a salesman, a P.T. Barnum of sorts. And so you have Marvel beating today and the market saying, no, your guidance to go higher is not good enough. Same thing with NVIDIA, right? It's good guidance. It's not the great guidance. It can't justify the price to earnings ratio. Whereas in bull markets, none of that stuff matters at all. It's like, oh, we beat, fantastic. Who cares? Put more money on the board, right? Oh, the PE is going down. Well, we liked it at 70, and now that it's a 55 PE, we might as well pump the stock price back to where it's at 70 PE. That's just not the market reaction function right now. So things that are occurring in bear markets in the price action are happening, right? I think that sharp reversal we had seen in stocks a few days ago, where you effectively clear out the Friday high and then you trade below the Friday low, right? And you can't break short-term momentum indicators. That's just one of those things that on the flip end, we were seeing all the time in the bull market. Every time we tried to break down, we're immediately purchased back up against the 1-week moving average. The momentum profile never deteriorates. This time it's only staying deteriorated. So I'd like, are there buying opportunities idiosyncratically, individually? Sure, right? Mag 7 here is 16% off of its highs. Buying dips at 10% or more in the Mag 7 over the past 15 years, depending upon what names are in there for survivorship bias. You're talking about one of the best trading strategies on planet Earth over the past decade or 15 years. So will people throw that out the window right now? Probably not. But the indexes don't look healthy. There's a lot of chop still. Seasonally, we chop around until March 15th. So perhaps that coincides very neatly with the news flow, whereby we're going to have this tariff on, tariff off, exemptions for this, not for that, retaliation, yada, yada, yada. And then finally we get some, okay, next week, the week after, by then we have some clarity. We have a plan in place. Trump and Trudeau and Sheinbaum agree that tariffs will stay suspended so that, trade representatives can meet to renegotiate the USMCA and just avoid the whole tariff tit for tat altogether. Let's just get to the meat of the issue. Markets are going to love it. They're going to love it, even if the economy looks poorly. Certainty is what matters.
I think he can't do that again. I think if he keeps doing this pause shit, I think it'll be like the boy who cried wolf. I think I think the tariff shit is not going to work for him at all as a strategy. I think it will literally go away as an ability to
goal?
sort of boss. I think it's to change the leverage in negotiating. In all manners, the goal. On all manners, the goal is to change leverage in negotiations. And I think if they keep doing this on pause, it's not going to serve any of their goals at all. And I think that's what they're running into right now.
I don't know. I think enough people get frustrated by, the Calvin Ball aspect of the tariff, the Michael Scott snip, snap tariffs, right? And people just kind of throw their hands up and go, you know what? I can't plan for a future where this is going on and off. I'm going to cancel my expansion projects.
Yeah.
I'm not going to hire.
That's what I'm saying. It becomes real at that point. And what I'm saying is, whether you want them or not, they get priced. So you kept doing the bullshit back and forth dance, and so when they're priced, that you can't use them as negotiation anymore. You get what I'm saying? Like at that point, they're no longer leveraged because it doesn't matter.
But if the actual economic impact of injecting this uncertainty and confusion is that the economy slows, then you get a lower 10-year yield.
Of course, you need to create demand for the treasuries because you got $7 trillion that are going to come online that you got to pump to the marketplace. That's one factor of what's going on for sure.
I think I think one of the most difficult things about this and why we have to piece together all these puzzle pieces, there's not, like if there's a single impulse here, it's Fortress North America. That seems to be when you put together all of the commentary from various people in Trump world, from Trump himself, from, Project 47 or Project 2025, whatever we call it these days. You can see that there is an idea about balkanization of global trade, that the world is ruled by great powers who have spheres of influences, and the United States sphere of influence is the Western Hemisphere. And the Western Hemisphere is not the West, right? The West includes Japan, South Korea, Germany, France, yada, yada, yada. But the Western Hemisphere is explicitly Canada, North America, Mexico, and then Latin America, right? And, I've long been a proponent of like a Monroe Doctrine for the Western Hemisphere. I've long said that if you're going to solve the problem of illegal immigration at the southern border, you have to address the economic issues in those countries. The gangs are driving people out. So if you want to stop people fleeing these countries in fear of their lives, stop the violence in those countries. Why is there violence typically? A lot of it's linked to poverty. Why is there poverty? No good economic prospects. Okay, so let's help those countries develop the economic prospects so people feel like they don't need to turn to violence and crime and instead have a legitimate way to build a life as opposed to stealing from one another. We see this all the time throughout human development, right? It's not new. And if we can actually focus on that, if that's what Trump's trying to do, it may be ham-fisted. But if that's the result of a Fortress North America, of a Western Hemisphere new Monroe Doctrine, that is not going to be terrible for stock markets longer term. And a robust Europe is probably good for the global economy long term. How long have you and I chided Europe for being a deindustrializing, unserious group of people? And now they're finally acting like a major world power, talking about raising an army. And Macron put out a tweet today how they're reviewing how to extend France's nuclear umbrella. Proliferation is coming. If you are now a state in the world and you don't have nuclear powers, you better find a poppy who does. And if you don't have one, you need to develop your own. Otherwise, you are completely left at the whims. You have no deterrence. It's one of my least favorite things resulting from how we've handled Ukraine. Whether or not we should be supporting Ukraine or not, let's have that conversation a different time. But the Budapest Memorandum stipulated we'd protect them if they gave up their nukes. And now we're pulling back support. Again, if I'm any other country on earth, my first question I'm picking up the phone yesterday is, how can we get our own nuclear weapons?
A lot to unpack there in only 3 minutes, or only a minute. So I'll leave the Ukraine thing alone. But I'll give you a pick'em for your quick thoughts on the speech last night. I think it was last night. I don't know. My days and nights are all turned around. I think it was last night.
Yes.
Or RFK's seemingly just brutalizing his own political reputation over the last week or so. I'll have to give you a pick'em. You go any direction you want to there.
So interesting how you think that he's only brutalized his political reputation over the past week or so. But
yeah, I think so.
I
think he had I think he built his political cachet into that election. I think it was stronger than it had ever been politically, and I think he's dunked on himself in the last 5 days.
Yeah, I mean, like with respect to the speech, I think it was pretty much Trump doing what one would expect. I don't think there was any significant surprises that came out of it. Very MAGA, and when you look at the news and TV audience for the speech, I think something in the neighborhood of 70% or 60% of the people watching were Republicans themselves, and then it was split between Democrats and independents fairly evenly. So it was a speech for a specific audience. Personally, like given where I stand, Victor, I just got to say I'm a little disappointed with how the opposition party behaved during some parts. It really shouldn't be seen as controversial to clap for a child who survived brain cancer. And I think that the people who I find myself usually associating themselves with should find some space for introspection here.
Amen, bro. I agree with that. I also think I think in a way there's a group of people, the largest group of Americans are in the middle. And I think there's one thing they don't want more than anything else, and it's additional political theater and theatrics and sort of an immature look from the government. And I think there were some parts where it just didn't look, the signs or whatever. I get it, it's messaging, but I think the decorum, it wasn't a good look in my opinion. The optics weren't great.
Well, that's one of the things I've learned, Victor, reading through my traverse through American history recently. I tweeted it out last night, but canes being swung around on the Senate floor,
it's not new. It's not new.
It ain't new.
I know.
And the last time it happened, it may have led to the Civil War. So that's actually,
All right, Chris, it's going to be an early day because you got to visit a school. So do me a favor, if the people want more from you. What?
It makes this odd phrasing.
You got to visit a school.
What, man?
There's no context to that.
Going to a parent-teacher orientation. Not just hanging out.
You got to go hang out at a playground.
7 o'clock at night when it's raining, Victor Jones. Don't put that on me.
Tell the people where they can go.
Here on Tasty Live, not at the school. Monday through Friday, Futures Power Hour, 1 p.m. Eastern, 12 Central Time. Monday through Thursday, overtime, 4 p.m. Eastern, 3 Central. Let Me Explain with Tom and Tony, Tuesday mornings, 9:40 a.m. And Victor Jones on Wednesday, The Price of Truth. Of course, find my latest rants, musings, and pithy on Twitter, X at CVecchioFX.
All right, Chris, appreciate it, bro. Have a good one. Go hang out at that school, man. I'll see you next time. Oh my goodness gracious. Chris Vecchio, everybody, we got a little bit more time, so we're going to hang out here. We're going to run a little solo show for the last 15 minutes or so. I'm curious how you got pickled quail eggs are excellent while riding in a rumble seat. So I don't know how you guys are playing this. I don't have strong convictions here about bonds after we got up to like 119. I don't have strong convictions, so I'm neutral here in bonds. I don't know if that's surprising in any way, shape, or form, but I'm back to neutral at around 120. I think on the equities, as I said before when Chris came, I told you guys, fool me once. I think we picked up the 5,800. And it got a nice market reversal that only lasted 1 day. And I think coming the second time testing 5,800, we're still getting a decent price if you believe that the market can hang around in this range for a little while longer. So it's a decent risk to reward, but I thought the risk reward was closer to 50-50 this time. So instead of taking like a real big position, I wanted to bet. I bet on vol, sort of just hopefully they're staying the same or coming in just a little bit. And I think I got lucky more than anything. Vol did come in a little bit today, but I didn't take a real big swing. And I'm curious if any of you guys are taking big swings on the S&P at 5,800, because in theory, we've been in this two-sided range for 4 months. We are at the lowest price in that range, which means if you believe you can continue inside this range, you're getting the best possible price for the range. I just don't have the confidence that we're not going to violate it. And I think, I could look at the NASDAQ, which has violated the bottom side of its own range. I could look at the Russell. I could look at almost everything else except the S&P, which has violated the downside of its range. I can go to individual stocks if you want, where we've drawn out this two-sided range where we've been in a lot of cases, man, we've violated the downside of these ranges. And I don't have any reason to believe that ultimately doesn't happen in the S&P 500 as well. But the only thing it had going for it, and one of the reasons I took a stab, was because of the VIX and the vol term structure. Yesterday we got into backwardation, and I just for kicks wanted to see if I could sell front month futures on that first day of backwardation. These tend to be really interesting points to take some to take a little bit of upside or long delta risk, because there's few things that are mean reverting or that end up normalizing over time. A yield curve inversion is one of those things. If the VIX term structure going into backwardation is one of those things. It doesn't mean, like, a yield curve inversion doesn't have to reverse the next day, right? You go into a yield curve inversion, you might be there for a while. You go into VIX backwardation, you might be there for a while. I forget the actual length of time, but back in the great financial crisis, we were in the VIX backwardation forever. It doesn't happen very often. I want to say something like 150 days, maybe longer than that. That is an anomaly. So when we get into VIX backwardation, knowing that volatility is a mean reverting asset, and knowing that that's an anomaly of a term structure, I like to take little bets. Start to take little bets. And that's what I did yesterday. It was just a quick scalp, and I'm now flat. And the question is, if we can break, this sucks, because it's like it's sort of antagonizing, just teetering here at 5,800, because if you can break this, we'll probably flush, and we'll flush fast. We'll find some new end of the range or establish some new range. You'll get a VIX backwardation, will likely steepen a little bit. And then, all of us, we can get out our pickaxes and we can create a new range in the S&P 500, which will likely find new structure. And I think that's the more likely scenario than we continue to build inside of this established range. I think that's probably the more likely scenario. And it probably is a technically triggering event, which was why I think you go find a new price rather quickly. But because of that, I don't know, I might have the wrong mindset, but I'm not afraid of stair-stepping into a new range. And I think I'm personally looking for those opportunities as we step into a new range. What do I want to buy? At what levels do I think I'm getting a fair price? What vols levels would I look to sell puts, or more likely put spreads, just in case I'm a bit early? I don't want to be wearing some of this stuff. So yeah, I think that's my mindset as we get ready to potentially violate the downside in the S&P 500. As they say, failing to have a plan is planning to fail. And I just think I don't want to wake up and I'm surprised that the SPOOs are down 2%, and VIX is spiked up to 27, and the VIX is in backwardation, and they're running a markets in crisis headline on television. Like that, I don't want to be surprised by that. And I want to be in the right mental model and the right mental the right mind frame when it happens, if it happens. Short MES with a short put, says Lobo. Are you shorting TLT? No, I'm not, Brian. I can't figure out what I want to do here with bonds at 120. I think it's a hard bet. Like, I do think I'm probably getting a good price to start working on the other direction. I've wanted to get short the long end of the curve. But what's happening is I'm going to have to rethink about how to where my estimate of the long end goes as the market is repricing where it thinks the short end should be. So clearly, the market is now pricing in more cuts, right? We've got a cut in June, a cut in September, and then a cut in December, and they're working on the cuts in 2026. So the more growth slows and the more that starts to show up in the data, likely the more cuts the market is going to beg for. And I don't know what the tolerance is going to be from the Federal Reserve to give the market those cuts. I'm not quite sure. And so wherever that short end ends up, that sort of dictates how I think about the curve, because the whole curve can move. So even if I think it's going to steepen, if it doesn't steepen until after a big shift in the yield curve, I've got to be careful not to get caught. So I think two things are happening at once. I think I'm probably getting a decent price to start going short, but I also think the whole curve is shifting lower, which then nullifies my desire to want to get short the long end. I don't know if anything I said just made sense, but I'm trying to talk you through my indecision on reestablishing a short, because this is what I waited for. I thought a tactical long in bonds made sense, and I said at 120, that would be an interesting level to start reversing. I got neutral, but I haven't fired against it, and maybe that's wrong. Maybe the indecision is what's wrong here. But I don't have full conviction, so I don't want to put chips on the table if I don't have full conviction, because what'll inevitably happen is the instant the trade goes against me in something I'm not fully convicted to, I'll just run away like a big scaredy cat and get stopped out. So I don't want to do that. Let's see here. Want to sell bonds, buy dollars, but I'm torn, says Son. Yeah. I like the contrarian aspect of that idea, Son. Especially the long dollars. Nobody's saying that right now. If ES dives down, then won't bonds go up? Dev, I don't know. That's the real point. What I do know is that the last 2 days, you've gotten a very different action in yields, right? They're starting to inch up again over the last 2 days. So while you had a flight to quality, while you've had a bid in bonds, the last 2 days starting to look a little bit different. No, I don't. I think if the ES dives, the typical relationship in a flight to quality is that actually treasuries get bid, so people buy bonds. That's your typical correlation. It does not have to happen, and oftentimes that correlation can and will change. It just depends on the structure. But what has happened for the last 2 weeks is as markets were getting weak, the market was buying bonds. So the correlation was sort of inverse, which is what it typically is. That's why people create like 60-40 portfolios, right? 60% in equities, 40% in bonds. In theory, that's a hedge in theory. So as stocks go down, in theory, your bonds are going up in price. So that's sort of the idea behind the whole 60-40 portfolio. It was put together because they had that inverse correlation, but only really, honestly, since like the 80s on. Prior to that, I don't think that correlation actually existed. Shout out to Jem Carson who brought that to my attention. Let's see here. 4,800. Let's go, says Jay Wright. I'm curious, why 4,800? Is it just is it a technical line on the chart? Is it a multiple? Is it just a number that you like? Because I've heard 4,800 spit out a lot, and I'm curious where it's coming from. CM says fact. That's really an opinion. Far more likely it will be suddenly down 2.5% than up. I honestly think it's 50-50. I think the odds are 50-50, honestly. Let me say it like this. But I think there's a fatter left tail. I think if you move higher, we could get a 1% up day. Like we did today, a 1.5% day. I think you can get a relief rally to the upside. I think if you violate 5,800, I think we got a fat left tail. The potential for kinetic motion and energy to the downside really quickly. So I think the pot odds favor the downside only because there's probably a more the magnitude of the move probably favors the downside, right? That's skew. Just like everything else, you can't really make a good guess without knowing a few things. Not knowing for a while, slow down more likely, bonds up more likely. I do agree with that, CM. That's what makes this really hard. Is if your bet is stagflation. So my question is just, what do they do if we really are going to lean into the potential and flirt with the reality of a manufactured recession? Politically, I think you need to understand how difficult it is to weather that storm politically. And again, everyone talks about, oh, what happens if we lower our debt? Now we can refinance at a lower price. That's a positive. Yes, it is. What happens if you get lower home prices? People can now afford to buy a home. That's a positive. Yeah, it is. What happens if stock prices come down? That means our generation is going to get an opportunity to buy things at more reasonable valuations and prices. That's a positive. Yeah, it is. But those things, in my personal opinion, it's hard to have those things happen in a vacuum. That, to me, that's like ceteris paribus in economics. It's a dangerous word. All else equal. All else equal, and bonds come down. That's great for refinancing the U.S. government's $7 trillion in debt that comes due this year. All else equal, home prices go down. That increases home affordability. All else equal, stock prices coming down increases the ability for millennials, Z, and newer generations to create upside upside wealth for themselves. But the problem is all else equal only exists in the textbooks. Problem is it only exists in a model. In reality, you get lower bond yields because of slower growth, and slower growth has the impact of impacting people's jobs. You get lower home prices. Ultimately, very rarely, and in most cases, it's because of economic growth slowdowns and people have lost their jobs. You get lower stock prices, and in response to maintain shareholder value to lower stock prices, CEOs and boards will make their businesses more efficient to increase shareholder return under the pressure of lower stock prices, meaning people lose their jobs. So my question is, politically, with all the positives you can try to sell about lower stock prices, lower home prices, potentially lower gas prices, and maybe even lower financing costs of the U.S. government, there's a problem here we're not talking about. And that is, I don't care who you voted for, if you lose your job, and it was a manufactured recession, you're probably going to be angry at whoever pushed the button to make it happen. And that means for political survival, and I know Trump himself can't run for a second term, or I mean another term. This is his second term. The Republican Party has to figure out what to do in midterms and then after this presidency. And if we're headed towards a world of growth slowdown and some material recession, which could then bring down the price of these things, you have to understand there's no just magical world where prices come down and everyone also keeps their job and everybody's wages are untouched. If not, they go up. That magical world probably doesn't exist unless we find some new labor input that is much cheaper, or we find some new energy source that is much cheaper. That magical world probably does not exist without pain. And so I just think that pain will be felt somewhere. And how do you deal with that politically? Well, what you typically do is you try to buy back your constituency, right? There's one thing I've learned about following politics as an adult human male. It's it's you can buy votes. There's ways to legally buy votes, and that means, my friend, that the government's got to print money in response to a slowdown. And what would happen to yields if the government is moving from 6 or 7% of debt to GDP to something north of that in a response to a slowdown? And if they don't do that, if they don't respond fiscally in a slowdown, how bad could the slowdown get? Get what I'm saying? Like this, at some point, if we're actually going to play this game, it becomes another game of chicken. In 2022, we played a game of chicken with Jerome Powell, where he pretended to be Paul Volcker, and we all knew it's just a matter of time before you cave. And it's like, what's that pain point? And I think the question is, for the Republican Party, if your first budget was adding $2.8 trillion to the deficit from now until 2034, and we're not in a slowdown yet, what does that budget look like if we're in a slowdown and people need assistance and you care about your political future? I don't know. So I think that's the CM. That's a long way of saying that there's a push and a pull, I think, on how to think about yields. And the question is, will the government respond the way that they typically would for their own political incentive structure, which is to maintain power? In a slowdown, how do you do that? You print money, you give subsidies, you come up with new programs to respond to an economic slowdown. Otherwise, people will see you as ignoring them. You created this slowdown and you're ignoring them. You're not helping them in this moment of need. And you're going to get a complete political pendulum shift to the other side. So what's their pain tolerance for that? I don't know. And that's what I think makes the thinking about the long end, in my personal opinion, a little bit more difficult and less straightforward. CM says 100% fake. This is what Trump and most of his supporters don't want or cannot understand. I don't know. I can't speak for everybody, but I think Chris said something at the beginning of the show. This is what you voted for. Something to that extent. And I'm here to tell you, I know exactly what I voted for. And I've said it on the show in the past that that somebody's got to take the pain. It's either me or my kids or my grandkids. And if none of us take the pain, we just keep cruising towards authoritarianism and increased wealth inequality. So if we want to reset to something that looks a little bit more like a free market, that looks a little bit more like real competition, then it's like there's no clear path there without the pain. And I'm aware of what that path looks like. And I'm willing to go through those hard times. I think I am, right? But I sort of think be careful what you wish for. But I think I can endure a lot if I believed in my heart that on the other side of that endurance, that a better world existed for my kids and for other kids. And I do believe that's true. I might be naive in that belief or just wrong, but that's my view of the world. I'm ready for it. Besant did say on CNBC it's been Wall Street's turn, and now it's time for Main Street. So interpret that as, I thought he said it. Didn't he say it the other way? Taif, I think you said that the other day. I didn't see that comment. I only saw that was a few days before his interview on Bloomberg. But didn't he say it's Wall Street's turn? Like Main Street's, and now it's Wall Street's turn, meaning the pain. It's time for Wall Street to take pain. I thought he said it flipped, but maybe I'm wrong. Jay Wright says 4,800, just a number I like, and it's an overshoot under 5,200. Nice to know others smarter than me like it too. I see. Thank you, Jay Wright. That magical world does exist in the minds of most of the base these days on the right. I don't, maybe, but I think Trump has said it a couple of times, and this is the guy who will never give bad news. He always reframes bad news in a positive light. But he said something to the extent of there will be, what was the word he used, which I thought was hilarious. But I can't remember the word he used, but I think he even said it yesterday. But there will be some sort of I wish I could. It starts with a D. I can't remember the word. Basically, some sort of issues, ahead. And I think Elon many times on Twitter has alluded to the idea that likely we'll go through tough times as a result of some of this stuff. Tariffs, inflation will be transitory. I actually agree with that. I think you're being sarcastic, CM, but it is everything I've seen on paper and modeled. It's a one-time price shift. So I don't know. And then they make cuts to program. I said this the other day. This will be my last thought, and I'll go out on this. That there is no world, there is no pain, there is no world where we go through pain and we all suffer equally. I think that's unrealistic. In good times, the working class individual benefits but doesn't benefit as much, and in bad times, the working class pays the highest price. And I think if we're going to go through a period of pain, it's just the structure. It's just the structure of our system that we're not going to all pay an equal price. Unfortunately, I'm not a champion of that. I don't like that fact. I'm just speaking to what is real, right? If I've got a lot of money, I have the potential to buy political influence and ensure that my personal interests are protected, or at least somewhat protected, into a difficult circumstance. Whereas you, as a working class individual, or if I'm over here, I'm a working class individual, I don't have that political influence. I'm at the whim of an employer and to the broader economic strength. At some level, it's my own skill set. Do I have the skill set to continue to monetize my own skill set? Have I put away things for a rainy day? Yeah, sure. But I'm going to suffer on a disproportionate level, and I'm not going to benefit to the same extent in good times. And I just think that's the reality. And so I don't know that I want to be angry about that. I'm going to try to find the right way to say this. There's no way to change that reality in our current system. But if we go through a period of pain, now we've reset the game where we can now all compete on even footing. Theoretically, if the right decisions are made. I don't think we just have a recession and we don't change any of our economic dynamics. I don't think that's actually going to help anybody. If we go through a recession and we increase our deficit massively and plummet even further our purchasing power, I don't think it helps anybody. But there's sort of I'm willing to go through the pain if everybody collectively is willing to go through the pain as well. And we are going to have a stronger purchasing power on the other end. We're going to have a more competitive economy that is less concentrated to 1, 2, or 3 companies in each of our major industries. We're going to have less protectionist regulation. I'm not one of these guys that are just like cut regulation. I don't want, no offense everybody out there, but I don't want gunk being dumped into the water table. That's not the type of deregulation I mean. I'm going to tell you what I mean. A guy came over I got my furnace replaced a few years ago, and these two guys came over. These two guys were incredibly knowledgeable, and I'm the most annoying person in the world, especially about things I don't know. So for maybe 3 or 4 hours, these guys, they did their work and they let me ask every question under the sun about my HVAC system, because I just bought a home. I didn't know anything and I don't like to be scammed. So I ask a lot of questions so I can be somewhat informed. These guys answered every question. They showed me nooks and crannies, took pictures, gave me links and sites. And I asked these guys when we were done, I was like, one, you guys have incredible patience. 2, you guys worked incredibly efficiently in order to get your job done and also answer my questions. Have you ever thought about doing this on your own? Why are you working for so-and-so? And they said, it's the licensing. In order to pay for the licensing, in order to pay for the insurance, in order to pay for all these things, in order to set up a business, it's sort of cost prohibitive. And so until we save up enough money to get that amount, which they told me, it's sort of we got to keep doing this. And this thing paid them, good, but like if you were making your own money selling, let me just say this: the cost of labor was much higher than they were getting paid for that time they spent with me. And so I'm down with deregulation that helps guys like that start their business instead of working for a few dollars an hour. That when I say deregulation, that's what I mean. I don't mean just allow some mega corporation to dump PFAS in the water table. That's not what I'm talking about. So I think if we went through pain in order to restructure an economy, bring down some of this monopoly power, deregulate to the extent that the everyday working class individual could start a business on the up and up, not just something that they're hiding from the IRS and getting paid in cash, all that stuff. To me, that's a pretty good world to get to. But I agree with you. It probably is a little bit idealistic and in some ways perhaps unrealistic that you could get to that better world on the other side. I don't know, but a guy can hope, right? Vic, sorry, man, but I wasn't happy with the status quo, but this is a whole other dystopian thing. Nothing about this reduces income inequality or even gives two shit about actual people. Should be Chris. I'm with you. I understand what you're saying. I guess it just depends on what you believe is the core of our problem. I believe the core of our problem, because I've spent enough time trying to figure out, caring enough and trying to figure out what is the solution. I've gone down the rabbit hole on most of the issues far enough to realize I think the core of all these problems, if you follow it far enough, it ends at the money. And I think the lack of protection for our purchasing power will help many, not just in this country, but I also think the destruction of the purchasing power is also what allows us to maintain economic dominance over mineral-rich developing nations. So I believe purchasing power is really, really important, and I believe Citizens United is really, really important. If I believe incentives are the key to understanding your outcomes, then I think as soon as you allow unlimited amounts of money in your political system, you have taken power away from the majority and you put it in the hands of capital. And I think again, that's all coming back to money. So I think you follow our problems far enough and you got to figure out ways to fix the incentive structure at its core. And I think coming up with new programs, these types of things, they feel good and they sound good. But if you let them run long enough, it doesn't seem like, it seems like most of them end up suffering some sort of internal rot and doing us more harm than good. And maybe this is just the point in the journey that I'm at, and I'm going to discover a new level of sort of enlightenment, if you want to call it that, and I'll have a different point of view in a few years. But right now, you can give me a program, and I can tell you how it both helps and hurts. And if it helps and hurts, then really it was just a program to sell to some constituency to get votes. And if there's many winners as there are losers for these programs, then what are we actually doing with them? Wouldn't it be better just to let you keep the money you made? I don't know. I know it's a weird thought, I guess. All right. This got weird the last 10 minutes. My apologies. Your thesis seems to support the idea of small cap outperformance in that type of scenario, money directed towards small business rather than big corporations, or at least change in percentage of these flows. Yeah, I think you could say that. I think just generally speaking, I am leaning against. That's why all the relative trades I always have they usually have a short NASDAQ lean. If I'm long something, I'm short NASDAQ. And that's because that's the greatest concentration risk. So I think there's a decent opportunity there when and if the market finally decides that either these 7 aren't the 7 for the next 10 years, or that 7 companies doesn't make a lot of sense to have 40% of the weight of a 100 stock index. I just think there's a lot of risk reward there. And so I suppose you could extrapolate this out to long small caps over other things, but I'm talking about small businesses to the extent that a lot of these people are not going to go public, right? Not that type of small business. I'm talking about more restaurants, more corner stores, more, individually owned HVAC companies like that. That's what I'm talking about. I don't know if that's necessarily tradable, but I think at some level you can extrapolate that out to what you just said. But should we have economic dominance over mineral-rich developing nations? Should be Chris. We're getting into some heavy territory here. I think there's different ways to be the strongest person in a room. Right? There's hard power and there's soft power. And I think your view of the world is going to be dominated by whether or not you lean more towards hard power or you lean more towards soft power. I think most of the world are business people. And I think if you're I don't know, some rosy idealistic part of me thinks that we can be utilizing more soft power in the world and that we can be creating more fair synergies than, IMF loans that leave people in sort of an economic doom loop. I don't think that's the way to go. CM, that's my most bullish long-term play. See, we've come together. Pick rocks. Oh, I don't know. Modern monetary theory says the U.S. needs to be dominant. Brian, what do you think about MMT? I read that book. What is it? Oh, I forget the title. I'm curious, what do you think about MMT? Seems like that's where we're headed. Scary as shit to me. Oh, Victor. Oh, wow, Victor, you banned me from live chat. Oscar's Moving Company. I didn't ban you, man. What are you talking about? Yes, the deficit myth. That's it. Thank you, son. All right, everybody, that's going to do it for me. We're gonna shut this down a few minutes earlier. A little bit random takes at the end of the show. My apologies. It wasn't as lucid, I think, as as some of the other Q&A sections, but that's okay sometimes. Oscar's Moving Company. You banned my other account. Oscar, my friend, I don't ban anything. But if you want to send tastylive an email, you can figure it out with the moderators. I didn't ban you, my guy, or my friend. Yeah, I didn't do it. I don't think so. If I did, it was a total accident. Maybe I was just banging my face against the keyboard and pressed something on accident. But I don't play with the moderation stuff. I just respond to whatever questions are in there. But yeah, chat in or send tastylive an email, and we'll figure it out, Oscar. Everybody, I appreciate your time. Thanks for hanging out with me for nearly 90 minutes. Thank you to our special guest, Chris Vecchio, who's hanging out at a school somewhere right now. I'll see you back here tomorrow. Same time, same place, same great network. And I'm wondering whether or not when I see you tomorrow, the world from an equity pricing standpoint will have changed. I'm kind of hoping it will, so we can get rid of this antagonizing sort of just looking over the ledge without stepping over it. If we're going to do it, paint or get off the ladder. Let's go. I'll see you tomorrow. We'll see what's on the other side. Peace.
Good morning, it's Wednesday, the 5th of March. Welcome to Trade Live with IG. I'm Luke Moore, and this is the Scottish man. Chat yesterday.
I forgot about that. Brilliant. Good morning, everybody. How are we all doing? Yes, you're getting your rally. I think everybody needed this rally, including myself. So very slightly relieved